a lot of gamma, which is why the index is bouncing around, not really going anywhere. It'll be great to get back to single stocks. It'll be great to get back to earnings, and hopefully we can concentrate on a proper job of picking stocks.
You say that, Luke. I'll pick you up on it then. Are we just saying this is just a big FX trade, a big crude trade, and we're not really looking at the underlying companies?
I think individual companies, it's about how they do relative to expectations. That's always the answer. They've been trying to manage things as they do in every quarter, but you're looking for the surprises on the up and the downside. That's what will get the moves in the next few weeks.
What about the strategies then? What will be the winning strategies?
So hopefully it'll be a time for stock picking again, because we can actually concentrate on stocks as opposed to that big shift in momentum we saw in the first quarter. Otherwise, I think it continues to be a good environment for the CTAs to take advantage of what's going on in the macro picture. But you need the diversification you get of that rather than the discretionary macro guys who struggle. Right?
So take us through some of that stock picking. Given what you said, it's a matter of expectations. Does that mean we should be looking at the ones where the expectations are low because the chances of outperforming are better in those?
I think the street is. Everybody's used to the earnings management that goes on nowadays, right? So I think that it's not absolute lows and absolute highs. It's really looking for guidance misses, things where, I think the market will be punishing things very heavily if they're missing in this environment. It's, we've come back quite a long way in the last 4 or 5 weeks. That means there's lots of room for pain on the downside, which is, I would say the short side is probably more of an opportunity than the long side on the individual earnings results.
Luke, at this point, from about 35,000 feet, people talking about an earnings recession and then a real recession coming off the back of it. Does that resonate with you at all, Luke?
I think it's, we've clearly got a lot of pressure on earnings. I think we've clearly got a lot of pressure, particularly outside the US, on markets generally. The real answer, and it gets to your third story today, if you make the banks look miserable, that is really bad for confidence. It's really bad for borrowing, company borrowing. People don't do things, and then you get a weakening of economies. We have to get some confidence back into the banks somewhere. And you could see the market's leading the world down. You look at Japan, that's leading us down. Why? Because the negative rates is awful for Japanese banks. It's clearly a big problem there in Japan, and the banks are underperforming and they're dragging the rest of the market down.
Look, just on negative rates, Larry Fink out with a annual letter to shareholders saying this just is not good. The negative consequences are there to be seen. But do you have to draw a distinction between negative interest rate policy for a small economy like Sweden, Denmark, to protect their currencies, or rather the opposite, to try and weaken them, versus a big negative interest rate policy in the Eurozone, in Japan, etc.? Do you have to draw that line?
I think you do. I mean, look, individual central banks in small economies can achieve things that are different than you can in a big economy. The problem in Japan is, the central bank's gone to negative rates, but the reality is there is no chance that banks in Japan are going to give negative rates to their clients. So you immediately set up that problem. If you're sitting there as a company, you're looking at rates, you see, whether you get to borrow at 50 basis points or 0, that's not going to change your decisions about actual investment decisions. But negative rates create a concern about confidence, and poor confidence is always bad for economics.
So given that damage being done to banks, and by the way, Christine Lagarde in her interview with John Micklethwait admitted to that, said negative interest rates are really bad for the banks. Does that tell us that Mario Draghi was actually quite clever in going with the TLTRO approach? Because that's not a negative interest rate, that's actually encouraging banks to make loans.
So it was clear that what he tried to do at the same time as going to negative interest rates is to do something to support the banks in the most direct way he could find. At some point they'll probably all end up buying shares in banks to try to support them. So the reality is, I don't know, look, personally I think negative interest rates are just a flawed policy for big economies. It's bad for confidence, it's bad for the banks. I was talking to some of the big banks in Japan when I was out there a few weeks ago. They're seeing lower loan demand from companies because the companies are going, hang on, you got negative rates, it can't be good for you, I'm not sure I want to borrow from you in the current environment. That's exactly the impact you don't want to get. We've seen the yen strengthen, we've seen the euro strengthen. The central banks are not getting the economic impact that they wanted.
All right, well, let's turn to number two. The second thing that markets are probably looking at today is the Canadian Pacific ending of its bid for Norfolk Southern. And following the latest hurdle Friday when the U.S. Department of Justice opposed Canadian Pacific's petition for a voting trust, Canadian Pacific CEO Hunter Harrison said this earlier: with no clear path to a friendly merger at this time, we'll turn all of our focus and energy to serving our customers and creating long-term value for Canadian Pacific shareholders. It's not just a coincidence, it's turning out to be a little bit of a trend that, you know, there are regulatory hurdles that are not being overcome now. This is what, the third or fourth in the last couple of weeks. Does it continue?
I think that the regulatory pressure is something that's here to stay. We're in an environment where regulators want to be interventionist, and so they're starting to affect things. But there are some, you know, there are some very good returns to be had in a number of the mergers. There's a lot of merger deals still out there. And actually, it's a pretty attractive strategy as long as you're careful about which deals you get involved with.
What industries did you go to play that strategy at this point, Luke? Considering how many deals have gone under, you said it's a good strategy. Which industries would you go to play that strategy?
I think really the answer is there's a couple of industries you'd avoid, healthcare being the obvious one, banks being an obvious one, though there's not much going on in that space at the moment. Otherwise, it's really name specific. And you're looking at the things which are big enough that you can put real money to work, but not so big that you know, the regulators are going to have it on a poster.
Yeah, and to be fair to the regulators, there's been so much merger activity that in some industries it's gotten very consolidated. So it's awfully hard to do one more. So to some extent, you need to look at industries that are relatively less concentrated.
Yeah, exactly. It's a merger where you're going from 4 players to 3 players is always going to be a lot harder than one when you're going from 12 to 11.
Just curious about what you said about avoiding the financials and the healthcare. You think that consolidation is done even among the smaller financials and the hospitals?
No, I think in the, like, you can always find things in smaller financials. You know, there are infinitely too many banks here in the US, somewhere out there, so there will have to be consolidation. But, you know, financials at the moment is under so much regulatory focus that every one of those deals is going to have a lot more risk in it than something in a simple industrial area.
To number 3, Luke took us there about 5 minutes ago. We finally got there. Standard Chartered looking to sell at least $4.4 billion of assets in Asia, the latest attempt by the lender to repair its balance sheet after the first annual loss since, I believe, 1989. Shares of Standard Chartered trading up throughout much of today's session, up 1.27% on the screen right here, right now. And over in Italy, officials said to be meeting today with executives of major banks, including Unicredit and Intesa Sao Paulo, to discuss solutions for those institutions' non-performing loans. Luke, very hard to take an equity sector to get a read on a general economy at the moment. You could go to the miners. Traditionally, you'd do that just for pure economic growth. With the oversupply in commodities, doesn't tell you what it once did. Even the bond market doesn't tell you what it once did. Are the banks a big red flashing lights for you?
To me, it's one of Soros's reflexive things. Actually, I think that what's happening with the banks is causing the weakness in economies, not the other way around. The starting point is the pressure on the banks where, you know, we've had first regulatory pressure, then earnings pressure, now interest rate pressure, which creates more earnings pressure. You know, they've all got to cut the balance sheet. Where do they go with that? That creates weakness in banks, and that in and of itself creates weakness in economies.
What should the policy response be then, Luke?
It's much easier running an asset management business than it is running a central bank or running an investment bank, for that matter.
Yeah. Sorry, continue.
No, it's like I'm trying to avoid giving a simple answer to what the policy response is. But I think they have to look at things from the point of view that we need banks which are healthy, which are positive, which are willing to make loans, where people want to take loans from the banks.
But as long as the policy response, as it currently stands, looking at monetary policy, etc., if that stands and doesn't change, that's a reason for you not to be looking at the banks as an investment opportunity, Luke?
Yeah, you know, there's always relative opportunities between banks. That's one of the great things of the sector is there's always winners and losers amongst things. But as an overall sector, there are easier places to invest at the moment.
Okay, those are the 3 stories that matter to markets right now. Luke Ellis, president of Man Group, is going to be staying with us, I'm happy to say. And there's much more ahead on Bloomberg Go. One story we are following is the battle over Yahoo. The Daily Mail is making a play for the internet company, reportedly. According to a person familiar with the matter, the British newspaper is in talks to join with potential bidders who would carve up Yahoo's core business. Any bid from the Daily Mail would be made only in conjunction with a partner.
This is Bloomberg Go. I'm David Gura with the Bloomberg Business Flash. Growth in developing economies in East Asia is holding up despite tough global conditions and a slowdown in China. That is according to the World Bank, which is lowering its growth forecast for the year for the region only marginally, from 6.4% to 6.3%. Hertz is cutting its revenue expectations for the year. The company says the rental car market is suffering from excess capacity. Hertz Global Holdings now expects full-year revenue to range from flat to a 1.5% drop. Hertz previously projected growth of 1.5% and 2.5%. And Puerto Rico is releasing a new proposal to restructure part of its $70 billion in debt. The plan calls for up to $28 billion in bonds that would allow creditors to be paid regardless of future economic growth rates. The government says the deal would let Puerto Rico cut $12 to $16 billion from its debt load. And that is the Bloomberg Business Flash. John?
Thank you, David. Thank you very much. We're about 14 minutes away from the open here in New York. This is the state of play. Dow futures up 69 points. S&P 500 futures up 8. The outperformance, as we've said, throughout the session. Over in Italy, up 1.77%. The banks leading the gain. Switch up the board just very quickly. Dollar yen, 6-day losing streak, a novelty in the green at 108.29. Set a fresh 17-month high on the Japanese yen in today's session. We come back from that point, up 0.2% on dollar yen right now. 1.74% is your yield on the 10-year. Yields up 3 basis points. And NYMEX, WTI, back through $40 a barrel. Big day of gains on Friday. The rig count at a 2009 low. We're up 0.8% on the contract. They're your big market moves. Let's cross over to Matt Miller now for some stocks to watch ahead of the open.
John, thanks very much. I'm going to kick it off with Apple this morning. Several different notes out on the world's largest company. Pacific Crest says upcoming earnings will be at the low end of its guidance, and following quarters may even miss estimates. RBC, though, is saying the new iPhone SE is selling well. That's a direct quote. And Apple could sell 15 million devices in 2016 without cannibalizing other iPhone, more expensive, higher margin iPhone sales. Apple reports in 2 weeks on April 25th following the close of trade. Shares are up about 3% so far this year, and you can see 0.5% in the pre-market trade. Valiant is also getting some conflicting calls today. Piper Jaffray sees more downside risk than upside potential. Piper citing pricing concerns as well as volume trends. Stifel, though, says Valiant is turning a corner and believes the most concerning risk factors have been alleviated. Stifel remains upbeat on Valiant and keeps its buy rating. Although Valiant is down more than 66% so far this year, it's gaining almost 2% in the pre-market. Finally, Under Armour is under pressure this morning after Morgan Stanley cut its price target in half to $32 from $64. It's now the lowest on the street. The analyst there, Jay Soul, says Under Armour is losing apparel market share for the first time in 3 years and sees softness in running footwear trends to weigh on future quarters. Also maybe a concern that Jordan Spieth choked so hard in the second 9 at the Masters yesterday. Coming up next, Man Group President Luke Ellis is with us on how his firm plans to invest into the real estate sector despite prices hitting new highs.
Luke Ellis, president of Man Group, is here with us. It's the world's largest publicly traded hedge fund. Luke, so it's been pretty rough on a lot of hedge funds the last few months. Tell us what's going on out there.
Yeah, I think one of the bits is you have to be a little careful of looking at the headlines. The really big hedge funds have very high-profile characters at the head of them, and they make great TV, right? And everybody likes to go. And as we've seen, they've made a couple of fairly dramatic mistakes in the last few quarters, or have been punished by the market. Yeah, the real returns are not that bad, though it wasn't a great quarter. The reversal in the stock market, the reversal in momentum, hurt people on the short side a lot. That was bad in the first quarter, but actual returns are not that bad, and the quant funds are doing really quite well.
Is the business model a little bit, I wouldn't say broken, but is it a little bit hurt though? I mean, you're down 15% and your stock isn't, it's limping along. 75% of your revenues come from, management, 25% from fees. So is this a sort of a statement? Is your stock price a statement on the business model of hedge fund investing?
No, I don't think so. Look, I mean, honestly, I spend little time worrying about the stock price on a day-to-day basis. We're trying to run a business, you're trying to run it for 5 years forward, and the answer is that there is lots of opportunity to grow the company on a 5-year basis. Look, asset management, like any other part of the financial industry, is under fee pressure. There's no question about that. So we have to keep moving faster. We have to keep delivering performance for our clients and delivering interesting things that they want to put their money to work to. And if you do that, then you can grow the business on a long-term basis.
Luke, the general tone around hedge funds at the moment, though, as you say, primarily also because of these big hedge fund rock stars that have made some bad calls in the last 12 months. Does that really affect inflows in general, though, into hedge funds?
So there's an interesting thing there, and just one bit. So we might be the largest listed hedge fund business, but it's not one single big hedge fund. And one of the things we believe in is shutting hedge funds early. There is no question that anything that's supposed to be about return, anything that's supposed to be about alpha, has a capacity constraint. You cannot have something that's enormous and be about alpha. It's just a sort of simple game of maths, right? So what we have is 40 or 50 different individual hedge funds, none of which we allow to get that big. And through that, you can deliver some decent returns. You need the market to give you a bit of opportunity, but it's like you look at the CTAs. I mean, ours, everybody else's, it was a sort of 5% first quarter. In an environment of zero returns, or zero yields on bonds, look, whatever you guys know the numbers, but it's an enormous percentage of bonds globally are now negative yields. Sanofi did a 3-year bond issue the other day at 0. People are looking for something other than bonds. I can't tell you how many clients we talk to around the world who are going, look, this is institutional investors going, I just can't buy bonds here. I can't own bonds here.
So Luke, you took us to it. You manage a lot of different funds, really. And as you said, you'll shut them early if they're not really performing. If you take a trend line of
the thing I was talking about was stopping inflows when they are performing well. That's the trick, so the performance remains.
Take that trend line. Are you making changes in your funds faster than you did before in order to adjust to the marketplace?
No, I think if you look at individual position levels, what you see is this type of market where liquidity is fairly flaky. What it means is you either need to run your portfolio with very little macro risk, very little directional risk, as little factor risk as possible, and try and make it out of security selection, stock picking, or you need to be very patient. And the people that are getting in trouble are the ones who are trying to call the market one way one week and then suddenly flip and change the other way the next week. And that's really hard at the best of times. And in this market environment, you're basically just paying bid offer away to the street.
So quickly to follow up on that, then, where are the flows going? What strategies are they going to in your wide range?
So being careful not to talk about us specifically because we've got our quarterly earnings out on Friday. So I have to be careful on these things. But it's very clear that after the back of last year's returns, and returns do affect flows without any question, that what you're seeing is flows towards quant strategies because they've been outperforming for a while now. and also flows towards more market-neutral strategies and flows away from the big sort of high-profile, event-driven, the not pure merger arb, which actually continues to deliver decent returns, but the stuff where room arbitrage or whatever they call it.
Luke Ellis, President of Man Group, very much staying with us on Bloomberg Go. Thank you very much for joining us. Next up, the opening bell on Bloomberg Go. We count you down to the open, just under 4 minutes to go. Futures positive across the board and a strong rally in Italy with the Italian banks leading the gains. This is Bloomberg Go. I'm Jonathan Ferro alongside David Weston and Vonnie Quinn. Stephanie Rule is away today. Ahead of the open, bases loaded. Luke Ellis of Man Group, Seb Galley of Deutsche Bank alongside us. More from them in just a moment. Here's your scorecard, 15 seconds to go. Futures up, 67 points higher, Dow Futures. S&P 500 futures up around about 8 points as the bell rings in New York City. The FTSE MIB in Italy, that is leading the gains in Europe, up 1.8%. Bank stocks in Italy, the big gainers in Europe. Switch up the board just very quickly. Cross asset, dollar yen, the one to watch at 108.33, up about 1/4% and snapping a 6-day losing streak. Governor Kuroda out in today's session saying they can act, they can do more. A little bit of verbal intervention once again. Yields higher in the Treasury market up to 1.74%, and crude stringing together a strong 2-day rally now at 1 full percentage point through $40. So they open about 30 seconds in. Let's strip it back with Matt Miller.
Yeah, let's take a look at what's going on. First off, you see that we have gains across the board. Not unsubstantial here. You got 1/3% gain on the S&P 500 at 2054, the Dow Jones at 17,640, and the NASDAQ at 4,875, up about 0.5%, the biggest winner of the group. If you take a look at the MOV function on any index, it'll show you the winners and losers. So I like to just go through and see, for example, Norfolk Southern, one of the biggest losers today after that deal fell through with Canadian Pacific. Apple, one of the biggest winners today, and this as far as adding index points, so as far as actually moving the needle on these markets. Let's take a look at the IMAP here so you can see the industry groups that are moving up and down today. We have green across the board, so all 10 of the S&P 500 industry groups are gainers, but you see IT with Apple up there, right up there at the top, but also materials and consumer discretionary stocks doing well. What I think is really interesting today is kind of away from equities in the currency market. John talked about it a little, but I pulled up WCRS, and what I'm looking at right here is the one-day trade against the dollar. So you see a little bit of Japanese weakness here against the dollar, but dollar weakness against all of the other major currencies. So the dollar is not strong today except against the yen because the yen had been on such a tear. I love to look at the yen's performance here. Click in this box and change it to JPY, and I'll go ahead and click it to a year-to-date to get a look at what the Japanese yen has been up to. Look at this. Japanese yen strength against every single major currency but one. Can you guess?
I can see Brazilian real.
Brazilian real is the only one that's done better. If you expand it to all of the currencies in the world, only Zambia has a currency that's done better than the Japanese against the Japanese yen than the real. So very interesting look at currencies there.
All right, well, I'm sure somebody is doing well out of that. Matt, thank you so much. As Matt was saying, after a 6-day rally today, the yen, little change versus the US dollar, but the Japanese currency has reached a 17-month high. We're asking the question, will we see more appreciation? We have Luke Ellis, Man Group President, still with us. And joining us now for more is Deutsche Bank currency strategist Sebastian Galli. So you've had a fun few months with all this volatility. John is fond of saying it's one big currency trade in the markets at the moment. Does the yen get stronger?
It probably does get a bit stronger. The reason is there's not much they can do in the short term. The yen remains a relatively cheap currency. In terms of policies, what they can do is go more aggressive on negative interest rates. That could do some damage. They could intervene in the currency market, but they might just lose some credibility doing it. So it's going to be a tough log, but mostly they might just get lucky because the US data will prove to be better. And right now what we're seeing is just a short covering. The yen has weakened from a very, very long time, and what you're seeing is just a partial correction, and I think one shouldn't be too concerned about it.
Luke, it's really hard to reconcile what's happening with the currency and what's happening with the rates market. Rates at all-time lows, and then you see what's happening with the currency, a stronger currency. I've heard so many different reasons for why the Japanese yen has got stronger over the last couple of weeks. One of them being, look at real yields, look at that differential with the US, and it explains it. Can you explain it? How do you look at that?
I think it's the market, and particularly the domestic market in Japan, is looking at the actions of the central bank and beginning to lose confidence. And you're seeing everything that the central bank wanted to happen is not happening. And, you know, as the equity market goes down, the banks go down within the equity market, so the currency gets stronger. So Japanese are pulling money back into Japan. Suddenly, you're sitting there as a domestic investor in Japan being encouraged to buy US bonds. Hey, they've got a 2% better yield than Japanese bonds. That's great. It's a 10% move in, what, 4 weeks? You know, coming back to your home currency is really important if you think the currency might strengthen. So I think you've got one of these self-fulfilling prophecies now.
I think it's always important to take a look. You mentioned the relative strength or the relative weakness of the yen. People that aren't in markets every day like we are might think of the yen more in a longer term terms. This is 5 years, right? So this is the incredible strength that we've been talking about here. As the yen gets lower on the chart, it's stronger because that's how many yen you can buy for $1. But imagine that's only at 2014 levels, and we're talking about the end of 2014. I mean, back in 2011, in, we were looking at fewer than 80 yen was what you could get for your dollar. So it's important.
The bigger point to that chart, Matt, and I think you're right to bring it up, but if you actually plotted where the stimulus started from the BOJ, early 2013, that's that initial push higher. But what we've erased is the stuff from late 2014 and October 2014. That is over 12 months of QE, jawboning, negative rates, that the market has just turned around and done that and erased it all in a matter of a couple of months. And that's a big move that you can't dismiss. And I just wonder, looking at that chart, Seb, whether that's the beginning of a downtrend. After that big push higher, we've erased the stuff from October 2014. Do we carry on erasing the stuff from early 2013?
I think we can move a little bit more on the downside on dollar yen, but the way to, I guess, to look at it is a market, once it doesn't get yield or gets negative yield in Japan, has very little alternative, will look basically for price movement to get their returns. And then you see currencies move very significantly. The yen first weakened massively, and now it's strengthening. And that's the market really pushing a price so that it actually can get a return. It also means that it will squeeze itself quite hard at a given point in time. We just are missing the triggers. Next triggers potentially would come out of better U.S. data, and therefore we would be back towards the original story, dollar yen moving higher, or it's just be that the BOJ for some reason is actually more effective than expected.
Well, so we've been talking a lot about the yen, but I want to ask a little bit about emerging markets more broadly, Brazil more specifically. It obviously looks like it's, you know, getting time for Dilma Rousseff. What does this say about the BRICS more generally? They, you know, rode the commodities boom. Is it over now, Luke?
I think, you know, we have a relatively constructive view on emerging markets, particularly just because they all got beaten up so much. If you look at emerging market equities on a relative to developed market equities, you look at emerging market debt compared to developed market equity, yeah, they got beaten up a lot, and the currencies were a big part. You know, somewhat when the relative moves so far, there becomes the opportunity to get back in. So actually, we'd be relatively constructive on emerging markets across the board.
Q2, Q3, Q4?
Yeah, I mean, look, these were big moves that we saw over 2 or 3 years, and they could be big moves going back the other way.
Sebastian, how much sense does it make to talk about the emerging markets? Has there been divergence, essentially? I mean, even within the BRICS, if you take Brazil, Russia, India, and China, those are 4 really different economies at this point.
If you think about the BRICS, it's actually a marketing acronym. Emerging markets is really, they become emerging once they fail, which happened in the past few months. Otherwise, some of them are getting closer to advanced economies. You can think about China, and some of them are clearly very emergent, and you can see some of the elements of that in Brazil, and thankfully it's starting to stabilize and go the other way. So there are massive amounts of divergence within emerging markets, but more fundamentally, they're all linked to some extent to the dollar, and as dollar liquidity has been withdrawn back into the U.S., back into the Eurozone, they've all suffered as a consequence of the way they set up their currency policy. So there's an element of it, and it's linked to the management of their currencies.
The political story is fascinating, not just Brazil, but South Africa, and then I go all the way up to Britain and look at the political story there. Luke Ellis, you were never getting away from this programme without talking about it, so here we are. The Brexit question. You're listed on the FTSE. Yeah, you don't watch the stock day in, day out, but what does this conversation, this debate, mean for you and your company at this point?
So I think what's slightly scary is that, you know, it's clearly a much closer race than people expected. There was a lot of confidence to begin with that the vote would go in favour of staying in Europe, and here we are. I just saw the latest poll this morning says 50-50. You know, generally people think it will come out a bit better than wherever the polls get to, but I think the FX market is pretty clearly pricing in the risk that 50% we go back up to 155 and 50% we go down to 130 or something like that. FX will be the biggest move if we get an event. I don't know. Look, I mean, my own personal view is there's very little to gain by a Brexit and there's a lot to risk, so why bother? You know, the answer is if the UK leaves the European Union, we will end up having to follow all of the rules that people want to object to. But it's an incredibly hard story for politicians to actually get across to anybody.
So, Matt, you want to take us into the Bloomberg. Let me guess. Brex go. That's my guess.
Exactly. Well, I mean, Luke brings up the polls, so I bring up the Bloomberg function that shows that. Brex go, B-R-E-X go, gives you a whole wealth of information on the possibility of a Brexit. You can see that we have news stories here. We have what to watch, dates that are coming, and then we have a composite poll. So we put together a composite of all the polls we can find. The green line here is those who want to remain in the EU. The blue line is for those who want to strike out and become more independent. And you can see that those who want to remain, that has fallen in recent polling. So now we're just at about 50-50, or about 40% each, the rest, of course, being undecided. I just think it's really interesting that the people who want to remain in the EU, that they have lost a little steam here.
Sebastian, pound weakness if we get Brexit or Smexit, as some people are calling it.
No, Smexit. I would love that. Red Dwarf directly coming. It's a classic. I think the market is already pricing in a potential Brexit with a significant amount of probability, both in volatility space but also in spot. So it's kind of already partially priced in. Then would have a negative impact on the eurozone. Having said that, I would look at the polls in England and wonder about their accuracy. They've proven extremely inaccurate in the past, and whether it's an average or median of polls. There's significant questions regarding their reliability, whether it's done online or it's done by phone. I think the record in England and the UK has been somewhat appalling.
Okay, thank you very much. That's Sebastian Galli. He's Deutsche Bank currency strategist. Luke Ellis of Man Group, you're going to stay with us for at least one more session here. Next, we're going to talk about the Man Group's plans to invest in the real estate despite prices hitting highs on Bloomberg Go.
I'm in our HPE green room here on Bloomberg Go. Coming up at 10 Eastern on Bloomberg Markets, Armored Wolf Managing Director John Brynjolfsson with the latest on moves in the market and inflation.
This is Bloomberg Go. I'm David Gura with the Bloomberg Business Flash. A battle is brewing over executive compensation at Volkswagen. Lower Saxony, the automaker's home state and its second largest shareholder, is joining unions in opposing full management bonuses. This is German newspaper reports say CEO Matthias Müller is planning to propose a voluntary 30% cut. VW is still reeling from its 7-month-old diesel emissions scandal. Overstock.com says founder and CEO Patrick Byrne is taking a leave of absence to battle hepatitis C. The retailer says it's unknown if he'll return to work. Byrne has recommended Mitch Edwards, the company's general counsel, as the acting CEO. And TransCanada is again sending oil through the Keystone Pipeline. Work was shut down for a week after a leak and spill in South Dakota. TransCanada says about 400 barrels of oil, or just about 17,000 gallons, were released. TransCanada has not released estimates on cleanup costs or repairs. And that is the Bloomberg Business Flash. Matt?
Thanks very much, David. I want to look at some of the stocks moving here at the open. Take a look first off at Hertz Global Holdings, I should say, plunging to a 6-week low after cutting their own guidance. The car rental company warns that earnings and car rental revenue will come in below estimates, citing pricing pressure in the industry. Hertz now expects full-year revenue to range from flat to dropping even by 1.5% versus a previous estimate of growth of 2%. Now it's down 4.5%. Check out the rails as well. We told you this morning Canadian Pacific was pulling the plug on its push to buy Norfolk Southern after the U.S. carrier rejected several proposals and opposition mounted to that merger plan backed by investor Bill Ackman. Canadian Pacific CEO Hunter Harrison said there was no clear path to a friendly merger. As a result, Hunter's company is up 4% and change. Norfolk Southern down 2%. And lastly, look at Under Armour suffering its biggest drop in more than 2 months today after Morgan Stanley cut its price target in half to $32 from $64. It's now the lowest on the street. The analyst there, Jay Soul, says UA is losing apparel market share for the first time in 3 years. David?
Okay, thanks very much. Let's go now to Bloomberg's Abigail Doolittle. She's live down at the NASDAQ. She's looking at a couple of stocks moving in completely different directions here in early trading. Abigail?
Hi, David. Good morning to you and happy Monday. Alphabet shares are trading higher this morning on an upgrade at Pivotal Research to buy from hold. Analyst Brian Weiser is making this bullish call ahead of the company's first quarter earnings report later this month. He's saying that he thinks that business trends are positive for the first quarter. He's expecting 16% year-over-year revenue growth. He has also raised his price target sharply to $970 per share from $800, with a long-term ascending trend channel that the stock has been trading in over recent years, suggesting that Google, Alphabet, could just trade toward those levels. Now, moving in the other direction, Incest Therapeutics. This stock is plunging, in fact, after the company pre-announced revenues for a key drug, saying that the revenues are likely to miss estimates by as much as 30%, citing a decline in prescription volume. Nonetheless, they expect to remain profitable. There is, though, a simply stunning short interest on this stock of 67%. So while the stock is holding this year's lows right now, those short sellers may just push this one lower. John?
Thank you very much, Abigail. I'm very pleased to say on Bloomberg Go, we're back with Luke Ellis, Man Group President. Luke, one thing Man Group have been looking at very recently is investing more into real estate. Can you talk to us as to why?
Sure. I guess, as we've talked about a lot, the strategy of the firm is to keep adding investment teams that diversify the list of offerings we have for clients based on what clients are looking to do. I find that at the moment, clients are absolutely against investing in bonds. They can't see it, but people have a need for yield. So they're looking for something with yield, something with stability, with sort of long-term confidence, but not bonds, given particularly government bonds, given where we are. So real estate, and this is really at the conservative end of the real estate spectrum. It's not the sort of highly leveraged restructuring stuff. It's core plus, which is basically there to give long-term investors a yield-like return.
How big do you expect this to be for Man Group? How much money do you look to raise for real estate investing?
We don't have a target. My experience is any time you set size targets in a financial business, you end up doing stupid things. So we never set size goals. It's a high-quality team. We're very happy to get them on board, and we'll take it long and steady. As I said earlier, it's a 5-year decision, not a 5-month decision.
So you might set a goal, but you'll set a limit, right? Because $4 billion is your largest, and you won't have.
Yeah, well, so I mean, we will definitely make sure that he's only doing the team's only investing when they can find quality returns for investors.
Now, where exactly, because real estate is huge. Are you talking about REITs? Are you talking about commercial real estate, which seemed to have peaked last year? Are you talking about residential?
This is particularly about high-end commercial real estate in direct buildings in this case. So this team is very much about, helping clients buy actual buildings, if you like, rather than looking at the debt side. That would be an interesting area. They've looked globally in the past. I'd leave him to comment on where he thinks the best value is at the moment.
Luke, at this point, some surplus capital at the group for potential acquisitions. Is it easier to set the fund up in-house, so to speak, or to acquire the fund if you want to push further into real estate?
Sure. I think, look, we try to be very disciplined about new teams and particularly about acquisitions. And so everything has to meet 3 criteria. The first is we have to believe in the returns and that those are attractive returns for our clients. The second is that we have to find people who believe in the same things we believe in. And then really importantly, we have to be disciplined on price. The reason most acquisitions and mergers don't work is because they make deals based on over-aggressive assumptions about the future. We will continue to be very disciplined on price. We're relatively indifferent to hiring teams or buying businesses. It's a sort of time to market question depending on the opportunity.
Given that you're talking about investment properties, where is the money coming from? Is it mostly China and other foreign countries, or is it?
Yeah, so I mean this is, if you take this real estate offering, it's about going back to our core client base, which is a pretty global client base, is very much at the larger end of the institutional market. That's where we have our core client base. A lot of our largest clients do 6 or 7 things with us. So, this is just bringing another thing to them to look at on their menu.
All right, Luke Ellis, thank you so very much. Man Group President, we really appreciate your time.
Thank you.
Coming up, it's Markets with Betty Lou and Mark Barton. And Betty joins us now. Betty, what's on the agenda today?
Well, we have a lot on the agenda, Vonnie, of course. First up is going to be John Brynjolfsson from Armored Wolf. He's got some pretty sharp views on where the bond markets are going to go and why he thinks there's a price turn now happening in equity. So we're going to talk to John Bryn, as we call him, in a few moments. Plus, at 10:30 a.m., David Cameron is going to speak in the House of Commons about his link to the Panama Papers. As you know, he released 6 years of his taxes in order to show that he is not and did not directly benefit from these offshore accounts. And then, as you guys were covering earlier, the Daily Mail bidding for Yahoo. It seems like this group of people or group of companies continues to grow. How is the Daily Mail going to pull off this acquisition? We're going to dig deeper into that, guys. Back to you.
Okay, thanks very much, Betty. Coming up later at 12:30 Eastern Time on Bloomberg Markets, Cadence Bank CEO Paul Murphy will weigh in on loans to the energy sector. bank earnings are kicking off this week, starting with J.P. Morgan, followed by Bank of America, Wells Fargo, and Citigroup. And I must say, one of the things I took away from Luke Ellis is all roads to growth lead through the banks.
Yes,
So
if the banks aren't doing well, the economy won't do well. And it's the banks that lead the economy, not the economy, the banks. I thought it was very interesting.
Yeah.
It is a big week, though. Also this week, in terms of high-frequency data, we have U.S. retail sales out on Wednesday, and then, of course, in China, GDP figures. And then we have the BOE decision on Thursday. We also have the IMF World Bank spring meetings kicking off in Washington.
Wow, that's
on
a lot.
Friday.
A lot happening. China GDP actually expected to come at 6.7% year on year from 6.9% previously. So that's one to watch. GDP year on year at 6.7 versus 6.8 previously, rather. So I think that's one to watch. And there's a data point now, not just for the wider market. I know they always deliver what they say they will deliver, but Fed Chair Janet Yellen has pretty much said, you know what, that is what we're going to be looking at. And that is what they will be looking at, I'm sure.
Which is great at China, the second largest economy. The third largest economy, Japan, not so much. So China has to pull up Japan.
Dollar yen, the one to watch, that's for sure. That does it for Bloomberg Go. Bloomberg Markets is up next. 30 minutes into the session, almost. Let's get you up to speed very quickly on what's happening in markets then. Equity markets across the world right now. S&P 500 up about 11 points this morning. Dow futures were higher going into the open. The stock market is up by 0.7%. The FTSE in London going into the close up 0.1. Italian banks leading the gains with the FTSE MIB up 1.8%.
It is 10 a.m. in New York, 3 p.m. in London, and 10 p.m. in Hong Kong. From Bloomberg World Headquarters here in New York, I'm Betty Liu.
And live from London, I'm Mark Barton. This is Bloomberg Markets on Bloomberg Television.
London to Hong Kong in the next hour. Here's what we are watching. We are half an hour to the trading session in New York. Stocks are following European markets higher right now, but are investors prepared for what is being forecasted as the worst earnings season since the financial crisis?
Then, in a surprise move, Canadian Pacific Railways ending its push to buy Norfolk Southern, saying there's no clear path to a friendly merger. The move coming after the US Justice Department said it opposed the takeover plan, which had been backed by investor Bill Ackman.
And there's a new player in the bidding for Yahoo. Britain's Daily Mail is interested in Yahoo's media and news properties. The company says discussions are still at a very early stage. What the move could mean for Verizon. Let's head straight to the markets desk where Bloomberg's Julie Hyman has the latest. Might be possibly a bad earnings season. You can't tell from the way the markets are trading.
No, you can. Really interesting here because as we've talked about, the sentiment is terrible going into this earnings season with the pullback of about 10% in earnings forecast for S&P 500 members on average, or I should say altogether. But you see all three major averages are actually trading higher. There's some talk that investors are now looking past this earnings season, maybe seeing it potentially as a bottom for earnings, but it's a little bit early to tell. All three major averages, as I say, higher. The Dow is doing the best of the three. And if you take a look inside the moves here today, sector-wise on the IMAP, you've got financials that are leading some of the gains, even though in particular there's a lot of pessimism around those bank earnings. Materials, tech, and energy help rounding out the top movers today. Healthcare would be the laggard, although at the moment it's not really much changed. And then the other big market story of the past couple of weeks has, of course, been the Japanese yen, which is not doing much today after we saw that 17-month high for the currency. We could see a little bit of a shift there, even as we are seeing a very high bullish sentiment in the yen. Take a look at the terminal, the Bloomberg again, #BTV 881 here, and this looks at the dollar yen versus the CFTC longs. In other words, yen longs here, which have been surging. You see that in white as we see the yen itself going up in the light blue, as we've seen really a lot of the bearish sentiment squeezed out of the market here, but may be reaching now the bullish sentiment potentially may be reaching a top. Also, we are watching oil, which is trading a near 4-month high, at least in London trading. Here in the U.S., up by better than 2%. Iraq saying it raised its output, which you think would be negative for oil prices. U.S. production, however, also falling. We learned that in data last week, down for the 10th time in 11 weeks, Betty.
Okay, so tell us about earnings season. What are people saying about it?
Well, as I said, there's a lot of negative sentiment. To focus in on a couple of individual companies, Alcoa, as is tradition, kind of kicks it off, right? They'll be reporting after the close of trading. And there's a lot riding on the line for Alcoa, the company planning to split itself up into raw aluminum production and finished products production. And so there are a lot of questions about what this is going to mean for Alcoa and how the business is doing. You can see the shares are up 3% going into the report. The other group, as I mentioned, is banks. That's a group that reports relatively early, and these stocks are rising as well. There have been some analysts commenting that it's perhaps not going to be quite as bad as investors are fearing when it comes to the financials. Mark?
Julie, check out the Stock 600. These are all the industry groups. We're up today. We've fallen for 4 consecutive weeks. That was the longest stretch since October 2014. If we fall for 5 weeks, it's going to be the longest losing stretch since June 2014. It's all about China today, which is why basic resources are rising, up by 3.2%. They're the best performing industry group today. That Chinese inflation data certainly taking investors by surprise, because on a month-on-month basis, producer prices posted the first increase since 2013. So the Stock 600 up by 0.6% today. Interestingly, investors have been pulling money from an ETF tracking European equities for 9 straight weeks. The Stock 600 is now trading near its lowest valuation relative to its US peer, the S&P 500, since 2000 and in more than a year, should I say, to be precise. And the yellow line is the valuation of the S&P 500, 17.4 times estimated earnings. The Stock 600 is versus the white line, 15.3 times estimated earnings. So the disparity is the most in over a year. Standard Chartered, big story today. It's seeking to sell at least $4.4 billion of assets in Asia. That's according to people with knowledge of the matter. The lender's paring its balance sheet after recording record impairments. This is the FTSE 350 Banks Index. Barclays is leading the gains today, but you'll see Standard Chartered is up by 1.2%. Interesting comments on Saturday from Yves Mersch. He's the ECB executive board member. He said that central banks' extraordinary measures to spur growth may eventually show diminishing returns. This chart shows that the ECB's measures are having an impact, because this chart shows since March the 10th, when the ECB said it would buy non-financial corporate bonds, euro investment grade spreads issued by investment grade utilities have outperformed financials by 18 basis points. The spread differential between the two is now the highest since 2014. The blue line is utilities, the white line is financials. What investors are probably doing, Betty, is front-running the ECB, purchasing what they think the ECB will buy when they start buying corporate bonds at the end of the second quarter. Let's check in with Bloomberg First News this morning. David Gura has the latest from our newsroom. Hi, David.
Thank you, Mark. Hello. Foreign ministers from the Group of 7 industrialized nations are meeting in Japan, calling for renewed push for nuclear disarmament. Also on the agenda, terrorism. U.S. Secretary of State John Kerry says the group's determination to defeat Islamic State is unwavering.
All of the G7 nations remain absolutely steadfast and united in their commitment. I would call it a resolute commitment, strong commitment, to degrade and destroy Daesh through our global coalition. And we each committed to using all of the tools that are available to us in order to confront this scourge.
Meanwhile, Secretary Kerry visited the memorial to Hiroshima's atomic bombing 7 decades after the U.S. used the weapon for the first time in history and killed 140,000 Japanese. Today's visit makes Kerry the most senior American official to travel to Hiroshima. The international furor over the Panama Papers is entering its second week, with UK Prime Minister David Cameron facing lawmakers over his ties to offshore tax havens. Over the weekend, Cameron addressed Conservative Party activists and acknowledged shortcomings in his handling of the matter. Meanwhile, Malta's government is facing a confidence vote, and Argentine President Mauricio Macri is promising to put his assets in a blind trust after he was linked to 2 companies listed in the Panama Papers. A U.S. naval officer is charged with spying for China and Taiwan. The suspect has been identified in multiple media reports as Lieutenant Commander Edward Lin. He was born in Taiwan and later became a naturalized U.S. citizen. Lin was reportedly assigned to the headquarters for the Navy's Patrol and Reconnaissance Group. That's according to a redacted Navy charge sheet. Lin is charged with 5 counts of espionage and attempted espionage. 15 former American Bar Association presidents are joining the push to urge Republicans to consider President Obama's nominee to the Supreme Court. That's Merrick Garland. In a letter to Senate leaders, the legal advocates argue the GOP blockade is injecting a brand of politics into the courts that, quote, materially hampers the effective operation of the judiciary. Republicans say they have no plans to move forward on Garland's nomination. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm David Gura. Betty?
David, thank you. Well, as we've been mentioning, let the earnings parade begin, right? As Julie just talked about, Alcoa due to report their first quarter results after the bell today in the unofficial kickoff to the reporting season. Corporate profits expected to fall 9.8% year over year. That would be the sharpest decline since the third quarter of 2009 and a 4th consecutive quarter of contraction. So joining us now from Irvine, California is John Brynjolfsson, the former PIMCO money manager, currently the chief investment officer of Armored Wolf Family Holdings. So John, let's talk first about corporate profits. You know, Mohammed El-Arian has this book out about the central banks being the only game in town when it comes to the economy, right? Are corporations the only game in town when you look at market price action in equities?
Well, yeah, I mean, the earnings have been weak and they're getting weaker. It looks like it's going to be a terrible first quarter in terms of earnings, but money managers for the past 6 or 7 years have been focusing on central bank action, government action, bailouts, not bailouts, industry subsidies. So you've really got to be a Washington or global policy analyst as much as an economist these days in order to kind of gauge the market action. And we're looking at the Fed and we're looking at the ECB and the Bank of Japan and global conditions on the political and policy front as much as earnings.
Okay, so but the sum of all that, though, John, you said in a note to us that you're seeing the price action turn. What do you mean?
Well, I mean, equities have been doing very well for the past 6 or 7 years. Obviously, we had a big pullback in January and February, and that's bounced back, mostly on the idea that the Fed would not tighten. Frankly, given economic conditions, it may be hard for the Fed to tighten this year. My colleague and I, who run a portfolio for James Alpha, we think the Fed might tighten once this year. But by and large, monetary policy around the world is as easy as it can be. That means more money gets printed. We don't really think that generates economic growth. It kind of creates an illusion of liquidity and an illusion of being able to sustain things. But ultimately, that's not that encouraging. For example, we've seen gold do quite well for the past quarter or two. Gold, for example, is an alternative to kind of buying into that liquidity.
Yeah, John, how worried should we be by the fact that as equities have risen from their February the 11th lows, we've seen money move into these havens like gold, like the yen, and like the G7 sovereign bond index is a lovely index encapsulating sovereign bond markets. What does that tell us? That it's the haven markets that will continue rising and risk assets won't do so well?
Well, yeah, I mean, if you look at G7 sovereign bonds, half of them are yielding 0 or less. So that doesn't augur for a great long-term investment. It might be okay to park money there temporarily. I think Bill Gross came out and talked about how the long-run outlook for interest rates is rising, and that means negative capital gains on bonds. So you're booking, in the case of U.S., which is the highest yielding sovereign in the world, at 1.75% for 10 years. That's nothing really to crow about. So the outlook for bonds longer term is certainly negative. Frankly, given how weak the global economy is and how weak earnings and profits are, probably I would disagree with Bill in the short term. Bond yields are likely to stay low and maybe even get a little bit lower from here before they start kind of a secular rise.
John, I want to get your take on the price of oil. We've come from, on WTI, $26 to roughly $40 today since those lows in February. You think we're heading back to 30? Why is that?
Well, I'll tell you, I have been wrong for the past 8 weeks or so. And what I got wrong is that there is floating storage available, meaning that right now the global oil producers are producing more oil than we consume. We have already filled all the on-land storage, and to some extent, I made the mistake of thinking that inevitably would result in an immediate glut and a downtrend in prices. There's been a rebound, but I think it's a head fake, because having oil sitting around in the high seas, floating in tankers, waiting to be used, is not a long-term plan for success. Ultimately, all those inventories, all of that floating storage has to be worked off, and the only way it can get worked off is if production dramatically decreases. I don't see that happening in the near term. Or if consumption rapidly increases, I don't see that happening, certainly not in China, certainly not in Europe, certainly not in Brazil, certainly not in Africa, and even in the U.S., we're kind of looking at a 1% GDP growth, which doesn't speak to strong oil consumption.
Okay, but then this is what's puzzling, right? John, I heard what you just said about bonds and the outlook for rates, but I don't know if you can see this, but our viewers can. Guys, let's pull up that chart about the bond market's expectations. Their 5-year outlook for inflation, which continues to rise, and John is actually getting near that 2% inflation target set by the Fed. So when you look at something like that, it actually augurs well for the Fed to raise rates, and that perhaps the bond markets will turn.
Well, even the inflation markets are kind of in the basement, to the extent for most of my career in the inflation markets, priced in either 2% inflation or a risk on the upside. For the past 3 or 4 years, it's been looking more like deflation in Europe, deflation in the U.S. We have had a pop in inflation recently. Part of that is the shelter component. So the owner's equivalent rent has been rising. Rents have been rising. That's bringing up the core rate of inflation towards that 2% number. The other part of it is the headline effect. With oil going from $25 to $40, you will have a little pop in the headline rate of inflation. But still, we're even on a 5-year basis, we're looking at inflation, according to the TIPS market, of around 1 to 1.5%. And there could be some risk on the downside, especially if my oil outlook comes through.
All right, John, thank you so much. Good to see you. John Brynjolfsson, the Chief Investment Officer of Armored Wolf Family Holdings. Much more ahead. Canadian Pacific Railway ending efforts to buy Norfolk Southern after a series of rejections. We're going to check out how those stocks and others are moving in today's session.
Live from London and New York, I'm Mark Barton.
And I'm Betty Lou. You're watching Bloomberg Markets. It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. 5 years after Occupy Wall Street protesters began a national discussion about income inequality, the pay gap is only getting wider. The federal government says that adjusted for inflation, wages for investment bankers and securities industry employees were up 117% from 1990 through 2014. Over the same period, wages for all other industries up only 21%. Canadian Pacific Railway is ending its efforts to buy Norfolk Southern after several rejected proposals and mounting opposition to the merger plan backed by investor Bill Ackman. Canadian Pacific sought to create a coast-to-coast network that it said would benefit shippers by reducing costs and congestion. Norfolk Southern rebuffed 3 offers, including one that valued the company at $27 billion. And And let's head straight to the markets desk where Bloomberg's Julie Hyman has more on the reaction. Norfolk Southern stock falling on this news.
Yeah, and Canadian Pacific is getting a little bit of a lift as this effort is now ending. If you take a look here, Canadian Pacific up 4%, Norfolk Southern down a little more than 1%. The nail in the coffin here appeared to be the U.S. Justice Department comment on Friday. Canadian Pacific had tried to create a trust so that Hunter Harrison, the CEO of Canadian Pacific, would run Norfolk Southern in advance of a takeover. The DOJ said that should be rejected. A day earlier, the U.S. Army said allowing the two companies with potentially compelling interests to be managed as one could harm national defense. So these things were sort of piling up, resistance to this deal happening. Jason Seidel, who's an analyst at Cowen & Company, said in a note, Canadian Pacific is walking away from the negotiating table that never even really existed, that it had made these efforts, but the two were never really in substantial talks, one could argue. So the question is, what happens now? In the past, Canadian Pacific has actually tried to acquire or has held some kind of talks with CSX as well that also were rebuffed. If you look at CSX shares today, they're little changed. Our analyst over at Bloomberg Intelligence suggests the remaining target could potentially be Kansas City Southern. But earlier last month, our Eric Schatzker spoke with Hunter Harrison of Canadian Pacific about Norfolk Southern or CSX. Did he have a preference for either of those in terms of a merger? This is what he said.
We have said, there's not a favorite there. Both the organizations in the East would work with our franchise. So, there's not a favorite. One has this advantage, one has that advantage. We think we could fit well with either one, but neither one of them think they fit well with us. So, I've got a selling job to do if we're going to make this successful.
So indeed, it is unclear what happens now. We have seen a decrease in railroad shares over the past year, along with commodities, which make up a large part of their business. Part of Canadian Pacific's playbook has been cutting costs. So if there's no one to sort of consolidate with and cut costs through synergies, it's unclear what happens next. Mark?
Julie, thanks a lot. Still ahead on Bloomberg Markets, Yahoo getting another suitor. This time it's the owner of the UK's Daily Mail newspaper. Details next. Right, another suitor's throwing its hat into the Yahoo ring. The publisher of the Britain's Daily Mail newspaper is in talks with private equity firms about a possible bid for Yahoo. That's according to a person familiar with the matter. Our chief business correspondent, Matt Cabell, is here for more. How would they afford it?
Well, this is going to have to be done in league with private equity firms, Mark, or through some kind of complex structure. I don't think anyone expects Daily Mail and General Trust, that is the parent company, to purchase Yahoo's media assets outright. So they are talking to a large number of private equity firms, seeing if they can get a deal together. But there are some big gorillas in this auction, Verizon, perhaps Google, other big tech companies. So it's going to potentially get quite expensive if these companies do really want these assets.
So, Matt, where does this leave Verizon, which appeared, at least as of last week, to be the leading bidder here?
Well, I'm not sure, Betty, and I think it will come down to what the various parties are prepared to pay. Certainly, Verizon is a much, much, much larger company than DMGT. If they want to pay up, they can do so, and they can win this auction. However, I think Daily Mail, as a company that is a media company, not a telecom company, may have a clearer strategic case for owning something like the Yahoo media assets. So perhaps that lets them go the extra few inches when it comes to doing their sums on how much they can pay.
How would it improve Yahoo's web business and maybe expand the reach, Matt?
Well, I think what the name of the game right now in internet content is eyeballs. Advertisers want to deal with a small number of very big platforms. The Daily Mail is a very big platform in its own right, as we were just talking about. It's the #1 English language news website on the internet. Yahoo is enormous, though, as well. So if you combine them, you have this one-stop shop for big advertisers, and ideally, that means they can charge a premium for getting those ads in front of readers' eyeballs.
In a word or two, why is Daily Mail so popular? I asked you this in the break. I mean, that's an incredible stat.
Celebrities, I suppose. It sells. Tabloids sell in print, and they sell online, too.
There you go. Brilliantly put. Matt, good to see you. Matt Campbell of Bloomberg News. Right, Betty, what's coming up next?
Well, still ahead, Mark, British Prime Minister David Cameron under pressure after it was revealed he had profited from offshore investments. He's going to be making a statement in front of lawmakers in Parliament shortly. That is a live shot right before his remarks.
Has the Home Office team had time to reflect on the extraordinary NUT motion that condemned the prevent duty? And would the ministers agree with me that actually we all have a responsibility to do all we can to prevent young people from being engaged?
Live from Bloomberg's world headquarters here in New York and London, I'm Betty Liu.
And I'm Mark Barton. This is Bloomberg Markets. Let's check in on Bloomberg First Word News today. David Gura has more from our newsroom. Hi, David.
Hi, Mark. Thank you. Greek officials will have another go at overcoming disagreements on austerity measures after all-night talks failed to produce a breakthrough. Greece has been hoping to wrap up the talks with its European creditors and the IMF over the weekend. Greece has deepened on rescue loans since 2010 and signed a $98 billion bailout deal last summer. A UN agency used parachutes to airdrop food aid to a Syrian city under siege since March 2014. 22 of 26 pallets dropped Sunday were collected in a town in eastern Syria. The aid is enough to feed 2,500 people for 1 month. More airdrops are planned. President Obama is meeting with U.S. Federal Reserve Chair Janet Yellen today. The White House says the Oval Office meeting will focus on the state of the American and global economies as well as Wall Street reform. Vice President Joe Biden is also expected to attend. A stark warning for Donald Trump. Americans trust Hillary Clinton more than the Republican frontrunner on an array of issues, from immigration to health care to nominating Supreme Court justices. That's according to a new Associated Press GFK poll, but the survey does reveal some potential trouble spots for Clinton. Trump is nearly even with her on whom Americans trust to handle the economy. Golden State Warriors are 1 game away from breaking the NBA record for most wins in a season on Sunday. The Warriors beat the San Antonio Spurs for their 72nd win of the season. That ties them with the Chicago Bulls. The defending champions have a chance to break the record with their final home game of the season on Wednesday against the Memphis Grizzlies. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm David Gura. Betty?
David, thank you. Now it's time to get you caught up on all the action around the world. Let's start in Asia, right, where most of the stock markets followed the Nikkei down. As you know, the yen continued to hold on to its gains that we've seen over the last 7 sessions. However, one big story came out of China. China's consumer prices were up last month while factory deflation eased. Our Beijing correspondent Tom McKenzie has more.
Inflation in China rose again in March, with the consumer price index up 2.3% year on year. Now, that was marginally below forecasts of a 2.4% increase. The rising cost of food, particularly pork and vegetables, had an outsized impact, with prices up 7.6% in March. That's the highest since the start of 2012. That may have more to do with supply shocks than demand, though, according to Bloomberg Intelligence. Non-food inflation edged up just 1%. Factory gate price deflation eased to 4.3% from 4.9% in February. That was thanks to stronger commodity prices and an improvement in the real estate sector. Lots more China data this week, with trade data out on Wednesday and first quarter GDP on Friday. For Bloomberg News, I'm Tom McKenzie in Beijing.
Now, after 4 weeks of declines, European stocks are rising on this Monday session. It's a China-led rally. We had inflation data out of China. The big news was producer prices on a month-on-month basis rose for the first time since 2013. We've come off the back of 4 weeks of declines, but we're rising on the Monday. Have a look at the best-performing industry groups today. It's the sort of China-led basic resources that are leading the advance. As an industry group, they're up by 3%. Banks are up on hopes that we're close to an Italian bailout fund being completed in Italy. Italian banks, the best performers within the banks index. Energy stocks and autos also rising. Let's just finish off with the bond and the currency markets. The euro on Thursday rising to 80 pence against the pound. A little bit lower today, down by about 0.6%. Highest on Thursday since June 2014. It rose for the 5th week last week, best run since January. And the yield on the UK 10-year is up by 4 basis points today, 1.4%. The German 10-year, a little bit up as well. The propensity today is invest in riskier assets. Let's find out how some assets are doing in the US. Bloomberg's Abigail Doolittle has the latest live from the NASDAQ in Midtown Manhattan. Hi, Abigail. What have you got for me today?
Hi, Mark. Well, we have a nice rally happening here at the NASDAQ. The index is up about 0.9%. The biggest boost this morning is Apple. Shares are higher as RBC Capital is saying that they believe Apple is selling the iPhone SE really well. Analyst Amit Daryanana expects the company to sell 15 million of these units this current year and says that it could actually boost earnings for 2016 by 23 cents per share. Now, on this, the stock is moving back toward its 200-day moving average, something that is typically bullish, but unless convincingly above that level, Mark, last year's trading action suggests that we could actually see some downside ahead of Apple, perhaps into the company's earnings report on April 25th or after that, Mark.
And Abigail, any other stocks moving higher today?
Well, the best performer in the NASDAQ 100 today is Seagate Technology. Shares are soaring on a bullish report out of Barron's. Barron's believes that Seagate Technology could move up by 20% over the next 12 months. This after the stock has gotten pummeled over the last year. Investors are concerned about declines in the PC market while the cloud is rising. But Barron's is encouraged by the company's ample earnings, their cost-cutting efforts, and also a hefty 7.6% dividend yield, which they say looks quite safe. Mark?
Abigail, thank you very much indeed. Betty.
The head of the world's largest listed hedge fund business seems to prefer a more low-key approach to managing his business rather than this colorful commentary. On Bloomberg Go this morning, Man Group President Luke Ellis talked about how he runs a portfolio and about the hedge fund industry.
The really big hedge funds have very high-profile characters at the head of them, and they make great TV. Right, and everybody likes to, and you know, as we've seen, they've made a couple of fairly dramatic mistakes in the last few quarters or have been punished by the market. Yeah, the real returns are not that bad, though it wasn't a great quarter. The reversal in the stock market, the reversal in momentum hurt people on the short side a lot. You know, that was bad in the first quarter, but actual returns are not that bad, and the quant funds are doing really quite well.
Is the business model a little bit, I wouldn't say broken, but is it a little bit hurt though? I mean, you're down 15% and your stock isn't, you know, it's limping along. 75% of your revenues come from, you know, management, 25% from fees. So is this a sort of a statement, you know, is your stock price a statement on the business model of hedge fund investing?
No, I don't think so. Look, I mean, you know, honestly, I spend little time worrying about the stock price on a day-to-day basis. You know, we're trying to run a business. You're trying to run it for 5 years forward. And the answer is that there is lots of opportunity to grow the company on a 5-year basis. Look, asset management, like any other part of the financial industry, is under fee pressure. There's no question about that. So we have to keep moving faster. We have to keep delivering performance for our clients and delivering interesting things that they want to put their money to work to. And if you do that, then you can grow the business on a long-term basis.
Look, the general tone around hedge funds at the moment, though, as you say, primarily also because of these big hedge fund rock stars that have made some bad calls in the last 12 months. Does that really affect inflows in general, though, into hedge funds?
So there's an interesting thing there, and just one bit. So we might be the largest listed hedge fund business, but it's not one single big hedge fund. And one of the things we believe in is shutting hedge funds early. There is no question that anything that's supposed to be about return, anything that's supposed to be about alpha, has a capacity constraint. You cannot have something that's enormous and be about alpha. It's just a sort of simple game of maths, right? So what we have is 40 or 50 different individual hedge funds, none of which we allow to get that big. And you know, through that, you can deliver some decent returns. You need the market to give you a bit of opportunity, but you know, it's like you look at the CTAs. I mean, ours, everybody else's, you know, it was a sort of 5% first quarter in an environment of zero returns or zero yields on bonds. Look, whatever you guys know the numbers, but it's an enormous percentage of bonds globally are now negative yields. Sanofi did a 3-year bond issue the other day at 0. You know, people are looking for something other than bonds. I can't tell you how many clients we talk to around the world who are going, look, I mean, this is institutional investors going, I just can't buy bonds here. I can't own bonds here.
So Luke, you took us to it. You manage a lot of different funds, really. And as you said, you'll shut them early if they're not really performing. If you take a trend line of clusters.
The thing I was talking about was stopping inflows when they are performing well. That's the trick, so the performance remains.
Take that trend line. Are you making changes in your funds faster than you did before in order to adjust to the marketplace?
No, I think if you look at individual position levels, what you see is this type of market where liquidity is fairly flaky. What it means is you either need to run your portfolio with very little macro risk, very little directional risk, as little factor risk as possible, and try and make it out of security selection, stock picking, or you need to be very patient. And the people that are getting in trouble are the ones who are trying to call the market one way one week and then suddenly flip and change the other way the next week. And yeah, that's really hard at the best of times. And in this market environment, you're basically just paying bid offer away to the street.
Again, that was Man Group President Luke Ellis on Bloomberg Go. And in the meantime, Mark, UK Prime Minister David Cameron is speaking, right?
He is, Betty. Yeah, he's making this statement in front of lawmakers in Parliament right now. This, of course, comes amidst this week of scrutiny of his financial affairs, in which it was revealed he'd profited from offshore investments. Now, he has acknowledged he badly handled his response to the revelations and published his tax data, of course, over the last weekend. This is tax data covering the last 6 years. So he's speaking of Parliament. Interestingly, he's suggesting and saying that he isn't suggesting all MPs should publish their tax returns. Some members of Parliament, such as the opposition leader, says we're probably heading in that direction. Jeremy Corbyn, the Labour Party leader. I spoke to the London mayoral candidate Zach Goldsmith later. You can hear more of that interview in the next hour. He says it's up to the individual MPs and up to the constituencies themselves. Zach Goldsmith himself has published his tax return as part of the mayoral campaign. We've also just had George Osborne publish his tax return. There was pressure on the Chancellor to do so because he, like Cameron, has come into family money. And you can, of course, watch Cameron's remarks on the Bloomberg at Live Go and, of course, our live events channel at Bloomberg.com Live. Do not miss that. But we'll continue to dip in and out of the Prime Minister's statement to Parliament. Right, still ahead on Bloomberg Television, Bloomberg Business Week takes a trip to a restaurant where it can take months to create the perfect eye-pleasing dish. This is Bloomberg Markets. I'm Mark Barton in London with Betty Liu in New York. Time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. And Britain's equivalent to the Secretary of the Treasury, the Chancellor of the Exchequer, has published his tax returns for 2014 to 2015. George Osborne earned $198,738 during that period. He paid $72,210 in taxes. As we mentioned, UK Prime Minister David Cameron is speaking to Parliament on the tax issues. He isn't suggesting, Cameron said, that all MPs or members of Parliament should publish tax returns. Valeant Pharmaceuticals is asking its chief executive to cooperate with the Senate investigation into drug pricing. That's after he failed to appear for a deposition. The Senate Special Committee on Aging said last week it planned to start legal proceedings against J. Michael Pearson, who's leaving Valeant. The executive is under subpoena to appear before the committee for an April 27th hearing. Hertz is cutting its revenue expectations for the year. The company says the rental car market is suffering from excess capacity. Hertz Global Holdings now expects full-year revenue to range from flat to dropping by 1.5%. The company had previously projected growth between 1.5 and 2.5%. That is your latest business flash. Betty, we need to talk about food.
I was just going to say that, Mark. My favorite topic. Our Bloomberg Business Week is hosting its annual design conference today in San Francisco. 25 of the world's most creative thinkers will speak at this event, and one of the people profiled is Chef Dominique Crenn. She was profiled by editor Howard Chua Ewan, and Howard joins us now for more. I mean, after reading this article, I really want to try her dishes. So she's very unusual, right? She presents a poem,
very, very
not a menu.
unusual. She doesn't give you a menu.
A menu.
She writes a poem.
Okay.
And it's based on what's available, and basically each entree is a line of the poetry.
That's amazing. Okay, so tell us a little bit about her.
She was not trained as a chef. She was trained as a business person, and as a and her father was a politician.
You mean she went to business school?
Yes, in France. She was born in France, and but when she got to the States, haute cuisine became her calling. She started this restaurant. It has 2 Michelin stars, which is very rare for an American restaurant. Atelier Crenn in San Francisco.
Okay.
Yes.
And so what gave her that change of heart to go from business to being a chef?
I think there were 2 things. One is she loved food, and one was that food also evoked all these memories from France. And what she says is a lot of what she presents on the dish is a lot of what she's experienced. The dish that we profiled was a dessert, which reminded her of walks in the forest with her father, hunting for mushrooms and berries. And that's what it's called, a walk in the forest.
Howard, this reminds me of that Pixar film, Ratatouille. Have you seen it?
Yes, it's one of the best movies ever made.
You know, for those who haven't seen it, Peter O'Toole voices this wonderful, sort of serious French food critic, and he's bowled over by this dish at the end, which evokes his childhood memories, and it breaks through his very sort of sincere defenses and even makes him cry. I mean, it sort of sounds similar to that, doesn't it?
It's very similar, and she does that with every dish, but the fact is that as beautiful as the dishes are, they're also very delicious.
And how long do they take to prepare these dishes?
It depends. The one that we profiled took a few months to prepare because they had to perfect the dish that they were presenting it in. It looks like it's carved out of a tree. So it has the texture of a piece of wood that they found in the forest, and it looks like it's just served there, but it's ceramic. It's a beautiful dish.
Howard, Heston Blumenthal, who's our sort of big chef here, of course you'll know him, he's doing similar things and has been doing similar things in his famous restaurant, The Fat Duck. But it's not cheap going to The Fat Duck. It's something like £250 before alcohol is thrown in. So, Betty, you're going to have to start saving up for when you take me there. Is it a similar sort of price?
No, it sounds like a Dutch date.
What's the cost, Howard?
It costs close to $300 per person, and that's but Dominique has the new policy. The tip is included.
Oh,
so it's a bargain.
So she's moving along those lines too, which I know a lot of restaurants, or not a lot, but there are more doing that.
Increasingly.
Increasing number. Howard, thank you so much.
Thank you, Betty.
Read about Dominique Crenn and Bloomberg Business Week's annual design issue. Still ahead on Bloomberg Markets. Good timing for Swiss luxury watchmaker IWC. It's unveiling a new timepiece for the Tribeca Film Festival, but who can afford it? We'll tell you about that in a moment.
Now, Swiss luxury watchmaker IWC Schaffhausen is courting the US market with an ode to film. It's just launched its 4th special edition timepiece with a $20,000 price tag in offer of the Tribeca Film Festival that, of course, kicks off this week in New York. And joining us now is IWC's North America President, Edouard Daubemont. Edouard, thanks for joining us today. Why do you have this collaboration with the Tribeca Film Festival? Is it beneficial to you?
Yeah, of course, we don't think that anybody is buying our watches to tell the time. You know, we think that it's all about the DNA, the history of our product, and also what is behind our watches. And we have to tell stories, a little bit like in the film moving industry. You know, we are storytelling. So we feel that it's a very strong and natural link between the two, IWC and the Tribeca Film Festival. We've had that partnership for 3 years. It's our 4th year. We just renewed it for another 3 years. So it's really a long-term platform for us.
You've launched this you've launched this special edition timepiece in honor of the Tribeca Film Festival. Who's your client? What type of person would buy that timepiece?
Yeah, obviously it's going to be people who follow IWC, who enjoy the brand and are also into the film making industry. You know, they really appreciate movie and they like the exclusivity. This limited edition is going to be produced only to 50 pieces, available in our North American boutique. So, you know, they like the complication. It's our latest perpetual calendar we launched last year, so it's something very special for us.
So, Edouard, how big is the North American market for you? Give me a sense of that.
Yeah, I mean, it's a very important market for IWC. You know that North America is still the #1 market worldwide for luxury goods. It's not yet the case for watches, but it's growing. And really the strength of the American market is the local followers. We have a lot of collectors, and we don't depend so much about tourism business. You know, it's all about American customer, which is great.
Okay, yeah, so I mean, that's different in many ways from the other luxury goods that are sold here. So what's most popular? I mean, I know we've got some watches here on set. So what are the most popular timepieces?
You know, at IWC, everybody, or almost everybody is familiar with our best family. It's a Portugueser. It's iconic, you know, in the watchmaking industry. It's doing extremely well
Which one
worldwide.
is that on here?
It's actually the second from the left.
Second from
so
the
it's
left. Okay.
it's a Portugueser and also the first one or the first one from the right.
Okay.
And it's doing extremely well in the US, but also worldwide. And really in the US, we have one specificity. It's a pilot line. It's very important for IWC. It's doing extremely well, but even more in the US. You know, it's a beautiful
Why
watch.
is that?
Because I think the US resonates very well with this kind of product. It's elegant sports product. You know, it's not only dressy, but it also has a very classical look. And by the way, we're just launching this year our new pilot collection. So we expect the coming months to be even bigger for IWC pilots in the US.
Edouard, there was a gap at the end there. There was no smartwatch. Are you planning to get into the smartwatch portion of the market?
No, I mean, not at all. I think, you know, the last thing you want is your IWC perpetual calendar to wear a piece of technology that will become obsolete in 2 years. You know, you want your IWC to still be updated when you pass it along to your kids and grandkids 50 years from today or 100 years from today. That's the whole point, you know. But, you know, we are doing something special. We are about to launch IWC Connect, which is basically a wearable device that you're going to be able to put on your strap that will track your activity. It will be connected.
Oh, so it's on the strap, not
yes,
the watch.
exactly,
Okay.
exactly. It will be connected, track your activities, and connected to the Internet of Things. And after 18 months or 2 years, once the technology is outdated, obsolete, you can get a new strap. We will not touch the watch. You know, it's an absolute must for IWC.
Edouard, thanks for joining us. Great to chat to you, the IWC North American President, Edouard Darbeaumont. And you can read, of course, about luxury at Bloomberg Pursuits, your destination for the finest things in life. Just head to NI Pursuits. Go on the Bloomberg. Right, still ahead on the European close. We'll have the latest on UK Prime Minister David Cameron's remarks in front of lawmakers in Parliament. He continues to speak after he unveiled his tax return over the weekend, and the Chancellor of the Exchequer, George Osborne, has just released his tax details as well. That's what's happening to European stock markets. Small decline in London, but European stocks are rising after 4 straight weeks of declines. European close is next.
It is 11 a.m. here in New York, 4 p.m. in London, and 11 p.m. in Hong Kong. From Bloomberg World Headquarters here in New York, I'm Betty Liu.
And live from London, I'm Mark Barton. You are watching the European Close on Bloomberg Markets. We're going to take you from New York to London to Milan in the next hour. Here's what we are watching today. And the scrutiny over David Cameron's financial affairs has come to a head today as the PM addresses Parliament. How he explained his controversial investment to the House of Commons and what he says about other members of Parliament publishing their tax returns.
Then Italian banks have been the black sheep of Europe as bad debt just piles up. But help may be on the way in the form of a fund. More from the private meetings.
And the commodity slump has wiped out much of the energy industry, but there are still some that have benefited because of low oil prices.
It is 90 minutes into the trading session here in the U.S. Let's head straight to the markets desk where Bloomberg's Julie Hyman has the latest, and we're losing steam here in this rally.
Yeah, stocks giving up a little bit of their gains. As we talked about earlier, it was kind of puzzling to see the rally in the face of the poor sentiment on the earnings season that is set to begin imminently. The Nasdaq still hanging on to a gain of 0.5%, but that's the best of the three. I wanted to bring you two charts from the Bloomberg today having to do with earnings season and valuations for the S&P 500 right now. So let's take a look at the first one. It's hashtag BTV 884. It's from Lou Wang's great story of Bloomberg News today. And so this takes a look at the Bank of America earnings revision ratio. That's in blue. That's the number of analyst revisions upwards to company earnings versus downwards. It hit a low last month of 0.47, and now that was a 7-year low, and then bounced a little bit. And then the other line is the change in S&P 500 earnings, the weighted average gain or loss year over year. So the argument is a couple of other times we have seen them converge at lows and then bounce. So this time, could we potentially be set for a bounce once again? But then there's something that argues against maybe further gains in U.S. stocks, and that's the PE ratio for the S&P 500, shown here with various standard deviation lines. It's a 5-year chart, and essentially what you see here is that we are above the average over the past 5 years for that PE, approaching 19. It's around 18.5 right now. So some investors have said valuations are getting a little richer, especially given the fact that we're going into this, what could be a very tough earnings season.
Julie, just getting away from earnings, one of the more volatile stocks in the S&P leading the gainers today. Tell us more.
Yes, it's Chesapeake Energy. That's the one we're talking about. It's the best performing stock in the S&P today. There have been a lot of concerns about the company's debt load. It said today that it was pledging additional assets as collateral to maintain access to its $4 billion line of credit. So it looks like a relief rally in this stock as a result, although it's heavily shorted. We should mention that as well. On the flip side, at the bottom of the S&P 500 today is another energy stock, National Oil Well Varco. It's the biggest U.S. maker of oil field equipment, cutting its quarterly dividend by 89%, joining many of its peers who have made similar moves in order to preserve cash in a tough environment. Betty?
All right, Julie, thank you so much. We've got breaking news right now on Goldman Sachs. As you know, they're settling with the Department of Justice on its handling of mortgage-backed securities. Some of these details had been released earlier, but today they're confirming they're going to pay about $5.1 billion to settle this U.S. probe into its handling of mortgage-backed securities. This is all in an effort by the U.S. government to hold these Wall Street banks accountable for what happened during the financial crisis. The details of this include $2.39 billion civil penalty, and they're going to make $875 million in cash payments and provide $1.8 billion in consumer relief. This is all according to the Justice Department. Goldman is going to be scheduled to report their earnings on April 19th. This will have an impact and has on their earnings. Mark?
Betty, let's chat about the European stock market because we're rising. There's about 30 minutes left of today's session. The stock 600 is up by about 1/5 of 1%. Basic Resources leading the advance. It's a China-inspired rally, Betty, today because we had inflation data out of China earlier. On a month-by-month basis, producer prices posted the first increase since 2013. Daily Mail, big story today. Daily Mail, of course, is owned by Daily Mail and General Trust. That's the parent company, and the parent company is in talks with a number of potential bidders for Yahoo. The Wall Street Journal first reported the discussions between DMGT and private equity firms on a bid for Yahoo. It's been a bit of a topsy-turvy day, to be fair, for DMGT today. Shares are down by about 1/4 of 1%. As we know, Betty, it seems as if there are a lot of interested parties for Yahoo. SAP, the software company, earlier today, first quarter sales missing estimates. Some deals in the America region were signed later than expected. The company, though, did reiterate its forecast for the year. Shares down about 1/2 of 1%. And very quickly, just want to show you this chart. It shows us how well euro area small cap stocks have fared since the index, the wider index, hit a big low on February the 11th. Since then, euro area small cap stocks have outperformed their bigger peers, the Euro Stoxx 50. And actually, this chart right here shows that small cap stocks, Betty, have outperformed right now by the most in 2 years. Good stat there. Lovely chart showing us how small stocks have rebounded after February the 11th, bigger than their bigger cousins.
Pretty nice returns there, Mark. Okay, let's check in on the Bloomberg First Word News this morning. Matt Miller has more from our newsroom. Matt.
Thanks very much, Betty. A UN agency used parachutes to airdrop food aid to a Syrian city under siege since March 2014. 22 of 26 pallets dropped Sunday were collected in a town in eastern Syria. The aid is enough to feed 2,500 people for 1 month. More airdrops are planned. Brazil is deploying thousands of troops in the capital city of Brasilia this week. The government is hoping to prevent violent clashes as Congress holds votes on the impeachment of President Dilma Rousseff. A special committee will begin voting today whether to move forward with the impeachment request. The full House could vote in less than a week. And 15 former American Bar Association presidents are joining the push to urge Republicans to consider President Obama's Supreme Court nominee, Merrick Garland. In a letter to Senate leaders, the legal advocates argue the GOP blockade is injecting a brand of politics into the courts that materially hampers the effective operation of the judiciary. Republicans say they have no plans to move forward on Garland's nomination. And a shocker at the Masters, Danny Willett took the green jacket with a closing round 67, finishing at 5 under for the tournament. The Englishman's victory was made possible by a collapse by Jordan Spieth. He had a 5-streak lead with 9 holes to play, and he shot a double bogey. It's the first time for 29-year-old Willett to win his 2nd attempt at the Masters. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Matt Miller. Mark?
Matt, am I allowed to say, come on, England?
Yes, you may. Anyway. Yes, you may. Good for you.
Come on, England.
Good for you.
Well done.
Well done.
It's taken many, many years. Thanks, Matt, for giving me that honour. Now, fallout from the so-called Panama Papers continues. Prime Minister David Cameron is facing lawmakers after a week of scrutiny of his financial affairs. He was forced to acknowledge he'd profited from offshore investments, but he told Parliament he's not suggesting all MPs should publish their tax returns.
As for MPs, we already have robust rules on members' interest and their declaration, and I believe that's the model we should continue to follow. We should think carefully before abandoning completely all taxpayer confidentiality in this House, as some have suggested.
Svenny O'Donnell's here, Bloomberg News reporter who covers UK government. His week from hell continues, yes?
Yes, it's been more than a week, because remember the budget was, was pretty poorly received, and then you had Tata Steel. It's not been a great run for the Prime Minister, and while he did quite a good job of answering MPs' questions today, it's certainly not going to take this off the front.
He hasn't drawn a line under it. I mean,
oh, no.
Other questions that still remain?
Not really. I mean, bear in mind that there are no big issues around what he's published, or there's no idea that he's done anything wrong. But this situation has been handled so badly that trust in the Prime Minister has been eroded.
Svenja, how is he going to then close the book on this? I mean, is this just the beginning, or, you know, are his remarks today going to kind of be able to start wrapping up any more allegations against him?
Well, I think he's regained control of the situation to a certain extent. His ally and Chancellor George Osborne has just published his tax return for the latest financial year, and that's all pretty straightforward. A lot of MPs, I think, are going to voluntarily come forward and do the same. And I think now he's faced the music in Parliament, the story will move on.
It'll move on. Will it have any impact, though, at all on his pursuit of the referendum, the UK referendum?
I think we'll have to see how things go. Bear in mind, we've got a few weeks to run, and, you know, a week is a long time in politics, as they say. The issue of trust, however, is going to keep hovering around him. People also know that he's going to step down before the next election. He's said so, which means they're kind of looking for mistakes, looking for missteps. The problem with any referendum is that people never really vote or answer the question that's on the ballot. It's more of a vote of confidence in the government. And so he'll have to tread very, very carefully indeed to make sure that he does bring in a yes vote on June 23rd.
By saying he won't run for a third term, is he, to an extent, Svenja, yesterday's man?
Yes. I think that's a perfectly fair assessment. I think by saying he won't run, by not giving a date at which he'll step down, he's caused this huge speculation on how soon is his exit from politics, or certainly his exit as Prime Minister. If, of course, the country votes for Brexit, sorry, he won't be able to stay. That'll be a very difficult.
But if the country votes to remain, he can sort of rebuild his standing.
He can. Much
authority.
Depends on how close this vote is. If it's a close vote, this issue is not going to be. It's going to run and run. There will, at some point, be a leadership challenge, and then we've got to, you know, take it from there.
Svenja, good to see you. Thanks for joining us. Bloomberg's Svenja O'Donnell talking about Prime Minister David Cameron. Right, 4:11 here in London. Coming up next here on Bloomberg Television, Bloomberg Markets. It's just a few weeks' time to go. Londoners will elect a new mayor. The timing couldn't be more important. Conservative mayoral candidate Zach Goldsmith talked to us about Brexit, housing, and the tax disclosures for politicians. That's coming up next. Live from London and New York, I'm Mark Barton.
And I'm Betty Lou. This is the European Close. It is time for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. TransCanada has resumed sending oil through the Keystone Pipeline. Work was shut down for a week after a leak and oil spill in southeastern South Dakota. TransCanada says about 400 barrels, or just under 17,000 gallons of oil leaked. The company has not released estimates on cleanup costs or repairs. Puerto Rico today released a new proposal to restructure part of its $70 billion debt. The plan calls for up to $28 billion in bonds that would allow creditors to be paid regardless of future economic growth rates. The government says the deal would allow Puerto Rico to cut $12 to $16 billion from its debt load. Researchers say an unusual strain of so-called ransomware is leading a new generation of software used by hackers. A report by Cisco Security Group says the virus known as SamSam worms its way through networks. It doesn't require someone to click a link to open an infected attachment to regain access. Users often have to pay a ransom in the digital currency Bitcoin. Pretty scary stuff. That is your Bloomberg Business Flash for this hour. Mark?
Now, Betty, Londoners are going to head to the polls on May the 5th to decide on who'll succeed Boris Johnson as the next mayor. Earlier today, I caught up with the Conservative mayoral candidate, Zach Goldsmith. I started by asking if the public has the right to demand that politicians publish their tax return details.
There is a sort of unwritten contract between people, between representatives and the people they represent. If the people who are represented want their representatives to publish details of their tax returns, then it would be a brave representative who chose not to. But I don't think this is something that should be regulated or mandated.
And I've got your details right in front of me. You published these in February, all very clear from 2010. Many have said in the interest of transparency, you should publish details of when you had non-dom status before 2010. Will you be publishing details from prior to this period?
So I was asked to publish details of my tax returns, and I followed the only precedent set in British politics, which I published details going back throughout my time in public office. I think that's a reasonable request to have been made, and it was a reasonable request to accept, which is why I published them in the form that I did. So I think I've satisfied the questions that were asked.
Let's talk about the upcoming referendum, which is taking place in June, of course. Yeah. How do you marry the fact that you're supporting the UK leaving the EU at a time when most of the financial industry, it seems, would like the UK to remain part of the EU, and you will, if you become mayor, be supporting the interests of Britain's financial services industry, most of which are here in the City of London?
So, I mean, the first one I have to make is my job is I'm the only Conservative candidate in the mayoral race. The biggest risk that London faces by far is not whether or not we stay in the European Union or come out of the European Union, it's whether or not London makes the wrong call on May the 5th. So I am duty-bound. I have a huge responsibility to win the arguments about the mayoralty over the next 24, 23 days. That's my job. The job of the next mayor, whoever that is not to take us out of Europe or keep us in Europe. It's to make work whatever decision is made by the British people. I'm not campaigning on this issue because I have a job to do. And I believe that if London embraces the sort of Jeremy Corbyn, Sadiq Khan agenda, that is a far, far, far bigger risk for London than any decision the British people could take in relation to the European referendum.
How will you differ, though, from Sadiq Khan, the Labour candidate? We spoke to him on Friday. He said that he would champion the city's financial sector. He pledges to be the most pro-business mayor London has ever had. How would you differ from Mr. Khan?
Look, I take that with a pinch of salt. Sadiq Khan comes as part of a package which represents more hostility to business than anything in my lifetime, as far back as I remember. Nominated Jeremy Corbyn, has said he would nominate Jeremy Corbyn again. The Labour Party and Sadiq Khan represent something truly frightening for London and the UK's business community. You know, to have a leader of the Labour Party describe business as the ultimate enemy and strikes as the ultimate weapon, that is not a reassuring message for our businesses. I will be the most pro-business mayor ever, and that's saying something after Boris Johnson's 8 years where he has championed the City of London. He's championed all our businesses. We need to ensure that London remains the most business-friendly environment it is possible to be. There are 1 million businesses in London. They are what underpin London's success. Remove those businesses and London ceases to be the most important important city in the world. But But that doesn't, I mean, that isn't about gimmicks. That is about solving the housing crisis. My action plan for London will deliver 50,000
homes. How are you going to do that?
I'll tell you that in a second.
Many politicians have said we're going to create housing. We will come to that. Go on.
No, it's a good question to ask. My action plan for London will deliver those 50,000 homes principally by growing the transport network, by protecting the transport budget. The only way to unlock the brownfield land we're going to need to deliver the homes that we need to solve the crisis is by growing the transport network, and that is why the Labour Party candidates pledged to remove nearly £2 billion from the transport budget. Would be completely.
Who's going to pay for it? How are you going to pay for it? These 50,000 homes.
It doesn't require subsidy. If you talk to housing associations or local authorities or developers, big or small, ask them what is the biggest barrier. What is the thing you need in order to see a step change in the number of homes being built? It's not planning. It's not capital. It's land. Land is the biggest barrier, but we have the land. London, the government is the biggest landowner by far in London. TfL, GLA, local, Ministry of Defence, Ministry of Justice, and so on. There is an enormous amount of undeveloped brownfield land. The government needs to release that land, and the mayor then needs to grow the transport network in order to unlock that land. Look at the examples around London. Crossrail 2 will deliver 200,000 homes that otherwise would not be built. Sutton Tramlink would cost about £200 million, and it would unlock the possibility of 20,000 homes. The overground extension to Barking, 26,000 homes, and so on. Which is why if you don't protect the transport budget, London will grind to a standstill, but we also won't solve the housing crisis.
Zach Goldsmith there, just one of 5 candidates, of course, standing in London's mayoral election. As you can see, the full list is up on your screen right now. Londoners will cast their vote on May the 5th. More Bloomberg Markets next. Stay with us. You're watching Bloomberg Markets. I'm Mark Barton in London.
And I'm Betty Lou here in New York. This is the European close. Now, help may be arriving soon for troubled Italian banks as financial institutions work towards finding a solution to address capital and bad loan issues. Joining us now from Italy is our Bloomberg News Milan Bureau Chief, Dan Leafgreen. Okay, so Dan, tell us a bit about what this fund is about that will buy these bad bank assets. What are we talking about?
Well, we're talking about some sort of special vehicle that essentially will have 2 purposes. One, helping reduce the level, this mountain of bad loans that Italian banks have, one of the highest rates in Europe. And at the same time, trying to make banks which are facing capitalization issues, which must raise more capital to comply with European Central Bank rules, to help them sell these issues to investors. investors. There are a couple of big IPOs coming up soon. One of them a fairly large bank, medium-sized bank in northern Italy. So they're trying to provide and at the same time keep within state aid rules some sort of cushion, if you will, to get through this next round of capitalization, and at the same time, as I said, reduce this level of sour loans.
Okay, so who would be participating in this fund?
Well, from what we know so far, and again, the government, the central bank, Italian central bank, hasn't given a lot of details yet, but we're probably looking at some sort of a solution whereby you have private investors, Italian banks, for example, Unicredit, Italy's biggest lender, probably will be involved. We could see a state lender, Cassa Depositi, getting involved, perhaps taking a small stake in this, as well as other private investors, pension funds, investment funds also contributing.
When are we going to get final details of this fund, Dan? I mean, it's been running for a while. Are we closer to the creation of this fund?
Well, the Italian Prime Minister, Matteo Renzi, was asked that same question today, and he said it will probably be sometime this week. There are another round of talks scheduled to start in about an hour down in Rome involving central bank officials, private investors, and the government. I would probably bet that we're not going to get a final deal today, but definitely probably this week.
Dan, good to see you. Thanks for joining us. Dan Leaf-Green there are. Bloomberg News, Milan Bureau Chief. Quick peek at where European equities are faring, Betty. We've got stocks looking like this today, 4 minutes ahead of the close. European stocks are rising after 4 weeks of declines. If we have 5 weeks of declines, it'll be the longest losing stretch since June 2014. The best performing sector as well. Basic resources top of the pile today, driven by China inflation data, which tells some that the economy is stabilizing. Those are some of the currency and bond boards for you. Stick around. Live from London and New York, this is the European Close. I am Mark Barson with Betty Lou. Stocks finishing up the day in London trading. Let's take you through the market action today. This is the intraday chart for the Stock 600, finishing the day up by 0.4%, boosted by inflation data in China. On a month-by-month basis, we had producer prices showing the first increase since 2013. What's interesting, though, we've had 4 weeks of declines for this index. Investors are pulling money out of an ETF tracking European stocks for 9 straight weeks. And the Stock 600 is now trading near its lowest valuation relative to the S&P 500 in more than a year. The S&P 500 trading 17.3 times estimated earnings. The Stock 600 15.2 times estimated earnings. Big story today, Standard Chartered. It's seeking to sell at least $4.4 billion of assets in Asia. That's according to people familiar with the matter. The lender's been paring its balance sheet after booking record impairments. This is the FTSE 350 Banks Index here in London, a measure of the biggest banks here in the UK. Barclays leading the charge today. Standard Chartered, the third biggest gainer, up by 1.2%. Over the weekend, we had the ECB Executive Board member, Betty, speak. He's Yves Mersch, and he said that central banks' extraordinary measures to spur growth may eventually show diminishing returns. Interesting chart showing that for now, they're certainly not showing diminishing returns, because since March the 10th, when the ECB said it would buy non-financial corporate bonds, euro investment grade spreads issued by investment grade rated utilities have outperformed financials by 18 basis points, and the spread differential between the two is now at the highest since 2014. So investors, it's thought, may be actually front-running the ECB, purchasing what they think will be bought. And by the way, for the record, Betty, the ECB will begin buying corporate bonds at the end of the second quarter. But ahead of that, we're seeing, as I said, non-financial utility spreads. As I said, they've been of course, the widening between that and non-financials at the widest since 2014, Betty.
Well, Mark, speaking about widening, the two stocks of Norfolk Southern and Canadian Pacific are moving in opposite directions. Looks like a merger no more between the two after Canadian Pacific was basically rejected 3 times by Norfolk Southern, the DOJ voicing their concerns about these two big rail operators coming together. Even the U.S. Army saying that having these two big railways operate as one could be actually a defense threat, or it could jeopardize national defense. So it looked like everything working against this merger. Another loss for Bill Ackman. Meanwhile, European markets, as we were just talking about, done for the day. However, U.S. markets are still open. Bloomberg's Abigail Doolittle has more on this rally that we're trying to hold on. Abigail?
Hi, Betty. Well, yes, we do have the NASDAQ higher still, but the gains have really been paired, and this is largely due to healthcare and biotech, especially Insys Therapeutics. The stock is plunging after the company pre-announced to the downside, saying that opioid scrutiny has really hit one of the company's key drugs in the first quarter. It's a bad miss, Betty, too. On the sales side, they're looking for the drug to come in 30%, as much as 30% of where analysts were looking for. RBC saying that this is very significant. Analyst Randy Stanwicki says it could equate to a 13% year-over-year decline for this drug. Now, there's a huge short interest on Insys, Betty, 67%. Those sellers have pushed the stock just recently right below the buying support of this year's lows, suggesting that Insys could drop closer to long-term buying support near $10. So there could be some more selling ahead for Insys Therapeutics, Betty.
Okay, and Abigail, the NASDAQ Biotech Index, that's falling for a third straight day. So tell us more about what's bringing it down.
Well, you know, one of the bigger drags this morning is Endo International. And interesting is the fact that Endo is trading down in sympathy with Insys and those comments about opioid scrutiny hitting that drug. Endo does sell pain drugs such as Percocet. It's been a very rough 12 months for Endo International, Betty. The stock's down 70%. It's not clear what's possibly going to turn this one around. Betty?
All right, Abigail, thank you. Abigail Doolittle at the NASDAQ. Let's check in on our Bloomberg First Word News this hour. Matt Miller has more from our newsroom. Matt?
Betty, thanks very much. The number of refugees entering Greece by sea has slowed to a crawl. A week after a European Union deal to deport new arrivals back to Turkey took effect, more than 53,000 remain stranded in Greece, through which more than 1 million people have passed since the start of 2015. New arrivals had peaked above 200,000 in March, but there have only been 1,700 this month. In Japan, U.S. Secretary of State John Kerry visited the revered memorial to Hiroshima's atomic bombing 7 decades after the U.S. used the weapon for the first time in history and killed 140,000 Japanese. Today's visit makes Kerry the most senior American official to travel to Hiroshima. He's in Japan with other foreign ministers of the Group of 7 industrialized nations. And a new poll says half the U.S. approves of President Obama's job performance, the first time that's happened since 2013. A new Associated Press GFK survey finds the president seeing an uptick across a number of issues, including the economy. But it's not all sunshine for the president. 54% characterized the economy as poor, and just 1 in 10 Republicans expressed a positive opinion of him or his performance. Donald Trump is voicing his displeasure over the selection process for presidential nominees, calling it, quote, corrupt and crooked. This as the Republican frontrunner inches closer to a contested convention. Trump says that the person who wins the most votes in the primary process should automatically be the GOP nominee. Global News 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Matt Miller. Betty?
All right, Matt, thank you. Let's turn back to the currency markets. The yen has been fluctuating today after hitting that 17-month high against the greenback. Investors piled into the yen last week as a haven against China's slowdown. The 6-day rally was the yen's longest winning streak in a year, Mark.
What's next for the currency, Betty? Can it go higher? Is it really running out of steam? Let's ask Jeremy Cook, Chief Economist, Head of Currency Strategy at World First. We're told, Jeremy, it's not the level, it's the speed that matters. Is that still the case when it comes to dollar-yen?
I think it is, and I think we're coming up on a speed bump, which may be that inflation number from the United States on Thursday. I think that may have the positivity to be able to maybe not turn this trend around instantaneously, but certainly slow the rate of net dollar declines that we're seeing at the moment.
So no need for the BOJ to dip their toe into the currency market for the first time since 2011.
If I'm wrong, and if we see inflation miss, and we see that rate expectations are only 50% of or 50% chance of a rate rise by the Fed by the end of this year, if those continue to fall off and dollar yen continues to move lower, then yeah, I think the Bank of Japan is going to have to come in. To be honest, it's going to have to be verbal in the short term. I think the actual structured policy may not happen until maybe their July policy meeting, given the moves that they've made throughout the early part of this year. But if that inflation figure on Thursday may save their bacon.
Well, Jeremy, speaking about intervention, so we spoke with Suki Sakakibara, the former BOJ governor, former vice minister of finance, and here's what he said about intervention in the yen.
I think United States would not agree if, for Bank of Japan to intervene around 105. U.S. is relieved because of the decline of the dollar. They have been suffering somewhat from the high, U.S. dollar. So that, intervention would not be possible at around 105, because intervention could only be done with the agreement of, the counterparty.
Does that sound right?
I think it sounds right that the intervention always works better when multiple parties are working towards a singular goal. And yeah, I agree. The United States aren't looking for too much of a stronger dollar anytime soon. I don't think any real markets are looking for a stronger dollar anytime soon. This has given emerging market currencies a little bit of breathing space. It's given commodity currencies also a bit of breathing space. So as long as the pace of this yen strength starts to slow,
right.
I think intervention can stay on the sidelines for now.
Right, but that 105 level sounds like it could be a key level here.
It's the next line in the sand. I think everyone's thinking as 105 as the next hurdle for it to jump, and then everyone gets big figure-itis and talks about 100.
If they do intervene, if they do it unilaterally, does that set off another round of currency wars?
Yeah, I mean it has to. You look at the eurozone, you look at what's happening in China, you look at the Vietnamese have done it 3 times in the past 12 months. There are other places out there which are still looking to weaken their currency by hook or by crook, and if the Japanese are happy to do it, then certainly why can't they? We would be happy to in the bank. I think the Bank of England would be happy to weaken the pound at the moment if Brexit risk wasn't doing it for them.
Yeah, which it is. Which leads us to the Bank of England on Thursday. It's a non-quarterly inflation report meeting. So we get the decision, we get how many voted against or for, and we get a few comments. What are you watching out for?
There's a very, very minimal risk, I would say, that we may get a vote for negative interest rates from Gert-Jan Vliegen, who's one of the most dovish members of the MPC. He has been watching. He's been watching the data, as everyone will have done, but the data hasn't been great, and he has expressed some negativity around the belief that rates should stay at 0.5% and maybe a dip for a cut there. In the short term, however, I think it's going to be more about the comments around the referendum risk. It's going to be certainly also the weakness in sterling and how that follows through into the inflation basket here in the UK. Probably the main things that people should be watching.
Jeremy, speaking about inflation, we're also going to get our own inflation data this week as well, producer prices and consumer prices. Do you feel like, is your view changing at all about inflation and whether it's picking up here in the U.S.?
I think it is picking up. I think we are, we're continuing to see a slow, steady build in inflation pickup through developed economies, and 0.2% sounds about right. Year on year, 2.3%, 2.4%. Those are the kind of figures which everyone says, we're allowing it to maybe run a little bit hot. And if that starts to prove true, then those probabilities, those pricings of an interest rate or only half the chance of an interest rate hike by the end of the year start to look really, really silly. We looked at you look at the minutes that were published last week. It certainly shows that the market expectations of where the Fed is standing are slightly more dovish than even the most dovish members of the Federal Reserve. So we're sat there going, why is the dollar so mispriced at the moment? So if inflation backs that up even further, then you'd have to say greenback's starting to come home.
After the Fed, who's best placed to reach their target, to match their inflation mandate out of the BOJ, ECB and BOE, would you say?
I'd have to say the BOE, given the tightness in the UK labour market. This risk around Brexit is a blanket that's smothering everything at the moment, and no one's really talking about an interest rate rise. And I know that some people think if we pass the referendum and we stay part of the EU, then expectations move from somewhere in 2020 to early part of 2018. But labour market still very, very tight. Wages starting to rise. The national living wage is going to have a positive effect on inflation and inflation expectations moving forward. And if we start to see a pickup in oil prices, which is not out of the realm of possibility given the meeting in Doha on Sunday, then those are all the kind of situations which start to point towards a move higher to 2%.
Jeremy, always good to see you. Thanks for joining us today. Jeremy Cook, Chief Economist and Head of Currency Strategy at World First. OK, still ahead on the European close. Many energy companies were crushed by last year's plunge in oil prices. One large group of largely anonymous traders saw their profits surge. Who were they? How much money did they make? That's next.
Live from New York and London, I'm Betty Lou.
And I'm Mark Barton. This is the European Close. Okay, time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. And Goldman Sachs will pay $5.1 billion to settle its handling of mortgage-backed securities. The accord involves allegations that loans weren't properly vetted before being sold to investors as high-quality bonds. It's the fifth multi-billion-dollar settlement reached with US banks over subprime mortgages. Valeant Pharmaceuticals is asking its chief executive to cooperate with the Senate investigation into drug pricing. This after J. Michael Pearson failed to appear for a deposition. The Senate Special Committee on Aging said last week that it planned to start legal proceedings against Pearson, who's leaving Valeant. He's under subpoena to appear before the committee for an April 27th hearing. Overstock.com says its founder and chief executive Patrick Byrne will take a personal leave of absence to battle hepatitis C. The retailer says it's unknown if he'll return to work. Byrne recommended Mitch Edwards, a veteran internet and tech executive, and most recently general counsel of Overstock, as the acting chief executive. That is the latest business flash. Now, 2015 was a pretty rough year for the oil industry. Brent crude plunged nearly 35%. Dozens of energy companies were forced to file for bankruptcy. One group benefited greatly from cheap oil and gas. Joining us now with the story is Bloomberg chief energy correspondent Javier Gas. Javier Gas. New name, Javier Blas. Good to see you. Who thrived while oil plunged?
The oil traders, the people who trade, buy and sell crude oil, they move it around the world. They are largely anonymous, almost invisible. They are not the names that you associate with big oil. They are not, for some of the names, very senior people on the oil trading houses, we don't have even pictures of them. But those oil traders did very well in 2015. And as a group, I think they probably have their best year in approximately, since the plunge in 2009, so 6 years ago.
And what are they doing to benefit the likes of Vitol? How are they benefiting as crude prices plunge?
Three main areas that they benefited. First of all, there was a lot more volatility. You could see a trend in the market, price moving up and down, but you could see a clear trend where the price was going, and they profited on that. The third one is prices decrease, so you could, with the same amount of money, you could trade a lot more. You have $100 million, and you want when 100, and with oil is at $100, you could buy only 1 million barrels of oil. If it goes to 25, you could buy a lot more and sell a lot more. So low prices allow them to make more bets with the same amount of money. And third, the market was in a structure that we call contango. To simplify, it means that you could buy today cheap oil, put it in a storage facility, whether it's onshore or maybe using a tanker as a floating.
Such as the overseas Laura Lynn. This is my favorite moment of today when I read about the overseas
This
Laura
is a
Lynn.
3 million barrel tanker. This is the size of the Empire State Building if you put it aside. It's anchored offshore Dubai.
This is Vitol that did this.
This was Vitol who did the deal. They hired this tanker to store oil. You buy oil cheap, you hedge your position in the futures market, and when prices are recovering, you sell it back. That contango deal made millions of dollars for the traders.
It's not just the independent houses, is it, Javier? I mean, some of the big players, the major oil players, they were doing the same thing as well, weren't they?
Exactly. I mean, on the independents, you think about companies like Glencore, Vitol, Trafigura, but the major oil companies, and think particularly in Europe, BP, Shell, and Total, they are famous by their oil fields, the refineries, the petrol stations, but they are also big traders themselves. They trade millions of barrels of oil, and they profited exactly the same as they did the independents. Indeed, BP, who is one of the only few companies who provide a bit of a glimpse of what they do on trading, said that they have the best year they have seen in a while.
Will 26 be the same as 2015? I suppose the slate's clean, isn't it?
The slate is clean, and that's the difficult job for the traders. When you talk to them, I have been talking to some of them in recent weeks, they say, yes, great, we have a fantastic 2015, but we start from zero in 2016. Actually, they start negative because you have to pay costs. So, so far it's so good for the traders. They're telling me that things are going in the right direction, but it's not as great as 2015.
Javier, great to see you. Javier Blas there, our Bloomberg chief energy correspondent, or as I call him, Javier Gas. Now, coming up on Battle of the Charts, I face off with Joe Weisenthal, who's taking a look at inflation. The BOTC is next. Stick around.
It's time now for our global battle of the charts, where we take a look at some of the most telling charts of the day, what they mean for investors. You can access all of these charts on the Bloomberg by running the function featured at the bottom of your screen. So kicking things off is What'd You Miss? Anchor Joe Weisenthal. Joe.
Thanks, Betty. So later this week, we're going to get the next CPI report for the U.S. And, of course, the question of whether inflation is building is crucial for the Fed, economy, markets. And there are signs that maybe inflation really is building, that it's finally here this time. This is something I'd like to track. It looks at different measures of inflation. Core CPI, or CPI services excluding energy, running over 3%. Core CPI ex housing, so we exclude the effects of rent, that's running 1.6%. The Cleveland Fed's trim mean measures, which tries to get out some of the outliers, over 2%. And of course, down there you have headline CPI, that's still just over 1%. So if you look underneath the surface, we're seeing more and more signs that inflation pressures are starting to build. So you're going to watch that report this Thursday to see if it gets so hot that the Fed might have to act.
Right.
You can check that chart on the terminal at #BTV885.
Possibly heading, as you say, to that 2% overall.
That the Fed wants to see, and thus fulfilling its mandate.
Okay, Mark.
Betty, can I say that's the most lines that Joe's ever done, and Joe will back me up. He's never done 4 lines, but anyway, I'm not gonna sing his praises. I'm not gonna sing his praises, but I've noticed that. Well done, Joe. Look, Betty, 2 months ago today, the world stock market hit a bit of a bump. It was the low for the MSCI All Country World Index, the low since June 2013. As you know, Betty, since then we've seen a bit of a rebound. You know me, you know I love my anniversary, so I thought let's check out, see who the best performing equity assets are since February the 11th, 2016. Well, the MSCI World itself, the all-country world, is up by 11.8%. Interestingly, the best performing stock market in the world, Betty, out of all the 94 we track at Bloomberg, is the RTS index in Russia. It's up by 34%, rising, of course, with the price of oil. Russia, of course, relies on energy sales for about half its budget revenue. The best performing stock in Europe, Betty, is actually Eurobank Gasias. It's a Greek lender. I thought, forget about this. This is a bank that's basically lost all its value since May 2007. So this is actually number 2, ArcelorMittal. The steel company has risen by 114% in 2 months, Betty. Quite astonishing. This is a company that last month announced a right issue. It's trying to cut its $16 billion debt pile. The shares have slumped in the last year. As you know, we've had Chinese steel imports flood Europe, and that, of course, has hurt these companies. But the big gainer, Betty, in the last 2 months, drum roll, you can see it, Chesapeake Energy, up by 130%. Wow, what a game. The gas driller, it's benefited, of course, from the rebounding oil price. It's had its own issues in the last 12 months, but what a rebound, up by 130%. And if you want to check out my chart on the Bloomberg, #BTV880. There you go, Betty. Joe does 4, I do 4. Who's the winner?
And as was pointed out, you both picked exactly the same color schemes as well. So since we're talking about color schemes and colors, I'm going to pick Mark today because we matched today.
Oh, that's fair.
He's in blue, I'm in blue. So there you go. All right.
Joe, I loved your 4 charts.
Thank you.
Your 4 lines. 4-line Joe, they call him. Betty, let's have a look at the European markets. Let's see how they ended the day today. It was a day of gains, of course, after 4 weeks of declines. FTSE slightly lower today, down by about 0.1%. Gains, though, for the Stocks Europe 600. It was a China-induced rally today after encouraging producer price data. Consequently, it was basic resource stocks that led the rally today. Banks, energy, autos also rising. Bloomberg Markets continues after the break.
It is noon in New York, 5 p.m. in London, and midnight in Hong Kong.
Welcome to Bloomberg Markets. From Bloomberg World Headquarters in New York, good afternoon. I'm Scarlett Fu.
And I'm Alex Steele. Here is what we're watching at this hour. Stocks inching higher as investors wait for the start of earnings season for the first quarter here in the U.S. Aluminum giant Alcoa is due to report after the close.
Pickup in Chinese industrial demand is boosting the prices for commodities. Oil also climbing to a 4-month high ahead of a meeting in Doha where producers will discuss freezing output.
And interest heats up for Yahoo. UK's Daily Mail joins a wide group of suitors, including telecom giant Verizon, ahead of April 18th deadline for preliminary offers.
All right, we are halfway through the U.S. trading day. We head over now to the markets desk where Bloomberg's Julie Hyman has the latest. So it means we're 4 hours closer to the start of earnings season at our session lows right now.
Yeah, as people get closer, maybe they get more nervous.
It's Alcoa, man. I mean, is that really official anymore, the kickoff?
I don't know. It's as official
How about
as
this?
anything
Wednesday
we've got.
will be official because JP Morgan reports.
Okay, there you go. Well, whether you're talking about Alcoa or you're talking about the banks, there's not a lot of optimism out there when it comes to earnings broadly, particularly when you're talking about the energy companies or the financials. And so we have seen a pairing of gains today as we've gotten a little more deeply into this session. The S&P 500, if you look at the intraday move that we have seen, it has been moving sort of steadily lower here, a little bit of a leg up just in the past few moments, but nonetheless down pretty sharply from the highs of the session. And let's take another look at these S&P 500 profit estimates and the change that we have seen in estimates. So this is the change that we get quarterly. And so we're talking about a 10 percentage point swing in these estimates. Overall, the estimate is for earnings to fall by 10% in the quarter that we're about to learn about. So definitely a lot of pessimism going into the season. The caveat that we always talk about is that companies tend to beat by a pretty high rate. So as always, it's going to hinge on not just what they're reporting, but what they're saying about the coming quarter and the rest of the year.
And of course, the two things that are going to be front and center are oil prices and the dollar for companies. And today, a pretty solid rally across the board when it comes to commodities.
Yeah, exactly. Let's start with the dollar to look at the relationship between that and commodities, right? We're seeing a little bit of a pullback in the dollar today, down 0.4% against a basket of currencies. As Alex says, this is going to be really a centerpiece once again of what companies are discussing in their commentary. How much does currency play into some of the perhaps weaker earnings that we might get in the coming season? So the dollar lower today, that is one of the things that is helping commodities. So even as we see a little bit of a changing trajectory for stocks today, that's not been so much the case with the other assets that we watch. So if you look at gold prices, for example, and what we've seen throughout the session, we have seen them climbing pretty steadily, up 1.27% right now. And oil prices have also been stronger today as we get closer to those Doha talks, even though we have not seen a lot of change in positioning among the various OPEC nations on whether or not they're going to freeze production. But nonetheless, oil higher today, almost 2%.
All right, Julie Hyman, thank you for that snapshot of the markets.
And now let's check in on the Bloomberg First Word News this afternoon. Mark Crumpton has that from our news desk. Hi, Mark.
Alex, Scarlett, thank you. Donald Trump voicing his displeasure over the selection process for presidential nominees, calling it, quote, corrupt and crooked. This as the Republican frontrunner inches closer toward a contested convention. Trump says the person who wins the most votes in the primary process should automatically be the GOP nominee. President Obama will meet with U.S. Federal Reserve Chair Janet Yellen today. They'll discuss the longer-term economic outlook. The White House says the Oval Office meeting will focus on the state of the American and global economies, as well as Wall Street reform. Vice President Biden will also attend. Treasury Secretary Jack Lew says the U.S. does not plan to change rules prohibiting business transactions with Iran. During an event at the Council on Foreign Relations in Washington today, Secretary Lew was asked if Iran will be allowed to have dollar-denominated transactions.
Iran complied with the nuclear agreement, therefore the nuclear sanctions are lifted. I think that is a process that is becoming more and more clear, and we will keep our part of the bargain there. But the U.S. financial system is not open to Iran, and that is not something that is going to change.
Earlier this month, Republican Senators Marco Rubio and Mark Kirk co-sponsored a bill that would, quote, prohibit Iranian access to the U.S. financial system and the use of offshore U.S. dollar clearing systems. A United Nations agency used parachutes to airdrop food aid to a Syrian city that's been under siege since March of 2014. 22 pallets dropped Sunday were collected in a town in eastern Syria. The aid is enough to feed 2,500 people for 1 month. More airdrops are planned. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Mark Crumpton. Scarlett, Alex.
Thank you so much, Mark. Earnings season unofficially kicks off today. It's not looking pretty right now. Take a look at this chart showing expectations for earnings from now until the fourth quarter. You could see right there that orange line for first quarter of 2016 way at the bottom there. And of course, as you go out throughout the year, it gets a little bit higher. But we're focusing right now on that orange line, Alex.
Joining us now from San Francisco is Heidi Richardson, head of U.S. investment strategy for iShares at BlackRock, which oversees about $4.5 trillion. Heidi, looking at that chart, are we in the worst of earnings season right now? Is this the trough?
Well, you know, I think if we look at earnings, they're likely to be disappointed. Some of the estimates are we won't see earnings this low since 2009. But I do think that there could potentially be a light at the end of the tunnel, given that oil prices have actually come back up. We see energy prices less stressed. The dollar not being as weak as it had been not being as strong as it had been, actually showing some weakness this year that could potentially help earnings moving forward later on in the year.
And the trend has been for the last couple of quarters, Alex, and you know this, to look at S&P 500 earnings and then to back it out the energy company results, because it makes it look a lot different. There's a huge bifurcation between what S&P results look like versus those without energy. Is that still instructional?
I think it is, actually. I think if we look at taking out energy, we've seen some impact, particularly on these big exporters, some companies that derive a lot of their earnings, like technology, from outside of the U.S., with the stress on that being with the stronger dollar. And I do think that that weakness will potentially play out in a positive this year.
The other thing that sort of has been puzzling over the last couple weeks headed into earnings season has been the lack of volatility in the markets. In fact, you have specs are so long volatility that their hedge funds are just getting crushed right now. As we enter the worst for earnings season, what are your expectations for volatility?
Well, I do think you're going to see volatility pick up. If we look at the VIX, the long-term average of the VIX is 20. We're trading at around 15 today. So I do think we're likely to see that picking up. And I think that investors should be thinking about that in ways to mitigate some of this volatility as they move forward. And as we get closer to the election, I think you're likely to see even more volatility.
And of course, Alex, what we also need to talk about is Japan, the impact of the yen, the strengthening yen, not just Japanese equities, but global equities. That last week was a banner week where the yen just broke through all these different levels from 111 to 108. It's had a repercussion throughout the market, the ripple effects of which is still being felt.
Yeah, Heidi, I have a really cool chart. It's ETF Go. It's a function on the Bloomberg here, and it's a great way to illustrate just how bad it's been. So the two largest outflows we've seen has been the DXJ, that's basically your hedge play for Japan, and the EWJ. Both of those have seen a combined year-to-date outflow of almost $6 billion. And over 3 years, you've seen an inflow of $16 billion, and just year-to-date, a total outflow of $5.5 billion. These numbers, Heidi, are kind of bananas.
Well, you know, if you think about it, investors had been investing in Japan for the last 3 years. As they're looking at opportunities now, they're actually coming back to the U.S. and looking at opportunities here in high-quality investments in the U.S. I think with Abenomics, with the Bank of Japan, with a negative interest rate environment in Japan, I think investors are getting really cautious. And with the yen so strong, going from 120 at the beginning of the year to actually 107 at one point today, I think that they're really worried about the earnings on companies in Japan moving forward.
So if foreign investors like BlackRock, like others, pull out of Japan and Japan loses the faith of foreigners, does that mean the end of Abenomics?
No, I think they actually have a pretty strong domestic environment. So you have seen a shift in investor attitude from only owning savings and fixed income investments in the past for local domestic investors in Japan, now embracing the idea of ownership in equities. So I do think that you have some balance with that.
So when they have money leaving Japan, you said it was going a little bit to the U.S., and we're also seeing a lot of money come out of Europe as well. Is the U.S. a valuation or fundamental play?
Well, I think it's a little bit of both. I think valuations are still somewhat rich compared to areas like Japan, where it's trading at about half the price to book to the U.S. marketplace. But I think with the sell-off that we saw earlier in the year, there are some attractive valuations. I think what investors are looking at now are those quality names, those companies that can sustainably increase their dividends and grow their dividends, that have high-quality balance sheets, lots of cash on their balance sheets. I think they're geared for the opportunities moving forward.
So if you look at dividend payers versus non-dividend payers, how would you fold that in with quality companies that you want to pursue in this environment?
I like them both. So I like quality in the sense of some people are looking at smart beta, if you will, or factors. And those quality factors, I think, are very attractive. If we look at dividend payers versus dividend growers, I prefer the dividend growers. Those companies that can sustainably grow their dividends in this market environment, particularly if the Fed does raise twice this year as they're guiding, I think they'll be better suited to manage some of the volatility in the markets.
And what about elsewhere? Over the last few weeks, we've seen a lot of money also going into emerging markets. Where is the money going that's not the U.S. right now?
We are seeing some risk-on trades coming back in. So emerging market equities as well as emerging market debt in the local currency. We've seen a lot of flows going into that particular region. I think, China's showing some signs of improvement. And with the signs of improvement that China's showing, I think people are embracing, is this potentially a time after 5 years being out of emerging markets to start building positions to get back to a benchmark weight?
Heidi, what's the metric? What's the data point? What's the asset class you're looking at this week and with the start of earnings season to kind of guide where the other asset classes go?
Yeah, I think, there's going to be a lot of earnings releases this week. I think we're going to be watching that pretty cautiously. We're looking at technology in particular, looking at some of the valuations in technology, looking at the dividend strength, the cash on the balance sheets. I think watching those earnings and some of the potential with the ease up of the dollar and the dollar strength turning to weakening, seeing what happens with technology.
Heidi, thanks so much. Heidi Richardson, head of U.S. investment strategy for iShares at BlackRock.
Coming up, take a look at this stock chart. Are its shares finally poised to surge after falling 50% this year? It's in good shape today after an analyst changed his opinion a bit. See if your guess works out. A
bit.
When we reveal the mystery stock next on Bloomberg Markets.
Works out and a bit.
Fitbit?
You're watching Bloomberg Markets. I'm Alex Steele.
And I'm Scarlett Fu. We need to head back to our markets. That's where Julie Hyman has a check on some individual movers and the big reveal of the mystery stock Works, Fit, Alex and I both voted Fitbit.
Yeah, you guys were right. It's down about 48% year to date, though there's a lot of concern about how the company has been doing. And that concern, it looks like, may be alleviated to some extent today after that big decline we've seen in the stock. The stock's getting a little bit of a pop. Morgan Stanley analyst Katie Huberty writing in a note that perhaps management is going to increase second quarter and year-end guidance. And that's because she's been doing some so-called channel checks that show demand for some of its new products, Blaze and Alta, that they beat expectations, and that management's March shipment report might have been a little bit conservative. So we're seeing the shares bounce by 6% today. For context, by the way, the stock is quite heavily shorted. More than 30% of its float is sold short. So when you see a gain, you can probably assume that there's a little bit of short covering going on. At the same time, Huberty is writing about GoPro today, and she says those results could come in below expectations. She says her checks on GoPro sales are showing we could continue to see a drop in demand there. She says also enthusiasm about the action camera category continues to decline, and the upcoming Hero 5 might not be enough to revive that demand. Those shares down by 2%. And then a different analyst at Morgan Stanley, Jay Soul, is talking about Under Armour today, about slowing sales potentially at that company. Soul saying the company's wholesale clothing sales were down 2% in the fourth quarter. Women's apparel in particular down by 7%. And you can see those shares off by 4.5%. Under Armour, by the way, we will get the full results from the company on April 21st.
All right, looking forward to that. Thank you so much, Julie Hyman.
Well, still ahead on Bloomberg Markets, the world's largest listed hedge fund business gets into real estate. We're going to have details from Man Group President Luke Ellis next.
This is Bloomberg Markets. I'm Scarlett Fu.
And I'm Alex Steele. It's time for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Goldman Sachs will pay $5.1 billion to settle its handling of mortgage-backed securities. The accord involves allegations that loans weren't properly vetted before being sold to investors as high-quality bonds. It is the fifth multi-billion-dollar settlement reached with U.S. banks over subprime mortgages.
Valeant Pharmaceuticals is asking its CEO to cooperate with a Senate investigation into drug pricing. That's after Michael Peterson failed to appear for a deposition. The Senate Special Committee on Aging said last week that it planned to start legal proceedings against Pearson, who is leaving Valeant. He is still under subpoena to appear before the committee for an April 27th hearing.
Under Armour shares are lower after Morgan Stanley renewed growth concerns at the athletic apparel maker. Analyst Jay Soul says the company's wholesale clothing sales fell 2% in the first quarter, and a sluggish footwear category could hurt sales this quarter. Under Armour is slated to release earnings on April 21st. And that is your Business Flash update.
The world's biggest listed hedge fund business is now expanding into real estate. Man Group retained almost $500 million in surplus capital to fund potential acquisitions.
On Bloomberg Go this morning, Man Group President Luke Ellis talked about the firm's strategy.
The strategy of the firm is to keep adding investment teams that diversify the list of offerings we have for clients based on what clients are looking to do. I find that at the moment clients are absolutely against investing in bonds. They can't see it, but people have a need for yield. So they're looking for something with yield, something with stability, with sort of long-term confidence, but not bonds, given, particularly government bonds, given where we are. So real estate, and this is really at the conservative end of the real estate spectrum. It's not the sort of highly leveraged restructuring stuff. It's core plus, which is basically there to give long-term investors a yield-like return.
How big do you expect this to be for Man Group? How much money do you look to raise for real estate investing?
We don't have a target. My experience is any time you set size targets in a financial business, you end up doing stupid things. So we never set size goals. It's a high-quality team. We're very happy to get them on board, and we'll take it long and steady. As I said earlier, it's a 5-year decision, not a 5-month decision.
So you might set a goal, but you'll set a limit, right? Because $4 billion is your largest, and you won't have.
Yeah, well, so I mean, we will definitely make sure that he's only doing the team's only investing when they can find quality returns for investors.
Now, where exactly? Because real estate is huge. Are you talking about REITs? Are you talking about commercial real estate, which seemed to have peaked last year? Are you talking about residential?
This is particularly about high-end commercial real estate in direct buildings in this case. So this team is very much about, helping clients buy actual buildings, if you like, rather than looking at the debt side. That would be an interesting area. They've looked globally in the past. I'd leave him to comment on where he thinks the best value is at the moment.
Look, at this point, some surplus capital at the group for potential acquisitions. Is it easier to set the fund up in-house, so to speak, or to acquire the fund if you want to push further into real estate?
Sure. I think, look, we try to be very disciplined about new teams and particularly about acquisitions. And so everything has to meet 3 criteria. The first is we have to believe in the returns and that those are attractive returns for our clients. The second is that we have to find people who believe in the same things we believe in. And then really importantly, we have to be disciplined on price. The reason most acquisitions and mergers don't work is because they make deals based on over-aggressive assumptions about the future. We will continue to be very disciplined on price. We're relatively indifferent to hiring teams or buying businesses. It's a sort of time-to-market question, depending on the opportunity.
Given that you're talking about, investment properties, where is the money coming from? Is it mostly China and other foreign, countries, or is it?
Yeah, so I mean, this is, if you take this real estate offering, it's about going back to our core client base, which is a pretty global client base, is very much at the larger end of the institutional market. That's where we have our core client base. A lot of our largest clients do 6 or 7 things with us. So, this is just bringing another thing to them to look at on their menu.
That was Man Group President Luke Ellis on today's Bloomberg Go.
Another good place to park your money, Brazil and Greece. Now, that assessment is from Cambria's Meb Faber, who says U.S. investors often make the mistake of investing in the U.S. only. His thoughts from this morning's Bloomberg surveillance.
U.S. investors almost always allocate way too much to the U.S. The global market cap is about half in the U.S., but most people have given a speech about 20 times. We ask them, it's around 70%. And so that's a very active bet, particularly important right now.
Okay, well, I'll go with that, but I want to be a yield hog, and as you write, you want to pick up 7% foreign debt coupons. That's a siren call. Do I want to do that?
we like both equity and foreign markets, okay? So there's two areas to look at about it. We're value investors, and so most of the world, equities, much cheaper. Most of the bonds, much higher yielding. That's particularly in emerging. For the stocks, it's both developed and emerging, looks great. The valuations are reasonable all the way down to the cheap stuff, really cheap. You can P ratios around 9 for the cheapest bucket versus around 15 on average. And if you're looking at the bond yields, you're looking at yields, like you mentioned, around 7-8% versus the global average around 3%. And then let's not even talk about U.S. and then developed markets, which are around, what, 50 basis points?
Well, Meb, let's bring in Francine Lacroix in London. Francine?
Yeah, Meb, when you look at, you call them foreign bonds, but if you look at Europe, is there any value to be made? There's financial repression, and that's hurting bond yields across the board.
In places. So if you look at 70% of the world's debts in 5 countries, U.S., France, Germany, U.K., and that bucket yields around 50 basis points. So those are the ones you want to avoid. I mean, let's not even talk about the negative ones. You really want to avoid those. But historically, all the research shows if you invest in the highest yielding buckets, what commonly is known as carry, that adds about 2 percentage points a year to a global bond exposure. And so getting away from these high debt issuers to some of the markets that are scary. I mean, we just listened on the intro what's going on in Greece and Brazil right now. Historically, that's been a great pickup in performance for not a lot of increase in both volatility and drawdowns.
Remember, are you saying you are buying some Greek bonds? Because as a European, that would be quite surprising. Because we don't exactly know what the end game is there.
You never do, right? But so we own a broad basket of the 25% of the highest yielding bonds in the world. So both foreign and developed. So we own Greece. We also own places like Russia and Brazil and Mexico and Colombia. And so, those sound really scary. But if you look at this year, for example, and the tide is finally changing, a lot of those markets are having great performance, and once you can kind of close your eyes, hold your nose, and own some of these securities, we think long term it's a great place to be.
That was Meb Faber from Cambria Investment Management speaking earlier on Bloomberg TV. Much more coming up on the other side of this break. We're going to be talking about the risk to banks and oil companies as lending to energy companies gets underway. Live from Bloomberg World Headquarters in New York, I'm Alex Steele.
And I'm Scarlett Fu. This is Bloomberg Markets. Let's start with the headlines on Bloomberg First Word News. Mark Crumpton has more from our news desk. Mark?
Scarlett, thank you very much. The international furor over the recently published Panama Papers continues, with British Prime Minister David Cameron facing lawmakers over his ties to offshore tax havens. Prime Minister Cameron said that even though he's released 6 years of tax returns, other ministers should not be made to disclose theirs.
As for MPs, we already have robust rules on members' interests and their declaration, and I believe that's the model we should continue to follow. We should think carefully before abandoning completely all taxpayer confidentiality in this House, as some have suggested.
Mr. Cameron's been under pressure since his father, Ian, was identified as a client of a Panamanian law firm that specializes in helping the wealthy reduce their tax burdens. A stark warning for Republican presidential frontrunner Donald Trump. Americans trust Hillary Clinton more on an array of issues, from immigration to health care to nominating Supreme Court justices. That's according to a new Associated Press GFK poll. But when it comes to who Americans trust to handle the economy, Mr. Trump and Mrs. Clinton were nearly even. 15 former American Bar Association presidents are urging Republicans to consider President Obama's Supreme Court nominee, Judge Merrick Garland. In a letter to Senate leaders, the legal advocates argue the GOP blockade is injecting a brand of politics into the courts that, quote, materially hampers the effective operation of the judiciary. Republicans say they have no plans to move forward on Judge Garland's nomination. A new poll says half the U.S. approves of President Obama's job performance. That's the first time that's happened since 2013. A new AP GFK survey shows an uptick across a number of issues, including the economy. But 54% characterized the economy as poor, and just 1 in 10 Republicans expressed a positive opinion of the president's job performance. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm Mark Crumpton. Alex, Scarlett.
Thank you so much, Mark. Is the recent surge in oil prices a head fake or perhaps the real deal? Oil up about 53% from the February lows. Are we headed back to maybe $30 a barrel?
Well, that's what former PIMCO money manager John Brynjolfsson thinks. He spoke earlier on Bloomberg Markets about the challenge of working off excess supply in an environment of sluggish growth.
We think the Fed might tighten once this year, but by and large, monetary policy around the world is as easy as it can be. That means more money gets printed. We don't really think that generates economic growth. It kind of creates an illusion of liquidity and an illusion of being able to sustain things. But ultimately, that's not that encouraging. For example, we've seen gold do quite well for the past quarter or two. Gold, for example, is an alternative to kind of buying into that liquidity.
Yeah, John, how worried should we be by the fact that as equities have risen from their February the 11th lows, we've seen money move into these havens like gold, like the yen, and like, you know, the G7 sovereign bond index is a lovely index encapsulating sovereign bond markets. What does that tell us? That it's the haven markets that will continue rising and risk assets won't do so well?
Well, yeah, I mean, if you look at G7 sovereign bonds, half of them are yielding 0 or less. So that doesn't augur for a great long-term investment. It might be okay to park money there temporarily. I think Bill Gross came out and talked about how the long-run outlook for interest rates is rising, and that means negative capital gains on bonds. So you're booking, in the case of U.S., which is the highest yielding sovereign in the world, at 1.75% for 10 years. That's nothing really to crow about. So the outlook for bonds longer term is certainly negative. Frankly, given how weak the global economy is and how weak earnings and profits are, probably I would disagree with Bill in the short term. Bond yields are likely to stay low and maybe even get a little bit lower from here before they start kind of a secular rise.
John, I want to get your take on the price of oil. We've come from, on WTI, $26 to roughly $40 today since those lows in February. You think we're heading back to 30? Why is that?
Well, you know, I'll tell you, I have been wrong for the past 8 weeks or so. And what I got wrong is that there is floating storage available, meaning that right now the global oil producers are producing more oil than we consume. We have already filled all the on-land storage, and to some extent I made the mistake of thinking that inevitably would result in an immediate glut and a downtrend in prices. There's been a rebound, but I think it's a head fake, because having oil sitting around in the high seas, floating in tankers, waiting to be used, is not a long-term plan for success. Ultimately, all those inventories, all of that floating storage has to be worked off, and the only way it can get worked off is if production dramatically decreases. I don't see that happening in the near term. Or if consumption rapidly increases. I don't see that happening, certainly not in China, certainly not in Europe, certainly not in Brazil, certainly not in Africa, and even in the U.S., we're kind of looking at a 1% GDP growth, which doesn't speak to strong oil consumption.
That was John Brynjolfsson, former PIMCO money manager and chief investment officer of Armored Wolf Family Holdings. And speaking of oil, it is make or break it time for oil companies that have a lot of debt. Banks are now deciding how much to lend energy companies based on their reserves and the current oil price. And things aren't looking good for some guys. Bank of America says 17 exploration and production companies in their high yield index have had that borrowing base cut by 23% on average, more than double what we saw back in the fall. Well, one Texas-based regional bank has 15% of its portfolio in energy. Paul Murphy, CEO of Cadence Bank, joins me now from Houston. Paul, good to see you. Very timely. How much do you anticipate cutting your borrowing base on average this time round?
Right. Well, first off, it's nice to be back with you. And what we're seeing is that results vary widely. It really depends on the company, depends on the geology where they're operating and the expense base. Some cuts are as low as 5–10%. We saw one recently that was closer to 30%. Oh. So it's really all over the board.
In terms of your exposure, you have some to exploration and production. You have midstream, which is basically pipeline guys, and the services companies. How much of that is junk rated?
Well, very little. We do see stress. We see covenant violations. We see companies that are out of formula. But we've got a great group of management teams, and I'm really impressed with the things they've done in the last year to stay in compliance and to work to be sure they can repay the bank. We have a good group of borrowers, and we're expecting our results to be very manageable. It's stressful, certainly very stressful for those management teams and their families.
Oh, absolutely. And the question every earnings season now with banks is, have they set enough money aside to deal with the defaults and the stress in the energy sector? If you take a look at the big guys like Wells Fargo, JP Morgan, Bank of America, they have quite a bit of energy exposure. Wells Fargo as much as 45%. How do you protect against potential losses?
Well, for the big banks, the energy portfolio as a percentage of their overall business is small, 2 or 3%. Mm-hmm. So some of the numbers that they post are really quite significant, but relative to their capital and their earnings, it would be totally manageable. The regional banks have more stress where it's a bigger part of their business, which is true in our case. But some of the burn down analysis that I'm seeing done by third parties are calling for E&P losses of 5 to 7.5% over the cycle, energy services closer to 20 or 25%. And with that, it looks like banks' earnings, regional bank earnings, would be exposed between 10 and 15% over the next 3 years. So it's really about a provisioning and an earnings story, and it's not a safety and soundness story, which we experienced in the 80s.
So for you, Paul, how do you manage the potential losses? How do you run your company with that?
Well, the first thing is we remember that these clients are our clients, and we try to take a collaborative approach where we work through the problems and understand the challenges. So much of the conversation is about how do you get to the company to where it needs to be in terms of the proper capitalization. And so there's a lot of money out there looking to invest in this space at this time. And so in some cases, it's as simple as an introduction to someone who might be a good equity partner. And in other cases, it's more a detailed collaborative effort. But we feel fortunate so far. Our charge-offs last year were 17 basis points. It's in a manageable range. It's going to go up. I mean, their companies are having a tougher and tougher times with these low prices. As was reported previously, we have had a bounce, and a lot of it's going to depend on what happens from here. If prices continue to improve, we'll see a lot of these companies come off the watch list and be able to renovate quickly. And if prices get worse, then it's going to be much more challenging.
And talking about renovate quickly, today we heard from Chesapeake their $4 billion credit line is not going to be cut. They don't have to undergo another redetermination until 2017. They have a first lien loan option of $2.5 billion. That's staggering to me, considering the amount of debt they already have. If you take a look at the Bloomberg, to put it into perspective for you, you have right here is the amount of debt that they already have in many different forms, and that blue column right there is their market cap. Why would banks do this when there's so much debt, Paul?
Well, I'm not familiar with that company. We're not part of the credit facility there, so I can't speak specifically, but I can say overall, like us, many banks are trying to look through the cycle, understand what this is going to be like on the other side, and if they're properly capitalized, they have a plan to reduce expenses, and they can operate in this environment, there's every reason for the banks to work with them.
Like, you don't want them to go bankrupt. You don't want them to default. You're going to try and juice it for them, right?
Of course. It's in everyone's best interest that an orderly resolution of any capital structure issues be brought forward. And sometimes that is in bankruptcy court, but hopefully more times than not, it will be outside of the bankruptcy system.
So we've had oil go from like $26 back in February, now trading around $40. What's your call for this quarter for oil?
Well, oil prices will be volatile the next 20 years like they have been the last 20. Short-term calls are a bit challenging. I will tell you this. I think the supply numbers could come down much more quickly than what people have baked in. And I believe long-term this is a good business. Just very challenging when prices are this low. The rig count has come down in the United States 79%, globally 57%. These wells run dry. So when you quit drilling, supply will come down, prices will improve, and things will resume. As my friend Dan Pickering said, you must be present to win. So it's really about liquidity and balance sheet management and staying alive to get to the other side of some better prices.
Staying alive. It's like a theme song for E&Ps right now. Paul, good to see you. Thanks for coming. Paul Murphy, CEO of Cadence Bank.
All right, coming up next, the parent company of the UK's Daily Mail says it is in talks with a number of potential bidders for Yahoo. We're going to dig into that stock reaction next.
watching Bloomberg Markets. I'm Abigail D. Little here at the NASDAQ market site. Let's take a look at two tech stocks moving higher today. One is Yahoo. Shares are up on the news that the UK's Daily News is said to be in talks with potential bidders for Yahoo. The Mail is interested in Yahoo's media properties, would essentially join with a bigger group, such as a private equity firm, to acquire those media assets. Now, this follows the news last week that Verizon is likely to go ahead with its potential bid for Yahoo. All preliminary bids are due April 18th. Yahoo is now higher on the year by about 10% as investors are encouraged by turnaround hopes. Now, the biggest boost to the NASDAQ today is Apple. Shares are higher on constructive comments out of RBC Capital. The firm says that the iPhone SE is selling well. Analyst Amit Daryanana believes that the SE could in fact add 23 cents to earnings this year, something that investors clearly like with the stock up. This has pushed shares of Apple back toward the 200-day moving average, something that is typically bullish, but based on last year's trading action, we could possibly see some downside ahead for Apple. I'm Abigail D. Little at the NASDAQ market site. Now more Bloomberg Markets.
You're watching Bloomberg. I'm Scarlett Fu.
And I'm Alex Steele, and this is your Global Business Report.
Here's what we're watching. In London, Prime Minister James Cameron spoke to Parliament about his offshore investments.
And Standard Chartered is looking to sell at least $4.4 billion of assets in Asia.
And in Dubai, there are plans for a new billion-dollar tower that may become the world's tallest building. Let's start with the so-called Panama Papers. Prime Minister of the UK, David Cameron, faced lawmakers after a week of scrutiny of his financial affairs, forced him to acknowledge that he had profited from offshore investments.
As the revelations in the Panama Papers have made clear, we need to go even further. So, Mr. Speaker, we're taking 3 additional measures to make it harder for people to hide the proceeds of corruption offshore, to make sure that those who smooth the way can no longer get away with it, and to investigate wrongdoing.
The Prime Minister also released 6 years of tax data to demonstrate his fiscal integrity.
Italian officials and executives of the country's major banks are planning a fund to buy bank shares. The fund would help the lenders tackle an estimated $410 billion in bad loans. Sources say a deal could be done as early as this week. London-based Standard Chartered is looking to sell at least $4.4 billion of its Asian assets as the lender pairs its balance sheet after posting its first annual loss since 1989. The bank is also seeking to sell off part of its portfolio in Africa and the Middle East. That's according to people familiar with the matter. And in Dubai, plans have been announced for a new tower that will cost $1 billion and could even be bigger than the world's tallest building, the Burj Khalifa. Construction is scheduled to begin at the end of June.
Time now for our Bloomberg Quick Take, where we provide context and background on issues of interest. Tax inversions took center stage this month when Treasury Secretary Jack Lew rolled out new rules against them. Inversion is a financial exercise that allows companies to lower their tax bills by buying a legal address abroad through M&A. So here's the situation. More than 50 U.S. companies have reincorporated in low-tax countries since 1982, including more than 20 since 2012. A lot of drug companies are doing it, and low-tax Ireland is a popular corporate home. It's how Medtronic, the medical device giant that began in Minneapolis in 1949, turned Irish. Pfizer also wanted to become Irish by buying Allergan, a U.S.-run drug maker with an Irish tax domicile, but it was stopped by the Treasury rules. Here's the background. The U.S. corporate income tax rate of 35% is the highest in the developed world. The U.S. is also one of the few countries that makes its companies pay that rate on all their worldwide income. Many countries, including the U.K. and Canada, tax only domestic profits. One perverse result is that an independent U.S. company can end up paying more taxes than an identical U.S. company owned by a foreign parent. The change in address actually doesn't even mean a real move, because companies are free to keep their top executives in the U.S., and most of them do. So here's the argument. Treasury's new tightened rules have made inversion deals less attractive, but the White House has warned that only legislation can stop them completely. Neither Democrats nor Republicans like inversions, but they disagree on what to do about them. Republicans call them the inevitable consequence of a flawed tax system, although some Democrats agree on the broad outlines of a corporate tax revision. The parties disagree on so many other things, there's little chance a big tax bill will actually pass Congress anytime soon. That is your Global Business Report. For more stories, visit Bloomberg.com. This is Bloomberg Markets. I'm Scarlett Fu. For hockey fans, this Wednesday marks the start of the sport's second season, the playoffs. Our upcoming guest is a partner at a private equity firm and also in project financing. And unlike most financiers, he spent more than a decade tending net in the NHL. Joining us now is Mike Richter, the former Stanley Cup winning goalie of the New York Rangers. And Mike, we'll get your take on the playoffs in a little bit, but I want to start with what you've been doing since retiring in 2003. You went back to school. Yale, in fact, as a non-traditional student. What prompted that move?
Mostly I was non-traditional. You go back as an adult. I was finishing my undergrad degree, and it's something I'd always wanted to do. I left early to play on the Olympic team and then joined the Rangers organization. And I think most athletes are a little bit lost when they get done their playing career. And for me, you're feeling very old as an athlete, but you're very young as a person. So perfect segue into the rest of my life. Go back, get your degree, and then move on.
I wonder, because you focused on economics, politics, ethics, and a concentration in environmental policy. What prompted that? What triggered that interest?
I think having a broad-based, really liberal arts education is a great thing. I have a lot of interest in many, many areas. I could have stayed there another 10 years, but you are an adult, you want to get on with your life. Yeah. I had a particular interest in the environmental world. As you mentioned, I was in a private equity firm that really focused on resource efficiency, and that's migrated now into project finance, where we're putting the upfront capital into really retrofit commercial and industrial buildings.
So let's talk a little bit more about that. Where are you investing right now? Is it only in North America, or has it broadened beyond the Americas?
No, it's only in North america, and Brightcore, I'm the president of Brightcore Energy, and really we're focused on lighting. But the biggest hurdle that you have, the technology, off-the-shelf technology is available. Why isn't better lighting deployed? You can save 80% on some of these things. It can be meaningful dollars over the course of years. No different than solar. There's an upfront capital hurdle. We're doing the same thing for lighting technology.
What is the best opportunity right now, or what kind of opportunities does the fact that we've had a collapse in commodities prices and you have a global slowdown create for your sector?
Well, it means two things. That because energy prices are lower, that actually hurts us, but in the short run. But in the long run, people like that run hospitals, for instance, they're not going to be getting more profits in there unless they start squeezing how much they're paying per year. And this is operating costs, this is maintenance. And of course, you check the box for the environmental goals, but pure and simply, this is a play about efficiency. And if you can eliminate waste from any part of your company, you're doing better.
Can you talk a little bit about how demand for these kinds of investment opportunities have evolved over the past decade? I mean, we hear a lot more about environmental awareness than we did, say, 10 years ago.
Yeah, and I think the biggest thing is nobody wants to be too far ahead and start to be take on technological risk, right? I mean, if you own this building, you're saying, I would love to be as cutting edge as possible without taking a real risk that the things that I'm putting in this building don't work. 80% of the buildings that are here in New York City will be here in the next 20 years. That infrastructure is very old. We know this. We see the flints and everything else, but this is particularly true of the energy sector. And so the lighting, the transmission, the energy systems, all these things have to be upgraded. If these things are going to be here in the next 20 years, who's doing that? Two things prevent people from doing it. A little bit of inertia, but mostly it's the upfront capital. And it's also just a concern. And our word's getting out that the lighting has come to the point now where there's not a lot of risk technologically. These things should be deployed, and we help them do it.
So I wonder, you played in New York your entire career. You had a lot of access to guys in finance, guys on Wall Street during that time. Did you leverage any of that into your career today?
It's hard. Yes and no. Not to the extent that I wish I would have, but the reality is I had a career then, and it's best to focus on that career. I don't really want to have a foot in each world, and so I tried to squeeze as much as I could out of that career just to have a sense of being professional. On the flip side, we're in New York, and it's just, you know, virtue of a bit of luck that they drafted me, and there's tremendous opportunity here, and people are willing to help if you ask the questions.
All right, I got to ask you about the playoffs now. No Canadian teams making the playoffs for the first time since 1970. The Canucks, the Maple Leafs, and the Canadiens, of course, among the most popular and most money-making franchises in the NHL, but they're absent. Is that a good or bad thing for the sport?
Well, it's bad certainly for the people of Canada. I mean, they are really passionate about this sport. It's good for the teams that are making it in the United States. And don't forget, it's not just Canadian teams that aren't there. Canadian players are throughout the league. They make up the vast majority. So the Canadians are playing. I think the sport in Canada is quite healthy. It's never been better in the United States. And so, yeah, I think that's a sad thing just because of the roots of the game are there. But the reality is the game is very healthy. It's the best product I think they've ever put on the ice.
All right, and very quickly, your career in sports has also allowed you to move into private equity and also charity. You're doing the Great Cycle Challenge.
So yeah, this Great Cycle Challenge is an amazing thing. We're actually putting money into getting children's cancer research. So it's excellent thing. I'm proud to be part of it.
Thank you so much. Mike Richter, former New York Ranger goalie, right here joining us.
We'll be right back in just a few minutes. It is 1 p.m. in New York, 6 p.m. in London, and 1 a.m. in Hong Kong.
Welcome to Bloomberg Markets. From Bloomberg World Headquarters in New York, good afternoon. I'm Scarlett Fu.
And I'm Alex Steele. Here's what we're watching at this hour. U.S. stocks paring their gains, the dollar slumping to a 9-month low on speculation the Federal Reserve won't raise interest rates anytime soon.
In a surprise move, Canadian Pacific Railway ends its push to buy Norfolk Southern, saying there's no clear path to a friendly merger and delivering a blow to activist investor Bill Ackman.
And investors still have an appetite for McDonald's. The stock is up 30% since CEO Steve Easterbrook took over last year.
First, though, we want to head over to the markets desk where Bloomberg's Julie Hyman has been tracking the moves. And, Jules, we are still positive.
Moves? Can we do moves?
Moves. Smallish moves. We're still positive before the report. The start of earnings results.
Yes, exactly. We are still positive. I should mention also that there's not a lot of movement in volume. We're seeing a little bit of a drop in volume today, so it does seem as though investors are sort of taking a wait-and-see attitude when it comes to earnings. We are hanging on to gains. As we talked about earlier, we are off the highs of the session considerably. Take a look at the Bloomberg here. This is #BTV 884, and it's from a story by Lou Wang today, where she is looking at, yes, the fact that earnings expectations have not been strong, but maybe they've bottomed out. And this looks at the prior couple of times when this happened in 2002 and 2009. The blue line here is the Bank of America earnings revision ratio. So it looks at analysts who are upgrading versus downgrading their earnings expectations. And then we've got the S&P 500 weighted average gain or average loss year over year in white. So what you're seeing is that both of these are bouncing in a very small way, but bouncing. So that could reflect perhaps a bottoming in earnings with this 10% pullback forecast for the quarter that's about to be reported. And speaking of the quarter that's about to be reported, Alcoa, as is traditional, is going to kick it off with its earnings after the close today. The stock has been strengthening throughout the day today. Right now, it's up by 4.5%. And then the banks are going to be the other big theme of the week. JP Morgan on Wednesday, and then followed by Bank of America, Wells Fargo on Thursday, and finally rounding it out, Citigroup on Friday. All of these are higher today as well, despite the fact that here, too, there's not a lot of optimism heading into their earnings reports.
Well, no, but on the macro side, we are going to get, among many things, the CPI on Thursday, which, if you're focusing on the Fed, is going to be very key.
Yeah, and focusing on inflation, because it does seem as though the market in some ways is finally starting to come around to the idea that, yeah, inflation is ticking up. We're not seeing much movement in the 10-year yield today, but we've been watching the break-evens. Take a look at the Bloomberg here. This is the 5-year break-evens, where we are seeing an uptick in inflation expectations closer and closer to that 2% target for the Fed, and closer potentially to CPI as well. Incidentally, that CPI core number is forecast to come in at 2.3% year over year. At the same time, we are also seeing a higher level of shorts in the Treasury market. According to CFTC data, we are seeing the highest number of shorts of Treasuries going back to the week ended November 3rd. So again, another reflection of the idea that we may be seeing an uptick in rate and inflation expectations.
All right, Julie Hyman, thank you so much. We'll talk a little bit more about rate and inflation expectations in just a little bit, but some breaking news first.
Breaking news on Tesla. The company is saying it's recalling 2,700 Model X sport utility vehicles because a strength test done by the car maker reveals some issues with the third row seats in terms of a seat belt issue. The company began delivering these cars back in September, but is now saying that until the recall is performed, you can still use your Model X, although temporarily don't sit in that third row seats while the car is in use.
And if you look at the share price, it's a little bit of a delayed reaction, but you are starting to see it tick lower. It's come off its lows, the worst levels of the session, but still pared some of its gains following the headlines. It was up as much as, let's pull it up, it was up as much as 0.2%. Am I looking at the right thing here? Hold on. Excuse me, up as much as 3.5%. There we go. Now currently up as much as 2%, 0.2%.
Apparently the recliner in the third row seat unexpectedly slipped. Ooh. That's why you shouldn't sit in it if you use it. All right, there you go. Well, now let's check in on the Bloomberg First Word News this afternoon. Mark Crumpton has that from our news desk. Hi, Mark.
Alex Scarlett, thank you. Corrupt and crooked. That's how Republican frontrunner Donald Trump describes the selection process for presidential nominees. He told a rally in Rochester, New York Sunday that the person who wins the most votes and not the most delegates should automatically be the party's standard bearer. He added, quote, "We should have won it a long time ago." Mr. Trump faces the possibility of a brokered convention this summer in Cleveland. In North Carolina, supporters and opponents have gathered to highlight their differences over a new state law that limits anti-discrimination policies for lesbian, gay, and transgendered people. Both rallies were held near the old state capitol grounds in Raleigh. Foreign ministers from the Group of 7 industrialized nations are meeting in Japan, calling for a renewed push for nuclear disarmament. Also on the agenda, terrorism. U.S. Secretary of State John Kerry says the group's determination to defeat Islamic State is unwavering.
All of the G7 nations remain absolutely steadfast and united in their commitment. I would call it a resolute commitment, strong commitment, to degrade and destroy Daesh through our global coalition. And we each committed to using all of the tools that are available to us in order to confront this scourge.
Secretary Kerry also visited the memorial to Hiroshima's atomic bombing, 7 decades after the U.S. used the weapon for the first time in history and killed 140,000 Japanese. Today's visit makes Secretary Kerry the most senior American official to travel to Hiroshima. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm Mark Crumpton. Alex, Scarlett.
Thank you so much, Mark. Let's get back to the markets where something odd is brewing, the disconnect between stocks and bonds. This chart from TD Securities show the new highs, relative new highs by the S&P 500 in recent weeks, and the new depths by 10-year yields as well. What is driving this? What's behind the story?
You like stocks and you like bonds, where Priya Misra, head of global rates strategy at TD Securities, is here to explain. Priya has been named to Institutional Investors All-America Fixed Income Research Team for the past couple of years. Explain this divergence that we're seeing.
Sure. I think it can be explained by the Fed's third mandate, is what I would call it. I think the Fed has changed its reaction function in the last 3 months. Jargon. So, okay, so let me try and explain. You know, the Fed comes out extremely dovish. March FOMC, as well as Yellen. So is that because they're getting concerned about U.S. growth, or are they looking at something else? I would argue U.S. growth is actually okay. We're going to get inflation. Inflation's been actually ticking higher now for several months. The labor market's very strong. The Fed's actually said that their baseline economic outlook is unchanged from December to today. So then why this dovish leaning? I would argue that they've actually changed what they look at. You know, officially the Fed has this unemployment as well as inflation mandates. I'm arguing that there's a third mandate. They're actually looking at global factors. They're looking at the dollar.
So global factors like the dollar, is that on balance? Is it 1/3 employment, 1/3 inflation, 1/3 global factors? How do they weigh it?
You know, that's a great point. I think the weights are going to be dynamic as well. So right now, given that the U.S. outlook seems okay, but risks are rising to the downside, the global factors, I would argue, are actually more important. So I think there's been greater realization at the Fed that the U.S. cannot be this island of prosperity, or that the Fed cannot be the only central bank raising rates, which is why you know, I think they're actually signaling to us that the global factors are important. So what they're telling us is low for longer. You know, the market's pricing in not a single hike this year. The Fed is still telling us 2 hikes this year, but to some extent that's the most likely outcome. The market will never price in the most likely outcome. Market prices in weighted average of all probabilities. So I think actually market pricing is not that off in rates. I think rates being low actually allows equities, allows risky assets to do well, which is why we've seen credit do well, we've seen equities do well. I think this divergence is actually not that different from QE. During the whole QE time frame, rates were fairly low, equities were high. This is the Fed verbal easing. They're not doing QE, they can't cut rates much. But they're telling us, you know what, it's a different set of parameters.
Jawboning, in other words.
I guess. But doesn't that come with its own separate set of risks? And take a look at the chart on the Bloomberg here. And this is the 10-year term premium. So just how much more investors will take on, how much more compensation investors need to take on to own long-term treasuries. And it's incredibly low. The lower it gets, basically, you don't care. Like, you're not worried about inflation. You're feeling pretty juicy. I mean, is that a risk going forward?
You know, it's a great point on term premium. I think term premium is there's a big tug of war right now around term premium. A more dovish Fed, a Fed that lets inflation run a little bit high or lets the economy run a little bit hot for a while, should make term premiums go up. But look at the global yield backdrop. You know, look at, you know, bonds are like 10-year Germany is very close to zero. 10-year Japan is negative. So if you've got low global bond yields, that actually pushes term premium lower, even in the U.S. So what wins out? I would argue that actually, you know, over time the curve is likely to steepen. As we see CPI readings which continue to tick up higher, and the Fed kind of ignores it, I think because they feel they can fight inflation. While deflation is much harder. You know, you can see Japan, Germany trying to really fight it, and they haven't had much success. I don't think the Fed ever wants to go down the negative rate route. So which is why they let the economy run for a while. So ultimately, I think term premiums will rise, but there's a huge gravitational pull from global bond yields, which will keep it somewhat capped.
So you were in Asia, for the last 3 weeks, explaining things to your clients abroad. What surprised you about their take on what the central banks are doing?
It's interesting. I think there's a pretty big disconnect. In the U.S., a lot of investors were very surprised by the Fed, because the thought was, look at the U.S. economy. You know, it's fairly strong. The unemployment rate continues to decline. Inflation's ticking higher. The Fed did tell us 4 hikes this year in December. So I think people were very shocked. While in Asia, I think they're looking at the global backdrop, and they're sort of saying, you know, how is it that the U.S. can be immune to the strong dollar? So therefore, I think in Asia, they were sort of not fighting the Fed at all.
Priya, good stuff. Good to see you. Priya Misra, head of global rates strategy at TD Securities.
Coming up on Bloomberg Markets, Alcoa has a bit of an identity problem. It's something the company is hoping to finally fix. What investors are hoping to hear in its latest earnings release. Next.
You're watching Bloomberg Markets. I'm Alex Steele.
And I'm Scarlett Fu.
Well, time now for the Metal Bulletin. We're going to head over to our markets desk where Julie Hyman is digging in on the metals.
Yeah, I'm looking at gold in particular because, as we talked about earlier, it is higher today. There's a lower dollar. That's not hurting. RBC is also out with a call today, raising its forecast for gold by 9%. It's looking at an average for the year of $1,250 an ounce that'll fluctuate between $1,200 and $1,300 and then sort of have a strong second half of the year. Gold is up by 1.25% today. As part of this, RBC is also making a call on specific miners. It's saying that we could see some pullbacks in May and June, and they recommend buying during a sell-off period ahead of seasonal strength from August to September. RBC is upgrading Kinross and Anglo Gold to outperform, and you can see those stocks are rising today. Gold, of course, being higher, not hurting matters either. And a downgrade from RBC for Goldcorp and Fresnillo. Both of those stocks are also higher. Again, you know, the rise in gold sort of mitigating any negative effect from those downgrades. At the same time, we've got BMO talking about the metals today, specifically the miners ahead of earnings. The analysts, they're saying that Freeport, McMoran, and Century Aluminum first quarters will be stronger than estimated because essentially prices have rebounded more from where they were when BMO initially made its models. So we're seeing some of the other miners, Freeport, Century, and Newmont Mining, also rising in today's session as we get into earnings season because we had that big bounce in metals during the first quarter.
All right, thank you so much, Julie Hyman, with the latest on the Metals Bulletin.
And speaking of, Alcoa is set to report earnings after the close of U.S. trading today, and the company struggling with its identity. Ken Hoffman, Bloomberg Intelligence senior analyst for metals and mining, joins us now from Princeton, New Jersey. When you look at Alcoa, I mean, it trades like a miner. It identically tracks the miner ETF, but it desperately wants to be a downstream business, thought of what the products it makes rather than the metal. Is this the moment we're going to see that shift?
Well, the company has announced they're going to split into two companies, sort of the old co, which is the old Alcoa, which is the smelters and the alumina, and the new co that everyone's trying to get excited about, which is called Arconic, which is the business that sells into aerospace and most exciting to most people, automotive. You got General Motors in 2018. They're going to switch all the trucks over to aluminum. So all that's creating the excitement, and they're trying to get people to just focus on Arconic and sort of forget about this old business, which is just getting destroyed by the Chinese.
So when the results come out today, what will you be focusing on? What will you be zeroing in on to determine whether they're successful or not?
I really want to see, first of all, how are they going to split up these companies? Remember, Alcoa has a lot of debt, and what they've said is they're going to try to pretty much shove as much debt as humanly possible onto the old co to leave the new co with very little debt so it can grow and expand and maybe make acquisitions. And investors really want to see, how are you going to split this up? And remember, a number of companies have tried this, taking like Timken. They split off the old steel business to have people focus on the value added. The old co did not do very well, and so a lot of people are trying to figure out, what am I going to be left with at the end of the split? How is the debts going to work? And not just focus on the new co, but what am I going to be left with this old co? Is it interesting at all?
Well, and with the old co, they also have a severe problem, and the aluminum price is that problem. Something very strange has happened in the last few weeks, and that is a different price in China for aluminum versus in London. And we have a great chart showing that prices in China have been rallying while LME prices, London Metal Exchange prices, have been flat to falling. Why is this happening?
Well, China's been really interesting. I mean, I think what you've seen is a lot of companies, last year was so bad, they ran their inventories down so low that we've come into a seasonally good part of the year. So you've seen some buying. You got a lot of people buying because they expect the Chinese to devalue, and they want to buy the metal before any possible devaluation. So they've been moving their money into the metals and sort of buying it hopefully ahead of when prices rise because of a devaluation.
So is aluminum a financial asset in China the way that copper has become?
Definitely. We've talked about the carry trade a number of times. They definitely are using aluminum for a carry trade, and it's something to watch that a lot of aluminum there is stored for financial purposes, not for being used in end uses.
Well, the downside to this, though, like the rally in aluminum prices in China, has been that now producers are now making more money for what they produce. And the risk is they're going to actually restart the production they've shut in. And this chart just shows that rise in profits ever since November, December of last year.
Yeah, what you're seeing is restart of old aluminum facilities. And remember, China has a weird thing. They really want new electrical systems. So every power plant is typically attached to an aluminum smelter. And they use a technology in China that's far cheaper than the Western sources. So China's really driving the bus on aluminum production. When they have too much, they export it to the rest of the world. It just kills companies like Alcoa.
Ken, we only have about 30 seconds left. Does China use aluminum the same way that the U.S. does? I mean, they're at different stages of growth, obviously, but end demand, is it the same thing?
Yeah, a little bit more in the grid. They use a lot of their aluminum for the grid. Electrical wire has become a huge thing there. It's replacing copper. That's the #1 difference between the two, is they'll use a lot of it in their power grid.
All right, good stuff. Thank you so much. Ken Hoffman, Bloomberg Intelligence's senior analyst for metals and mining. And a reminder that you can find Bloomberg Intelligence's full analysis on the Bloomberg. Just type BIGO to find full coverage of various sectors and companies.
He's my metal chart guy. I'm like, hey, I need this nerdy chart. I need this nerdy chart.
He always delivers.
I know. Anyway, still ahead on Bloomberg Markets, negative rates are getting negative reviews. We got one hedge fund president weighing in on that debate next.
This is Bloomberg Markets. I'm Scarlett Fu.
And I'm Alex Steele. Where does the world's largest listed hedge fund see some opportunity?
Bloomberg Go spoke with Man Group President Luke Ellis this morning about the winning strategies for markets and the impact of central bank policies.
Hopefully it'll be a time for stock picking again because, we can actually concentrate on stocks as opposed to that big shift in momentum we saw in the first quarter. Otherwise, I think it continues to be a good environment for the CTAs to take advantage of what's going on in the macro picture. But you need the diversification you get of that rather than the discretionary macro guys who struggle, right?
So take us through some of that stock picking. Given what you said, it's a matter of expectations. Does that mean we should be looking at the ones where the expectations are low because the chances of outperforming are better in those?
I think the street is... Everybody's used to the earnings management that goes on nowadays, right? So I think that it's not absolute lows and absolute highs. It's really looking for guidance misses, things where, I think the market will be punishing things very heavily if they're missing in this environment. It's, we've come back quite a long way in the last 4 or 5 weeks. That means there's lots of room for pain on the downside, which is, I would say the short side is probably more of an opportunity than the long side on the individual earnings results.
Luke, at this point, from about 35,000 feet, people talking about an earnings recession and then a real recession coming off the back of it. Does that resonate with you at all, Luke?
I think it's, we've clearly got a lot of pressure on earnings. I think we've clearly got a lot of pressure, particularly outside the US, on markets generally. The real answer, and it gets to your third story today, if you make the banks look miserable, that is really bad for confidence. It's really bad for borrowing, company borrowing. People don't do things, and then you get a weakening of economies. We have to get some confidence back into the banks somewhere. And you could see the market's leading the world down. You look at Japan, that's leading us down. Why? Because the negative rates is awful for Japanese banks. It's clearly a big problem there in Japan, and the banks are underperforming and they're dragging the rest of the market down.
Look, just on negative rates, Larry Fink out with a annual letter to shareholders saying this just is not good. The negative consequences are there to be seen. But do you have to draw a distinction between negative interest rate policy for a small economy like Sweden, Denmark, to protect their currencies, or rather the opposite, to try and weaken them, versus a big negative interest rate policy in the Eurozone, in Japan, etc.? Do you have to draw that line?
I think you do. I mean, look, individual central banks in small economies can achieve things that are different than you can in a big economy. The problem in Japan is, the central bank's gone to negative rates, but the reality is there is no chance that banks in Japan are going to give negative rates to their clients. So you immediately set up that problem. If you're sitting there as a company, you're looking at rates, you see, whether you get to borrow at 50 basis points or 0, that's not going to change your decisions about actual investment decisions. But negative rates create a concern about confidence, and poor confidence is always bad for economics.
So given that damage being done to banks, and by the way, Christine Lagarde in her interview with John Micklethwait admitted to that, said negative interest rates are really bad for the banks. Does that tell us that Mario Draghi was actually quite clever in going with the TLTRO approach? Because that's not a negative interest rate. That's actually encouraging banks to make loans.
So it was clear that what he tried to do at the same time as going to negative interest rates is to do something to support the banks in the most direct way he could find. At some point, they'll probably all end up buying shares in banks to try to support them. So the reality is, I don't know, look, personally, I think negative interest rates are just a flawed policy for big economies. It's bad for confidence. It's bad for the banks. I was talking to some of the big banks in Japan when I was out there a few weeks ago. They're seeing lower loan demand from companies because the companies are going, hang on, you got negative rates. It can't be good for you. I'm not sure I want to borrow from you in the current environment. That's exactly the impact you don't want to get.
Luke Ellis, president of Man Group, speaking earlier on Bloomberg Go.
And still ahead on Bloomberg Markets, Chesapeake Energy getting some relief today. We're going to look into the company's debt load after the break. From Bloomberg World Headquarters in New York, you're watching Bloomberg Markets. I'm Alex Steele.
And I'm Scarlett Fu. Let's start with the headlines on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our news desk. Hi, Mark.
Scarlett, Alex, thank you. From immigration to healthcare to nominating Supreme Court justices, Americans trust Hillary Clinton more than they do Donald Trump. That's according to a new Associated Press GFK poll. But when it comes to who Americans trust to handle the economy, Mr. Trump and Mrs. Clinton came in about even. Trump says his children won't be able to vote for him in the upcoming New York presidential primary. The reason? They didn't register in time. Trump said his children, Eric and Ivanka, quote, feel very, very guilty. He continued they were unaware of the rules. Trump didn't provide further details other than saying, again quoting, it's fine. The international uproar over the Panama Papers is entering week 2. British Prime Minister David Cameron faced lawmakers over his ties to offshore tax havens. The Prime Minister has been under pressure since his father, Ian, was identified as a client of a Panamanian law firm that specializes in helping the wealthy reduce their tax burdens. Brazil's deploying thousands of troops in the capital city of Brasilia this week. The government's hoping to prevent violent clashes as Congress holds votes on the impeachment of President Dilma Rousseff. A special committee will begin voting today whether to move forward with the impeachment request. The full House could vote in less than a week. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Mark Crumpton. Alex, Scarlett.
Thank you so much, Mark. Among the stocks moving on corporate news today is Chesapeake Energy. The shares are jumping by the most in the S&P 500 as the nat gas producer pledges assets to preserve a $4 billion bank credit line.
So Spencer Cutter, energy credit analyst for Bloomberg Intelligence, has been covering the Chesapeake saga and joins us now from Princeton, New Jersey. Not only did their $4 billion line of credit not get cut, but it actually got access to $2.5 billion in first lien loans. What did Chesapeake have to do to get this kind of cash?
Well, the key here is that Chesapeake had a credit line for hedging that they had in place over prior years. The company said that they're unwinding that credit line, and they were able to take the collateral that they had pledged there and move it over to support this current credit line. So really what happened is their access to this credit line was cut from $4 billion to $3 billion until they pledge more assets as collateral. They can get it back up to $4 billion. And as you mentioned, they can also issue another $2.5 billion of additional first lien debt. I think it's important to point out, though, that first lien debt would be subject to a junior right of repayment from the credit facility. So if there was a restructuring, the banks would get repaid first from the value of the collateral that's pledged.
So Spencer, can we learn anything about what Chesapeake was able to accomplish and extrapolate it to other oil and gas companies who have a lot of debt?
Well, to the extent other oil and gas companies have assets that they have not pledged as collateral, that's certainly a way for them to either sell those assets without seeing a cut in their borrowing base or pledge the assets to the banks to get additional borrowing capacity. Some of the bigger companies, you know, size does matter in this space. They may have the ability to do some of that. The smaller guys, probably not so much.
So, Spencer, as the stock has gone from, what, $30 in the second quarter of 2014 to $4 where it currently sits, how has the investor pool, the investor base evolved? How has it changed?
Well, I mean, from a debt standpoint, I can tell you it's really gone to the distressed fund investors and people who try to, you know, make their living off of buying companies, sort of the loan to own. I'll buy this distressed debt, go through restructuring, I'll help drive the restructuring process. I could buy it at 20 cents on the dollar and get out at, you know, 30, 40, 50 cents on the dollar. I think there's one interesting angle to this, though, it's worth pointing out. As we talked before, Chesapeake did a big debt exchange back in December where they exchanged unsecured bonds for second lien bonds. Those second lien bonds are now trading around 50 cents on the dollar. I think this new $2.5 billion of first lien capacity, you know, the company has said, they said on their earnings call that they are focusing on trying to manage their 2017 and 18 debt maturities. They got about $2.5 billion of debt maturing in those years. and they may take that $2.5 billion of new first lien capacity and try to use it for another exchange. It'd be hard to do more second lien debt given where those bonds are trading, but first lien debt might be easier to do.
Right, so the idea is like they're going to just pay off their existing debt and then keep it going. This really speaks to a larger issue that we've been waiting for bankruptcies and defaults as banks wind up cutting their borrowing base to oil and gas companies. But this really shows that banks do not want that to happen, that they're going to do kind of whatever it takes to keep certain companies in business and not have a huge wipeout of oil and gas companies.
The banks really don't want to be the bad guy, and you also got to understand they probably recover more of their money through a gradual workout process where they can drive the process. If you just throw the company into bankruptcy, then it becomes, you lose control. Now the bankruptcy court takes control. We have those seen some cases over the last couple months where companies did have their borrowing capacity cut to something that's below what they had outstanding, WT Offshore and Mid-States Petroleum. So they both find themselves in a position where they have to pay down some debt in the next couple of months. Other companies, to use a geeky term, a lot of companies got a going concern qualification in their year-end financials. Basically means their auditor doesn't think or thinks there's a good chance the company won't survive for the next 12 months. And in many cases, that causes a default on the credit line. So you're seeing a lot of amendments and waivers going on that are starting to cut back capacity outside of the borrowing base redetermination process.
Spencer, good stuff. Thank you so much. I really appreciate it. We got to leave it there. Spencer Cutter of Bloomberg Intelligence.
Turning now to another company story. Canadian Pacific Railway shares are continuing their march north after abandoning the bid for Norfolk Southern.
So the deal was rescinded after opposition was levied from just about every major player, the railroad itself, the U.S. Department of Justice, and many rail customers. Well, Bloomberg TV Canada's Pamela Ritchie joins us now with more. Canada, what does Canadian Pacific do now?
Well, there's a few. Most of the options are looking rosy. Let's start with that, Alex. So is there a question of perhaps more tuck-in acquisitions? According to Bloomberg Intelligence's Lee Klaskow, thinks that's definitely a possibility, maybe buying up smaller pieces of Norfolk Southern or smaller pieces of other companies. Perhaps taking a look at CSX. Hunter Harrison has never said that's completely off the table. And BI seems to think that there's definitely a chance there will be M&A in the future of CP. In any case, the distraction of this rather bumpy ride at taking a run at Norfolk Southern, that is gone for now, and it seems to be all systems go because that distraction is removed.
Okay, so it's resolved for now. What does the company do in the meantime? Does CP look to renew its share buyback program?
Yes, almost across the boards in terms of analyst reports, they're expecting a rather large share buyback program to get going in earnest. If you look back at 2015, the company put aside $2.8 billion for share buybacks. That program was moving in earnest. They did a lot of it. For 2016, when they're in the midst of this difficult merger discussion, they had about $1 billion earmarked for share buybacks. That number is expected now to get higher. Kristen Weatherby at Citi taking a look at how much leverage the company might throw at it, as well as using cash on hand. He brings the number up to about $3 billion potentially being put towards share buybacks. Then there's also the story within, of course, of Pershing Square and what they might have to do in order to get their own books in order. They own 9% of Canadian Pacific. Will we see a sale share there? So that enters that overall picture.
Pamela, good stuff. Thanks very much. Pamela Ritchie of Bloomberg TV Canada. And a reminder, we'll hear from the CEO of Canadian Pacific, Hunter Harrison. That interview is coming to us at 2 p.m. Eastern.
Just ahead on Bloomberg Markets, investors are loving McDonald's. The stock is up 30% over the last 12 months. But Wall Street analysts, though, not falling in love. Not even a little bit. Why? Why the disconnect? This is Bloomberg Markets. I'm Scarlett Fu.
And I'm Alex Steele.
The past 12 months have been pretty beefy for McDonald's. If you look at the share price since Steve Easterbrook took over, they have climbed more than 30%.
Yet McDonald's still can't get respect from Wall Street. Bloomberg Intelligence analyst Mike Halen joins us from Princeton, New Jersey with more. Mike, why this disconnect between investors and Wall Street analysts?
Yeah, well, you know what? It may not be a bad thing, because if you remember, everyone loved Valiant last year. So there could be a couple things at work. I think, first of all, a lot of analysts were burned by the stock. It really didn't do anything for 4 years, and while much of the sector really ripped. So I think part of that mentally is tough for them to back the company again so early in the turnaround. I think another part of it is the fact that, analysts and investors, they live in New York, and they are eating healthier. They're eating more antibiotic-free beef, and they're eating at Shake Shack instead of McDonald's. And I think they're kind of extrapolating that across the country. But that may not be the case. Shake Shack itself is only looking to build about 450 units in the U.S. So in terms of middle America, a lot of them may be less concerned with antibiotic-free beef and organic produce. And even if they are, they may be less able to afford paying the higher prices for those types of items.
Right, so there might be some personal bias at work there. When you talk about the turnaround in same-store sales for McDonald's, it's gone positive, yet the caution from analysts suggests that it's not sustainable. You've dug into the numbers. What do you think? Is this turnaround sustainable?
Well, the concern is that they've picked all the low-hanging fruit. The all-day breakfast was a no-brainer, and that's going to boost sales for about a year, and then we'll see what happens. But if you recall, when Easterbrook first went down that path, there was a lot of opposition about all-day breakfast. There was concern about operations in the restaurants. Are they really going to be able to do it? But he remained aggressive. He tested it in a lot of restaurants. It worked, and they rolled it out. So the fact that Easterbrook has been aggressive, whether it's with price points or with new items and all-day breakfast, is a positive and is a good sign that maybe they can continue their momentum.
Well, also the distinction here, too, if you're an investor, you're looking at a dovish Fed and you're looking for higher quality blue chip names that pay a dividend. I mean, is it possible that investors are reacting to more of these macro factors versus company-specific moves?
It could be. I think more so is the fact that they are turning around the sales. However, the fact that they are starting to gain market share back, they're starting to get aggressive with the price points, and the fact that they have scale, it enables them to source products more cheaply so they can offer lower prices. So we're in the middle of a burger war right now, and McDonald's is best equipped, to do well in this type of an environment.
All right, Michael Halen of Bloomberg Intelligence, thank you so much. As far as the burger war is concerned, Shake Shack wins in my book.
Yeah, you
so much better.
All right. Well, let's go over to the markets desk now, where Bloomberg's Julie Hyman has the latest, checking in on some stocks that are moving on analyst calls.
Yeah, and let's start with energy and talk about Valero and the refiners. We have a note out from Credit Suisse downgrading Valero. Tesoro is favored among the refiners, but the analyst there says the stock has already sort of factored in the earnings weakness for the first quarter, that there are a couple of other issues. One of them is the so-called crack spread, the difference between crude oil and the refined products. And it says that there's a structural concern in diesel cracks in particular that might continue for some time. In addition to that, the analyst says the main reason to sell refiner holdings isn't necessarily the seasonal trade, although there is that. It's also the likelihood of recession. And you can see Valero shares are pulling back 2.6% on this call. On the other hand, BMO Capital is looking at Encana and upgrading that on commodity prices and the outlook for them and valuation. BMO says that Encana will benefit from improving oil and gas prices and that the stock's valuation is attractive. Those shares are up by 5%. And we also have some other restaurant stocks to look at today. Restaurant Brands was upgraded over at RBC Capital. You see positive catalysts for the company's sustained sales momentum at Burger King, additional cost cutting at Tim Hortons. You see those shares are higher. Bloomin' Brands getting upgraded over at Credit Suisse. The analysts there looking at an attractive valuation and saying there's some potential sale leaseback transactions coming up that should be positive. And finally, Brinker, that view increased to mixed at OTR Global. The analyst there says that Chili's third quarter was helped by higher price sizzling steaks and the rewards loyalty program. We know how you guys feel about burgers now, sizzling steaks. I don't know how that where that rates on your
Shake Shack's
food
so high
agenda.
up.
I'm a filet mignon girl. Judge me. All right. Thanks so much, Julie Hyman.
The Bloomberg Business Week Design Conference is underway in San Francisco, where top designers and business leaders are gathering now to talk about design innovation.
We go right now to Bloomberg's Corey Johnson, who is there now and joined by Robinhood Financial's co-founder, Baju Bhatt. Corey?
Yeah, thank you, Alex and Scarlett. Look, when you think about design, you're probably not thinking about being at, the website of one of the companies where you're trading stocks and all the pain that is to manage. Baju Bhatt has got a company called Robinhood, and when you think about design, it seems like it's really central to the process of rebuilding a new kind of stock brokerage for you.
Yeah, absolutely it is. It starts with really understanding how we can take the process of trading stocks and kind of get at the essence of it. So what are the 2 or 3 numbers that you need to know when you're actually buying and selling stocks, and trying to fit that onto an interface the size of a business card. It's a very unique design challenge.
That being, well, it's big for a business card, but basically
yeah,
the phone.
A really big business card. Yeah, took a lot of user research and thinking about what consumers are actually doing as opposed to what we've kind of been trained to assume that a stockbroker's looks like.
See, when I traded stocks, professionally, I mean, I didn't even trade them. I tell the trader to trade them, because there were so many variables about what I was trying to do, what range I was trying to do it, the size of my order, the size of my actual order opposed to the trade. But I feel like consumers don't always want all that. Is that what you found?
Yeah, absolutely. I think it comes down to kind of thinking about the 5% use cases and always building for the 95% use cases, and taking that extra 5%, which is usually where all the complexity is, and kind of keeping that available but not in the main user flow.
So what are those very few things that a retail investor wants, according to your research?
Yeah, so those things include some of the more advanced order types, so stop limit, trailing order types, using margin accounts, which is something we're about to launch, things like that, which we don't put in the direct flow of users buying and selling stocks. So if you're just going to try and buy one stock.
Wait, so sorry, those stop limits, all that stuff are things that most people don't want or aren't thinking about.
Yeah, that's like the 5%.
Right.
The 95% is I want to buy, let's say, this stock, and how can I do it in 3 or 4 taps?
And it also seems that with the customers you're looking at, you're sometimes looking at odd lots. You're looking at not 1,000 shares, of course, not 100 shares.
Definitely not, yeah.
What's the average number of shares a customer's buying?
I don't know what the exact number of shares is, but each transaction is in a few $100 to a few $1,000, so pretty small.
So in baseball, you call that crooked numbers.
Yeah.
Like 7 shares here and 5 shares there.
Yeah, exactly.
So how does that work from your end in terms of cost? Because one of the reasons brokerages haven't done that is for over the years, of course, it was a lot more expensive back in the day than it is now.
It actually doesn't make a difference for us. So the way we've kind of set up the system, and one of the reasons that took us a few years to get the product out there, is we wanted to make it so that our costs per transaction were basically 0. So building out the right relationships with clearing, execution, all those different things. So yeah, if it's 1,000 shares or 5 shares, it doesn't really make a lot of difference.
And what do you charge customer?
It's 0.
0 would be nothing.
Nothing.
That seems like a bad business model. Where's the revenue come from?
So the revenue comes the same way that all the other online brokerages make money. So margin, collecting interest on cash balances, and sort of taking the costs that the majority of consumers have and trying to make that as low as possible, but still continue to make money off of premium services.
And some news, you're launching in China.
Yeah, we are. It's very exciting. It's a totally new market where we think there's a huge demand for trading U.S. stocks. We told our Chinese customers in the U.S. that we were coming to China middle of last week, and we've had about 10,000 people already sign up.
Already, and that's the Chinese people want to trade U.S. stocks.
Yeah, yeah.
They're not Chinese, Shanghai or Shenzhen, or no?
Not right now. We think that the U.S. market's really interesting because obviously there's a lot of Chinese investors that want to put money in the U.S. as it is today, but it gives them direct access to trading all the stocks that are U.S. listed. There's a lot of major Chinese companies that are also either listed or cross-listed on the New York Stock Exchange, and it's a mobile app. It's really easy to use. So I'm really excited about that.
Very interesting stuff. Baju Bhatt, thank you very much.
Yeah.
Baju Bhatt, the CEO of Robinhood, here at the Bloomberg Business Week Design Conference, where they're designing jackhammers across the street, Alex and Scarlett. They may need some more work on the jackhammers.
All right, guys, thanks very much. Bloomberg's Corey Johnson and Robinhood co-founder Baju Bhatt.
Coming up on Bloomberg Markets, we're going to explore the delicate balancing act the Fed has in measuring U.S. wage growth and inflation.
This is Bloomberg Markets. I'm Alex Steele.
And I'm Scarlett Fu. Tepid wage growth continues to weigh on Fed officials looking for any substantial sign of inflation.
On What You Missed on Friday, we talked about this delicate balancing act with Michael Ashton of Enduring Investments, who kind of wrote the book on inflation. And we asked him about the Fed's fears of a downside risk to inflation.
One of the reasons the Fed has been fairly patient is because wages have not appeared to be rising very much. And even though wages follow inflation, if they're not rising, then the idea that inflation will become self-feeding is hard to get terribly concerned about.
Michael, do you think there's a difference between good inflation and bad inflation? I ask because some people make the distinction that bad inflation is central bank induced, while good inflation is aggregate demand induced.
Well, I guess at the end of the day, I don't believe a whole lot in aggregate demand-induced inflation. I think that money chasing, too much money in the system causes inflation. If you have really good growth, it actually will take any amount of money and sort of defuse some of it and cause less inflation. If you sort of look at aggregate demand-induced inflation, look at the 70s. As one example, look at Japan, where you have growth that is, very, very weak in the 70s in the United States, and yet you had quite a bit of inflation. On the other hand, you've got horrible growth in Japan, and yet you don't have nowadays. You actually have positive core inflation, and for years and years you had a little bit of deflation, but not horrible, even though growth was horrible. So, I think that the connection of aggregate demand and inflation only really holds at sort of low levels. If you get really high inflation, it's because it's
so the critics of the Fed, or some critics of the Fed, say that the mistake is this Phillips curve framework in which inflation is seen as a symptom of a solid economy. And it sounds like what you're saying by pointing to the 70s example, by pointing to Japan now, it's just not that clear that there's any real connection between a solid, healthy economy and an economy that produces inflation.
That's right. Phillips said that wage growth was related to the unemployment gap. Okay, he didn't say that inflation was. It's just economists later sort of said, well, it's kind of the same thing. But if you look at wage growth versus unemployment, you get a really nice connection. It's when you try to put that into inflation itself later, and saying that the output gap is related to actual inflation, and that's a little weak.
That was Michael Ashton of Enduring Investments. Joe Weisenthal is joining us now, and we're going to kind of continue the macro discussion today with Andrew Levin.
Yeah, I'm really excited having Professor Levin of Dartmouth on today. He's got a new 4-point plan for Fed reform. And, there's been a lot of talk in recent years about reforming the Federal Reserve, auditing the Federal Reserve. He's put forth an idea that he thinks is sort of a middle ground, really aiming to increase transparency of how Fed governors are selected, who really owns the Federal Reserve. So I'm looking forward to that conversation.
And that's unusual, right, that the Fed is so kind of segregated from the government. It's not really like that in other countries.
No, it's not like that in other countries, and it's unique within the United States of being this sort of quasi-public entity. Right. It's owned by the banks, but obviously it has this public mission. There is a role for congressional oversight and obviously appointments. But I think it's because it's at that intersection of being this banking entity and a public entity that it is such a lightning rod for criticism.
And of course, we're going to get Alcoa results as well. Unofficial kickoff to the first quarter earnings reporting season. That's coming up at 4 p.m.
And we're talking energy credit. What's not to love? Eco, oil, earnings. We got it all.
It'll be a great show.
All right, Joe, see you later. And you can catch all our guests on What You Missed later. We'll also be joined by Kathleen Gaffney of Eaton Advanced Management and talking more about inflation.
It's 2 p.m. in New York, 7 p.m. in London, and 2 a.m. in Hong Kong.
Welcome to Bloomberg Markets. From Bloomberg World headquarters in New York, welcome. I'm Lisa Abramowitz.
And I'm David Gura. Here's what we're watching this hour. Canadian Pacific ends its $27 billion bid to buy Norfolk Southern. What does that failed deal mean for investor Bill Ackman and the railroad industry more broadly? We speak to Canadian Pacific CEO Hunter Harrison next.
Then earnings season kicks off today, and despite being forecasted as the worst one since the financial crisis, U.S. stocks are in the green, but pairing gains. Is this the next leg of the bull market or just a short-term rally?
And Tesla announcing today it's recalling over 2,000 Model X SUVs. It's behind the recall, and what it means for the brand and its future selling power. Well, it's 2 hours from the close of trading. Let's head to the markets desk where Bloomberg's Julie Hyman has the latest. Julie.
Yeah, we've seen stocks sort of falling off and then hovering around the same level for much of the session. Had an early, strong start and then paired gains as we've headed into the afternoon. The Dow has remained the strongest performer of the three major averages. What rally remains is largely commodity driven. If you take a look at oil and gold today, we've been seeing both trading higher going into the Doha talks on any kind of production freeze for oil, even though there's not a lot of optimism necessarily on that. We're seeing crude get a lift. Gold also higher as the dollar has turned lower, the dollar versus a basket of currencies. So we seem to be seeing that inverse trade at play today. Take a look at IMAP on the Bloomberg, and you will see that we're seeing actually now financials have taken the top spot, but materials have been performing well today. Energy hanging on to gains to some degree, but financials actually now in the top spot just in the past few moments, and technology also gaining there. So those are the groups that are higher. Healthcare has been the big drag throughout the day.
And of course, there's earnings.
Yes, you don't want to forget about earnings, right? I mean, it's interesting that financials are doing well today because this is a group where there's not a lot of optimism heading into earnings. So here's one of the charts we've been looking at going into this earnings season in the so-called earnings recession. So this is the trailing 12-month average change in earnings for the S&P 500. And as you can see here, this has turned negative. It's forecast that earnings for S&P 500 companies will fall by 10% in this season that we're for the first quarter, the season that we're going to begin hearing about after the close with Alcoa. Speaking of Alcoa, those shares are actually strong going into that report, up by more than 4%. We have, of course, seen a lift in commodities or a rebound in commodities in the first quarter, so that is contributing to some of the gains that we're seeing in some of the commodity producers that are set to report. And then there are indeed the banks. We did have some analyst commentary today that perhaps the outlook for the banks is too negative going into their earnings. And indeed, we always talk about the caveat that companies do beat by a margin of about 3/4 here. So typically you get anywhere from 2/3 to 3/4 of companies beating analyst estimates. But here are the banks rising. You also have to look at context, the idea that these banks have done very poorly going into this. JP Morgan and Goldman Sachs, two of the worst performers in the Dow today, both of them year to date down by more than 10%. So that also already perhaps reflects the pessimism for the earnings.
Thank you so much, Julie.
Now let's check on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our news desk. Mark?
David, Lisa, in New York, Hillary Clinton is calling out Donald Trump for not appreciating the diversity of his home state. Mrs. Clinton made her comments to Southeast Asian community officials during a campaign stop in Jackson Heights, Queens. That's Trump's home borough. Mrs. Clinton told the group that Mr. Trump is from your area, but, quote, he doesn't seem to respect diversity, end quote. Campaigning in upstate New York, Bernie Sanders criticized Hillary Clinton's record on fracking, the oil and gas drilling method that's been banned in the state. He said Mrs. Clinton has not, quote, led the opposition against fossil fuels, but rather came on board at the end. In Japan, U.S. Secretary of State John Kerry today visited the memorial to Hiroshima's atomic bombing 7 decades after the U.S. used the weapon for the first time in history, killing some 140,000 Japanese. Today's visit makes Secretary Kerry the most senior American official to travel to Hiroshima. He's in Japan with other foreign ministers of the Group of 7 industrialized nations. Treasury Secretary Jack Lew says Americans have reaped significant benefits from the country's global leadership role. He says it would be a serious mistake to retreat from the economic stage.
Responsible and sustainable U.S. leadership in the global economic system begins at home.
And we have to lead by example, as we did by bouncing back from the financial crisis that threatened America's place in the global economy.
Secretary Liu's speech before the Council on Foreign Relations sought to counter arguments being advanced by Donald Trump and other Republican presidential candidates that Americans are losing badly in competition with China and other countries in the global economy. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Mark Crumpton. David, Lisa.
Thank you so much, Mark. Canadian Pacific Railway announced today it's pulling the plug on its push to buy Norfolk Southern.
The deal was valued at $27 billion, but fizzled after 5 months of effort and lots of opposition. Bloomberg's Eric Schatzker is here now with a very special interview. Eric?
David, that of course would be Hunter Harrison. He is the Chief Executive Officer and the Chairman of Canadian Pacific. On the phone with us this afternoon, Hunter, I gather you've just spent some time visiting one of your rail yards in Chicago. Back to business. No further ado, but there are a number of things that we need to talk about. A couple of things are missing from the statement you made this morning, terminating your efforts to buy Norfolk Southern. And that would be, one, an explanation for why, and two, of course, what's next. So let's begin with the why. Why end these efforts now?
Well, I think, Eric, I think that we could see the handwriting on the wall. And, you know, when there's a clear misunderstanding of the transaction, when the Justice Department, and you know, has no standing in the transaction, when the U.S. Army and political pressures start to bear, it's time to really look at our whole card and say, do we really want to waste a lot more time and effort in this, particularly when clearly Norfolk Southern was not ready to discuss the issue. They said our offer was woefully inadequate, but they wouldn't tell us what adequate was. So I think we effectively saw a deck stacked against us and said, look, let's move forward. This is not the end of the world. You know, we're looking out for the CP shareholder, and we've got plenty to do. And so we're going to go back to Calgary and work very hard and produce some more shareholder value.
Why not wait it out, Hunter? Because as you point out with your reference to both the Department of Justice and the Army, it's the Surface Transportation Board that has exclusive jurisdiction over railroad mergers. So at the end of the day, it's the STB that decides yes or no. And they haven't ruled yet.
No, but I think, Eric, that there was clearly, in my view, there was a disrespect shown for the Surface Transportation Board. You know, to me, it's like changing the rules of the game in the middle of the game. I think we had...
Hunter, may I interrupt you for just a moment? Are you saying, and I want to be clear, that you don't feel that the various arms of the U.S. government, including the Surface Transportation Board, were treating your offer fairly?
No, I didn't. Look, Eric, we said early on that we had great respect for the Surface Transportation Board, their knowledge of the process and the procedures that should take place, and we think they should have been the ones that gave the final ruling. But it became clear with what I would describe as political pressure and the Justice Department and the U.S. Army and others stepping in. And we knew at the same time, you know, this resolution of ours was non-binding.
Right.
So Norfolk Southern didn't have to react to it. And we could not make a trust structure successful without their cooperation.
So the statement that you made does not mention CSX. What about CSX?
Well, Eric, I don't, we've kind of turned that page. I don't see a lot of difference between the two. And if there's opposition with Norfolk Southern, I would presume that CSX would have the same position that they had previously. And so unless somebody changes their mind or attitude, and I would hasten to add that if you look at the statements of the so-called Big Four in the U.S., I would say Big Four minus one now, they all clearly came out publicly against the merger after they had done theirs. I think now that I think it's fair to say in the case of being Santa Fe, that that Matt Rose has said, as I've read his statements that he's made publicly, that mergers can be a good thing. It's just a timing issue where the others voted against.
Hunter, if that's the case, if it's just a matter of timing, you've shown a willingness to go back at this more than once. Can we safely assume that Hunter Harrison will try to find another way to buy Norfolk Southern or CSX and create a transcontinental railroad at some point in the future?
I don't think that's not something I'm really focusing on. You know, I do think, Eric, I think you know my views. I think down the line, maybe post my retirement, is it smart for the North American network, particularly for the U.S. east of the Mississippi, to take under consideration a merger? Absolutely. Will there be a chapter in the book or two devoted to it? Absolutely. But what lies ahead? Next step for CP is to run a good railroad in Western Canada.
Hunter, you know, it's a book I'm looking forward to reading when you finally get around to writing it. But now we have to talk about what's next. What are you going to do? Everyone expects Hunter Harrison and CP to do a big buyback of stock. We've even talked about it. How big a buyback are you considering?
Well, you know, I think that's something we've talked about before. I think that's something that, you know, we're not going to dump everything we can. But I think that we think that the intrinsic value of our stock is undervalued. It's a good bargain. And I think you can look forward to, subject to board approval in the weeks to come, that there will probably be an announcement in that regard.
Yeah, but what everybody wants to know, Hunter, is how big? Are you willing? You entertain using leverage to buy Norfolk Southern. Would you use leverage to make a bigger stock buyback?
Well, I don't think we'd use near the leverage that we talked about before. But, you know, I mean, once again, that's something that needs to be up for discussion relative to today where interest rates are, as well as, you know, where our stock value is and what we see in the future with maybe some commodity strength bouncing back a little bit, which could be very helpful to us.
All right, Hunter Harrison, we thank you very much, as always, for your time. Hunter Harrison is the CEO of Canadian Pacific, today terminating its efforts to buy Norfolk Southern. David, Lisa?
Thanks very much, Eric, saying there that he could see the handwriting on the wall. Coming up in the next 20 minutes of Bloomberg Markets, markets greet first quarter earnings season with little conviction. Will 2016 be the year of flat returns?
Then Sprint's cash flow bleeds deeper into negative territory. How bad is the company's debt debacle? And what are the plans to address it?
And how sustainable is alternative energy? We dig into commodity markets and find where to find the upside. This is Bloomberg Markets. I'm David Gura.
And I'm Lisa Abramowitz. As Alcoa unofficially kicks off earnings season in just a few hours, investors are bracing for the start of what's forecasted to be the biggest earnings slump since the financial crisis.
But some are optimistic. Oppenheimer has allocated 60% of their funds in equities. Oppenheimer's chief market strategist, John Stolfus, is here with us now to explain. I always enjoy reading your notes, John. You say at the beginning here, this is a market that's tried investors' patience and commentators' patience. So let's try to get in here a little bit. You say that the market has been analogized to Larry David, Curb Your Enthusiasm for a while. I'll have you spell that out for me in a sec. Where are we now? What's your forecast here as we head into earnings?
Well, right now, what I think is we're going to be trying to patience will be the main thing, and worry are the thematics going into this.
Patience and worry, and yet you've got 60% invested in equities right now.
Oh, I should hope so.
So how does that compare to how it has been in recent months?
Well, actually, not so bad. If you go on a year-to-date basis, indeed, defensives have outperformed cyclicals, so we wouldn't look as good. But if you look at it from the bottom on February 11th through today, it's been a better market to be exposed to equities and a better market to be cyclically positioned, to put it that way. So looking for the economy really to come back. We're not looking for, if anything, to continue for this economic growth to be sustainable, not expecting or looking for a recession, and in particular with the U.S., sustainable economic expansion with Europe, China, and Japan as labored as its recovery process is, foreign markets in recovery.
Just looking at the composition of your portfolio there, not much, if anything, allocated in commodities, and that's been the case for a while now. Do you expect that to continue?
Well, actually, David, we look at the position we have in being overweight materials as being a good proxy for exposure to commodities, particularly because the materials sector has a lot of processors in it who can do very well picking up commodities on the cheap, processing them, and then not passing all the benefit of lower prices onto their customers. So
we're heading into earnings season. Typically, companies do beat the analyst expectations, right?
Thank goodness.
So, you know, what will the narrative be this time around, since the forecasts are so dire? Will the narrative be driven by the beating of the estimates, or will it be driven by the declining revenues over time?
I think what it will be driven by is by the fact that the results will beat expectations. That expectations right now, last I looked, when I checked the FactSet numbers, they were for a negative 1% revenue. On the other hand, negative 9.1% drop in terms of earnings. And that looked to me at a quick glance as if all of a sudden revenues are turning around somewhat. And I think that might be a part and parcel of the dollar's recent weakening, which we've seen. We've been looking for that because usually the dollar strengthens on anticipation of Fed hike cycle. And then what happens is the dollar begins to weaken once the Fed has thrown the gauntlet down. And he's even as light as a gauntlet as that was at 25 basis points in December. We think the market is already beginning to reflect that, and that's what's caused a relative rally in commodities and also the reduction of the strength of the dollar, which should benefit revenues and likely even earnings in the quarters ahead, if not this quarter. So on looking forward, the market may anticipate that the worst may be over in terms of strong dollar, and maybe that we are finally beginning to trough in terms of earnings results in energy, where the expectations are, I think it's negative 101 or negative 103%. I'm still trying to figure out how that works, but it's just dramatic, and that saps the earnings out of the S&P.
We've marked the beginning of earnings season. Here on a Monday, let's look ahead to the economic data we're going to get this week. 4 more Fed presidents are going to speak this week. What of all of that is most important to you? And as we hear from these Fed presidents, are you hearing anything different from any of them?
I would say, related to the Fed presidents, I think the wonderful thing about the Bernanke legacy Federal Reserve is its transparency. In essence, the Fed chairperson lets the body of the FOMC and even non-voting members speak their mind, as long as they're regional presidents. And what that has created for the market may be troublesome for those who don't believe the Fed. But if you look at the picture, the Fed has been remarkably accurate at saying what it means and doing what it means, or all that mumbo jumbo of therapeutic wording can be. But the process is, at the end of the day, they remain very data dependent, and they are also very conscious of the fact of the risk of a much stronger dollar in a low interest rate world if we start raising the Fed funds rate too fast or too soon.
All right. Fed mumbo jumbo. I like it. John Stolfus, Chief Investment Strategist at Oppenheimer. Thank you.
Thank you.
Still ahead on Bloomberg Markets, debt and equity investors and telecoms may be surprised by what our next guest has to say about the sector's real leverage ratios.
You're watching Bloomberg Markets. I'm Lisa Abramowitz.
And I'm David Gura. As the credit market recovers from February's bottom, one sector is still feeling pain, large cap telecoms.
MoffettNathanson's latest note says telecom companies are much more heavily levered even than they initially appear. Joining us now with more is Craig Moffett, MoffettNathanson partner and senior researcher. Welcome. Thank you for joining us.
Good to be back.
So when we talk about levered telecom companies, we would be remiss to not talk about Sprint, which is possibly the poster child. So using Sprint as an example, how much more leveraged would its balance sheet look under new regulatory reporting requirements that would come in?
Well, so there are a number of things happening, right? Is FASB has already said, starting in 2019, that we're going to start to take operating leases, which would include things like cell tower leases, for example, and count those as debt. Now you have to add back the payments that you make on those operating leases back to EBITDA. Make that adjustment, and then you're already talking about a significant increment to leverage. We also adjust for these big accounting distortions that are going on in wireless right now because of the transition that the industry is making from subsidizing handsets to first selling handsets and now leasing handsets, which also add a lot of increments to EBITDA, especially at Sprint, where there's 2/3 of their EBITDA is coming from accounting changes and is not quote unquote real. Make all those adjustments, and Sprint, which looks like it's levered already at about 4 times, which is high to begin with, and it's levered at about 8 times EBITDA, which is a tremendous leverage ratio. And by the way, probably for a company that it's hard to argue deserves a valuation of more than, say, 8 times EBITDA, in which case you're talking about 0 for the equity.
And so just quickly, that would mean that the debt would go from about $34 billion to more than $50 billion.
That's
correct?
right. Add up all of that, and you're talking about a company with $50 billion of debt, and where the real EBITDA, just because of all of the changes on the handset side, really goes down to about $2.9 billion. And people are talking about $7 billion of EBITDA. There's about $2.9 billion of real EBITDA there. Add back the lease payments and what have you, and you're talking about, again, a company that is levered at about 8 times EBITDA. There is no such thing as truth in accounting. Accounting is just an approximation of a set of numbers to try to get you reasonably close. If there's truth, truth is cash flow, right? And the real free cash flow of this company is dramatically negative. This is a company that's been hemorrhaging cash for years.
You write that a rolling loan gathers no loss. How was this ignored, or how was this sidelined for so long?
Well, you know, it's funny. It's an odd thing. We started writing about this for our subscribers in as early as 2014, and we were shouting the house was on fire. In fact, I even used that as the title of a report back in early 2015. For whatever reason, the bond market didn't really get serious about this until September of 2015. And then for whatever reason, the bonds went from trading at par all the way down to about 62 cents. They've bounced back some. That's talking about a mid-2020s tenor. They've bounced back some, but there's still, I think, a recognition that there is real duress here.
Thank you so much, Craig Moffett, partner and senior researcher at Moffett-Nathanson. Thank you so much.
Still ahead on Bloomberg Markets, oil riding highs when near the close in New York. We'll talk about the latest moves in crude with an energy investor who's also seeing opportunities in the clean energy space. That's coming up next after the break. From Bloomberg's world headquarters in New York, this is Bloomberg Markets. I'm David Gura.
And I'm Lisa Abramowitz. Let's get a check on Bloomberg First Word headlines this hour with Mark Crumpton in the newsroom. Mark?
Lisa, David, thank you. Donald Trump is voicing his displeasure over the selection process for presidential nominees, calling it, quote, corrupt and crooked. This as the Republican frontrunner inches closer to a contested convention. Trump told a campaign rally in upstate New York yesterday that the person who wins the most votes in the primary process should automatically be the party's nominee. A new poll says half the U.S. approves of President Obama's job performance, the first time that's happened since 2013. A new Associated Press GFK survey finds the president seeing an uptick across a number of issues, including the economy. But 54% characterized the economy as poor, and just 1 in 10 Republicans expressed a positive opinion of the president or of his performance. Dueling demonstrations in North Carolina on this Monday, supporters and opponents have gathered to highlight their differences concerning a new state law that limits anti-discrimination policies for lesbian, gay, and transgender people. Both rallies were held near the old state capitol grounds in Raleigh. The international furor over the Panama Papers is entering its second week. British Prime Minister David Cameron faced lawmakers over his ties to offshore tax havens. The Prime Minister said that even though he's released 6 years of tax returns, other ministers should not be made to disclose theirs.
As for MPs, we already have robust rules on members' interests and their declaration, and I believe that's the model we should continue to follow. We should think carefully before abandoning completely all taxpayer confidentiality in this House, as some have suggested.
The Prime Minister has been under pressure since his father, Ian, was identified as a client of a Panamanian law firm that specializes in helping the wealthy reduce their tax burdens. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Mark Crumpton. Lisa, David?
Thanks so much, Mark. Commodity markets now closing in New York. Let's take a look at some of today's biggest movers, starting with copper. Copper futures rebounded after the biggest weekly loss in almost 3 months. In China, the biggest copper user, producer price declines narrowed in March. We're seeing it close up here 0.05%. Copper also being helped by a gain in oil today. WTI closing near a 4-month high at $40.40. Prices dropped at one point in the session after news that Iraq boosted output 2% last month. Venezuela saying the first priority of the April 17th OPEC talks should be to cap output, while Azerbaijan said it backs a freeze.
Now for more on the outlook for crude, we're joined by energy investor Gianni Kovacevic in Houston. He's the author of the new book, My Electrician Drives a Porsche, which explores the challenges of clean energy industry. Gianni, I want to start on oil. If we see a cap on output from OPEC, how will that impact your outlook for prices?
Well, there's a lot of factors you look at with oil now, and I think we, in general, market participants have to look at oil as a new rule book, and it's like a scale, and we have factors on the bullish side for oil prices and factors on the bearish side. And if we're talking about caps, basically what we've seen in the past sort of 16, 17 months was as much as 2 million barrels a day of excess supply. That's slowly coming in as a pincer movement happens right now, and we've seen the contango in oil prices, as high as $8 or $9, and that's come down to about 4 or 5. And if you look at the nearest term futures, what we saw, particularly on Brent, is coming down to into the dimes. So the price was going to rebound. We saw a big move on Friday, and if we look at those bearish and bullish factors, we can sort of extrapolate where I think oil certainly is going to have its day in the sun in the future. It has to. We cannot stop drilling for oil. But how many days in the sun is it going to have in the next 5, 10, 15 years? And that's what we've got to look at.
You sent along a chart showcasing this contango. Maybe you can help those of us who don't follow oil as close as you to understand sort of what's been going on here with regard to contango.
Well, contango basically is oil's bidding for storage, and so you get an arbitrage in there, and we had that as a year or year and a half out. You had about as high as $8 or $9 of profit. And so what happens now is basically the lack of drilling, and we have a lot of this, the demand and supply balance is coming together, and we see that basically we go into backwardation where the prices are then changed to the backward side of that equation.
You said that you want to see oil may not see its day in the sun in the next 5, 10, 15 years. Can you please sort of elaborate on that? Do you expect that oil will not see its day in the sun for the next possibly 2 decades? And if not, why?
Now, oil is definitely going to have its day in the sun, just not that many days. On the bullish factors for oil, we have politics. There's always $20 or $30 of politics in a barrel of oil. Decline rates, we've got to replace 5 million barrels a year because of decline rates. So what we've seen now with the lack of drilling, the rigs now are about, in the United States, 354 rigs drilling for oil. That can't happen. So it's going to have a momentary price pressure. But for the E&Ps in the oil business, you've got a hedging gun to their head. You've got about 4,000 duck wells that could be completed, maybe 1,000, 1,500 in a year. So what we've seen with about a 2 million barrel a day price difference, and we saw that the oil price collapsed. But on the bearish side, far more important, innovation, adoption, technology. These are game changers. And if you look at it, the amount of oil, so we saw, 2 million barrels a day of discrepancy between supply and demand. We could see something where, 5 million barrels a day is used to make electricity on islands. We look at the 88 million cars that are sold every year. Innovation tells us that by 2025, cars have to be 50% more efficient. And then adoption, you look at electric cars. A lot of people don't believe that the future is now. The reason I'm driving an electric car across America is to show people the future is now. And the success that the Tesla Model 3 had, we can talk about that all day long, but 325,000 orders now, that is a damning indictment on the corporate laziness of the incumbent automotive manufacturers. To give people reference, BMW sold 95,000 3 Series BMWs in the United States. So does the customer want an electric car? Absolutely. It's all about infrastructure, and that's another thing we've got to talk about.
But then, to your point, does this mean that what's driving oil prices right now is the demand side or the supply side? Is it because the demand has gone down or supply has just gone up so much?
It's both. I think it's a pincer movement. In fact, I would say demand has been very reliable. Even last year, where we saw the oil price collapse, demand increased, 1.5, 2%. That's going to keep happening. But we use right now 96 million barrels a day on a global scale. I'm going to suggest to you that we will never in history see another 30% gain for the demand of oil. The real question is, when do we start going into terminal decline for oil demand? Now, certainly it's going to be more oil in the future, I think in the next 5-10 years, but we get to that point where, and it's going to surprise people, I think because of the adoption, innovation, technology. Technology is not the friend of the oil business, not with how we use oil, and more importantly, the technology and how we can actually extract oil from other formations around the world. Remember, this, the oil shale, the renaissance in the United States is yet to be exported for the most part to other formations around the world. At the right price of oil, this can be done.
Gianni, my ears perked up when you said 325,000 Model 3 owners, because at this point, of course, they only own the right to buy one of these cars when, in fact, they are manufactured. There will be those who say that you're a little early here, that without seeing those cars on the streets, maybe we aren't seeing the advent of the widespread adoption of the electric car just yet.
Yeah, well, it's going to happen with a lot of the incumbent automotive manufacturers. They've seen what the customer wants. And don't forget, if they don't oblige the customer, someone else will do it for them. They do not want to go the way of Kodak Film Company or Blockbuster Video. I can assure you this. So when you look at, Tokyo, Detroit, in Germany, there's a siren on the programs for them to have technologically advanced vehicles, and for the most part, that's going to be an electrification of many of their models. And companies like Apple, Google. We've even seen the Dyson vacuum cleaner company now accelerate a battery and electric car program in the United Kingdom. So I think it's going to be it's going to surprise a lot of people what we're going to see. Nothing happens overnight, but in the next 4, 5, 6 years, you're going to see a lot of that. And it's all about infrastructure. Remember, the gas station can happen with an electric gas station I'm talking about. An electrician can build a charging station at a hotel in a day. So these things can be multiplied across the nation.
Gianni, you're driving from Palo Alto to Boston. We caught you in Houston. When you stop to re-energize, to recharge your Tesla, what's the #1 question people ask of you about the car and about why you're driving across the country?
Well, people are shocked when they find out that first of all, these superchargers are all over the nation. There's thousands of them. All the major arteries are already connected with them. It only takes me 30 or 40 minutes to top this car up so I can get to the next lifestyle point. Because remember, when you're talking about an electric car, the question is, can I get from lifestyle point A to lifestyle point B Absolutely. Or can I do travel across the nation? They are shocked when they find out that this car can top up in about 30 or 40 minutes, about the same amount of time as it takes for me to have my lunch or my breakfast. And also the regular availability of these chargers. They are from Palo Alto to Maine, Seattle to Florida, already installed. This is a shocking rapidity on how quickly Tesla Corporation was able to put this infrastructure in place, and it's already there, exists today.
All right, Gianni, thank you so much. That's Gianni Kovacevic, author of My Electrician Drives a Porsche. Good luck on the rest of your drive across the U.S.
Still ahead, why Donald Trump erupted in anger after Senator Ted Cruz swept delegates in Colorado over the weekend. And did Vice President Biden make a surprise endorsement for the Democratic nomination? We'll break it down next. This is Bloomberg Markets. I'm Lisa Abramowitz.
And I'm David Gura. It is time now for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. A former aide to Federal Reserve Chair Janet Yellen has broken ranks and issued a blueprint for a sweeping reform of the U.S. central bank. The plan from Dartmouth College professor Andrew Levin includes making the Fed a fully public institution and ensuring the process of picking regional Fed presidents is transparent. He'll be joining the What'd You Miss team later today. Be sure you tune in at 4 o'clock Eastern Time.
Goldman Sachs will pay $5.1 billion to settle its handling of mortgage-backed securities. The accord involves allegations that loans weren't properly vetted before being sold to investors as high-quality bonds. It's the fifth multi-billion-dollar settlement reached with U.S. banks over subprime mortgages.
The Airbus says it lost an order for 2 super jumbo jets from Indian Ocean carrier Air Austral. The carrier had planned to fit each plane with 840 seats, making it the highest capacity seating layout in the history of aviation. Air Austral ordered the double-decker A380s in 2009. And that is your Business Flash update.
Republican presidential candidate Ted Cruz swept Colorado over the weekend. The senator locked up all of the state's 34 delegates without any votes being cast by citizens in a traditional primary process.
Frontrunner Donald Trump erupted on a broadcast interview this morning following the event and echoed similar statements on Twitter. He wrote, quote, "How is it possible that the people of the great state of Colorado never got to vote in the Republican primary? Great anger, totally unfair." Mark Halpern, Bloomberg Politics Managing Editor, joins us now. Mark, we were talking about how Colorado was going to allocate its delegates last week. How unfair is it? And when Donald Trump talks about challenging this, how much of a leg does he have to stand on?
Well, it's not what you would design it in a civics class.
No.
And it certainly gets away from the notion of one person, one vote. But both parties have rules that are party rules. They're not a government election. And so Trump has a great rhetorical argument, as does Bernie Sanders if he wants to make the argument. You know, he wins the Wyoming contest by 12 percentage points and then gets the same number of delegates. These are the rules, though. And all the parties involved, and particularly on the Republican side, are wary of starting to challenge delegations, because once you start to say, well, that state didn't have a fair process, then I don't think there's a state in the whole process that really could argue one person, one vote in a strict sense. So this is going to be an ongoing discussion. The country's going to learn a lot about how we pick our presidents and how we pick our nominees. And I suspect there'll be calls for reform beyond the very self-interested call that Trump's making to say this is unfair.
Well, how loud were Trump's protests before the vote was actually cast that this was an unfair process?
Well, he's raised it previously in some other states, particularly in the caucuses, which even if they're more traditional caucuses, like, say, in Iowa, there's still a lot of things to criticize. I mean, in any caucus, you have to go at a particular time. And so you're disenfranchising people who are overseas or working or can't get a babysitter, whatever it is. So Trump's been raising some questions previously. He's raising a lot more here. Now, we should say, while it appears Cruz has all these delegates, you never know. When you get to the convention, some of these people may eventually vote a different way. So there's a lot of ambiguity in this process. And as I said, the country's going to learn a lot about delegates and how they work, particularly on the Republican side.
How inchoate is the narrative that Ted Cruz is trying to perpetuate here, that if you don't want Donald Trump, automatically you should go to him? He picked up these delegates in Wyoming, or Colorado rather, over the weekend. Is he doing that successfully? Is there truth to that narrative as it's playing out?
Look, you see it in some of his most prominent endorsers, people like Lindsey Graham, who don't like Ted Cruz at all and make no bones about it, but are supporting him because they see him as the way to stop Trump. There is a growing sense among some Republicans that kind of the jig is up, and that when you get to the convention in Cleveland, you may see some of the people who are with Ted Cruz now looking for a third candidate, whether it's John Kasich or Paul Ryan or someone else. But for now, the person in the best position to keep Donald Trump from a majority before the convention is Ted Cruz, and you see some support going to him for that reason. And he joked the other day that that was good enough for him. As long as people were doing it for that reason, he was fine with it.
You know, Vice President Biden, in an interview with Mike, spoke about the latest in the race, and he talked about how he would be very happy to see Hillary Clinton, or not Hillary Clinton, that he'd be very happy to see a woman be a president.
Some woman.
Well, some woman,
yes.
Any woman, if there would be a woman running. Is this a tacit endorsement of Hillary Clinton?
No, I think the vice president is, as often the case, saying what he thinks, which is he'd like to see a woman president.
Yes.
But, you know, would he also like to see a Vermonter be president, or someone who talks about income inequality? Sure. I don't think it's a tacit endorsement, and I think he, like President Obama, maybe even more than President Obama, wants to be studiously neutral and not get involved in this, because the worst thing that Clinton supporters could do is to try to force an end to this before the Sanders people and Senator Sanders himself is ready for the fight to end.
We were talking last week about the Sanders campaign ahead of your interview with the campaign manager. You're hearing Sanders' campaign manager now talking about Philadelphia as sort of a live convention. They plan to challenge Hillary Clinton if she is, in fact, the woman in the lead there going into Philadelphia. How seriously are they looking at that? How much are they staffing up to deal with that kind of challenge?
I mean, I don't think they're staffing up much. They're focused on just getting through the day and like most campaigns, scrambling for what's right up next in front of them. I think that it is the case that if he continues to perform well, even if he doesn't win every state and keep his winning streak alive, if he continues to accumulate delegates, there'll be some ambiguity when we go to Philadelphia about whether she does have the majority, and she'll have to sort of cobble it together on the floor. And at that point, again, I think Senator Sanders' view is, let's see what happens. Let's see if the superdelegates, for instance, continue to support her. Let's see if some delegates figure out a way to vote abstain or vote for her or him, or have delegations challenged. I mean, he's hoping to be close enough so there's some question, and then you never know.
There's a poll that you guys are going to be releasing. You can't say much about it at 5 p.m. today. A politics poll. Can you tell us anything about it?
Yeah, we're doing a thing with our partners at Purple Strategies to look at slices of the electorate to see what you can say about a particular group. Today we're looking at married women, obviously a huge part of the electorate. Mitt Romney did very well with married women, even while losing in in 2012. So we're looking at both within the Republican Party and the Democratic race, and then in the general election electorate, where are married women on the candidates and on a range of issues, and some pretty interesting stuff for a part of the electorate that, again, vitally important for both parties.
Mark Halperin, thank you so much. Bloomberg Politics Managing Editor.
You can get details of that new poll with Mark and John Heilemann, as we said, at 5 p.m. Eastern time on With All Due Respect. Let's head now to the markets desk where Julie Hyman has a check on some company movers. And Julie, you're looking at the auto sector.
I am. I want to start with Tesla. Even though the stock is not moving that much at the moment, it has come down sharply from its highs of the session. Actually, I thought I was starting with Tesla, but apparently we're not. Let's take a look at Hertz and Avis Budget. Both of those stocks are lower after Hertz came out and cut its forecast for rental car revenue because of an oversupply in vehicles pressuring its prices. It says annual revenue, if you measure it in available car days, will be unchanged to 5% lower than a year earlier. That range had been 1.5% to 2.5%. So obviously looking at a cut there, and it's pulling Avis Budget down right along with it. We are also watching some of the other auto-related stocks today. I think we're talking about Ferrari next. There we go. Ferrari and Fiat Chrysler, from which it spun off. Ferrari's CEO, Amedeo Felisa, planning to retire following this week's nomination of a new board of directors. There's some talk that we could possibly see Sergio Marchionne take over, also at least temporarily, as the CEO of Ferrari. So interesting talk and interesting movement that we're seeing in the shares today. Auto Nation was initiated over at Jefferies with the hold rating. Those shares under pressure to some extent. The analysts there putting a $50 price target on the shares, which is above where it is right now, to be fair. But nonetheless, seeing the shares pull back today. And now let's get to Tesla. Tesla shares, as I mentioned, little change right now, but coming down sharply off the highs of the day after the company said it was recalling 2,700 Model X SUVs. There's an issue with the third row seat. It's not reclining properly. The company says you can still use the cars, but you just should not use that third row. Just for context here, the stock is up 66% from its lows of the year back in February. The short interest is also relatively high at about 33% of the company's float. So it's actually interesting that given this headline, the stock is not performing worse in the wake of that. But I know you guys are going to dig more into it in a few minutes with Corey Johnson.
Absolutely. And if you pay $80,000 for a car, you want the third row seat. Probably to work. All right, Julie Hyman there at the market says thank you very much, Julie. Up next, we'll head out west for more on Tesla following that Model X recall. Stay with Bloomberg Markets. More after the break. You're watching Bloomberg Markets. I'm David Gura.
And I'm Lisa Abramowitz. The parent company of the UK's Daily Mail says it's in talk with a number of potential bidders for Yahoo. The Daily Mail says there's no certainty a deal will take place.
Yahoo said earlier this year it's exploring alternatives, including a sale. People familiar with the plan say Verizon and Google are among the bidders for Yahoo's assets. For more on what this means for Yahoo, we're joined by Bloomberg West anchor Emily Chang. Emily, how would this work? Why would the Daily Mail be interested? And I assume they couldn't go it alone. They'd have to work with a private equity firm.
Exactly, David. Well, they're now one of, let's say, 40 or so different companies who have expressed interest. We don't know yet how serious this interest is, but one way this could work is that the Daily Mail buys the media assets from Yahoo, turns it into a separate company, and that another partner, potentially a private equity firm, buys the web part of the company. Apparently, the Daily Mail has been in talks with a number of different private equity firms about structuring some sort of deal. But of course, Yahoo's market cap is like 10 times the size of the Daily Mail. So it's certainly something that they couldn't do alone. That said, we're continuing to look at Verizon as, the most serious, potentially the most serious bidder in this process. Verizon is the one player that has said, yes, definitely, we are going to submit a bid. We're going to submit a bid on April 18th, which is the deadline for all of the bids to be submitted.
Emily, turning to Tesla, the Model X, the fact that it had to be recalled for a seatbelt problem, how big of a setback is this for Tesla?
So, look, we're talking about all Model X's that have been made before March 26th. This is a voluntary recall by Tesla. They said they were testing the third row seats and that it didn't pass internal tests, that until the recall is performed, you can make full use of your Model X, although they're asking drivers that they temporarily not have anyone sit in the third row. 2,700 cars we're talking about here. It is interesting, but we're not seeing a big hit to shares on this news. I think what's more interesting is the 325,000 orders for the Model 3 and whether or not Tesla can actually meet those orders.
We shall see. Emily, thank you so much. It's Emily Chang, anchor of Bloomberg West. Catch Emily on Bloomberg West tonight at 6 p.m. Eastern, right here on Bloomberg Television. Coming up in the next hour of Bloomberg Markets, George Borey, head of credit strategy at Wells Fargo, joins on global markets and the safe haven trades. More after the break.
is 3 p.m. in New York City, 8 p.m. in London, 3 a.m. in Hong Kong. Welcome, everybody, to Bloomberg Markets. From Bloomberg World Headquarters in New York, good afternoon, everyone. I'm Carol Massar. Here's what we are watching at this hour. Global markets mixed as the dollar plunges ahead of the first quarter earnings season. Which safe havens are still a safe bet? How to play the volatility trade, where global opportunities are cropping up, and which markets to avoid. And yep, check it out, everybody. Another bid for Yahoo. The Daily Mail throwing its hat into the ring, beginning talks to join potential buyers in a deal. Which company is the top contender, and what does it all mean for CEO Marissa Mayer and her future? And we are just 1 hour away from the close of trading on this Monday. Let's kick it off this hour with a check at the markets desk, where Bloomberg's Julie Hyman has the latest. Offer highs kind of hovering near our lows.
Yeah, that's what's been happening for most of the day, really. After a strong start and then a fade, we've been sort of hovering along here. Volume running below the 20-day average also for the major averages, as we see a hanging on to of gains here. We are seeing some support coming from some areas that have been beaten up in the market. Take a look here at the IMAP. We've got financials as the best performing group. That's really been the lagging group for the year thus far. And we're going into these earnings in earnest for many of these companies. JP Morgan kicking it off on Wednesday. So there has been a decline and a lot of negative sentiment going into that. So seeing the bounce on the back of that today. Materials also performing well as the underlying commodities are higher, and tech and industrials rounding out some of those top groups here. I mentioned what's going on in commodities today. The dollar is lower, and we are seeing oil and gold trade higher today. So that's supporting those underlying stocks, and also sort of the classic inverse trade that we tend to see between the currency and commodities.
Got it, though. All right, so that's the overall kind of macro view. What about some individual names, some big movers?
Yeah, I want to talk about Under Armour. That stock is having its biggest one-day decline in about 2 months. Morgan Stanley coming out, making some comments about the company, saying wholesale clothing sales were down 2% in the first quarter. In particular, weakness at women's apparel, which was down by 7%. Sluggish footwear could also hurt sales this quarter. All of that, according to Morgan Stanley analyst Jay Soul. The company reports its earnings in full on April 21st. You see those shares are getting hit. We also are watching many of the specialty pharmaceutical and biotech companies resume their declines that we have seen recently. They've been very volatile stocks. Endo Health kind of encapsulates that. Those shares down 7% as the NASDAQ Biotech Index falls by 1%. And a divergent trade in one of the biggest movers to the upside and to the downside within energy. Chesapeake Energy pledging additional assets as collateral to maintain access to its $4 billion line of credit. There's been concerns about its debt load and its liquidity. National Oil Well Varco, on the flip side, following on the heels of many of its peers and slashing its dividend, in this case by 89%, in order to preserve cash.
Big moves, though. Yes. All right, Jules got it. Julie Hyman there at our markets desk. Now let's get a check of the headlines on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our news desk. Good afternoon, Mark.
Carol, thank you. President Obama meets with U.S. Fed Chair Janet Yellen this afternoon. They'll discuss the longer-term economic outlook. The White House says the Oval Office meeting will focus on the state of the American and global economies, as well as Wall Street reform.
I think the president has been pleased with the way that she has fulfilled what is a critically important job, both as it relates to making policy decisions that have a significant impact not just on the U.S. economy but on the global economy, but also making sure that the Fed is following through on the important regulatory responsibilities that they have.
Will also attend today's meeting. In New York, Hillary Clinton's calling out Donald Trump for not appreciating the diversity of his home state. Mrs. Clinton made her comments to Southeast Asian community officials during a campaign swing in Trump's home borough of Queens. Mrs. Clinton told the group that Mr. Trump is from your area, but, quote, he doesn't seem to respect diversity, end quote. Senator Ted Cruz is campaigning in Southern California. The state holds presidential primaries for both parties on June 7th, the last day of primary voting. Cruz was scheduled to appear at a rally in Orange County before an evening appearance in San Diego. The National Institutes of Health says the recent decision to move funds from battling Ebola to deal with the Zika virus won't be enough to get the job done. That word today from Director Anthony Fauci, who joined Ann Suchat, Principal Deputy Director of the Centers for Disease Control and Prevention at the White House.
if we reach the point where the stopgap money runs out, again, hopefully that will never happen, but we'd have to start raiding other accounts, and very important research on other diseases is going to suffer, and suffer badly.
The CDC says mosquitoes that carry the Zika virus are present in 30 states versus the 12 previously thought. Meanwhile, the NIH says it's on track to begin early human testing on a vaccine candidate by this summer. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Mark Crumpton. Carol, back over to you.
All right, Mark Crumpton, thank you very much. Let's turn now to the credit market. Corporate bond ETFs have been running strong in 2016. BlackRock's iShares investment grade bond fund up about 5% since February. It comes as we head into what's expected to be the worst quarter for corporate profits since after the 2009 financial crisis. Joining us right now for some insight into corporate credit is George Bory. He is head of credit strategy over at Wells Fargo. Nice to have you here.
Good afternoon. Thank you.
You know, it is an interesting time. You and I were talking before we got going that, you know, there's kind of been a lack of information, and I think we're trying to look at this corporate earnings cycle to give us an idea of kind of what's to come next year. When you look at corporate credit, what does it say to you about the health kind of our corporations right now?
Right. So I think corporate America tells kind of a mixed story, especially on the credit side. On the one hand, as you just point out, corporate bond prices are at pretty high levels. Investment grade are at kind of cyclical highs as bond yields have come down.
Does that make sense to you?
It does, because it's very interest rate linked.
Okay.
But the flip side of that is corporate America has been borrowing like mad. Corporate debt's at a record high. It's up 50% over the last 5 or 6 years. And as you point out, earnings have rolled over and are coming down. So leverage is going up, but it's financial engineering. So it's helping the company to a certain extent. And the investors like it because it's viewed as a safe trade. But the reality is the quality underlying it is not that great.
It's not that great. It's funny that you talk about this, because we have said how smart it was that companies were borrowing. There were such record low rates. They were, you know, kind of working down some of that debt that had higher rates. But a lot of those companies borrowed money to do things like buybacks.
Yep.
Was that a smart strategy? Will it ultimately, I don't know, a year, 2 years, 3 years from now, will we look back and say this was not smart?
I think it was a smart strategy to kick off the game a couple of years ago. But now the credit cycle is getting pretty extended. It's pretty advanced. And it's very difficult to tell. If you're the company, you're sort of the main buyer in the market of shares and of other companies, and you're buying at a relatively high price point.
Right.
So it's going to be hard to recognize meaningful gains and dramatically improve your bottom line over the medium term.
George, it's interesting because you say that we're kind of at that high point in the credit cycle, but does that also make sense? You've got credit cycles, you've got highs and lows. Is it where we kind of should be based on what we've had leading up to it?
Yes. Cycles, this cycle, what's unique about it is I think it's lasting a long time, and I think it's going to continue to last a long time. It's a direct result of policy. Central banks around the world cutting rates, bringing interest rates lower, negative yields in Europe and in Asia. Japan. The corporate sector broadly, not just here in the U.S., but around the world, have been direct beneficiaries of that. And so I think the corporates themselves are taking their cues from policymakers, and they're making, I think, the right short-term decision because financing's cheap. They can utilize that. They can help their earnings. The medium term is a bigger question, and leverage is pretty high by historical standards.
But it's interesting, right? In the past, maybe we'd like to see a company borrow money to kind of invest in their business.
Right.
And whether it means capital expenditures, new equipment, hiring more workers, we're not necessarily seeing that.
Yes. Now, I think that's a big challenge. I mean, in the U.S., there's some capital spending. Not a lot, but there's some. And if you look at the aggregates, they'll tell you that nominally capital spending is going up, but as a percentage of earnings or other things, it's still lagging. I think where the bigger challenges are in places like Europe and in Asia, where there's really not much capital spending at all. In fact, it's going the other way in some instances. And those central banks are pushing as hard as they can on rates to incentivize companies to lever up. And it's not really following through. So it's a real challenge. And I think, borrowing all this debt, it can make sense for a short period of time, but it's not the final solution.
It's not the final solution. Does it make you nervous, all this debt that is on corporate balance sheets?
It does. It does. I mean, we have a pretty cautious stance as an investment team, as a strategy team. What we're telling people is be cautious. You want to lend to companies that have pretty stable cash flows. We like the consumer sector. We like telecom. We're not, we haven't gotten too excited about commodities just yet. It's still very volatile. And we still like the banks. The banks are pretty, been pretty consistent from a credit standpoint. Earner, credit quality still pretty good, and they're, in the U.S. banks in particular, are pretty well capitalized.
It's interesting that you bring up banks, right? And they're not expected to do great this earnings cycle, but is the outlook going into this earnings cycle so negative on banks that might surprise?
I think it is. I mean, our equity analysts were talking about this morning. Expectations have come down dramatically.
Especially knowing you, kind of the credit picture of banks.
And well, I think if you look at banks from a credit perspective, what I like to say, it's good enough for credit, meaning their earnings are fine. They're going to have some volatility, and they're decelerating. Earnings are decelerating because of the global backdrop. But generally speaking, there's plenty of capital within the banking system. Earnings may not be fantastic, so it's not driving up multiples, but it's plenty to pay bondholders, and that's what we're trying to focus on.
As I mentioned, before we got started, I just said, we are just in this kind of interesting environment, looking for any help we can in trying to figure out what happens later on this year. What would you want to leave investors with in terms of the corporate credit markets?
So in corporate credit right now, I think there's two messages. Number one, first and foremost, it's late in the credit cycle. We're focused on what I like to say.
That cycle, you said, could go on longer.
It can go on for a while longer, but we're focused on return of capital. Return on capital is nice, but in late stages of the credit cycle, you want to make sure you get your money back. That's number one. And then number two, it really has to do with stay attached to your highest quality payer, which the U.S. consumer's in pretty good shape. The U.S. financials are in pretty good shape. Things like telecommunications are in pretty good shape. Broadly speaking, those sectors have nice, stable cash flows and not a huge amount of borrowing requirements.
All right, we're going to leave it on that note. Thank you so much. Appreciate it.
Thank you.
George Burry, he is head of credit strategy over at Wells Fargo. Coming up in the next 20 minutes of Bloomberg Markets, first quarter season, as we've been talking about when it comes to earnings, kicking off today, doesn't look too pretty. Can investors really play and win the volatility trade? And the stock performance of big tech names, including Apple, are running circles around the biotech sector today. We'll get up to speed at the NASDAQ. And from one big tech name to another, Yahoo's bidding war heating up as the publisher of Britain's The Daily Mail begins talks to join potential buyers. What could a deal look like, and does it spell trouble for CEO Marissa Mayer? This is Bloomberg Markets. watching Bloomberg Markets. I'm Carol Masser. A quick check on the markets for you, and we find equities bouncing around a little bit, but we're pretty much near our lows of this session. The earlier rally we saw this morning running out a little bit of steam, but still up about 0.3% on the Dow Jones Industrial Average. Check out the Nasdaq, just about a 7.5-point gain, up not quite 0.2%. And let's check out the dollar falling to a 9-month low, and you can see the movement there, some pressure there on the U.S. currency. Well, it is time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. Goldman Sachs will pay $5.1 billion to settle its handling of mortgage-backed securities. The accord involves allegations that loans were not properly vetted before being sold to investors as high-quality bonds. It is the 5th multi-billion-dollar settlement reached with U.S. banks over subprime mortgages. Tesla Motors recalling 2,700 Model X sport utility vehicles. The company says strength tests revealed issues with the third-row seats. Tesla is advising drivers not to have anyone sit in the third-row seats while the car is in use. The voluntary recall covers vehicles that were made before March 26th. Tesla is now constructing new third-row seat backs and expects to replace them all within 5 weeks. Valeant Pharmaceuticals is asking its CEO to cooperate with a Senate investigation into drug pricing. This after J. Michael Pearson failed to appear for a deposition. The Senate Special Committee on Aging said last week that it planned to start legal proceedings against Pearson, who is leaving Valeant. He is still under subpoena to appear before the committee for an April 27th hearing. And that is your Business Flash update. All right, let's turn again to earnings season. Expectations for the first quarter are at their lowest level since the aftermath of the financial crisis back in 2009. But is there a light at the end of the tunnel? That's the word from Heidi Richardson, BlackRock's head of U.S. investment strategy for iShares. She spoke earlier on Bloomberg Markets.
I think if we look at earnings, they're likely to be disappointed. Some of the estimates are we won't see earnings this low since 2009. But I do think that there could potentially be a light at the end of the tunnel, given that oil prices have actually come back up. We see energy prices less stressed. The dollar not being as weak as it had been actually, not being as strong as it had been, actually showing some weakness this year that could potentially help earnings moving forward later on in the year.
And the trend has been for the last couple of quarters, Alex, and you know this, to look at S&P 500 earnings and then to back it out the energy company results, because it makes it look a lot different. There's a huge bifurcation between what S&P results look like versus those without energy. Is that still instructional?
I think it is, actually. I think if we look at taking out energy, we've seen some impact, particularly on these big exporters, some companies that derive a lot of their earnings, like technology, from outside of the U.S., with the stress on that being with the stronger dollar. And I do think that weakness will potentially play out in a positive this year.
The other thing that sort of has been puzzling of the last couple weeks headed into earnings season has been the lack of volatility in the markets. In fact, you have specs are so long volatility that their hedge funds are just getting crushed right now. As we enter the worst for earnings season, what are your expectations for volatility?
Well, I do think you're going to see volatility pick up. If we look at the VIX, the long-term average of the VIX is 20. We're trading at around 15 today. So I do think we're likely to see that picking up. And I think that investors should be thinking about that in ways to mitigate some of this volatility as they move forward. And as we get closer to the election, I think you're likely to see even more volatility.
And of course, Alex, what we also need to talk about is Japan, the impact of the yen, the strengthening yen, not just Japanese equities, but global equities. That last week was a banner week where the yen just broke through all these different levels from 111 to 108. It's had a repercussion throughout the market, the ripple effects of which is still being felt.
Yeah, Heidi, I have a really cool chart. It's ETF Go. It's a function on the Bloomberg here, and it's a great way to illustrate just how bad it's been. So the two largest outflows we've seen has been the DXJ, that's basically your hedge play for Japan, and the EWJ. Both of those have seen a combined year-to-date outflow of almost $6 billion, and over 3 years you've seen an inflow of $16 billion, and just year-to-date a total outflow of $5.5 billion. These numbers, Heidi, are kind of bananas.
Well, you know, if you think about it, investors had been investing in Japan for the last 3 years. As they're looking at opportunities now, they're actually coming back to the U.S. and looking at opportunities here in high-quality investments in the U.S. I think with Abenomics, with the Bank of Japan, with a negative interest rate environment in Japan, I think investors are getting really cautious. And with the yen so strong, going from 120 at the beginning of the year to actually 107 at one point today, I think that they're really worried about the earnings on companies in Japan moving forward.
So So if foreign investors like BlackRock, like others, pull out of Japan and Japan loses the faith of foreigners, does that mean the end of Abenomics?
No, I think they actually have a pretty strong domestic environment. So you have seen a shift in investor attitude from only owning savings and fixed income investments in the past for local domestic investors in Japan, now embracing the idea of ownership in equities. So I do think that you have some balance with that.
So when they have money leaving Japan, you said it was going a little bit to the U.S., and we're also seeing a lot of money come out of Europe as well. Is the U.S. a valuation or fundamental play?
Well, I think it's a little bit of both. I think valuations are still somewhat rich compared to areas like Japan, where it's trading at about half the price to book to the U.S. marketplace. But I think with the sell-off that we saw earlier in the year, there are some attractive valuations. I think what investors are looking at now are those quality names, those companies that can sustainably increase their dividends and grow their dividends, that have high-quality balance sheets, lots of cash on their balance sheets. I think they're geared for the opportunities moving forward.
So if you look at dividend payers versus non-dividend payers, how would you fold that in with quality companies that you want to pursue in this environment?
I like them both. So what I like quality in the sense of some people are looking at smart beta, if you will, or factors, and those quality factors I think are very attractive. If we look at dividend payers versus dividend growers, I prefer the dividend growers. Those companies that can sustainably grow their dividends in this market environment.
And that was BlackRock's Heidi Richardson earlier on Bloomberg Markets with Alex Steele and Scarlett Fu. Still ahead on Bloomberg Markets, the Daily Mail is reportedly hopping, I should say, on the merry-go-round with other potential suitors making bids for Yahoo. They're hoping for Yahoo, I guess you could say that. Is the company's fate sealed? We'll discuss that. That's coming up next on Bloomberg Markets.
You're watching Bloomberg Markets. I'm Julie Hyman, and joining me for today's Options Insight is Jim Striger. He's derivative strategist at MKM Holdings. And Jim, for a while, has been talking about that we will see a return probably to a more volatile environment after the recent period of calm. And I know your technician over at MKM is looking at maybe a reversion to that kind of activity also.
Right, so Jonathan Krinsky is our technician. The point he made in a note this morning is that Bollinger Bands on the S&P 500 are as narrow as they've been since last August. Now, what that means is we're probably approaching a decisive point in the market. What it doesn't tell us is directionally which way that's going to be. Our thesis for a long while now, since last August specifically, has been that there's an elevated structural floor under volatility. If you zoom in just over the last several weeks, spot VIX has now been suppressed down below 20 for just about 28 days. That's getting long in the tooth. So what we think is that this squeeze in volatility, squeeze in the market via Bollinger Bands, et cetera, we can talk about other metrics, but that we are approaching a decisive move. We still think that it's volatility moving higher, stocks moving lower.
Let me just ask you real quickly, because I want to get to your trade of the day. Since you've had this position for a little while, and you're certainly not alone, a lot of people are looking for a return to volatility. Has it cost you money while you've been waiting, or have you been able to structure it such that you buy yourself a little time?
Well, most of the hedges and/or long volatility positions we've looked at have been the early ones in April expiration, May expiration. So yes, we have some time. That in our role, that's the tough part about hedging, is that it's not for free.
Right.
And yes, these sort of events can be delayed. That said, unless we see implied volatility in the U.S. and broad volatility-related metrics really move sharply lower, we're still of the view that the structural floor is in place.
All right, let's get to your trade of the week. It's on the XLF, which is the financials ETF. We're going into a very busy time for earnings for these companies, and the sentiment has not been very strong heading into that.
Right, so plenty of talk about financials. The big universal banks will report this week, Bank of America, JP, et cetera. Now, keep in mind, financials, worst performing sector year to date. The earnings are expected to be down almost 16% year over year. If you think about JP Morgan as a proxy, just over the last month, earnings estimates have been revised lower by about 17%. So the question is, have analysts really kept up with what's actually happened in these businesses? Very simply, what we like, either directionally or for a hedge, is going all the way out to June. That's 2 months out. So yes, we're looking at earnings, but we want to capture the next couple of months. And in XLF, just buying a 21 strike put outright, you're talking about 37 cents that you pay for this, has about a 30 delta to it. So nice optionality, nice convexity if either the financials or the entire market moves lower, volatility higher. We see about 10 to 15% of upside in implied volatility terms for XLF.
All right, Jim Stricker, thank you so much. It's going to be a busy week for those financials. We'll be right back.
From Bloomberg World Headquarters in Midtown Manhattan, you're watching Bloomberg Markets. I'm Carol Masser. Let's start with a check of the headlines on the Bloomberg First Word News this afternoon. Mark Crumpton has more from our news desk. Hi, Mark.
Carol, thank you. Hillary Clinton leads Bernie Sanders ahead of the New York primary, helped by a large advantage among minority voters. That's according to the latest poll from Monmouth University. Mrs. Clinton gets 48% to 46% for Senator Sanders among non-white primary voters, Hispanic white primary voters. She leads 62% to 22% among African American, Hispanics, and other voters. The New York primary is April 19th. Corrupt and crooked. That's how Republican frontrunner Donald Trump describes the selection process for presidential nominees. He told a rally in Rochester, New York Sunday that the person who wins the most votes, not the most delegates, should automatically be the party's nominee. He added, "We should have won it a long time ago." Mr. Trump faces the possibility of a brokered convention this summer in Cleveland. Naval officials say former U.S. Senator Carl Levin will have a destroyer named after him. The ship is part of the Arleigh Burke class and will be built at Bath Iron Works in Maine. It's expected to enter the fleet in 2020. Levin, a former chairman of the Armed Services Committee, served in the Senate from 1979 to 2015. In many parts of the country, it's more expensive to send a 4-year-old to daycare than an 18-year-old to college. That's according to new data from the Economic Policy Institute that appears in the Wall Street Journal. The cost of sending a 4-year-old to daycare is higher than in-state tuition in 23 states. And in 43 states, the average cost of child care exceeded 10% of median income for a family of 4. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm Mark Crumpton. Carol, back to you.
Mark Crumpton, thank you very much. Well, markets closing in just about 30 minutes from now. Abigail Doolittle is live at the NASDAQ with a look at the trade there. And I'm looking at the averages, and it looks like the NASDAQ is at its lows right now, Abigail.
Hi, Carol. You're right about that. Certainly one of today's big stories is the volatility in the NASDAQ. The index had been higher by 1% this morning, now slightly red. All of this really reflects a battle or a tug of war, if you will, between biotech and big tech. Biotech on the one hand is dragging. We have the NASDAQ Biotech Index down more than 1.5% at this point, whereas the big tech shares are trading higher, although they have pared the gains, but again, balancing out some of that healthcare weakness. Now, one of the biggest drags in the biotech sector today is Endo International. The stock is down sharply in sympathy with Insys Therapeutics. That stock is plunging on a bearish pre-announcement around one of the company's key pain drugs, saying that the miss is due to increased scrutiny around opioids. Endo, of course, does sell pain drugs, including Percocet. This is just one of the factors, though, Carol, pushing this stock down sharply over the last 12 months, more than 70%, in fact. And when we take a look at a 5-year chart, we see that the selling over the last year has been so strong that the sellers have succeeded in pushing Endo right down to long-term buying support. The question here is whether or not the buyers will step up and manage to send the stock higher, but the selling's been strong enough that it's really unclear, Carol, so we'll have to see how this one plays out.
All right, Abigail, so some tension between biotech and technology. We're seeing that play out today. What's actually helping out the market?
Well, one of the better performers in the world of technology today is Seagate Technology. Shares are sharply higher in a bullish review from Barron's over the weekend. Barron's is in fact saying that they believe that Seagate could move up by 20% over the next 12 months on an enticing dividend yield of 7.6%, cost cutting and, quote, ample earnings. So some bullish factors there. And funny enough, when we take a look at a longer term chart here, we do see that there's the possibility that the buyers will push shares of Seagate Technology up to a series of lower highs. And then, Carol, it'll be a real battle between those buyers and sellers and Seagate Technology.
All right, got it. Abigail, thank you so much. Abigail Doolittle at the NASDAQ running down some of those movers there. Now, another suitor is throwing its hat into the Yahoo ring. The publisher of the Britain's Daily Mail newspaper in talks with private equity firms about a possible bid for Yahoo. At least that's according to a person familiar with the matter. Ron Josie covers Yahoo as a senior internet analyst over at JMP Securities. He joins us now from San Francisco. Ron, nice to have you here with us. What do you make of Daily Mail kind of being one of the interested suitors, if you will, in Yahoo's assets?
Thanks, Carol. Good to be here. And it's funny, every day it seems like a new suitor might be coming in here. I mean, Daily Mail is a media company, and it's not surprising that more and more media companies are thinking about getting in to basically try to own what is Yahoo. And when you think about it, you take a step back, it's a lot easier to buy than it is to build an audience that Yahoo's been able to build in a programming world that they've been able to build for the past, call it 15, 20 plus years. So I'm not surprised to see them come in, not surprised to hear the news reports around Time or maybe some other bidders as well, even Verizon in there. So, you know, I think we'll see what happens come April 18th, I believe, when the initial round of bids are due.
Right.
I expect more to come in here.
Right, a week from today, because it got extended. 205 million unique visitors, right, would automatically or could go right to Daily Mail if they made this acquisition, thanks to Yahoo.
I mean, sure, and it actually could be bigger than that because I believe that number might just be desktop. So add mobile to that, and Yahoo would tell you their global monthly audience is closer to a billion users. So, you know, it's very hard to grow that, to build that scale, much less maintain it. And it's funny, once you get it on the web, it's awfully hard to lose. It might be hard to grow, but hard to lose. And I think that's why you're seeing these other media companies come out here.
You know, Rod, I keep wondering if there's going to be a little bit of a bidding war. I mean, everybody keeps saying it makes the most sense for Verizon and its AOL subsidiary, that it makes sense for them to do it. I'm curious how far they will go to make sure that they get the Yahoo assets. How do you think that this is ultimately going to play out? Do you have any kind of idea?
Yeah, sure. I mean, well, do I have any kind of idea? We'll see what happens for sure. But I would say, you know, Verizon certainly went out on a limb with buying AOL, going after their mobile video strategy. This is Verizon and AOL together. There's always been thought that Yahoo and AOL are both, call it Web 1.0 companies, make sense to put them together. And now within the umbrella of Verizon, you know, both companies can sort of turn themselves around, maybe get back to top line growth or at least stability, and profitability should follow that way. So Verizon makes a lot of sense because of AOL, but, you know, as we just talked about, maybe a media company like the Daily Mail or Time or others might actually make sense as well. So,
yeah, probably not a fair question if you have any idea, because if you knew and I knew, we'd be sitting on a beach somewhere. No doubt about that. But I mean, does it make? I mean, I guess my question is, you know, how far do you think Verizon should go to bid for those assets? Does it make a lot of sense for them in terms of what they want to do down the road?
I think it does. I mean, Verizon, with the acquisition of AOL and now potentially with Yahoo on the block, it just furthers down that strategy of mobile and video and just mobile and programming to begin with.
Yeah.
And so, you know, if Verizon's serious, which I would believe that they are, given their acquisition of AOL about a year ago, June or July, you know, I think it probably makes sense here for Yahoo as well. Again, Yahoo is a property that's very hard to build from scratch, and so it probably makes a lot of sense.
Where is Starboard in all of this, the activist investor, right? They've been pushing for some change. They were, you know, certainly setting a little bit of a calendar and timeline here. They're going to probably wait and just see how this process plays out. That makes the most sense.
I mean, I think so, and we know they've already nominated a whole new slate of directors, and so they're moving forward with their agenda to hopefully elicit change sooner rather than later. But frankly, I think the current board realizes that they need to do something here, just given the way financials have been trending for the company and for the past couple of years, actually. So, you know, I think Starboard is in a pretty good spot here. Of course, we'll figure out when the proxies come out and the votes come out. But frankly, I think the current board realizes something has to be done, and Starboard, if they do win all the board seats, then clearly something probably will be done as well.
Do you think Yahoo missed an opportunity at some point where there could have been a different outcome? Or was this the expected outcome, considering kind of how the company, you know, some of the moves that it made?
You know, that's a really good question, because frankly, it's always easy to go hindsight's 20/20, as they say.
Right.
So, some of the things that when CEO Meyer came in, you know, she did focus on mobile and video and what she calls her Maven's business, and she has made a slew of acquisitions, and maybe had Yahoo had maybe a more stable management presence, perhaps back in 2008, 2009, 10, 11, they would have seen the shift to mobile sooner, and perhaps we'd be in a different world than we are today. But frankly, you know, unfortunately, this company has been with multiple management over the last couple years, almost close to a decade, and it's good to see some stability with what CEO Meyer's done, but frankly, the internet's moving so fast, and when you're in a world where online advertising is growing 20+% and Yahoo's actually contracting, something drastic has to happen. It's awfully hard to do that. So sure, maybe 6-7 years ago, if they would have been able to see this and invested accordingly, then yes, but I think it's really hard to tell.
Okay, don't hate me. I'm going to put you on the spot just quickly. I mean,
Sure.
Do you blame Marissa Mayer? Just got about 20 seconds here.
You know, it's really hard. I mean, she inherited a really tough hand to begin with. I think there's a lot of things going on here.
Yeah.
Frankly, Facebook's just doing a great job in and of itself, and they're basically sucking out a lot of ad dollars, and so I wouldn't blame her now.
Yeah, and it's a competitive universe, that's for sure. Hey, Ron, we're going to run. Thank you so much. Ron Josie, Senior Internet Analyst over at JMP Securities, joining us from San Francisco. President Obama and Fed Chair Janet Yellen meeting behind closed doors, and the timing couldn't be better. There are some crucial economic reports out this week that could be the trigger for the Fed to change its actions in the coming months. We'll talk about that. That's coming up next on Bloomberg Markets. This is Bloomberg Markets. I'm Carol Massar. It is time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. Airbus says it lost an order for 2 super jumbo jets from Indian Ocean carrier Air Austral. The carrier had planned to fit each plane with 840 seats, a lot of seats, making it the highest capacity seating layout in the history of aviation. Air Austral ordered the double-decker A380s back in 2009. The CEO of Ferrari planning to retire following this week's nomination of a new board of directors. At least that's according to people familiar with the matter. The outgoing CEO will step aside, but plans to remain a board member and also keep another role at Ferrari. Fiat Chrysler CEO Sergio Marchionne, who is also chairman of Ferrari, will probably take over as CEO. And Led Zeppelin founders Jimmy Page and Robert Plant are heading to court to defend their songwriting credit for the classic Stairway to Heaven. The duo, if you recall, losing their bid to avoid a copyright trial. Now, a Los Angeles jury must decide if the rockers ripped off the opening licks of Tourist. That song was recorded by a band named Spirit that once played concerts with the rock and roll legends. The trial is set for May. You should play them side by side. It's very interesting. And that is your Business Flash update. Well, this afternoon, President Obama is holding a closed-door meeting with Fed Chair Janet Yellen. According to the White House, this is a chance for the two to trade notes. They're also likely discussing all the major economic reports coming out this week. It's a pretty busy week. What'd you miss? Later on this afternoon, coming up. So Bloomberg editor and What'd You Miss co-host Joe Weisenthal is here to break it all down. So they're meeting. They do this periodically, right?
Yeah, I don't get the impression that we should be reading too much into this. It's not that weird for the president to meet with the head of the Federal Reserve, and as you characterize it, trade notes talk about the economy. It certainly makes sense for him to want to get her perspective on things. And But yeah, it's good timing for them, as you noted, to chat because there's some interesting data coming out.
I feel like, though, the Fed is political. And what's interesting is the White House Press Secretary Josh Earnest did put out some headlines and said the president was pleased by the way Yellen has fulfilled her job. And you know that there is some back and forth in Congress about how independent the Fed should ultimately be.
Well, what's actually really interesting is just recently, and we're going to have him on the show, former Yellen advisor Andrew Levin came out with a document offering ways to reform the Fed. It kind of seems like a middle path between the way the current Fed is, between the way a lot of the Fed critics want to reform in terms of auditing the Fed and so forth. And this way, and basically proposing make it more transparent, make the process by which the regional Fed presidents are selected a bit more transparent, make the ownership structure of the Fed itself more clear. Obviously, it's sort of this hybrid public-private entity right now. So I think we're going to be talking about the politicization of the Fed for the foreseeable future.
Yeah, that makes sense, certainly, and certainly in an election year. Hey, we mentioned that it's a busy economic week, and I know we get a couple of different reports, reads on inflation, retail. What are you watching out for?
I'm really interested in that CPI, the inflation report coming out later this week on Thursday. I just think that it's pretty widely accepted that of the two mandates that the Fed has, full employment, stable prices, that the inflation one is dicier. Certainly, if you look at the members of the FOMC, they're more concerned about that. But inflation measures by multiple different ways of looking at them have been trending higher. So if that trend continues with the CPI report that we get later this week, then it's going to be harder for them to say they're falling behind.
What do you think, and you talked to a lot of different individuals about these inflation measures and whether or not they accurately really are measuring kind of inflation in this economy that has evolved and changed dramatically?
Yeah, well, that's certainly, I mean, I guess the reason to think that maybe inflation is building is because now there's quite a range of measures showing that. So at any given time, people are always able to point to their favorite, what you're getting at, their favorite measure.
Right.
Saying there's inflation. Look at rents in New York City, or look at healthcare. Or
it feels like I'm paying a lot.
Yeah, or look at gas prices when they're up. But right now, you could slice inflation in a lot of different ways. Most measures are still below the Fed's goals.
Yeah.
But they do seem to be, several of them do seem to be going in the same direction, which is up.
What about retail sales?
Yeah.
Right? We get a check on the consumer. It's kind of been keeping the economy going. We'll get a feel of whether or not that's still happening.
You have to care about retail sales. I mean, how can you not? I mean, it's interesting that the Atlanta Fed's GDP Now tracker, which is sort of tries to real-time track the economy, is down to 0.1% in the first quarter.
Yeah.
There are caveats there, reasons to not be too concerned. But obviously, it's hard to be optimistic about the U.S. economy if you're not optimistic about the U.S. consumer. So retail sales, of course, are going to be huge.
All right, and you've also got, what do we got? Industrial production, Michigan sentiment.
Yeah, all those. Another one that I like to look at, and it comes out tomorrow morning, NFIB, small business optimism.
I like that one, too.
Yeah, it doesn't get that much attention, but there are always a lot of interesting questions about things like credit availability and labor availability and the effect of regulations and taxes on business that give you a nice flavor for how businesses see the economy right now.
Right, because we constantly talk about how important the small business really is to
yeah,
the
so this is where we get to ask them
economy.
what's up.
Yeah, interesting. Anything here that you think that might change the Fed's tune here? Yeah.
Only if inflation is really hot, because right now I think the Fed, as long as inflation is not roaring ahead, I think they can always find a reason to hold off. They can cite international things, whatever they want. But if inflation really were to consistently come in at or above their target, they would probably have to get more creative about their excuses for not raising.
So we have all this economic data on the back of earnings, too, so we'll see what...
And there's also PPI earlier in the week, and some of that flows into PCE, which the Fed watches most closely. So pay attention to that, too.
All right, enough to keep us busy, that's for sure. Joe, thank you.
Should be a fun week.
Yeah, absolutely. Joe Weisenthal, co-host of What'd You Miss? Well, coming up on Bloomberg Markets, the close of trading is just about 12 minutes away. Quick check on your major averages. We've bounced around a little bit. We're definitely well off our highs of this session, just about a 1.5 higher on the Dow Jones Industrial Average. Call it flat. NASDAQ down about 1/4 percentage point. S&P down about 0.2. Folks, we're pretty much at our lows of the session. And check out the dollar. Pressure on the dollar as well, falling to a 9-month low. This is Bloomberg Markets. The close is just moments away.
This is Bloomberg Markets. I'm Carol Massar. Markets closing in just about 10 minutes from now. Let's head to Julie Hyman. Get a check on the markets. What'd you do? Call all your bearish friends?
Well, listen, when stocks opened this morning, I remember at 10 a.m. we had this conversation. There's so much bearishness about earnings. It's interesting that stocks are up. And lo and behold,
here they are.
That rally went away, right? So the three major averages are now all three lower as we head into Alcoa earnings after the close of trading today. The S&P 500 over the course of the day just managed to work lower and lower. The intraday chart, as you can see, we kind of drifted in this range in the middle of the day, and right around 3 p.m. Had more of a downward trajectory. Take a look at the Bloomberg also for the groups on the move. It's really flipped today. So now materials and financials are hanging on to gains, but everything else has turned red. Healthcare, which has been lagging throughout the session, is more deeply in the red. It's joined now by some of the more defensive groups. Consumer staples, telecoms, utilities, interestingly enough, are down the most. And then there is Alcoa, which we've been talking about today, the company coming out with its earnings after the close of trading. And despite the fact that stocks overall are now down, Alcoa is not. It's actually strengthening going into the earnings report today. Also strengthening and have been throughout the session, the banks, which are out with their earnings later in the week as well. JP Morgan on Wednesday. As you can see, Wells Fargo's turned negative. It's out on Thursday along with Bank of America. Citigroup will round out the banks on Friday. But it's relative strength relative to the rest of the market, even though, again, there's been a lot of pessimism. To be sure, the financials are the worst performing group in the S&P 500 this year. So there was perhaps a judgment earlier in the day. Well, have we seen already some of the negative earnings news priced into some of these stocks? But as we can see now, at the moment, it's not the case.
Not the case at all. Julie, thank you so much. Our Julie Hyman. And we're going to talk a little bit more about the banks and earnings overall. Let's dig into all the market action as trading wraps up. The Bloomberg Gadfly columnist Mike Regan. Mike, you know, we're talking about earnings. We're so focused on it. The expectations are so low. We kind of have that often going into earnings cycle. Anything different this time around?
It is. It's kind of this common phenomenon where the expectations just get lowered and lowered. You know, the bar gets lowered. An interesting story out today from Lou Wang at Bloomberg about...
I love this story. We've been talking about it all on Bloomberg Radio a lot.
Right. So basically she's looking at a Bank of America index that tracks whether analysts are lowering earnings estimates or raising them. And for a long time, about 8 months straight, they were going straight down, meaning they just kept lowering them further and further. It's finally shown, if you look at the screen here, you can see it's finally picked up a little bit in recent weeks. And
so the orange line is the Bank of America's numbers, right?
That's their their index tracking analysts' earnings estimates. And you can see if you look at the circles, those were when sort of the earnings recessions hit their bottom in 2008 and 2001. So the question now is, well, is that what this is signaling now? There is a little bit of a pickup. You can see it fell to about the lowest since 2009. And it's definitely something to watch. I don't know how much stock you can put into it right now just because it's just now turning. And you can see in that chart, there's been some sort of head fakes along the way where it starts going up and then sets a lower low further on. So definitely something to keep an eye on now.
And with an indicator, I mean, I care when you can kind of check how long we've had it around and how reliable it is. This is kind of a relatively new one.
Right, and it's not data going back, you know, to the 1900, you know, early 1900s. So it's not. We're basically looking at those two instances here and to seeing if it provides any indication about this time. And really, obviously, I think most people would be more comfortable if it did have a longer sort of history to look at.
Julie talked a lot about the banks, and the expectations are low going into this quarter. Big time. We know financials have been beaten up, but banks, we're going to be watching them very closely.
Absolutely. JP Morgan is the first up on Wednesday, looking like a 20% drop in earnings per share there.
Yeah.
And it gets worse from there. You know, we're looking at Bank of America, 32% drop, Morgan Stanley, 42%, Goldman Sachs.
Wow.
And it's, you know, a lot of it is the story of the markets this year. The volatility we saw in January and early February caused a lot of deals to get postponed.
M&A is way down.
M&A is down. IPOs really just stopped there for a while. And, you know, people trade less, especially fixed income areas. They tend to trade less when markets are volatile. You don't want to really go out on a limb as much as you would otherwise. So, yeah, and a lot of people look at the banks as sort of a canary in the coal mine. The KBW Bank Index actually hit a new low versus the S&P 500. BTIG strategists were talking about this. And and that's kind of a bad omen to them. So at least today, it's nice to see the banks outperform a little bit.
Mike, we need, though, the banks in terms of market momentum, don't we?
I think, that was the big trade coming into the year. Everyone assumed that those interest rates would go higher sooner or later, and it just never happened. So someday it's bound to happen. The question really for the big banks is how did their investment banks do this year? Is that slump that they've been in going to continue for the rest of the year? Or are there any sort of green shoot signs that, it's coming around and that trading and deal making and all that will sort of revitalize a little bit for the rest of the year?
Yeah, whether or not the second half will be a little bit different.
Right.
Going to run. Mike, thank you so much. Bloomberg Gadfly columnist Mike Regan talking about earnings and the markets. That'll do it for Bloomberg Markets. What'd you miss? And the market close coming your way next. Look at the major averages less than 4 minutes from the closing bell. Unchanged, a little higher on the Dow, a little bit lower on the NASDAQ and the S&P. This is Bloomberg Markets.
Moments away from the closing bell, I'm Scarlett Fu.
I'm Jill Weisenthal.
And I'm Alex Steele. U.S. stocks closing lower this afternoon, erasing earlier gains, the dollar tumbling to a 6-month low.
But the question is, what do you miss?
We do have some breaking news concerning Italian banks. Italian financial institutions have agreed to set up a fund for banks. It is going to be launched by an asset manager, Quaestio, if I'm saying that correctly. And this is a big deal for banks, you guys, for the Italian banks. They have a lot of bad performing loans on their books. It's been a source of stress for these guys consistently. And they're coming together to try and find a way to take these non-performing loans kind of off the books and support them in some capacity. So a big deal there for Italian banks. Institutions agreeing to set up a fund to save the non-performing loans.
And there's some anticipation that some kind of deal or some kind of agreement would come together, because before European markets closed, we saw banks, including Banco Popolare and Banca, gain at least 7%, leading gains in the Stoxx 600 Banks Index. So there was a little bit of buildup already there.
Yeah, and take a look here at the Bloomberg chart that I made that just shows the kind of stress that these banks have really been under. This is the credit default swaps over 5 years for the main banks in Italy. That purple line there is Banca Monte dei Paschi, and that was kind of the elephant in the room. It's Italy's third largest bank. You can see that the credit default swaps really spiked at the beginning of the year. In fact, they were up by about 100% this year. Unicredit is that orange line there, which is right here. So that's Unicredit. And that is also one of the banks that are under stress and trying to come up with a €5 billion fund to save the banks. Overall, you guys, these bad loans are 360 billion euros. And this obviously had put a lot of stress on the banks. Yes, all the credit default swaps are off their highs, but nonetheless, a huge stress in the lending kind of maybe eased after.
And of course, one of the big criticisms of the entire post-crisis period in Europe is that they have not done enough to clean up all these bad loans on the books. So perhaps we're starting to see a little bit of progress on this, but it's slow and causing a lot of anxiety in the financial system.
The other countries really got it under control many years ago, and they were late in doing so, as this is kind of a last-ditch effort in a way.
All right, well, let's see how that impacted or perhaps didn't do much to U.S. stocks as well. We begin with our market minutes. You had major indexes closing at their session lows pretty much. It was a very steady descent over the last hour of trading, and you have 8 of 10 industry groups falling in trading today.
Yeah, it felt very much like last week where we saw rallies and then it disappeared, but overall still fairly quiet.
Not quite when it comes to some of the commodity stocks. They were really the best performing stocks within the S&P. You had Chesapeake, Williams, and Newmont Mining. A part of the deal is you had a big rally in oil as well as gold. But for Chesapeake, it now has a lifeline. It extended its credit line $4 billion until September of 2017, taking a huge debt load off of Chesapeake's back and buying this company some time to get their house in order. And in part, that's why you're seeing the stock rise so much. Now, Scarlett was talking about Italian banks. Now, I did want to highlight those as well. Overall, European banks surged today within the European market, led by Italian banks, all on the hopes that there would be some kind of fund to help these non-performing loans. It will be interesting to see if this kind of rally will continue tomorrow based on the news that they did, in fact, come to an agreement.
And speaking of Europe, let's check out what's going on with German Bunds. Two-year yield on the 2-year German Bund at its lowest level since the last ECB meeting when it announced all those new stimulus measures. You know, if you look to that Bund yield as some sort of proxy for risk appetite or inflation in the Eurozone, we're still not seeing much lift at all on that front.
All right, and of course, currencies was the market to watch last week. It continues today with the dollar extending its losses. The DXY dollar index trading at its lowest in almost 6 months since October. It's fallen in 8 of the last 11 trading days, so a pretty steady decline. In terms of the currencies that the dollar has been losing ground against, its emerging markets, its commodity currencies, and of course, the Japanese yen. If you were to look at a 5-day intraday chart of the dollar versus the yen, the pace of gains has moderated over the last 2 days, but it's still strength upon strength when it comes to the yen. Mr. Yen, this is Eisuke Sakakibara, the former finance minister who was in charge of intervention at the central bank, told our Francine Lacqua that he says the yen may strengthen to 100 per dollar by year end.
And in commodities, the story today was Brent up by quite a bit. It is at a 4-month high, really closing in on that 200-day moving average. You can see there kind of right around that level. You have the Doha meeting on Sunday, which is when you're going to have OPEC and non-OPEC producers coming in to talk about a production freeze. You also have a lot of North Sea maintenance, so a lot of oil areas in the North Sea taken offline while they've kind of fixed their equipment. All of that adding to a much tighter and potentially, perhaps if Doha works out, a much tighter market for Brent, and that's reflected in the price today.
All right, those are today's market minutes. Now let's take a deep dive into the Bloomberg. You can find all of the following charts using the function at the bottom of the screen.
I'm taking a look at Chesapeake. I just mentioned that as one of the biggest movers in the S&P, and this is another way to show it. This is how all their debt is trading right now, and on average, their debt today rallied by about 10%. These are all the kind of liens, unsecured loans. They all really bottomed here in February. That's when we thought that Chesapeake was going to go into bankruptcy. Then you had a nice rally. Then it kind of petered off a little bit, but you can see they all had a big spike today on the news that they get this credit relief. They basically pledged the kitchen sink. They pledged real estate. They pledged everything.
Literally everything the company owns is now
derivative contracts.
Yeah.
Everything they had is now collateral to protect against these loans. They also got an option for about $2.5 billion for another first lien loan. So they have some wiggle room until September 2017, and the debt is really reflecting that, and they really needed this win.
So they're buying time. They paid up dearly, but they're buying time.
All right, I want to talk about this weekend's Peruvian elections. Keiko Fujimori, who is the daughter of the former leader, and she came in big. It's just the first round of the elections. There's going to be a runoff, but she had a really solid performance. She's seen as being the most pro-business candidate, and markets liked it. This is a chart looking at Peruvian assets, that white line surging about 8% today. Peruvian stocks, that's one of the biggest rallies in a long time. And then dollar sol, I flipped the chart around so you could see it. That's the currency pair, the sol having a really big day. So markets liking that Peruvian election result. There's going to be a runoff, but Fujimori is the big favorite going into the next round.
So more to come on this one.
More to come on this one, but she's seen as being sort of the pro-reform, pro-business candidate, and markets responding to the result.
Well, I'm taking a look at the fallout from the stronger yen. This basically captured our imagination last week, and it continues because not all Japanese stocks are feeling the pain. Sure, the Nikkei, which is the blue line here, had its longest losing streak last week since before Abe took office. But take a look at that orange line. That's the Mothers Index, and it's a small cap index. It's less vulnerable to FX, and it's really taken off since mid-February here. You could see that straight line up. The Nikkei, meantime, is stuck basically at a 6-week low, so it hasn't really gone anywhere. Valuation, by the way, is clearly not the driver here because the Mothers Index trades at 98 times earnings. The Nikkei trades, meantime, at about 17 times.
It's got to be the coolest name for any index.
The Mothers Index?
Yeah, don't you think?
Does someone else have a Father's Index? All right, there we go. Those are our charts. You can see all of them and more on Twitter.
Well, joining us now is Oliver Rennick, Bloomberg News stock reporter. And Scarlett, when you were showing your chart, he was nodding. He was really digging it.
All right. Oliver, great to see you again. Investors bracing for the worst quarter of earnings since the financial crisis. And Alex and I were talking about this earlier. I feel like we've been saying that for the last 3 quarters, right, worst earnings season since the financial crisis. Yet, when you look at stock prices in the U.S., they're still near their 2016 highs. It doesn't seem to bother investors.
No, it's very true. And I think there's a couple ways you can kind of look to gauge sentiment here. As you point out, the S&P is generally pretty flat if you take it back, the past 6 months, even really the past year or so. We've come down a little bit, but overall it's pretty flat. So we try and assess what people are really preparing for, whether or not earnings is going to be a big part of this. There's a few ways we can look at volatility, and I wanted to bring up a couple measurements here. Joe and I were talking about this earlier today. You've got the VIX, of course. We all know about the VIX. There's also another index called the Credit Suisse Fear Barometer that's pretty interesting, that had a really big move today. And this essentially, they're kind of 2 different ways to look at volatility. It's important to keep in mind that while they kind of both gauge sentiment, it's in very different ways. The VIX, to a large extent, sort of reflects realized volatility. It's based on options prices. But the Credit Suisse Index essentially it determines how much you're willing to pay, how much the derivatives market is willing to pay to sell a 10% out of the money call and buy a 10% out of the money put option. So essentially, right now what you're seeing is this big divergence between the likelihood that people see upside moves in the S&P of upwards of 10% to the degree to which they see a downside move happening. Now, what's interesting is we've got this big move in the index, and it's that essentially tells you that, look, this is a 3-month index. They use 3-month options, and it's showing you that maybe there's some sentiment here that's not great looking out, over the next 3 months. But however, you have to also keep in mind here that you basically have something that is affected overall by the price to buy put options, to hold put options. So if you actually take that chart out, I think we have it back to 10 years. It's just something you have to keep in mind here, that index has actually just been slowly drifting up, really since 2007, 2009 or so. That's the orange bar there, the Credit Suisse. So you might say, all right, why are people more fearful now than 2009? Well, it's because you have to realize that that index has been moving up because the price of put options has gotten more expensive as people post-crisis generally just want to hedge their portfolios more. So it's an interesting thing to look at. Does it tell us, you know, a little bit of a different story than the VIX? Sure, but the VIX is, you know, more what's happening right now.
So speaking of earnings, one of the things that obviously people are talking about is going to be a bad earnings season. We know that energy earnings are going to be dismal, and we also know that the strong dollar is probably once again going to be a factor that people talk about. What else should we be looking for with earnings?
I think you hit it. You got the dollar, and then you've also got oil, of course. These are the two big factors. We keep talking about it, but that's been the real big driver of the weakness we've seen the past 3 quarters. So the question is whether or not those two are going to turn from headwinds to tailwinds, and judging by expected, you know, earnings, you know, contraction of 9% or so, it's not looking so hot. And going back to Scarlett's point at the beginning, this is interesting as we go into this earnings season because, as we point out, the S&P is basically flat. But if you actually look at what's happening with valuations, and my colleague Lou Wong had an article about this today on the terminal chart, you can see the valuations have actually risen a little bit over the period in which the S&P has remained flat. So valuations, price, you know, divided by earnings here, price is generally flat, but guess what? Earnings, the denominator has come down a bit. So now you have an ultra, you know, sensitive market here where people are paying 18.6 times or 18.5 times earnings, and I feel like that might lend itself to, you know, the volatility we've gotten used to seeing around earnings season.
Although Bank of America had a commentary out over the weekend that was saying, look, investors are so underweight the U.S. that maybe earnings expectations are just too bad, so you kind of have to own U.S. stocks because earnings here will be better kind of than anywhere else.
Sure, that's true. I mean, hey, when the bar is set low, it's a pretty easy hurdle to make, and history has shown time again that owning stocks during earnings season is actually you know, a reward. You are rewarded for the money you put in, and you get a decent little return because most of those companies are going to beat. I don't think there's any expectation that the negative 9% will probably come down to, you know, -6, -5, whatever it may be. It's probably going to be better than estimated. But again, a lot of that will, you know, surround whether or not the dollar and oil is an issue.
And we're still range bound, so go figure. Oliver, great to have you. Thank you very much. Oliver Rennick of Bloomberg News.
All right, coming up, the bond market is becoming a believer in the Federal Reserve. We'll explain. And we're still waiting for Alcoa to report first quarter results. It has yet to do so, but when it does, it'll be kind of the unofficial kickoff to first quarter earnings reporting season. More when we come back.
I'm Mark Crumpton. Let's get to First Word News. Bernie Sanders is campaigning in upstate New York. He criticized Hillary Clinton's record on fracking. That's an oil and gas drilling method that's been banned in the state. He said Mrs. Clinton has not, quote, led the opposition against fossil fuels, but rather came on board at the end. Ted Cruz is spending his day campaigning in Southern California. The state holds presidential primaries for both parties on June 7th, the last day of primary voting. Cruz was scheduled to appear at a rally in Orange County before an evening appearance in San Diego. A U.S. naval officer is charged with spying for China and Taiwan. The suspect has been identified in multiple media reports as Lieutenant Commander Edward Lin. He was born in Taiwan and later became a naturalized U.S. citizen. That's according to a redacted Navy charge sheet. Lin is charged with 5 counts of espionage and attempted espionage. In Canada, a remote Aboriginal community has declared a state of emergency after 11 people attempted suicide over the weekend. The town of Attawapscot has a population of 2,000. There's no word yet on what led to the suicide attempts. Prime Minister Justin Trudeau wrote on Twitter that the news was heartbreaking. He made improving living conditions for Canada's Indigenous population a major theme of his campaign. Health Minister Jane Philpott said in a statement, quote, "We must focus our efforts on improving the socioeconomic conditions faced by the country's Indigenous peoples." The Duke and Duchess of Cambridge paid their respects to Indian independence leader Mohandas Gandhi today. It's their second day of their week-long royal tour of India. Britain's Prince William and his wife, the former Kate Middleton, placed a wreath and bowed their heads as they stood in front of a memorial for Gandhi in New Delhi. They then toured a museum near the spot where the independence leader was assassinated in 1948. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm Mark Crumpton. Alex, Scarlett, Joe.
Well, what'd you miss? The bond market is starting to believe the Fed that inflation can bounce back. Inflation expectations for the next 5 years rose 23% in March. That is the biggest monthly rally since 2011. It's still less than the Fed's target of 2%, but a huge improvement. Kathleen Gaffney is the co-director of Diversified Fixed Income at Eaton Vance. The group manages $3.8 billion, and she joins us now from Boston. Kathleen, does this rise in inflation expectations last?
Yes, I think it does, and I think it's important that it keeps going. The Fed did a great job anchoring expectations after QE, but the time has come to let go.
How much of this increase in inflation expectations, at least the market-based ones, simply reflect that we've seen this huge rally since late February, early March? We've seen a rally in commodities, we've seen a rally in stocks. Like, just generally, the outlook is has been lifted for everything. So how do we isolate the inflation component from just people not thinking the world is going to end?
Well, it is in response to the move in commodity prices. But remember, back in the middle of February, we were looking at oil at $26 a barrel. And really what the market was pricing in was a global recession. And so the market beginning to think that inflation or commodities are on the rise actually gives growth expectations a much better chance of moving higher. And the market's moving with them.
And of course, your fund was one of the best performing funds in the first quarter. So I ask, how do you want to be positioned going into the second quarter? Do you want to be long on TIPS, which had the best returns in the first quarter since September of 2011?
Well, in our multi-sector portfolio in bond fund, we don't own TIPS, but in our Core Plus strategy, we do, and that is a good way to take advantage of rising inflation expectations. However, one of the best ways to really take advantage of it is in securities that are levered to commodity prices. So energy and metals and mining bonds have been a great place to be in the first quarter.
Yeah, I'm really excited just on this whole inflation question because we get CPI on Thursday. Yes. There's been a lot of evidence that inflation pressure is starting to build, so I think that's going to be one of the highlights this week of the data release.
It absolutely will, but nevertheless, Kathleen, it feels like traders are really complacent, though, when it comes to the risk that inflation may pose. If you look at the premium, so how much compensation traders want to own to protect against inflation, it's negative and it's really low. I mean, is that a risk?
It is a risk. In fact, the biggest risk, I think, is for the Fed, because they do want to let interest rates move up, but they've got to do it gradually. And they did such a good job at anchoring expectations at the zero bound that no one believes that inflation could actually rise again. And that's why I think that if you look through some of Yellen's comments, you'll note that she talks about the asymmetric balance with interest rates right now, that if they were to lag, they have plenty of room to raise rates, but if they were to err on the other side, they don't have as much room. So I think they want to be very patient and let inflation expectations to continue to build, which I think will be very supportive for the market.
Well, one of the narratives in this market is that if inflation really does pick up, it might really pick up quickly and leave the Fed flat-footed. Do you believe, Kathleen, that the Fed has more control over slowing down inflation or preventing deflation?
They clearly believe they have more room to get a handle on inflation if it ramps up quickly. And that's the risk that they're willing to take right now. And yet the markets don't believe it just yet. But watch out. I think the Fed is going to continue to do just the right thing to get the markets moving.
So I have two kind of follow-up questions to that. One is, how far, like how hot do you think the Fed would be willing to let it run? And two, is there something that you think the Fed could do communication-wise to convince the market that 2% is a symmetrical target and not a ceiling?
I think there's not a lot that they can say to get the market to not believe it. I think it's going to be actions speak louder than words. But we'll have to see. That's clearly, the market has been so anchored, it needs a big push to get it going. And I think that's what's coming down the pike soon.
Kathleen, thank you for joining us. Kathleen Gaffney from Eaton Vance.
All right, we have some new developments regarding the IPO of exchange operator Bats Global. Taking a look here at the news we have, the orders for its maximum $245 million IPO are oversubscribed within the $17 to $19 price range. So that's something we'll be keeping an eye on as we monitor the headlines that come out of this company, Bats Global Markets.
And also, we're waiting news from Alcoa. Should point out that Alcoa stock is rising in after hours, just ahead of earnings. So the anticipation, we are awaiting. They usually come out around 4, so we keep awaiting those earnings. Much more coming up on the other side of this break. Well, Alcoa earnings are just crossing. We are just getting the preliminary read, but first quarter earnings coming in at 7 cents a share. It looks like that's above the range. We were looking for a loss of 1 cent to 6 cents a share, and Alcoa coming in at 7 cents a share. However, the stock is quickly erasing its post-market gain despite the beat on earnings. We are still waiting for more numbers to come through, so I'm going to keep monitoring these guys as we continue.
Oh, the separation is on track. There's another statement out from the company, of course, separating between downstream and upstream. The downstream business obviously less profitable and kind of the old business, and the upstream business is where Alcoa is really looking to make its money.
And here's where the issue is. It looks to be first quarter revenue coming in at $4.95 billion. Estimates were for $5.2 billion. So definitely a miss on the revenue side. So the revenue coming in light, but the earnings coming in better than expected. And really, it's a tale of two companies, and it desperately has been, Alcoa stock has been moving with the miners ETF, right? But
yeah,
we've been trying to they've been trying to shine their light on the downstream operations. Look, all the stuff we get to make.
I like this headline that we see. Alcoa says it's on track to meet its 2016, quote, cost curve goals. So obviously, like many other companies in the resource sector, trying to cut costs dramatically as the commodity complex shrinks or shrivels, I guess you could say, cost curve goals. I like that.
Well, and the cost curve has helped keep many companies alive, many
Yeah.
commodity companies alive when they maybe shouldn't have been because their costs came down so quickly. So interesting that they want to see even more. So again, it looks like it is a beat on the earnings side, but not on the revenue. Revenue just coming in light, coming in at $5.95 billion.
And as a result, we're seeing the shares now falling in after-hours trading. It was earlier gaining as we awaited the report of the results, but now the stock has fallen in the wake of this miss on the earnings line, but beat on the bottom line. Really, it comes down to the commentary that the company will give regarding the separation of the two businesses.
One thing it sees its Q2 engineered product solutions business up 5 to 10%. So one particularly, I guess you could say, bright spot for the company there.
It's really funny, though, when you take a look at Alcoa, because if you want to get a good read on like the global aluminum market, it is no longer in the U.S. It's really in China. I mean, they produce so much aluminum, so it's hard to get a good read on the global GDP from Alcoa, which is what we used to do.
It used to be
this
seen as this econ
It's no longer
bellwether.
that anymore.
All right, we'll continue to monitor the stock. Right now, it is lower in after-hours trading following the earnings beat, but sales miss. Coming up on What'd You Miss, a former Fed insider says it is time to revamp the central bank and why the Fed should be open to regular government audits. What would Chair Janet Yellen say to that?
And Alcoa earnings just crossing. We do have some new headlines for you. The company saying that 2016 aluminum demand growth will come in at 5%. It previously saw 6%. Again, the company beat on the top line, coming in at 7 cents a share, but not on the revenue line. The revenue coming in light at $4.95 billion. And what this winds up doing, guys, it really winds up justifying what Alcoa is doing by splitting itself into two. I mean, you had the aluminum segment of the world, which really was terrible for them. I mean, that part of the business dropped 40% as you had aluminum prices tumbling. On the flip side, Alcoa was really helped by sales of stuff to, say, car manufacturers, airplane manufacturers, and that's exactly what they're doing by spinning off these two companies.
Those refined products, and they want to obviously load the old company up with debt and give the best prospects for it for the new company. Some comments here from Alcoa in terms of its targets. Aerospace global sales targeted to be up 6 to 8% and 8 to 9% for the year. 2016 global production target for aluminum overall, Alex, that would be up 1 to 4%.
Right, so we'll keep watching here, but let's take a look quick here at the stock after hours. I'm just taking a look at it right now. Give me a second while I pull it up on my screen. The stock, though, looks to be bouncing around. No, definitely lower. It was up before the earnings after hours, but now decidedly lower on that revenue miss. But nonetheless, this is what it wants to do. It wants to spin itself off to get rid of that overhang of weak aluminum prices, but seeing aluminum in demand now about 5% versus 6% growth.
All right, time now for First Word. Mark Crumpton is in the newsroom. Hi, Mark.
Scarlett, thank you. The National Institutes of Health says the recent decision to move funds from battling Ebola to deal with the Zika virus won't be enough to get the job done. That word from Director Anthony Fauci, who joined Ann Shuchat, Principal Deputy Director of the Centers for Disease Control and Prevention, at the White House today. The CDC says mosquitoes that carry the Zika virus are present in 30 states versus the 12 previously thought. Meanwhile, NIH says it is on track to begin early human testing on a vaccine by this summer. A new poll finds Bernie Sanders has one advantage over the two frontrunners in the race for the White House. People actually like him. By 48 to 39%, more Americans have a favorable than unfavorable view of the Vermont senator. He has the best net positive rating in the field. That's according to a new Associated Press GFK poll. Mrs. Clinton's unfavorable rating is 55%. Mr. Trump's is 70%. At least 12 new Army recruits have been killed in a suicide bombing in Afghanistan. Another 38 people were wounded. Most of them are in critical condition. All were new Army recruits traveling in a bus on the outskirts of Jalalabad. Initial reports said the attacker was on a motorcycle when he rammed the bus, detonating the explosives. No group has yet claimed responsibility. In Japan, U.S. Secretary of State John Kerry visited the memorial to Hiroshima's atomic bombing 7 decades after the U.S. used the weapon for the first time in history. 140,000 Japanese were killed. Today's visit makes Secretary Kerry the most senior American official to travel to Hiroshima. He's in Japan with other foreign ministers of the Group of 7 industrialized nations. Global news 24 hours a day, powered by our 2,400 journalists in more than 150 news bureaus around the world. I'm Mark Crumpton. Alex, Scarlett, Joe, back to you.
Thank you so much, Mark. Some more breaking news on Alcoa, which reported an earnings beat but a sales miss for the first quarter. The aluminum maker is cutting jobs. It plans to cut 600 jobs in the first quarter. There's a separate headline that indicates it plans further cut of 400 jobs. It's not clear how that's folded in with the 600 job cuts for the first quarter, but nevertheless, Alcoa reducing expenses further by cutting jobs.
Well, what'd you miss? Perhaps a shakeup at the Fed? A former aide to Fed Chair Janet Yellen is breaking ranks with the central bank. You have Dartmouth College professor and economist Andrew Levin is targeting 4 areas of change. Make the Fed a fully public institution, more transparency in process of picking regional Fed presidents, set a 7-year term limit for regional presidents and board governors, making entire Fed subject to external review. And here to delve into his proposals is Andrew Levin, joining us now from Hanover, New Hampshire.
Professor Levin, thank you very much for joining us. So you've unveiled this 4-point plan for Federal Reserve reform. Why the need? Why does the Fed need to have some of its structure changed?
Well, keep in mind the Federal Reserve is about 100 years old. So it's not surprising that once every 100 years there may be a time to make some reforms. The proposal that I've presented here, and this was developed with a significant amount of consultation with the Fed Up coalition, was very helpful to me. This proposal is intended to be sensible and pragmatic and nonpartisan. It's trying to be careful not to throw the baby out with the bathwater. To focus on some specific reforms that are in fact urgently needed. I'd say number one is that the Federal Reserve is the only central bank in the world that is not a fully public agency. The Federal Reserve, the regional Federal Reserve banks are literally owned, the shares are owned by commercial banks in each district. The boards of directors of each regional Fed, 6 out of 9, are chosen by the member commercial banks in that district.
How does that manifest itself in bad policy, that fact? What is the practical effect of this unique ownership structure of the Federal Reserve?
Well, I would say the number one problem is that the Federal Reserve needs to have full public confidence in order to be sufficiently independent from political pressures. And the extent to which the Federal Reserve is opaque, its organizational structure is hard for the public to understand, fundamentally undermines the public confidence, and over time hurts the Fed's ability to be effective.
Well, let's talk a little bit about what Janet Yellen, the current Fed chair, has said in the past about the possibility of perhaps changing the structure of the Fed.
Congress can, of course, reconsider the appropriate structure. I simply mean to say I do not regard the structure as broken in the sense that it is failing to put in place good monetary policies, failing to collect the information we need about what's happening in the economy to craft good policies.
So, Professor Levin, earlier you described your proposals as being pragmatic and nonpartisan, which to me sounds like probably DOA in Washington these days. But is the basic gist that you think the Fed should open up a little to avoid, say, a much more radical form of loss of transparency? In other words, meet the critics kind of halfway, opening up to prevent some of the Fed's harshest critics from really politicizing what the Fed does?
Well, I guess another way to explain this is that my proposal is about good governance, transparency, and accountability. Those traditionally are not partisan issues, and on many other aspects of government over the years, both parties have come together to institute reforms that promote good governance, accountability, and transparency. For example, the GAO is a really key agency of the government. It's a highly independent agency. The head of the GAO is the Comptroller General, has a 15-year term. He is appointed by a very careful process that involves key members of Congress from both parties. And the GAO has an impeccable reputation for its analysis. In fact, part of my proposal would be to bring the GAO's expertise to bear in looking at all aspects of the Federal Reserve, including its management, its operations, its policies and procedures.
Well, but Professor, how do you think the Fed would have been different in the financial crisis if it had implemented these proposals that you are outlining now?
Okay, that's a great question. And there's give a long answer, but let me try to be brief. One problem at the Federal Reserve, which has been widely acknowledged since then, is that the Banking Supervision and Regulation Department at the Federal Reserve was not adequate, not well managed, not achieving its goals and objectives. And I frankly would say that was well understood within the Fed at the time. But I would hope that if the GAO was doing regular annual reviews, it could identify that sort of operational management issue in time to do something about it. Maybe, I don't know if that would have prevented the financial crisis, but it certainly might have mitigated the risk.
Professor, do you believe that there's any central bank out there that does it right? I mean, do any serve as a model for best practices?
Okay, that's a great question. I think that there are, I wouldn't say any central bank is perfect. All these things are things that evolve over time. But one thing that's worth emphasizing is that most other major central banks have regular external reviews. For example, the Bank of England has something like it's called the Court of Directors that are outsiders that have the ability to examine all aspects of the Bank of England's operations and procedures and policies. That Court of Directors has an independent evaluation office that works directly and reports to the head of that Court of Directors. It's, of course, Britain is a different country with a different government structure. I think that for the United States, the GAO could play in some ways the kind of role that the Court of Directors ideally plays at the Bank of England. Likewise, the Bank of Norway, the Bank of Sweden have regular annual reviews by committees of their parliaments. Again, that works well for them. The United States might follow a different example, but a different approach. But the key point here is that having regular external reviews is part of good management for almost any organization, and it should become a practice at the Fed.
Shaking it up, Professor. Thank you very much, Professor Andrew Levin of Dartmouth College.
Coming up, Yahoo is getting another potential suitor. This time, it is the publisher of the UK's Daily Mail newspaper. We've got more next. I'm Scarlett Food. It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. More details now on breaking news from Alcoa's earnings. The aluminum producer that is poised to split itself into two companies reported first quarter earnings that beat analyst estimates. That is after sales of manufactured items limited the effect of declining aluminum prices, but Alcoa missed on the top line on revenue. Shares are now falling in late U.S. trading. The earnings release was delayed just a bit as Business Wire, which is the press release company owned by Warren Buffett's Berkshire Hathaway, said that dissemination of content was temporarily halted.
Nigeria is considering selling Chinese panda bonds. West Africa's largest economy is looking to cut borrowing costs while plugging a record budget deficit. The government wants to raise as much as $1 billion in international capital markets to finance a deficit as forecast to be over $11 billion this year. Nigeria's economy is reeling from the crash in the price of oil. South Korea is the only country to have issued a panda bond.
And Tesla Motors is recalling 2,700 Model X sport utility vehicles. The company says strength tests revealed issues with the third row seats. Tesla is advising drivers not to have anyone sit in the third row seats while the car is in use. The voluntary recall covers vehicles that were made before March 26th. Tesla is now constructing new third row seat backs and expects to replace them all within 5 weeks. And that is your Bloomberg Business Flash.
What'd you miss? A new bidder in the battle for Yahoo. Britain's Daily Mail newspaper is interested in buying the once great internet pioneer with a private equity partner. Well, joining us to discuss what's at stake legally for the looming sale is Duane Morris's partner, Nanette Heidi. Nanette, you practice corporate law for VC and tech firms, right? So what is the difficulty of a foreign company coming in to buy Yahoo?
Well, the difficulty is getting through the regulatory regime that's going to encompass the purchase by Daily Mail. But I think, some of the bigger challenges will be, what's the combined companies look like at the end of the day? You can usually get through the regulatory hurdles, and I think in this case it might be easier for someone like the Daily Mail to get through the regulatory hurdles than our own Verizon. But in this respect, you really have to ask yourself, does it make sense for the two combined companies to be together?
Does it?
I don't think so, truthfully. I see 4 holes in the Daily Mail Yahoo deal. First is financing, the second is monetization, the third is products, and the fourth is content, right? So first, the financing. The Daily Mail cannot afford to do this deal on its own. It has to look for a private equity partner or partners who are going to put the money behind it in order to make the acquisition. The second problem is the monetization. Both the Daily Mail and Yahoo have suffered from failing to be able to have digital advertising revenue. The Daily Mail has no solution to that problem. Yahoo has no solution to the problem. So when you put the two together, what resources are you going to have to put behind it in order to make that happen?
So it's not an issue where, it's not an instance where scale would make things better?
No, definitely not, because the only scale, as I see it, between the two companies is with content. The Daily Mail has their fabulous celebrity pages, which everybody loves to log on and look at the latest Kardashian photo on the Daily Mail, and then you go to Yahoo, and they have some good content, some good branded content. And when you look at Yahoo, it's really an internet-branded company more so than a technology company. It has finance, it has sports, it has some media. It's been making some content acquisitions. And then finally, the last problem for the two combined entities is products. What are the products that these two combined entities are going to offer to the marketplace?
So it sounds like the problem is everything, basically. Are there any deals that you can think of that would be analogous to this one, like a structure that you say, okay, this provides a similar model, something we've seen in the past in terms of how it's structured?
When you say how it's structured, you mean the acquisition by the Daily Mail of Yahoo?
Well, specifically, you have this company partnering with a PE, theoretically partnering with a PE backer to fund. Like, what are some good examples of this, where one company has acquired another with a PE backing? Like, how does it look?
Well, let's look at Yahoo. Yahoo is PE backed. How has that gone for it? It has starboard value behind it, and they're screaming because Marissa Mayer hasn't brought forth the value that's necessary for the shareholders. So when you have these PE-backed transactions, there's a definite expectation on the part of the PE funds to see a return over a certain period of time. And they're not your typical investors, like on the stock market, where they want to put in more money again and again and again to help the company grow. So you're going to see potentially a fair amount of money to make the acquisition, but then once that happens, where are the additional funds going to come from to grow the combined entities?
So what do you think is the best matchup then?
I would think Verizon would be the best play for Yahoo if they can pull it off. But the interesting thing to me about the Daily Mail coming out of the woodwork now is, what if Verizon doesn't go for the deal? And what if SoftBank says we're not interested in either? Then there could be a really inexpensive acquisition of Yahoo. So maybe they're just being smart and putting their hat in the ring now to give themselves the opportunity to be the last man standing, so to speak, at the end of the day, if the other two acquirers don't come through.
So a little bit of a strategic positioning here. All right.
Absolutely.
Nanette Heidi, thank you so much. Partner at Duane Morris.
Thank you.
Well, coming up, Chesapeake gets another lifeline. Literally, the shale gas producer puts up most of its assets to maintain its access to a $4 billion line of credit. More on the story in just a few minutes. What'd you miss? Chesapeake Energy lives to fight another day and pledges the shirt off its back to do it. The debt-laden natural gas company preserved a $4 billion credit line until 2017 by committing almost all of its gas fields, real estate, and derivative contracts as collateral. Other companies, though, haven't been so lucky. Energy producers like Whiting Petroleum and Energy 21 are looking at steep loan cuts as banks lower the amount they're willing to lend companies based on the oil price. The idea, less capital, more defaults, more production shut in, and the oil market can rebalance. Well, joining us now is Scott Roberts, the co-head of yield investment and senior portfolio manager at Invesco. Scott, if Chesapeake taught me anything, it's that banks will do whatever it takes to save energy companies. How many defaults do you expect in this cycle?
Well, I think there's a happy medium. I mean, companies are going to do whatever they can to try and stay away from defaulting on their debt. And today's example is very timely in that Chesapeake had to pledge additional assets. The problem is there are too many companies with too much debt that do not have the same options that Chesapeake did. So in our view, our work shows defaults headed a lot higher this year in metals and mining and in oil and gas.
What's your default rate estimate?
For the full year, we think 5 to 6% for the market. Now, what's interesting about that is we think about 3.5% will come from oil and gas and metals and mining. That's where we think the danger is.
Mm-hmm. Yeah, and we're looking at actually the high yield spread versus the high yield default rate. We've seen the spread really widen out, but the default rate hasn't matched it. What's going to be the trigger this time?
So we think the opportunity is this. Overall spreads are pricing in a default rate just above 7%. We think that's too high. We think the danger areas, as I mentioned a moment ago, oil and gas and metals and mining, we think that's the epicenter of the problem, but we do think there are companies to own in that space that can get through this period of low prices.
What kind of recovery rate do you expect? Because we have seen that really trail off recently, which could be a big potential risk.
Yeah, I think this cycle is going to open a lot of eyes. There are some clearly very poor companies out there with over-levered capital structures and just bad assets. And I think those companies are going to have very low recovery rates, certainly below the longer-term average of 40 cents on a dollar.
Wow. The other issue has been we've seen a lot of investors willing to still give money to companies in the high yield space. You saw that with the spreads widening out, really, and they tightened in the past few weeks ever since the Fed went more dovish. On the flip side, you have high yield issuance has truly fallen off a cliff. Who's right, the bulls or the bears, when it comes to high yield?
You know, it's funny. We're in it's really a tale of two markets. The markets are open to companies that have a good business, low to moderate balance sheet leverage, and really a good story where earnings are growing, maybe even low single digits and strong profitability ratios. But then there are the companies where there is really very little hope. And so the market's open for the companies that have that clean balance sheet and clean story, and certainly not open for those that are challenged. So
you don't find any concern that the high yield issuance has been so low and that could infect at some point the investment grade market?
Well, I guess a couple points. Number one, we're late in the business cycle, and we're certainly late in the credit cycle. And so that by itself means that we have to take extra caution as high-yield lenders. New issuance is down really for a variety of reasons, one of which is that we don't have this huge capital expenditure boom that we had in years prior. We also don't have a lot of LBO activity in the market, and that's a good thing.
And then just to round it out here, what sectors are you looking to take advantage of that provide opportunity?
Yeah, absolutely. So one of the themes that we've identified is we want to take advantage of sectors that are really facing the strong U.S. consumer. Overall, U.S. growth continues to do well. We continue to add jobs on a monthly basis. Auto sales are still up. So places that we're looking at would be, wireless, home building, certainly consumer products, food and beverage, sectors that are facing a strong U.S. consumer.
Definitely not energy. All right, Scott, thanks very much. Good to see you, Scott Roberts of Invesco.
Coming up, what you need to know to gear for tomorrow's trading day. That's next. I'm Scarlett Fu. What'd you miss? Don't miss this. German CPI tomorrow at 2 a.m. Eastern time. It's for the month of March, and it's expected to increase 0.8% month over month, increase 0.3% month over month, year over year, excuse me. And according to Jamie Murray of Bloomberg Intelligence, it has a lot to do with German travel packages. It increases volatility.
And I'll be looking at U.S. NFIB Small Business Optimism Survey. It comes out tomorrow at 6 a.m. Always a fascinating survey that asks small businesses lots of questions about business conditions. Definitely one to watch.
And I'm checking out CSX earnings tomorrow after the bell. Obviously, rails have been really hit by the switch from coal to natural gas. So they're losing on the coal business, but also it's been much more expensive to transport oil by rail also. So are they losing on the oil business as well, especially as production gets shut in? What happens? Do they lose that business?
Lots of good stuff to watch tomorrow.
Well, that's all for What You Missed. Thanks so much for watching.
We'll see you back here tomorrow.
Have a great evening.
I'm Campbell Brown.
I'm Mark Halpern. With all due respect to Bernie Sanders, tonight we've got your best friend on the show.
Not you, little fella. We're talking about Jane.
Hello, hello. Let's get started by talking about another unpredictable creature who tweets. Donald J. Trump. FYI, later on the show, we're going to have the latest Bloomberg Politics Purple Strategies online poll that has some good data on how Donald Trump is doing amongst married women voters. But first, let's understand why Trump is deriding the complex rules by which Republicans and Democrats select their delegates. After a chaotic and Ted Cruz-friendly Colorado Republican State Convention on Saturday, Trump is trying to reverse the news cycle narrative that Cruz crusaders are outmaneuvering Trump's campaign in the hunt for delegates, even in places where Trump won the popular vote primary. Trump's rhetorical campaign follows the Democratic caucuses in Wyoming this weekend, where Bernie Sanders crushed Hillary Clinton in the popular vote, but walked away with the same number of delegates as his rival. Here's Donald Trump making the case for himself and for Sanders at a rally in Rochester, New York last night.
I watch Bernie. He wins. He wins. He keeps winning, winning. And then I see he's got no chance. They always say he has no chance. Why doesn't he have a chance? Because the system is corrupt. And it's worse on the Republican side. Because I'm up millions of votes on Cruz. Millions. I don't mean like I'm up by 2 votes. I'm up millions and millions of votes. We're supposed to be a democracy. We're supposed to be, you vote and the vote means something. What they're doing, and whether it's me or whether it's Bernie Sanders, when I look at it and I see all these victories that I have, all these victories that he's got, and then you look at the establishment, and I want to tell you, it's a corrupt deal going on in this country.
Today, the chairman of the Republican National Committee, Mr. Reince Priebus, defended his party's nomination process in an interview with the conservative radio host Mike Gallagher, saying, them's the rules, and that state conventions are totally fair. Campbell, is Donald Trump correct that the delegate selection process is unfair to him, to Bernie Sanders, and to the voters?
No, the rules are, in fact, the rules. And the fact that Trump's own children are not able to vote in the primary in New York demonstrates how unprepared they are, how little they know about the rules. You can't even get your own family registered in time. It's absurd. This is the way the process is designed to work. And the rules may be crazy in certain states, but they're not arbitrary. They were decided on by the party, or in many cases by the voters in those states. And that's part of a campaign process, being organized, learning the rules, and playing by the rules.
I agree in the end that the rules are the rules. But I think Trump is right. People would be shocked if they knew that there's not a great correlation between the voters voting, the popular vote, and who gets the delegates.
Well, look, Al Gore. Al Gore didn't won the popular vote. He didn't get the presidency. He accepted it because that was the rule.
And people are plenty critical of the Electoral College, although in that case, there's also the question of votes in Florida and whether more people went to the polls intending to vote for Al Gore. I think Trump is onto something here as a rhetorical point. I agree with you. They should understand the rules. They shouldn't whine about them. But I think he's onto something as a talking point to say Bernie Sanders and I are the outsiders. The insiders are fixing the game. He's exaggerating, to be sure, but I think he's striking quite a chord, and he's helping rally his supporters to come out in the polls in the states yet to vote.
But I also think the rules are designed this way in order to build consensus around the nominee.
Yeah, they're not totally irrational.
They're not, about getting the popular vote or increasing the popular vote. They're about getting the establishment people and the engaged party activists on board with one person. That's why they're written the way they are. That's the intent.
But the news organizations should stop reporting the popular vote as if that's who won, because it ain't.
It's true. Fair point. Okay. Since Passover is approaching, here's a question for avid TV watchers. Why was this Sunday different from all other Sundays? And the wise son answers, Donald Trump did not do a single Sunday show, not even C-SPAN's Newsmakers. For the first time all year that Trump, this is a Sunday where Trump hasn't phoned in or taped a Sunday interview. But wait, there's more. Trump gathered the press following him on Saturday so they could watch him tour the 9/11 Memorial Museum here in New York City. But afterwards, he did not take a single question. Mark, Trump did do a phoner into Fox News this morning. That's a Trump classic, of course. But is doing less media, as he appears to be doing, good for his chances?
I never want to argue in favor of a candidate talking to the press less, because I like that as a reporter. But I think Trump is smart to play with the supply and demand a little bit here. When he does lots, reporters tend to play off of each other. It tends to create a dynamic that hasn't been good for him. I think if he picks his spots more, does more local press, which he's doing below the radar, he does local TV sometimes without telling the national press, I think he's in a better position for himself to control the message more than he has been.
Well, I think just because he's doing less media doesn't mean he's getting less media. I mean, the cable channels are still taking his press conferences, his rallies live. Right. He has basically taken over the media in this campaign. They have given up editorial control. He said, I'm not going to do a sit-down interview. I'll only do phoners. They take phoners.
Howard Stern is no longer the king of all media.
I'm not going to engage with you. Take my rallies if you want me. They take his rallies. So it has been a testament to Trump's talent and finesse and brilliance, how he has manipulated the media into totally giving up editorial control. So maybe he's doing less, but it doesn't mean he's getting less, and it's a great move for him.
He does one Sunday show interview, everybody covers it. He doesn't need to do more.
Totally. Well, lately, Ted Cruz has exhibited a good quality that might make for a good middle manager at Staples, and that is delegating. Cruz is scoring delegates in Colorado, North Dakota, and other states, but the road ahead for Cruz is clogged by states with voters who don't like him so much. The next 6 primary contests are in the Northeast and the Mid-Atlantic states, including New York, where a new NBC News Wall Street Journal Marist poll shows Cruz in 3rd place with 18% of the vote. Cruz doesn't return to a more friendly stretch of the primary calendar until Indiana, and that's on May 3rd. Mark, Cruz is in California campaigning today. Is he going to pay a price if he finishes 3rd in these northeastern states?
I think he will in 2 ways. One is he needs to keep accumulating delegates. He needs to get close enough to Trump so he's got within hailing distance to win on a 3rd ballot. And 2, I think his argument to get Kasich out of the race really diminishes if he cannot finish 2nd. we got a long stretch now. We got like a month where there's only northeastern states. Much better off for him if he can somehow surge here and prove that he can compete in these northeastern states, which means to some extent showing he can compete for more moderate voters, which he needs to do to have that general election argument.
But does any of this even matter if for Cruz at this stage, it's just about getting to an open convention? You're not going to win outright, right? So he's just trying to keep Trump from getting to that magic number.
I think the danger for Cruz is that, yes, that's the main goal. But the danger for him is, if that's the only way he can win when he gets the convention, he's got to have enough delegates and enough of a general election argument that he becomes the alternative. If Trump fails on the first ballot, Cruz needs to win on the second or third. If Cruz hasn't won by the second, he probably can't win because too many of the delegates are still bound to vote on a second ballot for Trump. If he can't win on that third ballot, I don't know that he can win on the fourth ballot. He might be able to, but he's got to accumulate as much as he can. Oh, a lot of delegates at stake in these northeastern contests. And again, I'll say, he can't go around arguing that John Kasich is irrelevant if he can't beat John Kasich in all these contests, even though it's in the Northeast.
So I would argue now that Cruz, I think the Trump voters are the Trump voters, and they're not, Trump is not necessarily convincing new people. Those people aren't switching to Cruz. So for Cruz, it's about how do you expand turnout in some of these states? I mean, you look at a state like Maryland where maybe he does come in third, but you've got a governor there who hates Trump, who has said he's not going to endorse, but maybe you can get him engaged more to ramp up turnout a little bit, to at least get that percentage. Or Trump's percentage down.
The other thing is Cruz has switched to more of an economic and jobs argument, which should have some appeal in the Northeast. This is a proving ground, a testing ground for it when he goes to California and other Western states. All right. It is America's favorite guessing game right now, if you're interested in politics at least. Who will be the Republican presidential nominee, and how will that person be selected? Over the past 2 days, I've gone on Twitter and done one of those unscientific Twitter polls with 4 options. 1, Trump will win the nomination before the convention. 2, Trump will win the nomination at the convention. 3, Ted Cruz will win the nomination. Or 4, some other outcome. More than 2,000 people have voted in my little unscientific poll on Twitter over the past 48 hours, and the tallies match exactly what my reporting finds. There is a total disparity of what people think is going to happen, with Trump winning at the convention being the scenario that is far and away the least predicted, and the other 3 are basically tied. Again, this is not scientific, Campbell, but now I'm going to ask you to vote. Of those 4 choices, which do you think at this point is the most likely outcome?
Well, first of all, I think it's more scientific than a lot of the polling that we've
Big
seen out
sample.
there. I was going to say, your
Couple
sample's
thousand
bigger than a lot of them.
And if they follow me on Twitter, they're people of refined taste.
There you go.
Discernment.
I think for Trump, he has to win on the first ballot. And don't you think that most of the Trump people that you're talking to have conceded as much? That
Even
is.
if they won't go all the way and say it's the only way to win, they certainly concede that things become a lot dicier. But I'm asking you the most likely, not to break down the possibilities.
I think that is not the most likely at this stage. I do think it goes to the second or third. I think it becomes about Cruz and his organizing.
So you think Cruz at the convention is the most likely?
Right now, I think it is.
I still think Trump before the convention is the most likely. I'm not saying he's going to get it, but I think if he does really well in the Northeast, wins in Indiana, I think he can get there before the convention. Maybe not on the day of the California and New Jersey primaries, but there's this 6-week interval between the last day of the primaries and the convention. And I think if Trump is within 100, he can kind of shimmy his way to a majority before Cleveland.
And just very quick, the people who are trying to stop him will even concede. We're talking about 20, 30 delegate difference here. This isn't about 100 delegates.
I think in 6 weeks, Trump can find them.
So coming up, what is the difference between classified and classified? President Obama explains it all and talks about Hillary Clinton's home email server. And then later, we sit down with Bernie Sanders' wife, Jane, here in the studio. We'll be right back. Welcome back, everybody. We're going to be talking to Jane Sanders, the wife of Bernie Sanders, in just a few moments. But first, Sanders' campaign has shifted its message about Hillary Clinton a little bit. Last week, Sanders was calling her unqualified to be president because her super PAC takes money from Wall Street and because of her past positions on the Iraq war and on trade. This week, he's using a different word. See if you can spot it.
She may have the experience to be president of the United States. No one can argue that. But in terms of a judgment, something is clearly lacking. Maybe her judgment is not quite as high as it should be. My point is, it is a question of judgment. It is a question of judgment.
I have my doubts about what kind of president she would make.
So, Mark, does Sanders step over the line in the realm of personal attacks when he questions Mrs. Clinton's judgment?
I don't think so. And the Clintons bristled at this today, but this is the essence of like what you want in a president, good judgment. He's pointed at some cases where he says she's exercised bad judgment and said he doesn't think that's someone who should be president. I think this, compared to saying she's disqualified, is right within bounds and the kind of argument I think all candidates should make.
And some of the Clinton people are still smarting over this, the not qualified comments because they think it could be used over and over in a general election. But to be complaining about this, I mean, welcome to politics. It's ridiculous. And is it any harsher than what Barack Obama said about Hillary Clinton in the last campaign and her 2008 over her Iraq vote? Any harsher than she was on him? I mean, this is a campaign. Grow up.
I also think, Bernie Sanders would have been better off making this argument right out of the gate after Wisconsin to take advantage of the momentum he had there, because his strongest case against her is on things like trade and Wall Street and the Iraq war, where he's able to say, this was my judgment, this was her judgment, what kind of judgment do you want in a president? For a lot of Democrats in New York State, all over this state, in the city and upstate and western parts of the state, those are big comparisons. She's got her own comparisons to make in her favor, but these are pretty strong ones in his favor.
And it feels like, a little bit of helicopter parenting by Democratic elites, sort of finger wagging. And the primaries are supposed to be boot camp and make you a better candidate.
Right. All right. Bernie Sanders made several stops around Gotham City this weekend, culminating with a big rally in front of the roller coaster at Coney Island yesterday. Polls, though, still show him lagging behind Clinton here in the Empire State by double digits. He's trailing Hillary Clinton in a new NBC News Wall Street Journal Marist poll that we mentioned earlier by 55 to 41%. That's out today. And his campaign is now saying that New York is not a must-win state for him, even though coming into this, Campbell, a lot of pundits said it was. So is the Sanders campaign right that he doesn't need to win New York to still be the nominee, or are they just a spinning?
No, I think they're spinning. I think he has to win New York if he wants the nomination. But look, you probably know the math here as well as anyone. It feels like he needs a big wild card moment of some kind to change the dynamic, win New York or not win New York. Now what is sort of unexpected or we don't know is Hillary Clinton going to make another mistake or a big gaffe or something along the way? With the Clintons, you don't know. So even if he doesn't win New York, I don't see him getting out. I think it's going to be a long, hard slog for her no matter what.
If he wins New York by a lot, wins it by a little, loses it by a lot, loses it by a little, it doesn't much affect his chances of being the nominee. He still has to find a little bit of luck and a lot more delegates, but there are too many delegates in New York for him to just blithely say he doesn't need to win here. I think his chances of being the nominee don't go down appreciably if he doesn't win here, but he needs to win here. He needs to win here, and he needs to pick up delegates and get less than the delegates he gained. He needs the momentum of beating her. He needs the gee whiz factor of saying, I beat her in New York.
All right, now for those darn emails. President Obama sat down with Chris Wallace on Fox News Sunday, where he was asked about that pesky FBI investigation into Hillary Clinton's home server. First, Obama said he couldn't speak about the pending investigation and swore not to interfere. Then the president spoke about the pending investigation anyway and basically once again exonerated his party's likeliest presidential nominee. Take a listen.
Hillary Clinton was an outstanding Secretary of State. She would never intentionally put America in any kind of jeopardy. There's classified and then there's classified. There's stuff that is really top secret, and there's stuff that you might not want on the transom or going out over the wire, but is basically stuff that you could get in open source.
But last October, you were prepared to say she hadn't jeopardized, and the question is, can you still say that?
I continue to believe that she has not jeopardized America's national security. Now, what I've also said is that, and she's acknowledged that there's a carelessness in terms of managing emails that she has owned and she recognizes.
Today, during the White House press briefing, Press Secretary Josh Ernst defended his boss and how the president knows what he knows about the investigation.
The president has neither sought nor received a confidential briefing or confidential information about the ongoing investigation. The president's knowledge about this situation is based entirely on public reporting. This is one of the benefits of the approach that Secretary Clinton and her team have taken to dealing with this matter.
So, Mark, why is the president talking again about this email investigation?
Beats me. If he's only learning about this from public information or not. To say, I'm going to want this investigation to be independent, but to then try to exonerate her as the person who's the president, who's overseeing the Justice Department but keeping arm's length, I don't get it. I mean, I don't know if he's trying to help her or what, but it makes no sense to me for him to be talking about this investigation. Just say, it's an ongoing investigation, I got nothing to do with it, I have confidence in the Justice Department. Even testify to her honesty, but to talk about the specifics of the case, I do not get it.
I totally agree with you. I was stunned when I heard him say it. Any president would be expected to say it's an ongoing investigation. I can't comment on it. And then to say you don't want to influence what's going on, or you're not going to influence what's going on at the Justice Department or FBI, but be very overt about your views on this. I mean, there's no better way to influence the FBI or Justice Department.
If he's got no inside information, then he can't possibly exonerate her. He doesn't know what they found. They may have found more than what's been in the papers.
But it's a testament to how much she's struggling right now that he would feel the need to step in and protect his legacy, or they would want him to.
I guess so. All right. When we come back, Jane Sanders will tell us about her husband's latest plans, how he's going to win the Democratic nomination, after this word from our sponsors. Our guest tonight is Jane Sanders, the wife of Bernie Sanders, who dreams of being the next First Lady. So now we're going to talk more about the concrete jungle where dreams are made of That's New York, and the April 19th primary week from tomorrow.
She rolled her eyes when you said dreams of being first lady.
Sort of. How's New York going so far? This is like a rough and tough state with media in this city. How's it going?
It's our state, you know, both of us born and bred here, and it's been amazing. It's been really good to be home. Going down to Coney Island yesterday, having so many people out there. South Bronx, 18,500 people out in the audience and at a rally. I mean, it's been fantastic.
So your husband has said, and the campaign has said, you may be from Vermont, but you're not intimidated by this. Is this intimidating at all to run here and with all the spotlight and glare?
Well, I mean, we're not intimidated by New York. We just love it. Now that you mention it, probably we should be about the election, but because Secretary Clinton represented New York, but it feels like home to me.
Just do this.
Do you think your husband has made this complaint that the process has been unfair, given the way the delegate, rules are designed in many cases? Do you agree with that? Do you think it's been unfair?
I don't think that he thought so much it was unfair. It does seem kind of silly that 30% of the votes that you need are they're super delegates. They're people that are not the voters. So that doesn't seem quite right. I know that that's what the Republicans wish they had at this point in time. We just don't agree with the way that one person, one vote.
But what would you say to your grandkids? You say, hey, Grandpa won with Wyoming by 12 points and they got the same number of delegates. How does that work, Grandma? What would you say?
Yeah, every state has its own rules. I don't like how they figure it out, but it doesn't quite make a lot of sense to me. But those are the rules that were set before we entered, and those are the rules we're playing by.
So unlike Donald Trump, you wouldn't say these rules are corrupt or fixed or
No,
stacked
everybody
against
does
you.
their own way. It's kind of interesting to see that it's all different state by state. I'd like to see more of a federal election that you win a state and every state has the same requirements for registration. For instance, independents can't vote in New York, and we're building the Democratic Party, and yet we're keeping them out if last October they didn't decide to run to register as Democrats. That doesn't seem smart.
You mentioned the superdelegates and the role that they play, obviously. If you're trying to sway them and bring them over, what's your message to them? What do you say to them?
Well, I think the key is to look at who's the best candidate for the general election. I mean, Bernie wins, whoever the Democratic Party nominee is going to win the base of the party, the Democrats. But who wins the independents and who sways some of the Republicans? I think Bernie has done that throughout his whole career. He wins independents everywhere. In our own state of Vermont, in his last senatorial election, he got 25% of the Republicans because they say, we know you, we trust you, we might not agree with everything you're saying, but we know we can count on you to do what you say. So I think he's a much better candidate, even predicting it that way. But if you look at all the polls, he's doing much better against all the Republicans than Secretary Clinton is.
Okay, Jane Sanders, stand by. We're going to come back more with Jane Sanders of Vermont and New York right after this.
We are back with one of Bernie Sanders' closest advisors, and occasionally she's also his primary news source, like when she broke the news to him at a New York rally on Saturday that he had won the Wyoming caucuses. Jane Sanders, thank you for being here again.
Good to be here.
We were talking about that a little bit, Wyoming, and the differences on the delegate rules, but you know, and also about the superdelegates. But talk a little bit to us about your role in all of this. You know, how you define it as someone who's campaigning for him. You know, you're very involved, I know, in his ad making. How do you see your role in the campaign and what you're spending time on?
Well, there's about a half dozen of us that really work with Bernie on anything that is necessary, a strategic role. But it started with just buying the furniture for the office. You know, I mean, whatever needed to be done was done. And now I travel with him a lot, which has been really nice. And really just talking about strategy, scheduling, and television advertising.
So apparently there's one role that you have uniquely. You're the family CPA. You do the taxes.
Well, TurboTax.
Yeah, doing TurboTax. So here's a candidate who says, trust me, when I release my taxes, there'll be no problem.
Yeah.
But he won't say when he'll release them, how much he'll release, or what's in them.
And that's my fault. He said to me, we have to answer this. And I said, well, I was expecting that when they were due, we would be releasing them.
Right.
And
but how about the prior years?
Well, sure. I'll have to go back and find them, but yes.
Are they're not on file anywhere?
Yeah, they're on file, but we haven't been home for a month.
Right.
So 2 weeks ago, people asked, the Clinton campaign or somebody asked, and we said, oh, of course we'll release them, and we will.
And in full, not a summary, not individual pages,
Sure.
the whole thing.
Sure, no problem.
If Donald Trump or some other candidate said, trust me, I'll release them eventually, trust me, would you say, oh, that's fine, there's nothing in them, no problem? Or would you say, we really need to see those?
I would say, well, when they're due, I would expect them to come out. Now, I have to tell you, every other year, I ask for an extension, but this year, we knew I couldn't do that.
Right. So you'll release how many years?
I don't know. How many do you want, Mark?
No, I think the Clintons have released 8. Or even more, but at least 8.
They've been in office all these years. They've done it.
Senator Sanders has been in the House and Senate for
right, and we every election we've released them. So maybe that
you'll release your whole returns, not just a summary.
We did in when he ran for election. Yeah.
Okay.
So.
All right, we look forward to that.
I'll release this year's as soon as they're due, and can I have time to go home?
Sure.
And
we'll
then
go with you
release
if you want,
future ones. Good, come home.
But you're saying there's like nothing in them.
There's nothing. We're really pretty boring.
You have your Senate income. What else do you guys have?
Social Security. I sold my mom's condo at the beginning of the year. You know, that was
that's
about
a pretty simple return.
Yeah, pretty simple return.
But let me ask you about, this was more on the Republican side, a kerfuffle, or however you want to describe it, about the Melania Trump and Heidi Cruz that came out with the attention that was being paid to wives and spouses. Do you think that is fair? You know, are spouses fair game in this?
I don't think families are fair game. I think that spouses put themselves out there in a supportive role. We're not playing partisan politics. To criticize people as they did, as Trump did for Heidi Cruz, for her looks, that's ridiculous. First off, she's a very nice-looking woman. I mean, but beyond that, it's just not nice to take personal attacks against anybody, let alone the spouses. I think it's fine to ask questions of them. If we are here, you can ask questions.
You leaving for Italy with your husband on Thursday night?
Yeah.
So the New York primary is in 8 days. You're going to spend 2 days, which is like a quarter of the time that's left.
Actually, 1.5.
Okay.
We're leaving
Thursday right after the debate.
Right after the debate, and we're leaving
Saturday.
first thing Saturday morning.
Right.
And we'll have events on Saturday.
Right.
So, I mean, we're in New York. We've been in New York all this time, and we're going to continue through the election. We've been in New York a lot more than Secretary Clinton has with her fundraising trips everywhere, many different.
Does anyone in the campaign think it's a bad use of time, or everyone thinks it's the right thing to do?
Everyone thinks it's the right thing to do.
And what will you do there?
Well, Bernie will be speaking at the invitation of the Vatican to talk about a moral economy. I mean, that's quite an invitation that you really do not want to reject. I mean, this is quite an honor, and it's something, you know, that he feels very strongly. The Pope Francis is an excellent leader,
Right.
and that the issues he talks about are very similar to the ones that Bernie talks
But you
about.
don't want my Rome restaurant recommendations because you're coming right back, is what you're saying.
Right, right.
All right, next time you go, I'll give them to you. Bill Clinton the other day made some remarks about when he was being heckled by some Black Lives Matter folks, and the press jumped on one thing he said. The next day he said, he's tempted to apologize. That's a paraphrase. Do you think in our politics, for yourself, for your husband, for the other candidates and spouses, that the press and political opponents seize on one word or one phrase too often rather than looking at the totality of what's said? Is that a fair criticism of the political process, do you think?
I would definitely say that.
Yeah.
It's crazy that the story is the gaffe. The story is the mistake.
Right.
It's not what the intent was.
Right.
And I think Bill Clinton probably regrets how he handled that questioner, but he was speaking about other things as well.
I would say that you're right, but I'd also say that your campaign occasionally has done that to your political opponent. Is that a fair thing to say, that you sometimes will take one thing Secretary Clinton says and kind of exacerbate or exaggerate its impact? Is that?
I don't know that that's true, Mark. I think that is politics today. I know I always try to say no. What did she mean? What was the context? And when it fits with the overall image that Hillary Clinton is trying to project or doesn't fit with it, and then we might put it out there. But it's always in a larger
Overall
context.
Okay.
Yeah.
We'll come up with
Not
some
a mistake.
examples. Okay.
I mean, you might not want to go here. It may be premature, but there are a lot of people in the pundit world who say if he doesn't win in New York, it's over for Sanders, and he shouldn't go on at that point. How do you think about this over the long term? Is this a must-win?
No, and that's the question that's been asked in Iowa, in New Hampshire, in Ohio, and everywhere. So everybody keeps on thinking that, well, he can't make it. You have to remember, when he started, nobody took him seriously. The media didn't cover him all throughout 2015, and now they're starting to, and he's won 8 out of the 9 last contests. So I think that he needs to do well in New York, and I think that if he does well in New York, which is his opponent's state that she represented, that says a lot. I think what we're looking at is momentum, and we're looking at how people are feeling about him. The more, we're in an enviable position, I think. The more people hear about Bernie, the more they know about him, the more they like him. That's a really good place to be. It's unfortunate they didn't know more about him before, and we didn't decide to run until May, or April, I guess.
Super delegates from, say, Massachusetts, the state Secretary Clinton won narrowly, but she won. Should they be free to support Bernie Sanders and not go along with their the voters in their state?
My feeling is with 30% of the votes that you need, that they're super delegates, most of them have been elected to represent their state. So I would think that those representing their state would look to, when you have a very large margin, 2/3 or more, that I would think that would be a given. I know that's how I'd comport myself if I were elected.
If the state's close, superdelegates should be free to vote either way, but it's a wide margin.
Superdelegates have to use their judgment. That's why they're superdelegates. That was the thinking, that they would be able to use their judgment and make some decisions.
Even use their judgment. If they say, I think Bernie Sanders is better than Hillary Clinton, even though my state voted overwhelmingly for Hillary Clinton, you think they should support Bernie Sanders and not go with the overwhelming majority of their voters?
No, I think they should go with the majority of their voters.
They should.
I think so.
And so not use their judgment, but follow their
But I mean, I think, as I said, the majority, a big majority, but a small majority. I mean, we've tied many
So if it's close, they should use their judgment. But if it's a big margin, they should vote with the people.
I think they'll do whatever they want to do, and I'm not here to direct them. But it seems fairer, put it that way. It seems fairer to have people, when Bernie wins 70, 80% of the vote in elections, that these superdelegates follow there.
We didn't get to talk about Hamilton, but we're going to have you back and maybe sing.
It was great. No, I won't
Everybody should go. Better than cats. Jane Sanders says, thank you very much. You're nice to come back. Always great to see you. Good luck.
Thanks.
On the trail. Up next. That's you. Go.
Up next, Republican mega strategist Al Cardenas joins us right after this.
Joining us now, the former chairman of the Florida Republican Party, a former senior advisor to Jeb Bush's presidential campaign, and a man we like to talk to. Al Cardenas. He's currently not supporting any of the three remaining candidates. Mr. Chairman, welcome.
Hey, great to be with you as always.
Appraise the state of your presidential nomination fight right now. Where does it stand?
Well, I think, I'll be very surprised if Donald Trump doesn't fall short by 100, maybe 80 delegates. I think maybe Ted Cruz's shot is at getting within 200. And, they're going to be between 200 and 300 delegates, either because they're released by the folks that that they're there to represent, or because they're RNC members or senators. And they could well tilt this thing before you walk into the convention hall. And so it's up to either of those candidates to do that. But as you know, everybody's getting every individual delegate's information, who they like to fish with, they like golf. Sometimes if they like golf, they'll be called by a professional who might be supporting a particular candidate. This thing gets very personal, very specific, and obviously these delegates are worth their weight in gold.
So is that really happening right now with the delegates? I mean, well, that sort of deal-making and lobbying at that sort of granular level?
I believe that you'll see that as inevitable. Right now, I think 2/3 of the campaigns are concentrating on adding delegates, and then there's another whole crew that's there to do the intel work, find out who each delegate is, how strongly they feel about the process, where they're there really because of the candidate or because their friends selected them. And as you know, I would say 30–40% of those who are going to be delegates are not there because they were enthusiastic followers of the person they're there to represent, but they're there because they're donors or elected officials or party regulars. And they'll do what they need to do. They'll respect the rules. But at the end of the day, they'll vote with their heart once those responsibilities are over. And everybody needs to know where they're going to be.
You've been to a lot of conventions. I know it's hard to generalize, but we debate this all the time. Do you think the delegates care about electability, that they're going to look at the possible nominees and say, I want this person because I think this person can win a general election?
If you are really for a particular candidate, it doesn't matter what the polls say. You're not there intellectually. Your heart's taking you there. And your heart says that candidate's going to win, and we'll figure out the path to get there. If you're a party regular, you're an elected official, you're going to be much more pragmatic. And yes, you're going to be looking at the polls, and they should be worried. The polls right now are not being very kind to our two likely nominees.
So how do you weight that? How many people are there because of their heart, and how many people are there because they're elected officials or donors, or they're thinking like perhaps you?
Boy, you could throw all traditional outlooks out the window in this election cycle, because the two candidates who are likely to, one of the two who are likely to be our nominees, are not ones who have a long track record of support. I mean, this is not a Reagan, a Bush, even a Bob Dole, people who've had a history in the party. And you know what's what? It's going to be, the first time since Eisenhower, other than George Bush Jr., where you're going to elect someone who hasn't been a nominee or hasn't been in the process once before. Remember, just about every Republican nominee has run once before, and we've had a chance to know about them. This time, people are even getting to know some of these candidates. I mean, there are people wondering, geez, Donald Trump really like this or like that? And as Ted Cruz has a soft spot in his heart, people are literally trying to figure these candidates are as we speak.
So why hasn't the establishment crowd rallied around Kasich more? If that's the case, if they're not falling in love, they're still trying to figure out Cruz, figure out Trump, why hasn't Kasich been the alternative?
Listen, love is a two-way street. Donald Trump, a couple of weeks ago, you would think by now where he is, he'd be kind of rounding up the troops, putting out some strong messages about wanting to unite the party. What does he say? He says, well, I don't want Jeb Bush's support. I don't want support from Mitt Romney. He is purposely shunning the potential support of others to bring the party together. He's doing that, I think, because he believes at this point in time, the only recourse he has is to take control of the party, take control of the nomination, and win on his own terms. I don't believe Donald Trump thinks that he can put the toothpaste back in the tube after the campaign he's run.
Al, thank you very much. Al Cardenas, former party chairman and a very smart man about pretty much everything. Up next, our new Bloomberg Politics online poll about what married women think regarding Donald Trump, Hillary Clinton, and the other candidates. And if you're watching us in Washington, D.C., you can now listen to us on the radio in the nation's capital at Bloomberg 99.1 FM on the radio. We'll be right back. Hot off the electronic press, our new Bloomberg Politics online poll conducted by our friends at Purple Strategies. We call it a Purple Slice Survey because it looks at one important demographic for the general election, that is married women. Mitt Romney won that important group of voters in 2012, according to the exit polls. This year, our online poll shows Republican married women favor Donald Trump over Ted Cruz, 37 to 32%. But in a general election, Trump, Cruz, and Hillary Clinton all have extremely high unfavorable numbers with that group. Joining us now from our Washington bureau to explain the poll further is the Purple Strategy CEO and Democratic thought influencer. That's what the teleprompter says, Steve McMahon. Steve, first just talk about the methodology of how you all are doing these slice polls for us.
Well, they're online surveys, as you mentioned, and we're taking a quick look. Al Hunt had the brilliant idea, and it really was a very smart idea, to take a look at some of the slices of the electorate that are going to make a big difference in this election, ultimately determine the outcome, and take a look at how they're performing this year as opposed to 4 years ago. And you've already given the headline. Among married women who Mitt Romney carried by 7 points 4 years ago, Hillary Clinton has a 12-point lead over Donald Trump, which represents a 19-point swing in the direction of Democrats. So go down the ballot if you're if you're looking at Senate races or House races, and see what happens when you put a 19-point swing in there. It's not going to be a pretty picture for Republicans if this slice holds the way it is.
So was that the most surprising thing for you? The sort of good news here, I guess, for Hillary Clinton?
It's very good news. Mark mentioned a moment ago, Campbell, that none of these candidates is particularly popular on their own, standing alone. But in comparison to another candidate, you know, Hillary Clinton looks a lot more popular and a lot more appealing to a group that went for Mitt Romney by 7 points 4 years ago. You know, if I were in the Clinton campaign tonight looking at these numbers, I'd be very, very happy.
Is there anything in this, if you're in the Trump campaign tonight, you'd look at the numbers and say that's some good news?
Well, you know, Donald Trump leads in areas where you would expect him to lead. They're not necessarily partisan areas. So, for instance, you know, if you ask who's going to do a better job changing Washington, Donald Trump has a lead among these married women over Hillary Clinton there. If you ask who represents, who's going to bring new ideas to Washington, Donald Trump has a lead. And if you ask who's going to be better at creating jobs in America, Donald Trump's business experience really helps him there. On the other side, though, if you ask who's ready day one to be president, Hillary Clinton wins that. If you ask who has the temperament to be president, which I think is something that you're going to see debated, discussed, and voters focusing on a little bit more, Hillary Clinton has a lead there. And then if you ask, who's going to be a better role model for our children, obviously Donald Trump doesn't win that, Hillary Clinton does. And, all those things are, I think, good news for the Clinton camp.
Steve, I know you asked about Trump's position on abortion. Tell us what people said about that.
It's interesting. First of all, people don't really understand what his position is as much as they think his position is not the same as theirs. 50% of women reported, these married women that were the purple slice that we looked at, 50% reported that his position on abortion is not the same as theirs. Another 19%, I think, correctly identified his position, and 31% were unsure. So, notwithstanding all the attention that Donald Trump's abortion answer, or his 4 or 5 abortion answers last week got, most voters haven't really received the information. They kind of think he's not standing where they are, which is a little bit of a problem for him. They're not really sure where he stands, with the exception of a minority of women who actually do understand where he is.
And Steve,
I still don't.
We'll do more of these slice polls, but it's safe to say, isn't it, that you can slice and dice the electorate in a number of ways to figure out a way Republicans might be able to win a majority of the popular vote. But if they don't do better than this survey suggests with married women, there's no way for them to do it, right?
That's exactly right, Mark. You can look at these demographics and you can compare how the candidates today are doing relative to how the exit polls showed the candidates to have done 4 years ago. And in this case, it's a 19-point swing in Democrats' direction, which, again, if I were Mitch McConnell or Paul Ryan, I'd be really pretty concerned, because regardless of how Donald Trump does, whether he wins or doesn't win, if these numbers hold among married women, you've got a down ballot, really a down ballot debacle if you're a Republican.
Okay, Steve McMahon in Washington, thanks very much. Again, full write-up of this slice poll from Purple Strategies on our website right now, BloombergPolitics.com. Great data to look at for this extraordinarily important group of voters. And Campbell and I will be right back. Our thanks to Jane Sanders, Al Cardenas, and Steve McMahon for joining us, as well as to our friends the birds, for joining us. Check out,
The birds,
as we said before, our poll with Purple Strategies. The latest sliced poll is on there now. Great look at married women. Coming up on Bloomberg Television, Emily Chang speaks to the founder of Vayner Media Founder. Campbell, New York primary 1 week away. Anybody been campaigning in your neighborhood?
No.
No?
No.
They're not going for the all-important downtown vote.
No, let's see. The Donald Trump vote in Tribeca, the Ted Cruz vote in Tribeca.
Relatively limited, very limited. All right, John will be back tomorrow. We thank Campbell for joining us. We thank these pesky birds for joining us. We'll see you tomorrow. Thanks for watching. Sayonara.
Sayonara.
I'm Mark Crumpton. You're watching Bloomberg West. Let's begin with a check of your first word news. In Japan, U.S. Secretary of State John Kerry visited the memorial to Hiroshima's atomic bombing 7 decades after the U.S. used the weapon for the first time in history. 140,000 Japanese were killed. The trip makes Secretary Kerry the most senior American official to travel to Hiroshima. A U.S. naval officer is charged with spying for China and Taiwan. The suspect's been identified in multiple media reports as Lieutenant Commander Edward Lin. He was born in Taiwan and later became a naturalized U.S. citizen. The Duke and Duchess of Cambridge paid their respects to Indian independence leader Mohandas Gandhi today. It's the second day of their week-long royal tour of India. The couple placed a wreath in front of a memorial for Gandhi in New Delhi. A new poll says half the U.S. approves of President Obama's job performance, the first time that's happened since 2013. The Associated Press GFK survey finds the president seeing an uptick across a number of issues, including the economy. The White House says the president's Supreme Court nominee, Merrick Garland, will meet with 6 Republican senators this week. That announcement comes after 15 former American Bar Association presidents joined the push to urge Republicans to consider the judge. Global news 24 hours a day, powered by our 2,400 journalists and bureaus around the world. I'm Mark Crumpton.
Chang, this is Bloomberg West. Coming up, Facebook getting ready for its annual F8 conference. We'll take a look at what the company plans to do about its sharing problem. Plus, another suitor throwing its hat into the ring for Yahoo. What would the UK's Daily Mail do with Yahoo's media assets? We'll break it down. And Tesla recalls 2,700 Model X vehicles over issues with third-row seats. We'll bring you all the details. And the Bloomberg Business Week Design Conference is underway in San Francisco, where top designers and business leaders are gathering to talk about design innovation. My colleague and our editor-at-large, Corey Johnson, is standing by with some big interviews ahead. Corey?
Yeah, really interesting conference here, Emily, in that Bloomberg Business Week really focused not just on their design issue, which is out in the stands right now, but also the notion of design and how it can lead to the creation of new kinds of business. So everything, certainly things, traditional things like design, like art direction and architecture and even city planning are being discussed, but also some very interesting ideas about how front-end user experience can actually lead companies in a completely different direction, even architect companies in a totally different way, Emily.
All right, Corey Johnson, our editor-at-large, will check in with you a bit later in the show with your special guest. Thank you. Turning now to Facebook. The company's developers conference, called F8, kicks off on Tuesday. In previous years, this is where CEO Mark Zuckerberg has unveiled things like profile page overhauls and music discovery features. This year, he's expected to focus on Messenger, weaving in AI software to help monetize the more than 900 million users who use the platform. We'll also hear more about Facebook's live video ambitions, but underneath all of it is a question sparking debate among tech pundits and investors. Are Facebook posts getting less personal? Joining us now to discuss news reporter Sarah Fryer here with me in the studio, who covers Facebook for us. So Sarah, let's start with F8. What are we expecting? Live video, Messenger, what are you expecting to hear?
We're expecting to hear everything from what they're planning to do with these messaging products, WhatsApp included, and also virtual reality, artificial intelligence. This is really the conference where Facebook lays it all out. Of course, with Messenger, a lot of the current buzz is around bots and what they might do to help businesses use artificial intelligence to communicate with their customers.
Now, talk to me about these bots. So this is what allows you to, from within Messenger, order an Uber, book a restaurant. I just wonder, how many people are actually doing that within Messenger?
It's very, very small so far, but what a lot of analysts are saying and advertising agencies is once Facebook opens up the ability to build bots more widely, Facebook making a move in the bots area is going to make it a lot more mainstream.
And aren't bots the same things that got Microsoft in trouble recently?
Absolutely.
It was like a sexist, racist bot.
They had a bot called Tay, which over time started spewing racist, sexist commentary on Twitter, and that is absolutely what advertisers are afraid of. If they build something to have human-like capabilities, who knows if it'll go off the rails and if their brand will take the hit for it.
David, anything in particular that you're expecting out of this year's F8? What should we be watching for?
Well, one thing I think people tend to underestimate the scope of the way Zuckerberg thinks about the whole thing. And things like internet.org are still very close to the front of his attention. It wouldn't at all surprise me if he talks about that, which isn't something that people in the U.S. care that much about. But certainly it's been such a challenge for Facebook with the pushback in India and Egypt and elsewhere. I think that bots are a really interesting question, and I agree, Emily, with this point that it may not be that people are going to actually want to buy things or interact with companies in Messenger. Twitter's been a great place for people to have an interaction with brands, and I think that's where Facebook is looking to kind of copy and improve. And the one thing I would say is David Marcus, who runs Messenger, came out of Zong, which was in a mobile commerce, mobile transactions business, went to PayPal. He has a lot of history in transactions, so it wouldn't surprise me if he could pay in Messenger in the future.
All right, now I want to talk about this sharing issue, this question of whether people are actually posting less personal content on Facebook. According to the information, sharing of personal stories has declined 21% year over year as of mid-2015. Early Facebook employee Chamath Palihapitiya took that as a good thing, recently tweeting, "As intimate sharing declines and generic content sharing rises on Facebook, then Facebook becomes a well-curated Twitter, but at mega scale. Very bad for Twitter." Coastal Ventures partner Keith Raboy responded, "But what if total sharing is in decline, which it has been for over a year?" Raboy went on to say that, based on this information, why wouldn't you short not just Twitter, but also Facebook? Facebook has been in a panic about this, he says. Sarah, what do we know about this?
Well, we know, Facebook hasn't come out and said they're worried about this, of course, but we have sources that tell us that they are. And we have seen very openly how Facebook is trying to combat this. I don't know if you saw yesterday in your news feed, everyone was posting about National Sibling Day. That was not an accident. Facebook had a prompt at the top of news feed encouraging people to post about their siblings. They are using things like that, like also the posts that bring up memories from the past. Those are all attempts by Facebook to combat this personal sharing decline and get people to start talking about things that are more intimate.
David, the news outlet, The Information, is also saying that this problem is particularly acute with younger people, that it's affecting Instagram. We might infer that perhaps this traffic is going to Snapchat instead. How big a problem do you think this is?
Well, I don't really know. Of course, Facebook claimed that total sharing is not in decline, despite what Keith Rabois said. I know from watching my 23-year-old daughter, which, always your focus group of one, that Instagram has completely taken over for all the things she used to use Facebook for. But she is sharing like crazy, but she's sharing images. And it's not the same kind of thing, and they don't generally end up on Facebook. So I think it probably could be a problem. I don't sense that it's a problem now, but I agree what Sarah was saying before. It's almost funny the way that Facebook's executives, the ones that I'm friends with on Facebook, are all sharing about their mother's death and their, sibling day and things. I never even heard of sibling day, nor do I care about it. But I did see some funny pictures of Mark Zuckerberg when he was a little kid, which I'm sure emerged because they are trying to set an example that, hey, this is how you're supposed to use Facebook.
Raises some interesting questions about what Facebook is becoming. All right, David Kirkpatrick, CEO of Techonomy. Of course, themes we're going to explore as we cover F8 this week. Sarah Fryer, who covers Facebook for us, thanks so much. We're going to be doing some big interviews from the F8 Developers Conference this week, including with Facebook's VP of Messaging, David Marcus, tomorrow, and Facebook CTO, Mike Schrepfer, on Wednesday. Well, Tesla is recalling 2,700 Model X sport utility vehicles. The company says strength tests revealed issues with the third row seats. Tesla is advising drivers not to have anyone sit in the third row while the car is in use. It's a voluntary recall that covers vehicles that were made before March 26th. Tesla is now constructing new third row seat backs and expects to replace them all within 5 weeks. This, of course, follows Tesla's unveiling of the mass market Model 3 sedan that received over 325,000 pre-orders. Coming up, a new suitor emerging in the standoff over Yahoo. We'll break down who it is and what the company has to gain. Plus, social media mastermind Gary Vaynerchuk gives us his take on why the whole media world should be afraid of Snapchat. another suitor is throwing its hat into the Yahoo ring. The publisher of the UK's Daily Mail newspaper is in talks with private equity firms about a possible bid for Yahoo. The company would most likely target the news and media operations as part of a larger group of partners. Meantime, Yahoo has a busy week ahead. The company has extended the bidding deadline from April 11th to the 18th. The day before Yahoo announces earnings from the first quarter of 2016. Here with me now to discuss the week ahead, our Bloomberg Tech reporter Brian Womack, who covers Yahoo, and still with us, our Bloomberg contributing editor David Kirkpatrick. So, Brian, I'll start with you. The Daily Mail? Do they want to turn Yahoo into the biggest tabloid in the world?
Yeah, I think a lot of people woke up to this news going, well, okay, interesting. I mean, I guess on some level it makes sense. You could say Yahoo does sort of have a wide appeal. The Daily Mail is sort of a wide appeal. I mean, there's some maybe parallels there, but at the end of the day, I think that this does look like a newspaper that's, you know, trying to find a digital way, and Yahoo is sitting right there and saying, hey, check us out.
It's interesting, David, the list of suitors gets longer and longer for this company that supposedly nobody wanted. What do you make, David, of the Daily Mail now throwing its hat into the ring?
Well, I actually know the Daily Mail somewhat well. Martin Morgan, its CEO, came to the last Techonomy conference. He's super smart. He's focusing very much on the United States. And I do think there is a kind of a match in terms of the market that they think that they're reaching, which is a very sort of mass market, pop culture oriented, not super highest common denominator type of audience. They're looking for ordinary people who want sort of moderately entertaining type news, and it's not that far from the people that Yahoo has. I do think that, to me, the most compelling combination is with Verizon, and the whole thing with Tim Armstrong as a leader of a combined AOL Yahoo, which looks very likely, at least from their point of view, to be something they want to have happen, is a very compelling combination. But I think the Daily Mail, which is a company that has a much bigger web presence than most Americans realize, could be a good potential buyer.
And the Daily Mail has, Brian, apparently been beefing up its presence among a U.S. audience, focusing on younger users, focusing on celebrities. But the list in general, I mean, it's like 40 different companies looking at Yahoo now. I mean,
There's a lot, yeah, and you hear a lot of numbers, and there's a lot of new names coming out every day. You can imagine I hear about, I'm at my desk, look, another name just came out. So there's definitely a lot of names, but this, I guess you could stand back and say, look, this actually is good for Yahoo. If there are people looking at this company, just like a couple of weeks ago, we were talking about, is this company viable, well, et cetera, how's this process going to go? Well, at least we're seeing a lot of interest. I mean, you can at least take that away from this.
David?
Yeah, I couldn't agree more. I think it's kind of impressive that so many people have that much faith that Yahoo still matters. As somebody who's one of those dinosaurs that still uses Yahoo Mail, I just hope that whoever buys it keeps it running pretty well. It's still pretty good, maybe not quite as good as Gmail, which I also use, but it's a big technical challenge to own Yahoo. If a company like the Daily Mail owns it, they're going to have to beef up their tech chops.
There's still a question of value. How much is the core business really worth? Some people have valued it at less than nothing, others $8 billion. Take a listen to what Marissa Meyer told me in our last interview about what the core business is actually worth.
My goal is to just make it worth the most it can possibly be worth, and that means maximizing revenue, executing as well as we can on our revenue plan, really managing our costs well. That's something else that we really pride ourselves on, and doing the best we possibly can to return shareholder value.
Well, not a concrete answer there, Brian, but, what are the numbers that we're actually looking at?
Look, I think that's going to be interesting on some level. Marissa is going to come out here next week and say, here's the quarterly results here, later this month, say, here are the results, here's how we're doing, here's the revenues we just talked about. But at the end of the day, I think investors are going to listen for any little driplets and droplets on how's the sale process going, how's the sale process going, how's the sale process going. And of course, she's going to be, probably not be able to say a lot there, but that's what people are going to care about. And so it's going to be kind of interesting how that dynamic works.
It's interesting, David. We were speaking earlier about a sharing issue on Facebook and how a decade ago, maybe Yahoo was the place to go for news. Now it's Facebook, but even Facebook is, potentially having having difficulties. Is it ever possible to be in reverse, to sort of, make a comeback when it comes to a news media site? Just like technology turnarounds haven't been very successful, if, Apple perhaps being the only real one, can it happen in media?
Well, anything can happen, but there aren't many Steve Jobses out there, and I think it's tough. I used to use a My Yahoo homepage as my first thing when I turned on my browser for many years. It was very cool, and it's not been cool for a really long time. But I think that the right buyer consolidating it with the right properties could make something that a lot of people wanted to use. That's why I think Tim Armstrong, combining it with AOL could be really interesting. But it's fascinating. I'm not a huge fan of the ability of Time Inc. to really figure this stuff out. Having worked there for 25 years, I think their digital strategy has endlessly been wrong. So I hope that doesn't happen for Yahoo's sake. But it is amazing just how many of these companies think they could do something interesting with it. I mean, what if Alibaba bought it for that matter? I mean, that's not out of the question either.
Well, and we touched on this last week, that the one prominent company that's not on that list is Alibaba. It's certainly interesting that Jack Ma seems to not want any part of this. He didn't have very nice things to say about Yahoo when I spoke to him a few months ago. But that is something that we're watching. David Kirkpatrick, our Bloomberg contributing editor, thanks so much for stopping by. Brian Womack, of course, I know we're going to be asking you every day what's going on. So you will keep us posted. All right. Thanks, guys. Coming up, we head to the Bloomberg Business Week Design Conference right here in San Francisco, where we'll catch up with the 26-year-old hacker taking on Tesla and Google. And tomorrow I'll sit down with legendary Silicon Valley investor and entrepreneur Peter Thiel. Do not miss that interview, 9 a.m. Pacific, noon Eastern. More of Bloomberg West next. Researchers have identified an unusual strain of so-called ransomware. They say is a prototype of a new generation of hacker software. A report by Cisco Security Group says the virus, known as SamSam, exploits computer server vulnerabilities without requiring human interaction. In ransomware attacks, hackers target backup files and records, encrypting them in order to make them unreadable characters. To regain access, users often have to pay a ransom in the digital currency Bitcoin. Well, the Bloomberg Business Week Design Conference is underway here in San Francisco, where top designers and business leaders are convening. Our Bloomberg editor-at-large, Corey Johnson, joins us live from the conference with a very interesting guest. Corey, someone I've been wanting to hear from for a while.
Yeah, Emily, George Hotz joins me right now. An interesting guy known for his hacking of an iPhone and hacking of a self-driving car and, well, hacking. So tell me about the self-driving car, how that came to be.
So there's a lot of stuff already out there about the self-driving car. Basically, Tesla wanted me to build a vision system for their self-driving car. The deal fell through, and I decided to build my own.
What's a vision system? What's it do?
Well, so if you want to drive a car, you have to know where the road is and where you want to place yourself on the road and where the other cars are. So it identifies all those from my camera.
And yet controlling the car is a whole other aspect of that. Maybe not as complicated?
Well, there's challenges to both, but yes, vision is a very high bandwidth sensor. Controls are much lower bandwidth, so it's easier.
And what was the key to developing this? What kind of car was it that you gave sight to? Well, so, a la Jesus with Lazarus, but different. Well, that was actually life too. Yes.
The car doesn't really matter. I mean, it's really just a question of it was an Acura ILX, but it's really a question of putting a camera in a car, running some fancy machine learning algorithms that learn to associate images with actions.
See, to me, that's the interesting thing about it is the learning aspect of this. That the car has sort of gotten better at doing this, or the software got better as it ran more.
So how you drive a car is an incredibly complicated problem. The question is, how do you take that problem and tell a computer how to do it? Well, you can try to give it a lot of rules, but this doesn't work. You have to...
Why doesn't it work?
Well, there's too many rules, right? Try to make a checklist for you to follow when you drive a car. You can't do it.
Okay, so...
Right? Like exactly everything you should do, you can't do it, right?
You mean adjusting different speeds, when to change lanes, how to react to what's going on in the...
Yeah, but no, write up a checklist. Try to write up a complete list. It's impossible.
So therefore...
So therefore, you have to, look for other ways that aren't just programming the car driving problem. You actually have to learn it from experience.
Is that a hack?
Here's the thing. Facebook kind of took that word and used it for something I wouldn't call. I don't refer to myself as a hacker.
Nice.
I'm somebody with a set of skills. These skills include programming and reverse engineering.
Now, and it's more than just a car now. It's a company.
So yeah, I mean, it's not a question of whether I can build a single self-driving car. There's been a lot of those in history. Carnegie Mellon had one in the 90s, right? It's a question of how do we ship that to everybody. And I'm not going to say exactly how we're going to do this, but I do promise by the end of the year, for under $1,000, you will be able to buy a self-driving car.
Come on. The car itself costs more than $1,000.
Well, no. I mean, obviously you have to install it in the car you already have.
And there's a company built around this idea?
We are Comma AI. Yeah.
And how many people you got working on this thing?
We're 4.
4 people. Mm-hmm. And you think with 4 people you're going to be able to launch this thing?
Well, so at Comma AI, we think about what people do with their jobs, and we try to replace their jobs with machines. This includes software engineers.
And you talk to me more about sort of what you imagine the market for this thing. Of course, there are massive regulatory hurdles, I should say.
I'm not a business person. I build technology. I'm going to build this and I'm going to ship it to people.
And how do you imagine selling this? What's the process going to be?
I'm going to build it and then I'm going to get it to people.
So what are your biggest problems in terms of technology between here and there?
Well, you got to figure out how to make it small and user installable. One of the big challenges is we want this to be user installable. How do you make it so that the user can stick the camera up on the windscreen without precise calibration?
20 seconds, you can tell me.
Well, I mean, you have to deal with it. Your machine learning basically has to be invariant to some miscalibration.
Invariant?
Not care about. Be able to work regardless of exactly where the camera is placed, which is a sharp contrast to all the existing systems today.
All right, George Hotz, interesting stuff. I can't wait to see what you come up with here. Emily, this is the kind of stuff at this design conference that tends to be mind-blowing and make you think.
Fascinating and also kind of mysterious. Corey Johnson, our editor-at-large, with Comma.ai founder George Hotz from the Bloomberg Businessweek Design Conference. And stay tuned. We're going to check back in with Corey later this hour and find out what is next for the company that's kept Polaroid 600's instant film alive. Tune in tomorrow. Also, I'll be speaking with Square Capital's Jackie Reeses, who recently departed Yahoo. We'll hear about where she's investing now in her role at Square Capital.
I'm Mark Crumpton. You're watching Bloomberg West. Let's begin with a check of your Bloomberg First Word news. President Obama and Fed Chair Janet Yellen met at the White House today. They discussed the outlook for near and long-term economic growth.
I think the president has been pleased with the way that she has fulfilled what is a critically important job, both as it relates to making policy decisions that have a significant impact not just on the U.S. economy but on the global economy, but also making sure that the Fed is following through on the important regulatory responsibilities that they have.
The White House says they also discussed the labor market and inequality. Following the recent publication of the Panama Papers, British Prime Minister David Cameron faced lawmakers over his ties to offshore tax havens. The Prime Minister has been under pressure since his father was identified as a client of a Panamanian law firm specializing in helping the wealthy reduce their tax burdens. In Canada, a remote Aboriginal community in Attawapiskat, Ontario, has declared a state of emergency after 11 people attempted suicide over the weekend. Prime Minister Justin Trudeau tweeted the news was heartbreaking. He made improving living conditions for Canada's Indigenous population a major theme of his campaign. No word yet on what led to the suicide attempts. Canadian rocker Bryan Adams is canceling a performance this week in Mississippi, citing the state's new law allowing religious groups and some private businesses to refuse service to gay couples. The move comes after Bruce Springsteen canceled a Sunday show in North Carolina because of that state's new law blocking anti-discrimination rules for the LGBT community. Global news 24 hours a day, powered by our 2,400 journalists and more than 150 news bureaus around the world. I'm Mark Crumpton. It's just after 6:30 p.m. Monday here in New York, 8:30 Tuesday morning in Sydney. I'm joined by Paul Allen. Paul, good morning.
Good morning. We're expecting declines on the Nikkei later today after a weak lead from the U.S. Asia-Pacific markets are anticipating a rather underwhelming U.S. earnings season. New Zealand currently the only market open. The NZX off 1/5% right now. The ASX looking flat, though, if futures are any indication, as commodity prices rose overnight, including iron ore up 4.7%. So we may see a boost from mining stocks later today. On the data front, we're expecting Indian CPI out later today and Japan machine tool orders. And sticking with Japan, the G7 foreign ministers meeting wraps up there. John Kerry became the first sitting U.S. Secretary of State to visit the Hiroshima Nuclear Memorial. The leaders there recommitting their, committing to a commitment to rid the world of nuclear weapons by the end of, they're committing to end the dependence on nuclear weapons, I beg your pardon. I'm Paul Allen for Bloomberg TV in Sydney, Australia.
Let's take a look now at the world of social media. VaynerMedia founder Gary Vaynerchuk, an early investor in companies from Twitter and Facebook to Tumblr, recently released his fourth book, #AskGaryV. He makes a bold claim that CEOs are to blame for everything that goes wrong at their companies. I sat down with Vaynerchuk and asked him to test his theory and started by asking, is it Jack Dorsey's fault that Twitter has seen its stock slide and user growth stagnate? Take a listen.
No, because he's not been in place long enough. I don't think 6 months.
Whose fault is it?
You know, listen, I think Dick is one of first of all, one of my favorite human beings I've ever met. But look, if we're going to go on this thesis, he had a nice long run, and the product didn't innovate enough. Now, again, this is why I don't like blanket statements. I don't know if Dick had to deal with all the dynamics on the board, you know, all the original founders. Maybe he was crippled by the politics. I don't know. But the product did not change for 5 years. It lost the tension of the end consumer. That is what all of these people trade on. I don't think it's definitely not Jack's fault because he's only been back for a few minutes, but they have to make moves. I mean, I think the product has real flaws. I'm sitting with you right now because of Twitter.
Right.
Twitter put me on the map.
You were an early investor?
Early investor from the outgoing CTO, so that's how I got in.
It's a huge platform for you.
It changed my life. It is like my high school crush. I will never, I sit here sad. I wish it was better. I have a lot of leverage on it. I don't want it to go away, but no question the attention of the end consumer, I can get a lot more accomplished through my Snapchat or Instagram, which have much smaller followers than my Twitter, because the attention isn't there.
So what would you like to see happen with Twitter? They just bought streaming rights for NFL games. Not sure if that's going to have a big impact. But
that's going to have a huge impact on the television industry because it's going to start making everybody understand that Netflix is not the only over-the-top network. Once people really understand what's happening here, which is Facebook and Snapchat are equally dangerous for ABC, NBC, Bloomberg Television, and everybody else, because anybody can now play over the top on the internet. I think it's a monument. I actually think the Twitter NFL deal is something we'll all look back on 15 to 20 years from now as one of the important moments of where the world was going. So that's good. I think they have to kill the 140 character limit. I think it's a romantic thing.
But he already said he's keeping it.
I disagree with him. He might be right, but I disagree. I think it's a romantic point of view from a restriction of mobile devices years ago. I think they need to have a stream. I think they need to have a news feed. I think they have to curate the content. I think
so. Moments isn't enough. What do you mean by a stream?
I think it should default into not showing you everything. And then if you want to go the other way, cool. And then I think when something actually happens, which is what Twitter's best for, they should go to the old school breaking news and go back to old Twitter. So if I was running product, I would go to a curated feed, which is what has to happen. It's proven. That's what has to happen. What Facebook and Instagram is doing is right. It keeps people on it longer. This is just data. It's not my opinion.
Well, they have moved toward algorithmic timeline.
Not as default. So I think they go their default. You and I are capable of switching it back on if we're so good at curating our lists. And then when there's a world incident or a big game, I think they can go into breaking news and open it back up to be the water cooler that it actually is. That's my 2 cents.
What about Facebook? Facebook making a big play for live, which you normally think of Twitter as live. Now they're paying publishers to do live video on Facebook, and Facebook has, by all accounts, been winning at almost everything, whether it's video and advertising.
Because it's the best.
Well,
and because
so can they win at live? And there's a new report out today that publishers have actually seen traffic decline on Facebook.
I don't know if there's a company I'm more bullish on. I don't know if there's a management team that I have more confidence in. I knew those guys and gals super early on. I'm not super close to it. I'm just watching it from afar.
You also invested early on.
Not that early, 19 billion. It would have been better. It's good. It would have been way better. If it was a little earlier. I think Mark Zuckerberg offering $3 billion for Snapchat 18 months ago has to, for anybody who's watching this right now, solidify him as one of the strongest CEOs of this generation. He understands attention better than anybody. I'm so blown away by the way he's navigated as a kid. How old is he? 31? I will have 35.
He's still far younger than both of us.
Yeah, he's dramatically more emotionally intelligent than people realize. His people skills are really strong, which is translated into social network. Of course Facebook can win on live. Do you know what kind of scale of attention Facebook has? Now, of course some people have seen declining traffic from Facebook because a lot of people put out crap. Like, if you're putting out crap, people aren't going to share it and put it out. And so, just like people have seen declining of open rates in email over the last 10 years because a lot of you send out spam. So I think that there's plenty of people that are seeing increase of Facebook traffic. I see this every day. We at VaynerMedia manage hundreds of pages. And so I'm very bullish on Facebook. I mean, Facebook and Instagram are 2 of the 3 platforms that are dominating people's attention.
So what about Snapchat? Does Snapchat change the social media landscape? You came in here Snapchat.
Absolutely. Snapchat is the absolute darling of the dance right now. I do believe that it's proven to at least one man's point of view that it will age up. I fully sit here comfortable predicting that in 24 months, a lot more of your grandmothers and older uncles are going to be on it.
Could Snapchat kill Twitter? I mean, what does Snapchat threaten right now?
Everybody. All they're playing for is attention. Snapchat threatens this. This show. Snapchat threatens the magazine over there. Snapchat threatens the billboard that's highly overpriced right out there right now because everybody in the passenger seat is looking at their phone. All of these people are playing for the same thing. It's attention arbitrage. And Snapchat is the first thing to come along in a long time since Instagram that is a real beast of an attention play.
My interview with VaynerMedia founder Gary Vaynerchuk, who never minces words. More from that conversation straight ahead. As an early investor in Tumblr, what does he think went wrong with Yahoo's bet there? That is next. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. More of Bloomberg West next. Berkshire Hathaway's Business Wire website went down just before the U.S. stock market closed. Business Wire distributes press releases issued by companies, and the company COO says the issue was due to a power outage at a third-party co-location facility. The disruption impacted several planned statements, including the distribution of Alcoa's first quarter earnings release. Overstock.com says its founder and CEO Patrick Byrne will take an indefinite leave of absence to battle hepatitis C. The retailer says it's unknown when or if he'll return to work. Byrne says he's finished treatment and believes he can beat the disease. Guided by Byrne, Overstock became the first major U.S. retailer to accept Bitcoin. He's recommended veteran tech exec and Overstock general counsel Mitch Edwards as acting CEO. Continuing my conversation now with VaynerMedia founder Gary Vaynerchuk, we talked about one of the hottest media stories out there, a possible deal between Yahoo and Verizon. I started by asking about Yahoo's current predicament and how much of that is Marissa Mayer's fault.
She's done a lot of smart things, but I mean, I think the punchline is 3 years. That's a big ship. Yeah, I mean, it depends on how you look at it, but I would say that's enough time. In year 1, year 2, you're unwinding a lot of things. I think Wall Street-based companies have it a little bit different. The truth is you're playing in a game, this channel, you're playing in a game of 90-day terms. I mean, if I got to run Yahoo when Marissa took over and I had it off of Wall Street and had my life to run it, I would be doing a lot different behavior. And I think the pressure of what Wall Street wants hurts a lot of these CEOs to do short-term behavior. And so it's harder for me to judge because I don't look at the Wall Street CEO the same way I look at as pre-IPO CEO. But 3 years is a lot of time.
Now, Verizon is proceeding with a bid.
I mean, let me give you an example, and I apologize. In that 3 years, Marissa could have tried to buy Snapchat for $4 billion 24 months ago. That could have worked, possibly.
Highly doubt that Evan Spiegel would have said yes.
You're right. And so, and there's those things. But I mean, I always think that when you're in full control, you can do things. And so, yeah, I mean, I think the results are the results are the results. I'm a big believer in the market is the market is the market, and meritocracy reigns. But I'm also not naive that stockholders and the game you're playing dictate some of those outcomes.
Right. Well, now Yahoo is for sale, though she still believes she could turn it around if she had significantly more time.
And I agree with her. That's a big machine. These are big companies. The thought that, I think of private equity 7-year terms or on Wall Street 3 years. These are big companies. Like, it'd be nice that if they could have 10 years to prove it, but you don't.
Right. So Verizon is proceeding with a bid.
Yes.
Is that the right thing for Yahoo and Verizon and for Marissa? Is this the right?
I have no. I mean, look, I never really. I'm not going to come on this show with the people that are watching and ever cry for CEOs of Fortune 500 companies. They always do okay. Whether they win or lose. Where there is not a lot of meritocracy is once you're able to achieve a CEO status, whether you did a good job or a bad job, you tend to get paid quite well. So I don't know if it's good. To me, I view Marissa from afar, and I don't know her, as pretty strong actually. And so I think for her own operation, wants and needs and ego and, feelings, it might not be good because she probably wants to see it through. Verizon, I think this is maybe doubling and tripling down on the things that AOL has brought to their table. As far as Yahoo, I don't know. It's such a convoluted situation. You have to do draft. This is where I would say Marissa maybe left something on the table, again, without knowing if she could or couldn't do this. When you need to break out, you can't go safe. You have to be aggressive. And Tumblr was a big play. As an early investor in Tumblr, and I was happy about that. So those are things you need. For Verizon, it feels right because I do think that some of the AOL content things within the pipes that they're trying to create have brought them value. And I do think the individual pieces of Yahoo potentially can be quite valuable.
Was Tumblr really the right bet, though? I mean, Tumblr.
No, Tumblr was Tumblr was the wrong bet. It was the right kind of bet. Tumblr ended up being the wrong bet because even at the time they did it, and this is probably why I was a little disappointed because I thought there was more room to go. Tumblr missed their opportunity to go to mobile the way they needed to a year or two earlier. So I would say no, it wasn't the right bet but it was the right kind of bet.
My interview with VaynerMedia founder Gary Vaynerchuk. A story we are watching, the digital media and e-commerce platform Hypebeast is enjoying the best debut of any Asian IPO this year, surging more than 700% in Monday trade. The 10-year-old company started out as an online sneaker forum, but has grown to include a handful of lifestyle websites and a web store. Its platforms attracted more than 46 million page views a month in the 2015 fiscal year. Its biggest revenue-generating markets are the U.S. and Hong Kong. And SecureWorks launches its IPO roadshow this week, testing investor appetite for pure-play security vendors. SecureWorks is a cybersecurity firm that services enterprise customers. It's owned by Dell, and it's seeking up to $158 million in a public listing. The company is expected to price after market on April 21st. Dell had previously delayed this IPO after an initial filing in December amid market volatility. And tomorrow on Bloomberg, do not miss U.S. Commerce Secretary Penny Pritzker on Go, 8:30 New York time. More of Bloomberg West continues next. In today's funding board, Mail.ru CEO is doubling down on his passion for tech by launching a private equity fund worth $100 million. Dmitry Grishin is already an investor in Sphero, the maker of the Star Wars BB-8 drone. His early-stage Grishin Robotics Fund, which will make individual investments of as much as $10 million per company, will be targeted toward U.S. and European startups developing robot tech, artificial intelligence, and Internet of Things apps. And Octopus Ventures raked in $142 million to invest in European startups. The latest fundraising brings the UK venture capital firm's total early-stage funds to more than £400 million, some $570 million. Octopus Ventures is part of the Octopus Group. It invests about $107 million of that money in early-stage startups across the EU. The firm has already backed a number of well-known European startups, including SwiftKey and LoveFilm. Now, back to our Bloomberg Business Week Design Conference, where our editor-at-large, Corey Johnson, is standing by with the company who just debuted a camera that merges the old with the new. Corey?
Emily, remember these, Emily? Remember these Polaroids, maybe? Or at least the instant pictures they would generate?
Yes.
Iconic things. Oscar Smolikowski is one of the millions of people, hundreds of millions perhaps, who've been inspired by this. But you looked at the collapse of Polaroid. It's hard. Well, first of all, it's hard to overstate how important a company Polaroid was and how important it is to some of the early foundation of the tech community out here.
Yeah, absolutely. I mean, Polaroid was incredible. And I think a lot of people, you just look back at it as this nostalgic thing, but it was actually the leading consumer products company. There was lines forming to buy products. It was basically the Apple of the 70s and 80s.
Of the 70s and 80s, and the stock was also just about as hot. When you looked back at that, what was the asset that you sort of saw most interesting? And talk about how your company came to be the Impossible project.
Well, I think the thing that we saw in it was the magic of the medium, the fact that it's a physical artifact that it develops.
I'm not sure I look very magical in the picture you took here, but yes.
That's your fault.
That's really my fault. It's just genetics, so I can blame my parents. But please.
Yeah, so this magic of the experience of taking the photo, having it develop, everybody instantly kind of gravitating towards it and sharing it around. And I think that magic is still there today. You have a very similar reaction today when you take out a camera. Everybody's interested in taking a photo, getting their photo taken. It's very different to getting your photo taken with an iPhone. And I think that's where we saw it, is this tangible magic. I mean, it's hard to describe it in another word than magic.
Also, I was at the George Eastman House in Rochester, New York, a few months ago, and I sat with some of the curators and directors of the museum there, and we talked about the role that photography plays in people's lives now compared to the days of George Eastman, or even the glory days of the Instamatic and so on. And you put up a slide in your presentation here at the Bloomberg Business Week Design Conference that showed just an incredible number of cameras out there right now. There's more photography happening right now than ever before by a long shot. I once saw maybe an apocryphal statistic that more pictures have been taken in the last 3 years than the previous 100. But that's not outlandish given the number. Tell me what are the numbers?
I mean, the big number is the number of smartphones. So all smartphones have cameras, and that means that we're talking about more than 1 billion sold every year. So, and this compares to analog cameras that peak year they would sell 20 million. So we're talking.
It's not even comparable.
Yeah, no, it's not comparable, and and it's easier than ever. You always have your phone with you, so you always take photos.
So what is the role of this, your camera, which is way cool? But what is the role of this camera in an era whenever it's already got a camera? Like, I'm going to look at the instant pictures you took. I'm going to snap a picture of that and put it on my Instagram account at Corey John, I should say, because that's sort of how I share pictures. What's the role of this in that society?
Well, you're going to share your pictures on Instagram, and then they're going to move down on your feed, and they're gone, basically. They're in your phone. You're not going to look back at it ever again. That photo, if you choose to keep it, will...
If you let me keep it?
I will let you. It will live with you, whether you put it on your fridge or in your apartment, and it will mean something, right? It will mean even more if you took that photo of somebody you cared about. So basically, it's just this idea of taking meaningful photos that you care about. So you have some limitations. The film isn't free. The film encourages you to take photos that matter to you. The phone kind of lets you make mistakes, lets you take photos of food, lets you take photos of everything, put it on Instagram and do it. So at Impossible Project, we really...
So you think no one's going to take an instant picture? I know you don't want to call it a Polaroid, so I won't, although I just did. No one's going to take a Polaroid of soup.
I don't think anybody's going to take a Polaroid of soup. I mean, there's nothing wrong with that, but... if somebody really loves soup, maybe they would. But I think at the end of the day, it just has to mean something to you.
And interestingly, while you went to try to revive this old technology, you had to do it a completely new way, both new chemical process and new kinds of film.
Yeah, we had to start from scratch, basically. We bought the factory and all the chemicals were gone. So some of them were gone because the companies that made them were gone and they scrapped the machines, and some of them are not even allowed to be used nowadays. So we had to completely reinvent it with a small team, small budget, basically a startup with 2 factories.
And that process now gives you a film that doesn't have a battery actually built into the film packs of Polaroids used to have batteries in it.
Right. With our new camera, we can move the battery from the film to the camera, which means that we don't have to ship 1 million films with batteries and 1 million batteries go in the trash.
And you launched today. How much does it cost?
It's going to cost $299, and it's launching on May 10th.
May 10th.
On ImpossibleProject.com and at the MoMA Design Store in New York.
It's a really interesting concept to think about. Oscar Smolikowski, CEO of the Impossible Project, now the Impossible Company. Thank you very much, Emily.
Thank you.
Cool stuff, don't you think?
Very cool. Corey Johnson, our editor-at-large, representing at the Bloomberg Business Week Design Conference right here in San Francisco. Thanks so much, Corey. It is time now to find out who is having the best day ever, and today's big winner is Charter Communications CEO Tom Rutledge. It's appearing more and more likely that Charter Communications' merger with Time Warner Cable will win U.S. clearance. Rutledge just met with regulators for the second time in a month, further increasing confidence in the deal. If approved, the merger would quadruple Charter's cable subscribers and create the second largest cable provider in the United States. Tomorrow, we focus on fintech. I'll sit down with Peter Thiel and Square Capital lead Jackie Reses at Lendit.
New York City. This is Charlie Rose.
Thomas Campbell is here. He became the Metropolitan Museum of Art's 9th director in 2009. He was previously a curator in the museum's Department of European Sculpture and Decorative Art, specializing in tapestries. He has made strides to unify the museum's identity and expand its contemporary and modern collection. The Met recently entered into an 8-year agreement with the Whitney Museum to occupy its recently vacated building on Madison Avenue. The museum will use the space to host both monographic and thematic exhibitions, as well as new commissions and performances. The new space, known as the Met Brow, opened to the public on March 18th. I am pleased to have Tom Campbell at this table for the first time, although we have talked at his museum. Welcome.
Charlie, thank you.
It's good to have you here at the table. So in 7 years, tell me the things that you think are important that you have learned running this wonderful and great museum.
It's a big, complex place.
Yes, it is.
Well,
and a place that's in change.
It's a place, I think of it as evolution.
Right.
I mean, we have the largest college of curators in the world, all working hard on different kinds of research and projects. So when I became director, I think first and foremost, I wanted to sustain that activity, right. The great exhibitions, the great publications. But at the same time, you know, there were clearly things that, you know, we needed to be aware that the world is changing around us. Technology is a big issue. You know, we needed to really make the step from analog to digital, think about reaching audiences that way. I think it was also time to think again about audiences, you know, how we welcome people, how we address people, how we reach out to different audiences. So there's been a lot of thinking about accessibility along with digital. And we've been thinking about, you know, what it is to be an encyclopedic museum. You know, we are the largest encyclopedic museum in the world, you know, covering everything from the antique world to contemporary. But there are gaps, of course. So how do you go about filling in, you know?
And that's a huge challenge.
That's a big challenge, yeah.
Talk about digital for a second and accessibility. What do you offer digitally to someone who lives in Alaska?
In Alaska. Now, you can go online. You can see we have records for something like 400,000 works of art. Some of them are very basic, but almost everything has got something. Most of them have got images. And we've really been putting a lot of time and effort into creating cross-collection publications, short videos with curators talking about works of art, or the latest kind of webisode is called the Artist Project. And we have artists from Kehinde Wiley to Wayne Thiebaud talking about their favorite works. And it's short, just 2 or 3 minutes, but it's a wonderful kind of gateway drug to, you know, thinking more about the collections and seeing with fresh eyes.
Yeah, I mean, that's one of the things I'm proudest about on this particular program. People who can't get to New York, you know, because of our archive of 25 years, because we've had people like you as well as artists and curators and all those exhibitions, we can give them a chance in our archives to see the magnificence of what's taking place.
That's exactly it.
At the museum.
So our original mission was educational, and it used to be very much focused on the physical visitors to the museum, and that's doing fine. We had over 6 million last year. But online, adjust this with your archive, we now have something like 35 million visitors to our website alone, and then through social media, Facebook, Twitter, Instagram, we're reaching tens of thousands, you know, hundreds of thousands more. And I think that it's a very exciting moment because we're I think everyone in the museum industry, the cultural industry, we're realizing that now we have a global audience, and how can we meaningfully engage them? It's an exciting moment.
In writing about you, Calvin Tompkins said, I think in the New Yorker, in choosing Campbell, the trustees were banking on his clear-headed vision of how to balance the Met's scholarly integrity, its fundraising needs, and its obligations to a vast and rapidly changing audience. They were also impressed by its quiet self-confidence. Does that ring true to you?
I was a scholar. I think probably other people have to say the rest.
Yeah.
I mean, I came to the Met in '95 because my predecessor, Philippe, had built it up into this engine of scholarship. Right. It had the funding, it had the spaces, critically, it had the audience, the sophisticated audience that really wanted these great exhibitions. So for me as a scholar in my field, European tapestries, I saw it as this great place to go and realize that, to share my passion with other people. And when I became director, that was very much kind of, I thought, I've done that. I would happily go on doing it. Yeah. But now what I want to do is allow my colleagues to go on doing it and take it out further.
And did you decidedly say, look, I mean, Philippe was who he is and had those dual roles there.
Yeah.
And therefore, what I have to do is define my own identity as a leader of the Met.
I think it's evolved. I'd been there as a curator for 13 years, so I saw what I felt was working really well, but I also had my own ideas about areas that might be evolved. For example, we have 17 different departments, and to some extent, they worked very independently of one another, because art history during the last 30 years of the 20th century was all about going deep, deep, deep in individual subjects. Right. But I think towards the end of the century, a lot of art history began looking outside of each area, and I saw there was a potential to kind of, if we could get the departments working more creatively together, there was a real opportunity to open up new narratives. So just to give one example, a couple of years ago we did a show called The Interwoven Globe that looked at the textile trade from Asia to Europe and then on to America, drawing textiles from our Asian department, our European department, and our American department, and telling this amazing narrative about how these precious objects were brought over land and by sea all around the world, and the kind of the narratives, the stylistic influences, the cultural influences that this trade, played a role in back in the 18th and 19th centuries. And I think there's, we've got a whole lot of projects like that now going on. So I think there's great potential that we're unlocking.
Is there a constant battle, as there is in most institutions, between having the requisite funds and budget, and at the same time making sure that we are true to the acquisition and exhibition and care of art?
Yeah, it's a delicate balance. I mean, we're a big institution. Our operating budget, net operating budget, is about $300 million, and we get about 10% of that from the city in kind, gas and steam and so on, electricity. The other 90% we're raising ourselves. Either it comes from our endowment, or it's from admissions, or it's from membership or fundraising. So we're an ambitious organization, and we're always having to balance our ambitions with the possible. the big story 3 years ago was the promised gift of Leonard Lauder's Cubist collection.
Right. I wasn't thinking about him, but it's a perfect example.
And he, that's a collection that would have been very significant in a number of different museums.
Well, because he had a collection, he had a connection to the Whitney, and many people thought it might have gone to the MoMA. MoMA.
Whitney, MoMA, Boston, or the National Gallery.
Exactly.
But I think that after thinking hard about all the options, I'm happy that the Met, with its classical collections, its African collections, its 19th century French collections, and its collections of the art, the 20th century art and photography that Cubism influenced, it was an incomparable. It was an incomparable context, and of course that's the card. That's our ace card.
That was a happy day, wasn't it? Let me talk about the Met in terms of its power and as an institution. What can you do, and what arguments do you make that we can do, at least in our mind, better than anyone else can do?
Well, we have this amazing college of specialists. So there's a great brain trust there, and amazing resources to conserve and study works of art and really go deep in understanding them. Then, we are fortunate to be. We can tap into income streams, if we work hard at it, that allow us to do very ambitious projects. So particularly the scale of the exhibition program and the publication program is really incomparable. There's no other museum in the world doing as much programming as we're doing. But I think there's also something very special about New York. We've got this educated, rambunctious, edgy, critical community. I mean, boy, are they critical. And they don't let you get away with anything. They're always pushing, always pushing. But I think that the good thing about that is it keeps us on our toes all the time. And New York is this international city, so we're part of this kind of global dialogue. I think there's something very, very special about all these factors.
Tell me about the push to modern and contemporary art.
What we're trying, the Met was set up to be an encyclopedic museum, but famously it pulled back from collecting modern in the early 20th century.
How did it pull back?
Well, for the first 35, 40 years, it had artists on the board, and it collected the art of the day, the Hudson River School, Whistler, Sargent, of course now Old Masters. But around 1905, 1910, the art that was coming out of France, particularly, Cubism, Fauvism, it was just too radical. And the leadership of the day, and of course it was a much, much smaller institution at the time, just felt it wasn't for them. And so they famously pulled back.
Didn't like it, didn't appreciate it.
Didn't appreciate it. All the things that were being said, it was too wild, it was untamed, it was, And so we pulled back, we stopped collecting for a period of 20 or 30 years. And that's the period in which MoMA and the Whitney and the Guggenheim are created. The Met gets back into collecting modern art during the Second World War. We had while the galleries were cleared because of the war, we had an exhibition of contemporary artists. And that got the museum thinking again. And in the years after the Second World War, we actually really got back in there. We bought Jackson Pollock's Autumn Rhythm in a couple of years after it was painted. Henry Geldzahler in the 60s got a whole program going. And famously did an exhibition about New York art in 1969. And so we've been building up the collection, but it's patchy. There are areas of strength and areas of weakness. And I think that the moment has come when, it's clear that our audience they really want to see modern and contemporary art at the Met in the context of historical collections. So we're not competing with MoMA or the Whitney or the Guggenheim. We're doing something different.
You're offering in context of...
It's this bigger context, And so when I was appointed director, it was clear that this was one of the areas we really wanted to focus on. And I've been taking steps to do exactly that over the last few years, building up a program, building up the staff who can develop a meaningful program, now occupying taking over the old Whitney building and programming it as the Met Breuer, and further down the line planning to remodel or rebuild the wing in which we show our modern collections.
Here's what Kelvin Tompkins said about you. Campbell slogged through galleries and art fairs and biennials, studied the auction market, talked with artists and dealers and curators, and concluded that something extraordinary was happening.
Well, I mean, I think something is happening, don't you?
Yes,
I mean,
yes.
There's this amazing, you know, there's an amazing interest and focus on contemporary art. Some of that is being driven by the market because there's a huge capitalization of the market going on, with money flowing in from Latin America, from Eastern Europe, from Russia, from Asia. So there's a lot of marketing and investment going on. But the good side of that is it's allowing more artists than ever before to undertake really ambitious projects. And I'm sure that history will judge some of this as rubbish. But a lot of it, I think, is really interesting. And there's an audience for it. It's almost a sort of a new renaissance.
Yes, I was going to say, you've described it as a neo-renaissance.
I think it's fascinating. And, and in a globalizing world, the art that's being produced now in Beijing or Seoul has an audience and a resonance on the other side of the world in a way that it never would have done in the past.
And you demolished the Lila Atchison.
No.
Wallace wing?
That we're looking at how we might remodel it. Or
remodel is a better word than demolish, isn't it?
Yeah, we're looking at all the options.
Yeah.
Of course, it'll all depend on, the cost and the expense. The current...
But what question brings you to that consideration?
Well, over the years, the Met has been under construction almost continually since it was first plonked down in Central Park in 1880.
Yes.
What is now the medieval hall, 1/20th the size of the building as it now is. And it more or less doubled in size between 1970 and 1992. Since then, we've been kind of rebuilding from within, and we've rebuilt our American wing, our Greek and Roman galleries, our Islamic galleries, our European painting galleries, and our Costume Institute. And with the completion of those projects, we really came to the tail end of a master plan that had been in evolution over the last 35 years. So about 5 years ago, we stepped back and we did a feasibility study. We looked at all the infrastructure needs, and we looked at all of the kind of the moonshots, and really thought, what could this building become for the next 100 years? And we identified a number of transformative projects. And the one that really rose as being the one that was the greatest need, the one we had to do next, was this looking at the modern wing, looking at the way it connects with the areas around it, and thinking how we can, what we can do with that area. And at the moment, it's hard to find. The galleries are not very congenial for the display of art. You're sitting out there in Central Park, but you wouldn't know it. I mean, every year, 500,000 people somehow fight their way up that horrible back staircase to get to the roof garden. It shows there's this incredible potential to re-explore the relationship of the museum and the park. So this is what we're looking at, working with David Chipperfield.
The Met Breuer. How did it happen?
I think there had been, when the Whitney decided to move downtown, there had been some preliminary passing discussion between Leonard and Philippe. But then I just at the time he was retiring, I was becoming director. And the minute I became director, we had the financial crisis. So everything else was put on hold.
Right.
But in, the little discussions kept going. And I think it was in November 2010, Leonard called me and he said, can we talk? And I said, sure. Well, when? And he said, what about now? And I said, okay. And I got in a taxi. I went down to his apartment And he said, I really want to keep the lights on in the Breuer building. And so we talked about the challenges for us, what it would be involved, but that really got the discussion going. And we had intense discussions within the Met about what we would be doing there, how we would use it, what the financial implications would be, and then intense discussions with the Whitney about how we would manage a joint operation. But it's all worked out. We've got an initial occupation of 8 years. We potentially could renew that. It gives us time to really explore this space.
But what will it be? What is its mission?
Well, we thought very hard about it. We don't want to just duplicate what the Whitney was doing. We don't want to duplicate what MoMA or the Guggenheim is doing. What do we do differently? And what we do differently is that we can show modern and contemporary in the context of the historic traditions that modern artists are either embracing or rejecting. So that's one very clear thing that our peers are not doing. The other thing that we can do is we're an encyclopedic museum. Our collections come from all over the world. So there is, of course, other museums are doing this too, but we have logical connections to modern artists beyond the familiar Western canon. And that's what's embodied in the first two shows. One show, Unfinished, looks at modern and contemporary art in a broader historical context. And the other, monographic show of an Indian abstract artist of the 1970s and the 1980s, Nazreen Mohammadi, looks at an unfamiliar but significant artist from outside the familiar Western canon.
Tell us more about her.
She is a very delicate. It's a wonderful counterpoint to the sound and the glory of the Unfinished show. It's a very quiet, meditative show. After she trained in London, and after experimenting with painting and photography, her work became increasingly focused on pen and ink abstract designs that in some ways look back to kind of Russian futurism, in some ways you look at artists like Agnes Martin working in the States, but their meditations, they're thoughtful, they're spiritual. And she's not had a monographic show in America, so it seemed like a great choice to start this theme.
Some have said that it feels both timeless and futuristic.
Yeah. I think that's the perfect way of describing it. Yeah.
This exhibition, Unfinished, through Thoughts Left Visible, and we have some images here, but the exhibition spans more than 500 years.
Well, come on, we're the Met. we have to show off somehow.
Yes, exactly. And this is works that have been left in an incomplete state.
Yeah.
What do I mean by that?
Well, so much modern art, you're conscious of the raw material. The artists are sort of toying with, the tension almost between the raw material and whatever is presented as a finished work. But what we're doing in this show is showing how this is not just a 20th century trope. In fact, artists have been doing this for a long time. And we push the show all the way back to the Renaissance. And when you get off on the third floor, the elevator doors open, there in front of you is this great painting by Titian, painted late in his life. It's called The Flaying of Marsyas, painted in the 1570s. And it's a very raw-looking painting. Here is an artist who spent his life making almost picture-perfect renditions of the great cognoscenti and the rulers of the day and beautiful velvets and silks. But here, in the last years of his life, he turns to these very dark mythological subjects, and the finish it's very raw, but it's intentionally, there's some discussion of, was it unfinished or was it intentional? And I think that the the agreement is that this is what he's doing is he's concentrating on the emotional intensity of this vision, and that's the power of this rawness. And so
is this part of the Met collection?
No, we borrowed this. It's one of the great works in the Czech Republic.
Iris Murdoch said it is one of the greatest paintings of the Western canon.
Yeah. I mean, it's there's elements of autobiography in this. It's this terrible torture subject. Marsyas has had the temerity of having a musical competition with Apollo, the god. He's lost, and there is Apollo punishing him for his hubris by skinning him alive. So it's an image of torture, of suffering for art. It's thought that the figure to the right, with holding his hand in front of his face, may even be a self-portrait by Titian. So he's looking back on his own work.
And it was a painting he kept coming back to.
And he kept, I think this was in his studio at his death. So this starts this whole...
So maybe it was finished but not finished.
This rawness, this non-finito style was a self-conscious decision. And then what we do in the exhibition is follow through. There are some works that are unfinished by accident, but there are others that work on this intentionally raw theme. So the exhibition explores these two poles, and it's a wonderful. It's about making. In some cases you're seeing the artist's thought below the oil surface. In other cases, he's working rawly on the canvas in oil.
Take a look at the next one. This is J.M.W. Turner, Rough Sea, painted in 1840, between 1840 and 1845, I think, somewhere in there. He had a fascination with the sea.
Absolute fascination with the sea. Yep. Yeah. He rented. He had his house by the sea. Yep. And he travelled back and forth. And many of his masterpieces depict stormy, tumultuous waves.
And it is said that he tied himself to.
To see, to experience
the ferocity of the sea,
of the storm. And when he died, I mean, in his lifetime, he pushed the boundaries again of what was considered to be an appropriate finish for a painting. He famously was in the Royal Academy on the day it was to open the show, kind of brushing in, and these works were left in his studio at his death.
What is the darkness at the center?
I think you can project into it. Is it a steamship? Is it a promontory of land? A pier with a lighthouse on it? These are so abstract, but they're again they capture the emotions, the tumult of the storm, and these become the sort of the works that influence the Impressionists and artists all the way through to Gerhard Richter and other modernists.
The next one is Alice Neal.
Yep.
James Hunter Black draftee in 1965.
Yep.
Of all the stories, this is such a powerful story.
This has almost become a kind of talismanic piece of the exhibition. Here, Alice Neal famously, she painted people who lived in her neighborhood, people she didn't know, she'd invite in off the street. And this young man caught her eye. This was a first sitting. He was a draftee going off to the Vietnam War, and he never came back. We don't know why. Maybe he never came back from the war. And some years later,
But his name was James Hunter.
Yeah, we know that, So she signed it and presented it as a finished work. So it becomes a metaphor of what may have been a life cut off.
One sitting.
Yeah.
That's amazing.
So many of the works in the show have this, everyone has a story. It's not a show you blow through, in 2 minutes. Every work has a story, and it's very moving, And
the next is Andy Warhol. This is from 1962. Do it yourself.
So paint by numbers. Well, in the modern area, we have some works that are, again, on this theme of the rawness, the unfinished, but we also go into a kind of a more conceptual area. And we have works that are completed by the visitor. Yeah. We have works that are about infinity, that will never be completed. In this case, Warhol in '62, it was very early in his career as a painter, and he bought some of these paint-by-number kits and then reproduced them. He projected on a screen, outlined them, and reproduced them. So kind of challenging the notion of, what is a work of art? Right. Is a paint-by-numbers work of art a work of art?
It's a soup can. A work of art.
Exactly. And the wonderful quip he has is, how do you know a work of art is finished? When the check clears.
Yes. The transaction has taken place. It's now in the hands of someone else. The next one is Louise Bourgeois. Take a look at this. Yeah. This is Untitled #2, 1996.
Yeah.
Tell me about her and just this.
Well, one of the kind of the dominant shadows behind this show is Michelangelo.
Yes.
Who, again, from the Renaissance, with his sculptures, left many pieces unfinished. But you have those, the slaves, for example, twisting out of the stone that he was releasing them from. And that's a memory that has influenced so many late 19th and 20th century artists, Rodin especially. And here, Louise Bourgeois is in a way returning to that concept. She visited the quarries from which Michelangelo sourced his marble. And in this work, you have the contrast between the pair of hands, a man's hands and a woman's hands, in a very delicate gesture of intimacy, just lightly holding one another's hands, carved out of this raw, set off against the rawness of the marble. And the marble colour in the polished form is like flesh, but in its raw form is this wonderful, powerful, hacked marble. It's a very moving piece.
She said about working in marble, I think, you have to win the shape. That you have to win the shape.
Yeah, yeah. It's lovely, the thought of sort of revealing these forms from that rawness.
Yeah. I just saw that on the back cover is the Warhol. Yeah. How long will this be on exhibit?
3 months.
Yeah.
And then we've got an exhibition of the New York photographer Diane Arbus.
Oh, sure.
And her work from her early years that's never been shown. So you really see her very distinctive photographic style emerging. And after that, we've got an exhibition by Kerry James Marshall, the African-American artist, who's made it his life's work, really, to position. He draws inspiration from classical kinds of painting, landscapes, portraits, but he places the African-American in these scenes. So it's a kind of an extended meditation on the experience, the African-American experience in America.
You must get up every morning and simply say, I may be the luckiest guy in the world because I now have more to work with, more challenges, there's more happening. The whole digital revolution has given art a broader reach than it's ever had. I mean, the sheer excitement of being able to serve somewhere as a connection with both the Met and the Met Brower, somehow a connection between people who love art and the art itself.
Yeah.
And more ways to make that connection.
I'm a lucky guy. Yeah. I mean, walking through the galleries of the museum, working with the specialists, right, all the people involved in making that museum tick. And, there's so many people all playing their part. And the collectors. I mean, here in New York is amazing. Around New York, the amazingly rich collections of everything from antiquities to contemporary, and it's all part of this dynamic, atmosphere.
Thank you for coming.
Real pleasure.
Bob Wright is here. He stepped down as president and CEO of NBC in 2007. The network became a global media giant under his 20 years of leadership. Among the prominent deals he struck was a merger of NBC and Universal in 2004. He also launched CNBC and MSNBC. His contributions are not limited to the media world. After his grandson was diagnosed with autism, he co-founded the research and advocacy organization Autism Speaks. He writes about all of this in a new book. It is called The Right Stuff, From NBC to Autism Speaks. I'm pleased to have Bob Wright back at this table. Welcome.
Thank you very much. I'm thrilled to be here.
Let's just talk first about autism. When you discovered that your grandson had autism?
2004, he was 2.5 years old. We had gone through 6 months prior to that. It was about this time of the year, right in this kind of semi-cold thing. And he was losing all of his identity over a period of 6 months. It's as if people were coming in at night and stealing. They were stealing his vocabulary. They were stealing his dexterity. They were taking his health away. And we watched this whole thing happen. We ended up at Columbia Hospital when I was on the board of New York Presbyterian at the time, and ended up at Columbia 3 days later, and $12,000 later, he got a diagnosis and said, there's a lot of things wrong with him, but we can't really help you. He's autistic. And we don't have a protocol to deal with autism.
And what did you know about autism at that time?
Almost nothing. Now, we had been looking at different potential issues, and autism came up on the list. But
when you say we, I assume you and your wife and your daughter.
And her husband, yeah. Right. And other doctors. We had some pediatricians and so forth. The group she was with was in complete denial. The pediatric group was in denial. They said this was just a function of him having some bad breaks, and He's going to retain it. Then they finally stepped out because they knew this is a disaster.
This was not going to change.
Not going to change. And so we ended up, you know, go out on our own, sort of. And we couldn't believe it. We got into it. I went to the hospital. We got a lot of information out of the hospital about what it is after that and what they knew about it. A neurologist and psychologist and psychiatry. And it was all pushed into that world. The world of psychiatry and neurology. We're not in the MD world. The typical MD world was like out. We traveled around a bit. We went out to see different groups. We met with people. Everything was very depressing. People were, money was a huge issue. There was no insurance. There was no coverage. Parents were having to, one was having to quit work to take care of the child. The other one was away all the time working. They couldn't come up with enough money to cover it. Everything was, they were living off credit cards. We bumped into Bernie Marcus.
Found Home Depot.
Home Depot. He called me up and he said, I need to talk to you. You're going around talking to people. I understand. Let me tell you my story. And he said, I put a lot of money into this, and so it's been a number of years, and quite frankly, I failed in my expectations. And the reason is there's no awareness of this. I can't build awareness at the medical level. I can't build it at the political level, at the hospital level. And you know, maybe you guys, if you're going to want to do something, I'll support you. I'll be a major financial supporter if you want to take this challenge on. So we talked about it a lot, and I contacted a couple of other people, and I got Phil Geyer, who was the longtime CEO of Interpublic, the largest ad agency in the world at the time. Mel Karmazin came on board. The Slatkins, Laura and her husband, both came on board. They had.
Were these all people that had a connection to autism?
Yes, but not Phil. Phil was just a great close friend. And lastly, Andrew Robertson, who had no connection with autism, but was a really up-and-coming advertising executive with BBD&O. Today's the president. And he said, I'll help you. I'll help you, because they like to take on not-for-profit charges if they really believe in it.
Responsible.
So that was our core. And that took, but I said, this is going to be run like a business. This isn't going to be run off the thing. I want audited financials from day one. I want to be registered in every state. I want to be registered as an entity that can raise money and operate and be licensed in every state. Any place that there is restrictions, we need to follow the law.
And what was the goal?
The goal was to create a huge amount of national awareness about autism and its significance, and also to enter some really major science.
So 11 years later.
11 years later, we've done both of those things. One of them, we certainly have won the awareness. It's, if we were a product, Procter & Gamble would love it. We went from very, very little awareness to very significant awareness, especially among men and women of child-rearing age, which is the critical crowd here. We've also got a younger crowd that's they're well informed of this issue. And this last thing we did before I stepped down as the CEO last year was to and we're still well in it, is to have this arrangement we have with a group in Canada, plus Google and Google and ourselves, right, for missing. We do not have the scientific foundations to do the genetic research that we needed to do. We will now have that, and we have.
You're only now getting that. To do the kind of research to determine the genetic implications. We have the genetic factor in autism.
Yeah, nobody has done. We've had 8,000 now of whole genome sequenced. The 6,000 are on a scientific portal at Google. Nobody's ever done this with any kind of disease or condition. People have done hundreds. They've done a few, but never this. And we're trying to take and put together. Move groups that look and act similar in terms of their genetic formation together, and then we can start breaking those groups down and get into pharmaceutical companies to look at that when they see the makeup of this group as to whether, and we have all of the phenotyping. In other words, we know these are the ones that don't speak, these are the ones that don't do this, these are the ones that have trouble.
Clearly, it's the disease of the brain.
Yes, well, yes, but there's other implications. Whether they're first and second, there's a lot of gut activity here that we don't understand.
What does that mean, gut activity?
Well, there are connections between the brain and the gut that nobody really understands, and so you can have a lot of GI problems associated with it. And we think it creates from the brain, it goes there, but it could be the other way around. The gut is a completely mysterious part of your body from science.
Yes.
Science. And
there's more and more focus on that, in fact.
Yeah,
in science.
yeah, and we know there's a connection. Let's put it that way. Pathways are the big. That would be the one word I would. Brain pathways is the fundamental issue, to be able to understand what's happening in those pathways.
All right. So how much today? What is the conventional wisdom about the genetic influence?
It's about 50%.
50%.
Yeah, and the rest of it is we don't know.
Just environmental.
Well, environmental is the word when it's the rest of it.
That's right, exactly.
And in cancer, environmental may be 70 or 80%.
Yeah, but they mean by things like smoking and behavior.
Those
and
are like the only few. Yes, yeah. But most cancers have no idea.
Right.
My wife is diagnosed with pancreatic cancer now.
Stage 4.
Yeah, stage 4. They don't have any clue how she got this or why she got it. We have nothing in the family. We've already done the genetics on her. There's no history. There's no genetic history at all. Zero.
But what they're hoping is that it will build up a body of evidence in terms of mapping the human genome of people who have been associated with one disease or the other.
Let me tell you what we can do with pancreatic cancer, because you give you an idea what we want to do with autism. What we're doing now with her in her tumor, we're now matching up her tumor against hundreds of different elements, most of which are drugs. But we know so much. We've done an extraordinarily deep sequencing of the tumor. So we know so much about that tumor. We're matching it up with drugs to see which ones act and don't. That's the ultimate goal of personalized medicine, and that's the ultimate goal of autism.
Right.
We don't know enough about, we don't have autism cells yet. We don't know enough about that to get to that next stage. That's why we had to go through this stage.
But there's been an extraordinary growth. We can look at the numbers of people who have it today.
Oh, no, we know.
Versus 15 years ago.
Oh, it's
and so why is it growing so rapidly?
Well, I could say 50% of it is much better diagnostics.
Okay.
And 50% of it is we don't know. That's the, they don't know anything about pancreatic cancer where you get it. So, I mean, we at least know 50% of it's genetic. The rest of it we don't know.
How is your grandson?
He is not going to ever get a job at Google. We hope he could work in doing something. He's healthier than he has been. But he has all traces of epilepsy. 30% of children with autism have epilepsy.
Right.
He has seizures now that are quite significant. We can't really control that. He doesn't speak except when heavily prompted, and he can't be left alone because we can't forecast what his activities are going to be. So he's going to need perpetual care, And he's a nice boy. He's not a pleasant boy to be around, but he's not. He cannot operate by himself.
So then there's the question of vaccines.
Yes.
On the one hand, there's the controversy, which you are very familiar with, and causes some split in your family.
Yes.
Explain the controversy.
The controversy is that a lot of children with autism receive the diagnosis of autism at or around the time where they're getting their first really heavy dosages of vaccines. And the vaccines come in stages now of 6 and 7 at a time. And they're given to very young children. And one of them was the MMR, the mumps and rubella.
Right.
And that had traces, more than traces, of mercury in it, ethyl mercury. And that became a symbol, because you never want that mercury in a medical environment at all. And my eye doctors say, I'll never have it in my office, even though sometimes you need. So that became an issue. The children, the coincidence was such a coincidence that it became, that must be the cause. But we have not been able to establish that.
What do you think?
I don't think it is the cause.
Right.
But I am very sympathetic to the people who can't get an answer when they see that their child went downhill. My grandson had the same thing happen to him. But I'll tell you something. He also had a staph infection at or near that time. And a staph infection is a much more considerable blow to your immune system than any vaccine issue could possibly be. So that staph infection could have brought this on, could have triggered it. You're looking for triggers. If you think this is embedded in your system, that something has to bring it out. So right now, I think most people that are really concerned about this, what I tell them personally is just try and spread out the vaccines, because there's 30 of them taken before you're 3 years old. Now, many people would say, you know, that really is too many. We've crossed the border between you and I would have had 3 or 4.
Right.
There's the differential. And many people would say it's really not necessary. They're just pushing it in because they can get it done, because children won't tolerate it at 4 or 5 years old. It'd be too much of a nuisance. So right now it's relatively okay. People are fighting maybe to get it spread. I don't think that people are not are not stopping vaccination in a large number because of this.
So if we went out and talked to the smartest doctors and researchers in the field, what would they say?
They would say there's no evidence of it, there's nothing to be afraid of, and everybody should vaccinate.
So that's the majority scientific opinion.
Yes. And I would also say that every vaccine is identical if in the category. The vaccine, you have 100 million kids that are receiving the same vaccine, but no 2 kids are the same, and no 2 immune systems are the same. So it stands to reason you're going to have some differential in there, and everybody knows that in the medical community, but nobody wants to talk about that. So they give $100 million a year. Don't give it away. They put out $100 million a year to pay for vaccine issues at the vaccine court, which is a kind of a kangaroo court, very hard to get anything. All I'm saying is that vaccines have never been perfect. Now, they used to be horrible. I mean, right. But they're not. But there's more than enough evidence to say you shouldn't worry about vaccines.
Well, let's turn to the rest of your career. A lot of that is about this. From NBC to Autism Speaks, Bob Wright with Diane Mermagas, who I remember has been a media reporter when I first started in television.
I met her in 1980 when I first started at Cox Cable.
Yeah. So look forward rather than going back over all the stuff at NBC and your own chairmanship and what happened there and acquisition of Universal and the cable properties. Where's the future of media?
You know, we talked about personalized medicine.
Yes.
Well, personalized media is where it's going, and it's running there quickly. For you to be able to, and most of this is visual now, for you to be able to see things you want to see when you want to see them, regardless whether they're new or they're old or they're just fresh, you know.
You program your own TV.
Yeah, and that TV is in your hand, or it's in your pocket, or it's in a 70-inch screen, and that is a completely disarming context for people who are in the business with order, and everybody has to reorganize now against that development.
Who's going to win and lose?
I think the people that are fundamentally winning today will be able to do that in the future if you're large enough. That's one of the reasons we did the Vivendi or the Universal. Right. We made ourselves so big that the amount of content that we own today, or they own today, can feed families of millions of people for years and years to come, and can't be duplicated. There's no cost possibility,
right.
And it's.
You say we? You mean Comcast today?
Yeah, Comcast today, or Warner Brothers today, and so that's one safety issue. If you have a lot of content, you know how to produce it. Now I'm on the board of AMC, which is Josh Sapin is the CEO and the Dolan's controller.
As good as as good as CEOs I know.
Absolutely, and they spend all their time at a table like this, looking at every single option of producing a show. Where is it going to go? Do we want to rent it? Do we want to sell it? How many episodes do we want to do? How long do we want to own it? Do we want to put it with Amazon? Do we want to put it with Netflix? Do we want to put it with Hulu? Do we want to put it on a network, a cable? Do we put it on our own because AMC? And they agonize about that, and the options are so significant that you're never going to make every one of them right.
But there used to be this notion of whether is it content or distribution king. Content's king.
Yeah, well, content is always going to be a key element in a world where you're not sure where the distribution is going.
One of the things you write is local television is still important.
I think local television has to get back to its fundamentals. I think especially news. I think local news it was so pushed down over the last number of years. People are dying to know when something happens in the community. They want to know a lot about it because they expect to be able to Google it and everything. When you see a building on fire, I want to know who owns the building if there's something wrong. I want to know I want a picture of the owner. They never tell you who that is. I want to know how many violations did they have. All these things are really useful, and because of Google and other ways, you can get all that information. They have to learn to present that with their stories, and I think people love local, but not served the way we've been doing it.
I'm Campbell Brown.
And I'm Mark Halpern. With all due respect to Bernie Sanders, tonight we've got your best friend on the show.
Not you, little fella. We're talking about Jane.
let's get started by talking about another unpredictable creature who tweets, Donald J. Trump. FYI, later on the show, we're going to have the latest Bloomberg Politics Purple Strategies online poll that has some good data on how Donald Trump is doing amongst married women voters. But first, let's understand why Trump is deriding the complex rules by which Republicans and Democrats select their delegates. After a chaotic and Ted Cruz-friendly Colorado Republican State Convention on Saturday, Trump is trying to reverse the news cycle narrative that Cruz crusaders are outmaneuvering Trump's campaign in the hunt for delegates, even in places where Trump won the popular vote primary. Trump's rhetorical campaign follows the Democratic caucuses in Wyoming this weekend, where Bernie Sanders crushed Hillary Clinton in the popular vote, but walked away with the same number of delegates as his rival. Here's Donald Trump making the case for himself and for Sanders at a rally in Rochester, New York last night.
I watch Bernie. He wins. He keeps winning. And then I see he's got no chance. They always say he has no chance. Why doesn't he have a chance? Because the system is corrupt. And it's worse on the Republican side. Because I'm up millions of votes on Cruz. Millions. I don't mean like I'm up by 2 votes. I'm up millions and millions of votes. We're supposed to be a democracy. We're supposed to be, you vote and the vote means something. What they're doing, and whether it's me or whether it's Bernie Sanders, when I look at it and I see all these victories that I have, all these victories that he's got, and then you look at the establishment, and I want to tell you, it's a corrupt deal going on in this country.
Today, the chairman of the Republican National Committee, Mr. Reince Priebus, defended his party's nomination process in an interview with the conservative radio host Mike Gallagher, saying them's the rules and that state conventions are totally fair. Campbell, is Donald Trump correct that the delegate selection process is unfair to him, to Bernie Sanders, and to the voters?
No, the rules are, in fact, the rules. And the fact that Trump's own children are not able to vote in the primary in New York demonstrates how unprepared they are, how little they know about the rules. You can't even get your own family registered in time. It's absurd. This is the way the process is designed to work. And the rules may be crazy in certain states, but they're not arbitrary. They were decided on by the party, or in many cases by the voters in those states. And that's part of a campaign process, being organized, learning the rules, and playing by the rules.
I agree in the end that the rules are the rules. But I think Trump is right. People would be shocked if they knew that there's not a great correlation between the voters voting, the popular vote, and who gets the delegates.
Well, look, Al Gore. Al Gore didn't won the popular vote. He didn't get the presidency. He accepted it because that was the rule.
And people are plenty critical of the Electoral College, although in that case, there's also the question of votes in Florida and whether more people went to the polls intending to vote for Al Gore. I think Trump is onto something here as a rhetorical point. I agree with you. They should understand the rules. They shouldn't whine about them. But I think he's onto something as a talking point to say Bernie Sanders and I are the outsiders. The insiders are fixing the game. He's exaggerating, to be sure, but I think he's striking quite a chord, and he's helping rally his supporters to come out in the polls in the states yet to vote.
But I also think the rules are designed this way in order to build consensus around the nominee.
Yeah, they're not totally irrational.
They're not, about getting the popular vote or increasing the popular vote. They're about getting the establishment people and the engaged party activists on board with one person. That's why they're written the way they are. That's the intent.
But the news organizations should stop reporting the popular vote as if that's who won, because it ain't.
It's true. Fair point. Okay. Since Passover is approaching, here's a question for avid TV watchers. Why was this Sunday different from all other Sundays? And the wise son answers, Donald Trump did not do a single Sunday show, not even C-SPAN's Newsmakers. For the first time all year that Trump, this is a Sunday where Trump hasn't phoned in or taped a Sunday interview. But wait, there's more. Trump gathered the press following him on Saturdays so they could watch him tour the 9/11 Memorial Museum here in New York City. But afterwards, he did not take a single question. Mark, Trump did do a phoner into Fox News this morning. That's a Trump classic, of course. But is doing less media, as he appears to be doing, good for his chances?
I never want to argue in favor of a candidate talking to the press less, because I like that as a reporter. But I think Trump is smart to play with the supply and demand a little bit here. When he does lots, reporters tend to play off of each other. It tends to create a dynamic that hasn't been good for him. I think if he picks his spots more, does more local press, which he's doing below the radar, He does local TV sometimes without telling the national press. I think he's in a better position for himself to control the message more than he has been.
Well, I think just because he's doing less media doesn't mean he's getting less media. I mean, the cable channels are still taking his press conferences, his rallies live.
Right.
He has basically taken over the media in this campaign. They have given up editorial control. He said, you know, I'm not going to do a sit-down interview. I'll only do phoners. They take phoners.
Howard Stern
I'm not
is no
going
longer the
to
king of all
engage with
media.
you. Take my rallies
Donald
if you
Trump.
want me. They take his rallies. So it has been a testament to Trump's talent and finesse and brilliance, how he has manipulated the media into totally giving up editorial control. So maybe he's doing less, but it doesn't mean he's getting less, and it's a great move for him.
He does one Sunday show interview, everybody covers it. He doesn't need to do more.
Totally. Well, lately, Ted Cruz has exhibited a good quality that might make for a good middle manager at Staples, and that is delegating. Cruz is scoring delegates in Colorado, North Dakota, and other states, but the road ahead for Cruz is clogged by states with voters who don't like him so much. The next 6 primary contests are in the Northeast and the Mid-Atlantic states, including New York, where a new NBC News Wall Street Journal Marist poll shows Cruz in 3rd place with 18% of the vote. Cruz doesn't return to a more friendly stretch of the primary calendar until Indiana, and that's on May 3rd. Mark, Cruz is in California campaigning today. Is he going to pay a price if he finishes 3rd in these northeastern states?
I think he will in 2 ways. One is he needs to keep accumulating delegates. He needs to get close enough to Trump so he's got within hailing distance to win on a 3rd ballot. And 2, I think his argument to get Kasich out of the race really diminishes if he cannot finish 2nd. We got a long stretch now. We got like a month where there's only northeastern states. Much better off for him if he can somehow surge here and prove that he can compete in these northeastern states, which means to some extent showing he can compete for more moderate voters, which he needs to do to have that general election argument.
But does any of this even matter if for Cruz at this stage, it's just about getting to an open convention? You're not going to win outright, right? So he's just trying to keep Trump from getting to that magic number.
I think the danger for Cruz is that, yes, that's the main goal. But the danger for him is if it's the only way he can win when he gets the convention, he's got to have enough delegates and enough of a general election argument that he becomes the alternative. If Trump fails on the 1st ballot, Cruz needs to win on the 2nd or 3rd. If Cruz hasn't won by the 2nd, he probably can't win because too many of the delegates are still bound to vote on a 2nd ballot for Trump. If he can't win on that 3rd ballot, I don't know that he can win on the 4th ballot. He might be able to, but he's got to accumulate as much as he can. A lot of delegates at stake in these northeastern contests. And again, I'll say, he can't go around arguing that John Kasich is irrelevant if he can't beat John Kasich in all these contests, even though it's in the Northeast.
So I would argue now that Cruz, I think the Trump voters are the Trump voters, and they're not, Trump is not necessarily convincing new people. Those people aren't switching to Cruz. So for Cruz, it's about how do you expand turnout in some of these states? I mean, you look at a state like Maryland, where maybe he does come in 3rd, but you've got a governor there who hates Trump, who has said he's not going to endorse, but maybe you can get him engaged more to ramp up turnout a little bit, to at least get that percentage. Or Trump's percentage down.
The other thing is Cruz has switched to more of an economic and jobs argument, which should have some appeal in the Northeast. This is a proving ground, a testing ground for it when he goes to California and other western states. All right. It is America's favorite guessing game right now, if you're interested in politics at least. Who will be the Republican presidential nominee, and how will that person be selected? Over the past 2 days, I've gone on Twitter and done one of those unscientific Twitter polls with 4 options. 1, Trump will win the nomination before the convention. 2, Trump will win the nomination at the convention. 3, Ted Cruz will win the nomination. Or 4, some other outcome. More than 2,000 people have voted in my little unscientific poll on Twitter over the past 48 hours, and the tallies match exactly what my reporting finds. There is a total disparity of what people think is going to happen, with Trump winning at the convention being the scenario that is far and away the least predicted, and the other 3 are basically tied. Again, this is not scientific, Campbell, but now I'm going to ask you to vote. Of those 4 choices, which do you think at this point is the most likely outcome?
Well, first of all, I think it's more scientific than a lot of the polling that we've seen
Big sample.
out there. I was going to say, your sample's bigger than a lot of them.
And if they follow me on Twitter, they're people of refined taste.
There you go.
And discernment.
I think for Trump, he has to win on the first ballot. And don't you think that most of the Trump people that you're talking to have conceded as much? That
Even
is.
if they won't go all the way and say it's the only way to win, they certainly concede that things become a lot dicier. But I'm asking the most likely, not to break down the possibilities.
I think that is not the most likely at this stage. I do think it goes to the second and third. I think it becomes about Cruz and his organizing ability.
So you think Cruz at the convention is the most likely?
Right now, I think it is.
I still think Trump before the convention is the most likely. I'm not saying he's going to get it, but I think if he does really well in the Northeast, wins in Indiana, I think he can get there before the convention. Maybe not on the day of the California and New Jersey primaries, but there's this 6-week interval between the last day of the primaries and the convention. And I think if Trump is within 100, he can kind of shimmy his way to a majority before Cleveland.
And just very quick, the people who are trying to stop him will even, concede. We're talking about 20, 30 delegate difference here. This isn't about 100 delegates.
I think in 6 weeks, Trump can find them.
So coming up, what is the difference between classified and classified? President Obama explains it all and talks about Hillary Clinton's home email server. And then later, we sit down with Bernie Sanders' wife, Jane, here in the studio. We'll be right back. Welcome back, everybody. We're going to be talking to Jane Sanders, the wife of Bernie Sanders, in just a few moments. But first, Sanders' campaign has shifted its message about Hillary Clinton a little bit. Last week, Sanders was calling her unqualified to be president because her super PAC takes money from Wall Street and because of her past positions on the Iraq War and on trade. This week, he's using a different word. See if you can spot it.
She may have the experience to be president of the United States. No one can argue that. But in terms of a judgment, something is clearly lacking. Maybe her judgment is not quite as high as it should be.
My point is, it is a question of judgment. It is a question of judgment.
I have my doubts about what kind of president she would make.
So, Mark, does Sanders step over the line in the realm of personal attacks when he questions Mrs. Clinton's judgment?
I don't think so. And the Clintons bristled at this today, but this is the essence of like what you want in a president, good judgment. He's pointed at some cases where he says she's exercised bad judgment and said he doesn't think that's someone who should be president. I think this, compared to saying she's disqualified, is right within bounds and the kind of argument I think all candidates should make.
And some of the Clinton people are still smarting over this, the not qualified comments, because they think it could be used over and over in a general election. But to be complaining about this, I mean, welcome to politics. It's ridiculous. And is it any harsher than what Barack Obama said about Hillary Clinton in the last campaign and her 2008 over her Iraq vote? Any harsher than she was on him? I mean, this is a campaign. Grow up.
I also think, Bernie Sanders would have been better off making this argument right out of the gate after Wisconsin to take advantage of the momentum he had there, because his strongest case against her is on things like trade and Wall Street and the Iraq War, where he's able to say, this was my judgment, this was her judgment, what kind of judgment do you want in a president? For a lot of Democrats in New York State, all over this state, in the city and upstate and western parts of the state, those are big comparisons. She's got her own comparisons to make in her favor, but these are pretty strong ones in his favor.
And it feels like, a little bit of helicopter parenting by Democratic elites, sort of finger wagging. And the primaries are supposed to be boot camp and make you a better candidate.
Right. All right. Bernie Sanders made several stops around Gotham City this weekend, culminating with a big rally in front of the roller coaster at Coney Island yesterday. Polls, though, still show him lagging behind Clinton here in the Empire State by double digits. He's trailing Hillary Clinton in a new NBC News Wall Street Journal Marist poll that we mentioned earlier by 55 to 41%. That's out today. And his campaign is now saying that New York is not a must-win state for him, even though coming into this, Campbell, a lot of pundits said it was. So is the Sanders campaign right that he doesn't need to win New York to still be the nominee, or are they just a spinning?
No, I think they're spinning. I think he has to win New York if he wants the nomination. But look, you probably know the math here as well as anyone. It feels like he needs a big wild card moment of some kind to change the dynamic, win New York or not win New York. Now what is sort of unexpected or we don't know is Hillary Clinton going to make another mistake or a big gaffe or something along the way? With the Clintons, you don't know. So even if he doesn't win New York, I don't see him getting out. I think it's going to be a long, hard slog for her no matter what.
If he wins New York by a lot, wins it by a little, loses it by a lot, loses it by a little, it doesn't much affect his chances of being the nominee. He still has to find a little bit of luck and a lot more delegates, but there are too many delegates in New York for him to just blithely say he doesn't need to win here. I think his chances of being the nominee don't go down appreciably if he doesn't win here, but he needs to win here. He needs to win here, and he needs to pick up delegates and get less than the delegates he gained. He needs the momentum of beating her. He needs the gee whiz factor of saying, I beat her in New York.
All right, now for those darn emails. President Obama sat down with Chris Wallace on Fox News Sunday, where he was asked about that pesky FBI investigation into Hillary Clinton's home server. First, Obama said he couldn't speak about the pending investigation and swore not to interfere. Then the president spoke about the pending investigation anyway and basically once again exonerated his party's likeliest presidential nominee. Take a listen.
Hillary Clinton was an outstanding Secretary of State. She would never intentionally put America in any kind of jeopardy. There's classified and then there's classified. There's stuff that is really top secret, and there's stuff that you might not want on the transom or going out over the wire, but is basically stuff that you could get in open source.
But last October, you were prepared to say she hadn't jeopardized, and the question is, can you still say that?
I continue to believe that she has not jeopardized America's national security. Now, what I've also said is that, and she's acknowledged, that there's a carelessness in terms of managing emails that she has owned and she recognizes.
Today, during the White House press briefing, Press Secretary Josh Ernst defended his boss and how the president knows what he knows about the investigation.
The president has neither sought nor received a confidential briefing or confidential information about the ongoing investigation. The president's knowledge about this situation is based entirely on public reporting. This is one of the benefits of the approach that Secretary Clinton and her team have taken to dealing with this matter.
So, Mark, why is the president talking again about this email investigation?
Beats me. If he's only learning about this from public information or not. to say, I'm going to want this investigation to be independent, but to then try to exonerate her as the person who's the president, who's overseeing the Justice Department but keeping arm's length, I don't get it. I mean, I don't know if he's trying to help her or what, but it makes no sense to me for him to be talking about this investigation. Just say, it's an ongoing investigation. I got nothing to do with it. I have confidence in the Justice Department. Even testify to her honesty. But to talk about the specifics of the case, I do not get it.
I totally agree with you. I was stunned when I heard him say it. Any president would be expected to say it's an ongoing investigation. I can't comment on it. And then to say you don't want to influence what's going on, or you're not going to influence what's going on at the Justice Department or FBI, but be very overt about your views on this. I mean, there's no better way to influence the FBI or Justice Department.
If he's got no inside information, then he can't possibly exonerate her. He doesn't know what they found. They may have found more than what's been in the papers.
But it's a testament to how much she's struggling right now that he would feel the need to step in and protect his legacy, or they would want him to.
I guess so. All right. When we come back, Jane Sanders will tell us about her husband's latest plans, how he's going to win the Democratic nomination, after this word from our sponsors. Our guest tonight is Jane Sanders, the wife of Bernie Sanders, who dreams of being the next First Lady. So now we're going to talk more about the concrete jungle where dreams are made of. That's New York and the April 19th primary, week from tomorrow.
She rolled her eyes when you said dreams of being First Lady.
Sort of. How's New York going so far? This is like a rough and tough state with media in this city. How's it going?
It's our state, you know, both of us born and bred here, and it's been amazing. It's been really good to be home. Going down to Coney Island yesterday, having so many people out there. South Bronx, 18,500 people out in the audience and at a rally. I mean, it's been fantastic.
So your husband has said, and the campaign has said, you may be from Vermont, but you're not intimidated by this. Is this intimidating at all to run here and with all the spotlight and glare?
Well, I mean, we're not intimidated by New York. We just love it. Now that you mention it, probably we should be about the election, but because Secretary Clinton represented New York, but it feels like home to me.
Just do this.
Do do you think your husband has made this complaint that the process has been unfair, given the way the delegate, rules are designed in many cases? Do you agree with that? Do you think it's been unfair?
I don't think that he thought so much it was unfair. It does seem kind of silly that 30% of the votes that you need are they're superdelegates. They're people that are not the voters. So that doesn't seem quite right. I know that that's what the Republicans wish they had at this point in time. We just don't agree with the way that one person, one vote.
But what would you say to your grandkids who say, hey, Grandpa won with Wyoming by 12 points and they got the same number of delegates? How does that work, Grandma? What would you say?
Yeah, every state has its own rules. I don't like how they figure it out, but it doesn't quite make a lot of sense to me. But those are the rules that were set before we entered, and those are the rules we're playing by.
So unlike Donald Trump, you wouldn't say these rules are corrupt or fixed or
No,
stacked
everybody
against
does
you.
their own way. It's kind of interesting to see that it's all different state by state. I'd like to see more of a federal election that you win a state and every state has the same requirements for registration. For instance, independents can't vote in New York, and we're building the Democratic Party, and yet we're keeping them out if last October they didn't decide to run to register as Democrats. That doesn't seem smart.
You mentioned the superdelegates and the role that they play, obviously. If you're trying to sway them and bring them over, what's your message to them? What do you say to them?
Well, I think the key is to look at who's the best candidate for the general election. I mean, Bernie wins, whoever the Democratic Party nominee is going to win the base of the party, the Democrats. But who wins the independents and who sways some of the Republicans? I think Bernie has done that throughout his whole career. He wins independents everywhere. In our own state of Vermont, in his last senatorial election, he got 25% of the Republicans because they say, we know you, we trust you, we might not agree with everything you're saying, but we know we can count on you to do what you say. So I think he's a much better candidate, even predicting it that way. But if you look at all the polls, he's doing much better against all the Republicans than Secretary Clinton is.
Okay, Jane Sanders, stand by. We're going to come back more with Jane Sanders of Vermont and New York right after this.
We are back with one of Bernie Sanders' closest advisors, and occasionally she's also his primary news source, like when she broke the news to him at a New York rally on Saturday that he had won the Wyoming caucuses. Jane Sanders, thank you for being here again.
Good to be here.
We were talking about that a little bit, Wyoming, and the differences on the delegate rules, but you know, and also about the superdelegates. But talk a little bit to us about your role in all of this. You know, how you define it as someone who's campaigning for him. You know, you're very involved, I know, in his ad making. How do you see your role in the campaign and what you're spending time on?
Well, there's about a half dozen of us that really work with Bernie on anything that is necessary, a strategic role. But it started with just buying the furniture for the office. You know, I mean, whatever needed to be done was done. And now I travel with him a lot, which has been really nice. And really just talking about strategy, scheduling, and television advertising.
So apparently there's one role that you have uniquely. You're the family CPA. You do the taxes.
Well, TurboTax.
Yeah, doing TurboTax. So here's a candidate who says, trust me, when I release my taxes, there'll be no problem.
Yeah.
But he won't say when he'll release them, how much he'll release, or what's in them.
And that's my fault. He said to me, we have to answer this. And I said, well, I was expecting that when they were due, we would be releasing them.
Right.
And
but how about the prior years?
Well, sure. I'll have to go back and find them, but yes.
Are they're not on file anywhere?
Yeah, they're on file, but we haven't been home for a month.
Right.
So 2 weeks ago, people asked, the Clinton campaign or somebody asked, and we said, oh, of course we'll release them, and we will.
And in full, not a summary, not individual pages, the whole thing.
Sure, no problem.
If Donald Trump or some other candidate said, trust me, I'll release them eventually, trust me, would you say, oh, that's fine, there's nothing in them, no problem? Or would you say, we really need to see those?
I would say, well, when they're due, I would expect them to come out. Now, I have to tell you, every other year, I ask for an extension, but this year, we knew I couldn't do that.
So you'll release how many years?
I don't know. How many do you want, Mark?
I think the Clintons have released 8. Or even more, but at least 8.
They've been in office all these years. They've done
Senator Sanders has been in the House and Senate for
and we every election we've released them. So maybe
you'll release your whole returns, not just a summary.
We did in when he ran for election. Yeah. Okay. So.
All right. We look forward to that.
I'll release this year's as soon as they're due, and can I have time to go home?
Sure.
And
we'll
then
go
release
with you.
future ones. Come home.
But you're saying there's like nothing in them.
There's nothing. We're really pretty boring.
You have your Senate income. What else do you guys have?
Social Security. I sold my mom's condo at the beginning of the year. You know, that was
that's
about
a pretty simple return.
Yeah, pretty simple return.
But let me ask you about, this was more on the Republican side, a kerfuffle, or however you want to describe it, about the Melania Trump and Heidi Cruz that came out with the attention that was being paid to wives and spouses. Do you think that is fair? You know, are spouses fair game in this?
I don't think families are fair game. I think that spouses put themselves out there in a supportive role. We're not playing partisan politics. To criticize people as they did, as Trump did for Heidi Cruz, for her looks, that's ridiculous. First off, she's a very nice-looking woman. I mean, but beyond that, it's just not nice to take personal attacks against anybody, let alone the spouses. I think it's fine to ask questions of them. If we are here, you can ask questions.
You leaving for Italy with your husband on Thursday night?
Yeah.
So the New York primary is in 8 days. You're going to spend 2 days, which is like a quarter of the time that's left.
Actually, 1.5.
Okay.
We finish. We're leaving
Thursday right after the debate.
Right after the debate, and we're leaving
Saturday.
first thing Saturday morning.
Right.
And we'll have events on Saturday.
Right.
So, I mean, we're in New York. We've been in New York all this time, and we're going to continue through the election. We've been in New York a lot more than Secretary Clinton has with her fundraising trips everywhere, many different.
Does anyone in the campaign think it's a bad use of time, or everyone thinks it's the right thing to do?
Everyone thinks it's the right thing to do.
And what will you do there?
Oh, Bernie will be speaking at the invitation of the Vatican to talk about a moral economy. I mean, that's quite an invitation that you really do not want to reject. I mean, this is quite an honor, and It's something, you know, that he feels very strongly. The Pope Francis is an excellent leader,
right.
And that the issues he talks about are very similar to the ones that Bernie talks about.
But you don't want my Rome restaurant recommendations because you're coming right back, is what you're saying.
Right.
All right. Next time you go, I'll give them to you. Bill Clinton the other day made some remarks about when he was being heckled by some Black Lives Matter folks, and the press jumped on one thing he said. Then the next day he said, "He's tempted to apologize." That's a paraphrase. Do you think in our politics, for yourself, for your husband, for the other candidates and spouses, that the press and political opponents seize on one word or one phrase too often, rather than looking at the totality of what's said? Is that a fair criticism of the political process, do you think?
I would definitely say that.
Yeah.
It's crazy that the story is the gaffe. The story is the mistake.
Right.
It's not what the intent was.
Right.
And I think Bill Clinton probably regrets how he handled that questioner, but he was speaking about other things as well.
I would say that you're right, but I'd also say that your campaign occasionally has done that to your political opponent. Is that a fair thing to say, that you sometimes will take one thing Secretary Clinton says and kind of exacerbate or exaggerate its impact? Is that?
I don't know that that's true, Mark. I think that is politics today. I know I always try to say no. What did she mean? What was the context? And when it fits with the overall image that Hillary Clinton is trying to project, or doesn't fit with it, and then we might put it out there. But it's always in a larger
overall
context.
Okay.
Yeah.
We'll come up with
not
some
a mistake.
examples. Okay.
I mean, you might not want to go here. It may be premature, but there are a lot of people in the pundit world who say if he doesn't win in New York, it's over for Sanders, and he shouldn't go on at that point.
Well,
how do you think about this over the long term? Is this a must-win?
No, and that's the question that's been asked in Iowa, in New Hampshire, in Ohio, and everywhere. So everybody keeps on thinking that, well, he can't make it. You have to remember, when he started, nobody took him seriously. The media didn't cover him all throughout 2015, and now they're starting to, and he's won 8 out of the 9 last contests. So I think that he needs to do well in New York, and I think that if he does well in New York, which is his opponent's state that she represented, that says a lot. I think what we're looking at is momentum, and we're looking at how people are feeling about him. The more, we're in an enviable position, I think. The more people hear about Bernie, the more they know about him, the more they like him. That's a really good place to be. It's unfortunate they didn't know more about him before, and we didn't decide to run until May, or April, I guess.
Super delegates from, say, Massachusetts, the state Secretary Clinton won narrowly, but she won. Should they be free to support Bernie Sanders and not go along with their the voters in their state?
My feeling is with 30% of the votes that you need, that they're super delegates, most of them have been elected to represent their state. So I would think that those representing their state would look to, when you have a very large margin, 2/3 or more, that I would think that would be a given. I know that's how I'd comport myself if I were elected.
If the state's close, superdelegates should be free to vote either way, but it's a wide margin.
Superdelegates have to use their judgment. That's why they're superdelegates. That was the thinking, that they would be able to use their judgment and make some decisions.
Even use their judgment. If they say, I think Bernie Sanders is better than Hillary Clinton, even though my state voted overwhelmingly for Hillary Clinton, you think they should support Bernie Sanders and not go with the overwhelming majority of their voters?
No, I think they should go with the majority of their voters.
They should.
I think so.
And so not use their judgment, but follow their
But I mean, I think, as I said, the majority, a big majority, but a small majority. I mean, we've tied so many
So if it's
races.
close, they should use their judgment. But if it's a big margin, they should vote with the people.
I think they'll do whatever they want to do, and I'm not here to direct them. But it seems fairer, put it that way. It seems fairer to have people, when Bernie wins 70, 80% of the vote in elections, that the superdelegates follow there.
We didn't get to talk about Hamilton, but we're going to have you back and maybe sing.
It was great. No, I won't
Everybody should go. Better than cats. Jane Sanders says, thank you very much. You're nice to come back. Always great to see you. Good luck.
Thanks.
On the trail. Up next. That's you. Go.
Up next, Republican mega strategist Al Cardenas joins us right after this.
Joining us now, the former chairman of the Florida Republican Party, a former senior advisor to Jeb Bush's presidential campaign, and a man we like to talk to. Al Cardenas is currently not supporting any of the three remaining candidates. Mr. Chairman, welcome.
Hey, great to be with you as always.
Appraise the state of your presidential nomination fight right now. Where does it stand?
Well, I think, I'll be very surprised if Donald Trump doesn't fall short by 100, maybe 80 delegates. I think maybe Ted Cruz's shot is at getting within 200. And, they're going to be between 200 and 300 delegates, either because they're released by the folks that they're there to represent, or because they're RNC members or senators. And they could well tilt this thing before you walk into the convention hall. And so it's up to either of those candidates to do that. But as you know, everybody's getting every individual delegate's information, who they like to fish with, they like golf. Sometimes if they like golf, they'll be called by a professional who might be supporting a particular candidate. This thing gets very personal, very specific, and obviously these delegates are worth their weight in gold. So
is that really happening right now with the delegates? I mean, well, that sort of deal-making and lobbying at that sort of granular level?
I believe that you'll see that as inevitable. Right now, I think 2/3 of the campaigns are concentrating on adding delegates, and then there's another whole crew that's there to do the intel work, find out who each delegate is, how strongly they feel about the process, where they're there really because of the candidate or because their friends selected them. And as you know, I would say 30–40% of those who are going to be delegates are not there because they were enthusiastic followers of the person they're there to represent, but they're there because they're donors or elected officials or party regulars. And they'll do what they need to do. They'll respect the rules. But at the end of the day, they'll vote with their heart once those responsibilities are over. And everybody needs to know where they're going to be.
You've been to a lot of conventions. I know it's hard to generalize, but we debate this all the time. Do you think the delegates care about electability, that they're going to look at the possible nominees and say, I want this person because I think this person can win a general election?
If you are really for a particular candidate, it doesn't matter what the polls say. You're not there intellectually. Your heart's taking you there. And your heart says that candidate's going to win, and we'll figure out the path to get there. If you're a party regular, you're an elected official, you're going to be much more pragmatic. And yes, you're going to be looking at the polls, and they should be worried. The polls right now are not being very kind to our two likely nominees.
So how do you weight that? How many people are there because of their heart, and how many people are there because they're elected officials or donors, or they're thinking like perhaps you?
Boy, you could throw all traditional outlooks out the window in this election cycle, because the two candidates who are likely to, one of the two who are likely to be our nominees, are not ones who have a long track record of support. I mean, this is not a Reagan, a Bush, even a Bob Dole, people who've had a history in the party. And you know what's what? It's going to be, the first time since Eisenhower, other than George Bush Jr., where you're going to elect someone who hasn't been a nominee or hasn't been in the process once before. Remember, just about every Republican nominee has run once before, and we've had a chance to know about them. This time, people are even getting to know some of these candidates. I mean, there are people wondering, geez, Donald Trump really like this or like that? And as Ted Cruz has a soft spot in his heart, people are literally trying to figure these candidates are as we speak.
So why hasn't the establishment crowd rallied around Kasich more? If that's the case, if they're not falling in love, they're still trying to figure out Cruz, figure out Trump, why hasn't Kasich been the alternative?
Listen, love is a two-way street. Donald Trump, a couple of weeks ago, you would think by now where he is, he'd be kind of rounding up the troops, putting out some strong messages about wanting to unite the party. What does he say? He says, well, I don't want Jeb Bush's support. I don't want support from Mitt Romney. He is purposely shunning the potential support of others to bring the party together. He's doing that, I think, because he believes at this point in time, the only recourse he has is to take control of the party, take control of the nomination, and win on his own terms. I don't believe Donald Trump thinks that he can put the toothpaste back in the tube after the campaign he's run.
Al, thank you very much. Al Cardenas, former party chairman and a very smart man about pretty much everything. Up next, our new Bloomberg Politics online poll about what married women think regarding Donald Trump, Hillary Clinton, and the other candidates. And if you're watching us in Washington, D.C., you can now listen to us on the radio in the nation's capital at Bloomberg 99.1 FM on the radio. We'll be right back. Off the electronic press, our new Bloomberg Politics online poll conducted by our friends at Purple Strategies. We call it a Purple Slice Survey because it looks at one important demographic for the general election, that is married women. Mitt Romney won that important group of voters in 2012, according to the exit polls. This year, our online poll shows Republican married women favor Donald Trump over Ted Cruz, 37% to 32%. But in a general election, Trump, Cruz, and Hillary Clinton all have extremely high unfavorable numbers with that group. Joining us now from our Washington bureau to explain the poll further is the Purple Strategy CEO and Democratic thought influencer. That's what the teleprompter says, Steve McMahon. Steve, first just talk about the methodology of how you all are doing these sliced polls for us.
Well, they're online surveys, as you mentioned, and we're taking a quick look. Al Hunt had the brilliant idea, and it really was a very smart idea, to take a look at some of the slices of the electorate that are going to make a big difference in this election, ultimately determine the outcome, and take a look at how they're performing this year as opposed to 4 years ago. And you've already given the headline. Among married women who Mitt Romney carried by 7 points 4 years ago, Hillary Clinton has a 12-point lead over Donald Trump, which represents a 19-point swing in the direction of Democrats. So go down the ballot if you're if you're looking at Senate races or House races, and see what happens when you put a 19-point swing in there. It's not going to be a pretty picture for Republicans if this slice holds the way it is.
So was that the most surprising thing for you? The sort of good news here, I guess, for Hillary Clinton?
It's very good news. Mark mentioned a moment ago, Campbell, that none of these candidates is particularly popular on their own, standing alone. But in comparison to another candidate, you know, Hillary Clinton looks a lot more popular and a lot more appealing to a group that went for Mitt Romney by 7 points 4 years ago. You know, if I were in the Clinton campaign tonight looking at these numbers, I'd be very, very happy.
Is there anything in this, if you're in the Trump campaign tonight, you'd look at the numbers and say that's some good news?
Well, you know, Donald Trump leads in areas where you would expect him to lead. They're not necessarily partisan areas. So, for instance, you know, if you ask who's going to do a better job changing Washington, Donald Trump has a lead among these married women over Hillary Clinton there. If you ask who represents, who's going to bring new ideas to Washington, Donald Trump has a lead. And if you ask who's going to be better at creating jobs in America, you know, Donald Trump's business experience really helps him there. On the other side, though, if you ask who's ready day one to be president, Hillary Clinton wins that. If you ask who has the temperament to be president, which I think is something that you're going to see debated, discussed, and voters focusing on a little bit more, you know, Hillary Clinton has a lead there. And then if you ask, you know, who's going to be a better role model for our children, obviously Donald Trump doesn't win that, Hillary Clinton does. And, you know, all those things are, I think, good news for the Clinton camp.
Steve, I know you asked about Trump's position on abortion. Tell us what people said about that.
It's interesting. You know, first of all, people don't really understand what his position is as much as they think his position is not the same as theirs. 50% of women reported, these married women that were the purple slice that we looked at, 50% reported that his position on abortion is not the same as theirs. Another 19%, I think, correctly identified his position, and 31% were unsure. So, you know, notwithstanding all the attention that Donald Trump's abortion answer, or his 4 or 5 abortion answers last week got, most voters haven't really received the information. They kind of think he's not standing where they are, which is a little bit of a problem for him. They're not really sure where he stands, with the exception of a minority of women who actually do understand where he is.
And Steve,
I still don't.
We'll do more of these slice polls, but it's safe to say, isn't it, that you can slice and dice the electorate in a number of ways to figure out a way Republicans might be able to win a majority of the popular vote. But if they don't do better than this survey suggests with married women, there's no way for them to do it, right?
That's exactly right, Mark. You know, you can look at these demographics and you can compare how the candidates today are doing relative to how the exit polls showed the candidates to have done 4 years ago. And in this case, it's a 19-point swing in Democrats' direction, which, you know, again, if I were Mitch McConnell or Paul Ryan, I'd be really pretty concerned, because regardless of how Donald Trump does, whether he wins or doesn't win, if these numbers hold among married women, you've got a down ballot, really a down ballot debacle if you're a Republican.
Okay, Steve McMahon in Washington, thanks very much. Again, full write-up of this slice poll from Purple Strategies on our website right now, BloombergPolitics.com. Great data to look at for this extraordinarily important group of voters. And Campbell and I will be right back. Our thanks to Jane Sanders, Al Cardenas, and Steve McMahon for joining us, as well as to our friends the birds, for joining us. Check out,
the birds,
as we said before, our poll with Purple Strategies. The latest Slice poll is on there now. Great look at married women. Coming up on Bloomberg Television, Emily Chang speaks to the founder of Vayner Media Founder. Campbell, New York primary 1 week away. Anybody been campaigning in your neighborhood?
No.
No?
No.
They're not going for the all-important downtown vote.
No, let's see. The Donald Trump vote in Tribeca, the Ted Cruz vote in Tribeca.
Relatively limited. Very limited. All right, John will be back tomorrow. We thank Campbell for joining us. We thank these pesky birds for joining us. We'll see you tomorrow. Thanks for watching. Sayonara.
Sayonara.